innovation to innovation.
एवरीवन गुड मॉर्निंग टू ऑल ऑफ यू वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का सेशन। फिलहाल देखोगे कल क्रूड ऑयल में फाइनल मार्केट क्लोज होते होते सेलिंग आ गई थी, जहां से मार्केट रिवर्स किया था। नेचुरल गैस वहीं का वहीं रुका हुआ है, कुछ मोमेंटम नहीं हो रहा है। एक बार रिफ्रेश कर देते हैं लेवल्स को फिर से, दोनों ही जगह, क्रूड में और नेचुरल गैस में। पायरी भी है आज निफ्टी 50 की। अभी 5:30 लंदन न्यूयॉर्क सेशन ओपन होगा, 12:30 लंदन सेशन ओपन, 7 PM यूएस मार्केट ओपन, 7:30 जॉब ओपनिंग का डेटा है। गिफ्ट निफ्टी लग रहा है हल्का सा गैप डाउन ओपनिंग, मोस्ट प्रॉब्ली गैप डाउन ओपनिंग पॉसिबल। मार्केट का क्लोज होने के बाद कुछ खास मूव किया नहीं है नेचुरल गैस भी। एमसीएक्स में, फॉरेक्स में ऑलरेडी क्लोजिंग के बाद मूव थोड़ा बहुत ही आया था, ज़्यादा नहीं। नेचुरल गैस बाकी मुझे थोड़ा सा साइडवेज लग रहा है आज। नीचे सपोर्ट है, ऊपर रेजिस्टेंस है, चांसेस कमी है रेंज के बाहर निकलेगा। सो मेजर सपोर्ट रेजिस्टेंस थोड़ा सा दूर है। इस एरिया पे अगर चेकआउट करें तो ये छोटी सी रेंज लग रही है फिलहाल मार्केट में। लगता नहीं इस रेंज के बाहर जा पाएगा इजीली। 302 से 308 के बीच में एक रेंज है। ऊपर नीचे सपोर्ट रेजिस्टेंस और है, अगर इनके एक साइड पे कहीं क्लोजिंग आ जाती है तो फिर देखेंगे, अदरवाइज मुझे लग रहा है इसी रेंज पे है, कुछ करना नहीं चाहिए। नेचुरल गैस लुक्स रेंज बाउंड इन दिस राउंड रेंज। ठीक है, इंडियन मार्केट भी ओपन होने वाला है जस्ट। गिफ्ट निफ्टी तो गैप डाउन ओपनिंग लगा रहा है, कल हमारा मार्केट जहां क्लोज हुआ था वहां से a gap down opening is possible. Dollar also at around 99. यूएस क्रूड ऑयल भी देखोगे तो रेंज ही लग रही है मुझे यूएस क्रूड ऑयल की भी। ऊपर रेजिस्टेंस बहुत सारे हैं, कल एक रेजिस्टेंस जहां से सेलिंग आई थी, कल का लो एक सपोर्ट बन गया है। तो अगर ये ऊपर वापस आता है 9000, मोस्ट प्रॉब्ली मेरे अकॉर्डिंग ये 9300 तक भी जा सकता है। उस केस में नीचे आएगा तो वापस एक बाइंग का प्लान करेंगे। नीचे सपोर्ट अभी भी है, ब्रेक नहीं हुआ है। जब तक प्राइस लोअर एंड पे 87.57 अप्रॉक्सीमेटली 8300 के नीचे क्लोज नहीं करता इज ऑन सपोर्ट। आगे जिस तरह से कल सेलिंग आई थी, लगता तो नहीं वैसे रिटर्न होना चाहिए प्राइस। क्रूड ऑयल में थोड़ा बहुत पुल बैक आ सकता है वापस। सेलिंग में रुका हुआ है तो होल्ड कर सकता है मेरे अकॉर्डिंग। ये थोड़ा सा नीचे और गिरना चाहिए क्रूड ऑयल इस एरिया के आसपास 8400 300 तक। बाकी अगर ऊपर आता है तो जब तक अब ये वापस मान के चलो, कल एक मिड में एक लेवल लगाया था हमने 8830 के आसपास, इसके ऊपर सस्टेन नहीं करता, चांसेस कम है कि और ऊपर जाएगा। तो अगर ऊपर आया तो मेरे अकॉर्डिंग फिर से सेलिंग आने के चांसेस बढ़ जाएंगे। So currently it is sell on rise crude oil until unless it is not going above 93.22, which is approximately 8900। 8900 के ऊपर जब तक नहीं जाता तब तक ये थोड़ा सा सेलिंग प्रेशर में ही है। क्रूड ऑयल नीचे आ जाने के चांसेस हाई हैं। क्या तो देखते हैं, कुछ ट्रेड बनता है, थोड़ा सा पुल बैक देगा तो एक सेलिंग यहाँ से कल, यहाँ से एक सेलिंग प्लान करी थी, उसका टारगेट तो हो गया था। एक थोड़ा सा अगर पुल बैक दे दे वापस से तो एक सेलिंग ये एक प्लान करेंगे। ठीक है, इसमें कोई ज़्यादा रिस्क तो है नहीं है, दिस विल बी फाइन। क्योंकि देखो अगर ये इस लेवल के ऊपर निकलता है मेरे अकॉर्डिंग 8000 850 870 के ऊपर, तो फिर ये कल का हाई का रेजिस्टेंस शायद ही होल्ड करेगा। फिर मार्केट सीधा जाना चाहिए 9300 400 के अराउंड। वही एक मेजर रेजिस्टेंस बनता है फिलहाल उस केस में। सो इसको हम एक पॉइंट ऑफ इंटरेस्ट मान के यहाँ पर ट्रेड प्लान कर सकते हैं छोटा सा। नेचुरल गैस में भी वैसे चाहें तो जब तक इस रेंज के अंदर है मेरे अकॉर्डिंग तो कुछ मत करना। अगर कुछ रिस्क ले सकता है तो फिर ये हाई लेवल के आसपास सेलिंग या लोअर लेवल के आसपास बाइंग, ये चीज़ें प्लान हो सकती हैं। यहाँ पर रेंज है छोटी सी, बट इसमें रिस्क रहेगा कि मार्केट किसी ना किसी एक साइड तो ब्रेक जरूर करेगा, तो जिस साइड ब्रेक करेगा उस साइड एसएल जा सकता है इजीली। बहुत ही स्मॉल रेंज है, बहुत ही छोटी सी, 300 के ऊपर है, फिर भी सिर्फ 4 से 5 पॉइंट की रेंज, बहुत रिस्क हो जाएगा। तो मेरे अकॉर्डिंग तो अवॉइड करना, अदरवाइज ये रेंज बना रखी है नेचुरल गैस में, इसको प्ले आउट कर सकते हो। तो वही है एज एक्सपेक्टेड। इंडियन मार्केट ओपन निफ्टी 110 पॉइंट, सेंसेक्स 300 पॉइंट गैप डाउन, थोड़ा सेटल होने देते हैं, एक्सपायरी है। ठीक है, मार्केट ऑलरेडी वैसे देखोगे कल जितना जिस हिसाब से गिरा है, इफ निफ्टी देखोगे ओपन होते ही प्रॉफिट बुकिंग में चला गया है, थोड़ा बहुत अपसाइड की ओर, वेल एंड गुड। एक्सपायरी है तो देखना पड़ेगा कहाँ क्लोज होता है। 3 दिन से कंटिन्यूसली सेलिंग आ रही है, थोड़ी प्रॉफिट बुकिंग आ सकती है। पहला आधा घंटा वेट करते हैं, फिर वी विल सी। मोस्टली मुझे लग रहा है जिस हिसाब से 2 दिन मोमेंटम कर चुका है मार्केट, आज अगर स्ट्रेटजी बेस्ट कहोगे निफ्टी 50 में अगर ऑप्शन सेल करते हो तो मेरे अकॉर्डिंग डेल्टा न्यूट्रल स्ट्रेटजी यूज़ करना, दैट विल बी परफेक्ट फॉर टुडे आई थिंक।
How does the relationship between, the ruling party in China play out against the kind of the development of companies?
I think the Chinese system is definitely more top-down when it comes to AI development. You see less kind of individual tech companies like OpenAI or Google taking the lead, and more these kind of multi-institution partnerships, or maybe you have a university and a tech company and a government, department all collaborating on big AI projects. That's much more common in China. At the same time, China is a huge country, so there's a limit to how much the government can achieve from the top. So a lot of what you see is sort of Beijing providing direction, providing ideas, providing sort of signaling of this is what we in the central government would be excited about.
Dan, how would you compare how the Chinese government is handling AI with its people versus how they handled social media?
Well, I think President Xi Jinping doesn't necessarily view AI right now, a lot of these ChatGPT-like applications, as some of the most economically productive things that are coming into our society. So I think that President Xi looks much more at AI like he would at Facebook or Twitter, now known as X or whatever it is. These are platforms like TikTok that, if you're asking me, is something like TikTok or Facebook really increasing my personal productivity? Well, I would say actually it is really horribly detracting from my productivity. And so I think that a lot of these AI platforms right now create speech issues. When an ordinary Chinese person sitting in Beijing or Shanghai asks AI, well, what happened in 1989? Well, what do you think of socialism? What do you think of President Xi's performance? These AI tools are having a lot of challenges actually answering socialist correct values that are in line with the government's ideas. And so these are major speech platforms, first and foremost, and perhaps not really the economically miraculous thing that raises our productivity growth at the very moment. Now, it might happen later on. Right now, I think the party views it as somewhere between economically not that useful and potentially very socially destabilizing.
So from a consumer standpoint, AI is almost, it can potentially create more problems for the Chinese Communist Party. But then if you look at it from like a surveillance standpoint or military type of AI applications, that's kind of in a different camp. Is that right?
Yeah, that's right. And I think they're definitely, I mean, one area where China is, I would say, leading in AI is on surveillance. They really have leaned hard into facial recognition, voice recognition, even gait recognition. So how you walk in a crowd, can they pick you out by that? I think in the West, there's been some development of these technologies, but with a lot of criticism from civil society, a lot of hesitation, sort of, I would say, like very yellow light. And in China, it's been blaring green light.
On the topic of WeChat, I mean, when we spoke ahead of this, I think we touched on the fact that there are some generalized misunderstandings about China's approach to social media and data and AI. AI relying on huge amounts of data, and the perception is that because of things like WeChat and similar things in China, that there's this huge pool of data that the population in China is very happy giving over and is used to giving over, and therefore is just sitting around waiting to be exploited by AI. And I remember that you made a pretty significant point. It's like, that's probably not really the case. And people think that's the case, but it isn't. So I wonder if you could touch on that.
Yeah, I think people have this perception that because the Chinese government is very controlling and has a lot of access to what's going on in Chinese citizens' private lives, that means that there's these beautifully curated, extremely complete, large databases of information that can be used to train AI systems or to do other things. But for anyone who's ever worked with data, you know that cleaning data, structuring data, making sure that the right information is flowing in the right places is incredibly challenging. So it's both true that the Chinese government can get very detailed information on the private lives of its citizens if it chooses to, and also true that it's incredibly messy the way that works, and incredibly difficult for any given actor to get access to something. So, for instance, a company trying to train some AI model using data is actually subject to a pretty significant data governance setup in China, data governance regulations that make it really challenging to use customers' data for things it wasn't already designed for, or that you didn't already get consent for.
Which we learned from Cambridge Analytica scandal just as one case, and there are many others. That is not the case in the US. It's
That's
not
right.
the case in Europe. There's a lot going on. I mean, the EU's AI Act is pretty widely praised by some people, not everybody, but it's quite broad and far-reaching. But that's not the case in China, in terms of what you're saying.
So China's setup is now more similar to the GDPR that exists in Europe. So around kind of protecting consumer data and giving people the right to opt in to different uses. Of course, in China, there's always the exception, unless the security services think that you might be a dissident, and then they're going to get whatever they want on you. But in terms of kind of companies, they're certainly relatively restricted in what they can do.
Switching gears a little bit, Dan, I'm curious about how China's sluggish economic growth recently weighs into the government's calculus and how they're thinking about AI's potential to spark social unrest.
I think that the Communist Party is very much involved in trying to think about, how to control possible social unrest. I was in Shanghai in November 2022 when there were protests in the streets denouncing zero COVID, denouncing the Communist Party by name, that these were things that were erupting. And so I very much sign on to Helen's description of AI, that China is leading in the AI of censorship. It is leading in the AI of facial recognition. That right now it looks very much like the US is a place where ordinary consumers can tinker with and play around on a lot of these AI tools, whereas in China is mostly reserving ththese very powerful tools for its own use, potentially to control society. That right now China is in a moment of economic weakness. This might deteriorate further, this might get a little bit better, but there is always this presence hovering over there that the state security might ramp up its technology, really to make sure that there are no socially destabilizing incidents.
Well, Helen, Dan, thank you so much for being here. It's been great to learn from the both of you.
Thanks so much.
Thank you very much.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Mixed signals. President Trump says Israel and Hezbollah agree to halt attacks after Iran suspends talks with the U.S. over fighting in Lebanon. Equities retreat from all-time highs as progress towards a U.S.-Iran peace deal stalls, and investors pause after a rally in AI stocks. But investors are still digesting news on AI, with Anthropic filing confidentially for an IPO and Alphabet seeking another $80 billion for its spending. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Let's take a quick look at what markets are doing this morning. The AI pause is real. This is what we're seeing reflected in the U.S. futures picture this morning. 0.4% down. Now, the S&P did close in positive territory yesterday, but the futures image, again, perhaps paints a picture of what's to come later today. Now, this is led by the U.S., Iran stalling on a deal, but also investors pausing after these massive rallies that we saw in the AI trade. MSCI Asia Pacific 0.5% down, led by the Kospi in South Korea. We have Winnie a little bit later to speak to us about the details on that. Brent prices down this morning. Now, they surged yesterday after these reports that we saw emerge about Iran pausing talks with the U.S. because of a no resolution in Lebanon. Now, they're down slightly a bit this morning. Brent at $94 a barrel. U.S. Treasury yields not doing much on the 10-year notes this morning, but again, they've been moving with what we've been seeing coming out of the Middle East. Now, if we flip the board, a chart that I thought was interesting, flagged by our colleague Anthony Stevens, was about the SOX index and the relation with some of the server stocks. Now, we saw a rally in the likes of Lenovo, Dell, and HPE. And if you look at the massive gains in the chart this morning, so what we saw is HPE is up 30% in the aftermarket, or was up 30% in the aftermarket, following a 30% move higher by Dell and Lenovo last week. So investors are now, according to Anthony, focused on what households would think about, don't they make laptops, and then concerns about memory prices and oil, and some of the bearish sentiment that we've seen in the market is reflected in the chart. But also this is obviously plugged against the SOX index, which is a gauge for semiconductors, which have been doing amazingly well this year. But for more on what is happening in Asian markets, we have Winnie Su in our Singapore bureau for us. Winnie?
Yeah, good morning, Abir. You can see that the AI rally is really taking a breather here in Asia, and we are looking at the tech stocks actually leading declines, with South Korea's Kospi index and Japan's tech-heavy Nikkei 225 both down more than 1%. Now, the outlier today here is really actually in the tech space in Hong Kong. You're looking at HS Tech here up 3.5%, with gains led by Tencent after Financial Times reported that the company is in fact getting close to a new launch of AI agent for WeChat, and that is really showing how Tencent is ramping up their investment and their capabilities in AI. Now, you flip the board and take a look cross-asset-wise. We're looking at the Japanese yen here hovering just around that 160 level against the dollar. Now, that is also showing that the weakness of the Japanese yen continues, and prompting the finance minister Satsuki Katayama to warn that the authorities may take steps if they see further needs to do so. Now, we also have the Korean won here under pressure today. We did actually have pretty strong inflation numbers, accelerating way faster than expectation. However, because of that forced selling of stocks for the past 17 days, we are actually seeing further pressure weighing on the South Korean won. Back to you, Abir.
Winnie, thank you so much for those details. That was Winnie Su in our Singapore bureau. Now, AI giant Anthropic has filed confidentially for an IPO, setting up a high-stakes race with rival OpenAI. The move comes just days after a massive funding round valuing the company at nearly $1 trillion. This is as both AI firms rush to hit public markets. Let's bring in Manuel Baigori, who leads our APAC deals coverage, for more details on this story. Manuel, thank you for joining us this morning. What details do we know about this secretive IPO? I saw the headline flashing last evening. What more can you tell us about Anthropic's possible IPO?
Definitely a huge IPO lurking in the horizon. I mean, the U.S. Market for IPOs is heating up, and the likes of Anthropic, among others, are keeping us real busy. Obviously, the confidential filing is a significant step in the potential offering. That may still obviously take some time. And as you well said, this is going to be a massive equity offering. Obviously, the markets needs to be there and need to be able to absorb such a big share sale. But definitely everything related to AI these days, one of the hottest areas of investing, not just in the US, but globally. We are seeing the same here in Asia as well, with multiple potential offerings coming to Hong Kong. And the reality is, obviously, the sheer size of these companies. I mean, you were referring at the really large fundraising deal that Anthropic just pulled off as well. I mean, it's just a clear sign that investors can't get enough of these companies, and that there is a lot of faith in the potential growth for companies in this space. Obviously, we are also keeping track of other big IPOs in the US, SpaceX. Definitely top of that list as well. So the number of multi-billion-dollar IPOs is definitely increasing.
Yeah, let's stick with AI, but another company, another huge company, Alphabet, it is planning to raise about $80 billion in equity for AI spending. Now, is it playing catch up with other members of the Mag 7 cohort, like Amazon? We saw its debt issuance back in March. How crucial is the raising money aspect when it comes to funding its AI goals?
Yeah, the funding, it's actually a critical part of AI development. As we've seen in companies across the board, all platforms are trying to jump into the bandwagon of AI, and they're raising money as fast as they can, because they also know that they need that cash to be deployed in the development of the infrastructure for that AI resources as well to be in place. So obviously every company around the world is kind of like trying to think of AI and how they can benefit and also kind of like be ahead of the competition. Now, I think what we're likely to see here is some winners and losers as the dust settles over the coming quarters and years as well. But it's still a little bit early. Obviously, there is still plenty of capital chasing these opportunities, and companies want to address that and be first and forefront and try to get bigger before someone else does. So it's a really interesting race, and we're seeing platforms, companies, firms across the spectrum in finance and tech coalescing globally in this purpose.
Thank you, Manuel. That was Manuel Baigori, who leads our APAC deals coverage on the winners and losers of the AI race. Now, oil prices are in focus as conflicting signals from the Middle East cloud prospects for a peace deal. The impasse negotiations is fueling concerns that higher energy costs will stoke inflation and force the Fed to keep interest rates higher for longer. Joining us to unpack market sentiment is Sri Kojagovindan, Senior Research Economist at Aberdeen Investments. Sri, thank you for joining us from London early this morning. Let's start with the inflation outlook. Now, you said a couple of weeks ago, I was watching your interviews, that it was a wait-and-see moment for the outlook on inflation, and we have to wait to see what happens in the Strait of Hormuz and disruptions there to be able to better gauge what the headline numbers will tell us. Is that still the thinking there? Is it still wait and see amid all this uncertainty coming out of the Middle East?
I think so, because at the moment, what we have is the impact of energy price rises across different inflation measures globally. So that we can see. But then obviously there are various steps towards other parts of the inflation spectrum as well that we need to consider. And so the longer the Strait of Hormuz remains closed, the bigger the risks in terms of the feed through into core inflation, the feed through into food prices next year. That's more of a it's a delayed timeline from fertilizer prices today to food prices in the future. But also, we haven't seen an impact on inflation expectations yet materially across different countries. So that would be the key driver for central banks, actually. That is what central banks are watching rather than just the headline number.
Yeah.
So in terms, when I say wait and see, we already have the impact of energy prices or higher oil prices, and that's starting to materialize, but it's the rest of the inflation spectrum that central banks are watching very closely.
And speaking of central banks' actions and what possibly could come out of that, one of the main economic data or key data that we're looking out for is the U.S. employment data for May coming out this Friday. What are you watching there, and how does that really impact the sentiment or impact the decision-making from the Fed, that hawkish tilt that we've been talking about for the past couple of months at this point, certainly since the start of the war in the Middle East?
Yes. I think so. The Fed doesn't look at just the one number, but the underlying trend. And what we saw was very volatile prints earlier this year because of the shutdown, and some very strong numbers as well in April and in March and April. So what we're looking for now is potentially the expectation. I think consensus is around the 80 to 100 sort of range, 100,000 a range for non-farm payrolls print for the employment change. So that would be in line with, a stable labor market, something that's a slower trend, a trend that's closer to, I think it's around 55,000 over a 4-month moving average. So that's what they're going to be watching. It's not a collapse of the labor market at this stage in the US. There's still a lot of resilience there. It's just a slower trend. So the growth story doesn't really justify hikes. It doesn't justify cuts, but there's not enough in there for hikes either in terms of the inflation story. So I think the central bank there, despite all the debate that we're having about Wash being very dovish and more hawkish speakers, I think there's an internal debate which actually leads us to a bit of policy paralysis and the Fed to be on hold for a meaningful period of time while we go through this conflict.
So it's wait and see when it comes to the Fed as well, and the Fed raising or cutting rates, Shri. But look, I want to pivot to another region. I want to pivot to Japan. It's been in the headlines for a while this year, and the yen is the worst performing G10 currency so far this year. Now, how soon do you see a BOJ rate hike, essentially, and do you see another intervention looming?
I think so. I think, first of all, if we start with the yen, the currency itself, we did have some in late April and early May, we did see a bout of intervention, some very powerful intervention there from the Ministry of Finance in Japan. But it's very challenging backdrop for the Ministry of Finance and for the yen in particular, because at the moment, while we're going through this conflict, what we will have is a very strong dollar environment. The dollar has become the go-to currency. It's a safe haven bid at the moment. It is the hedge for the conflict at the moment. It has been since the conflict broke out, the main hedge. So it's very difficult to challenge that. But obviously, the 160 level of the yen to the dollar is a psychological threshold that market investors keep testing. So I think to that part of your question, I agree that further intervention is probably necessary while we're going through this conflict. Until the Strait of Hormuz reopens, I think the yen will remain challenged, unfortunately. But with the Bank of Japan, we are expecting a hike, yes. I think July, but there is a chance of June. But I think more importantly is what they say about the balance sheet as well.
Thank you so much for that update on Japan and the U.S. Sri Kochagavindan of Aberdeen Investments, thank you very much for your time this morning. Now, coming up, President Trump aims to calm Lebanon tensions as Iran suspends talks with the U.S. amid ongoing clashes between Hezbollah and Israel. We'll have the latest from the region next. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
President Trump and Israeli Prime Minister Benjamin Netanyahu have so far offered differing accounts of a call about the fighting in Lebanon. Trump said in a Truth Social post he had asked the Israeli leader, quote, not to go into a major raid of Beirut. Meanwhile, Netanyahu says Israel's campaign in southern Lebanon would continue. Joining us now to unpack all of this is Bloomberg Rosalind Mattison. Roz, thank you for joining us this morning. Now, yet another contradiction between the warring sides. What is the latest we know about the position that President Trump had given, but the Iranian side as well?
Well, that's right. As you were saying, we seem to every day get this series of differing accounts of where we're at in terms of the negotiations or understandings around this conflict. And in the latest one, as you were saying, is Donald Trump saying that, you know, the Israeli Prime Minister agreed to his request, he says, to not conduct those planned raids or threatened raids on southern Beirut, which is long known as being a bit of a stronghold for Hezbollah. And Donald Trump also saying Hezbollah has agreed to stop striking Israel, and Israel has agreed in turn to stop any of its offensives in Lebanon. However, the Israeli Prime Minister says, OK, I will stop those planned strikes on Beirut if Hezbollah stops striking us. But for now, we're going to continue our operations as planned in southern Lebanon. So he's very insistent that they're not exactly pulling back entirely from their operations there. And that's really important because Iran has really twinned what's happening in Lebanon to the broader conversations around getting a deal with the US and saying without the fighting stopping in Lebanon, they're not going to agree to a deal. So it's really tied into those broader conversations.
Yeah, and speaking of those broader conversations, now Lebanon is seemingly one of those sticking points in the broader draft agreement between Iran and the U.S. But what else do we know about the other sticking points? Is it pretty much still the same that we were talking about over the past couple of months? Is it more? And where is what's happening leaving the broader agreement between the two?
Well, there's a real sense of confusion around all of it, even if talks are going on, or at least through mediators are going on, because Iran says, hang on, we're not going to talk to you until the issue in Lebanon is resolved. Donald Trump says talks are going on and they're terrific. He's also saying stop talking about timelines for this. I mean, Donald Trump has repeatedly been saying we're going to get a deal very, very soon, we're very close, and then saying actually we're not going to rush it. So for markets, it's really difficult to understand exactly where this is at. As you were saying, there are a number of sticking points. Lebanon is one of them. There's a big issue, obviously, over the Strait of Hormuz itself. The US just wants free passage for all shipping there. You know, Iran says, hang on, you're going to have to pay tolls to get through. There are fundamental questions around that. There are fundamental questions around these frozen funds. Iran wants, as part of this deal, you know, billions of dollars unlocked. The US is saying, we're not so sure about that. And Donald Trump is under pressure at home not to give too much ground in these negotiations. So there's a whole lot of different questions, let alone what exactly is going to happen to Iran's nuclear program, which has sort of been a core of all of these tensions. So a lot in the air. Do they punt some of it till later? Do they try and just simply get the Strait of Hormuz open? But at this stage, it's very difficult to know exactly where these negotiations are at.
Yeah. Well, Roz, thank you so much for that update. That was Bloomberg's Rosalind Matheson. Now, coming up, Bloomberg learns that Russian officials are warning Putin that war spending is becoming increasingly difficult to sustain. We'll get more on that next. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bloomberg News has learned that Russian officials are warning President Vladimir Putin that spending on the war in Ukraine is on an unaffordable path. Joining us now to unpack this is Anthony Halpin, who leads our Russia economy and government coverage. Tony, talk to us about how serious the budget constraints are.
Yeah, I mean, things are getting much more difficult for Russia and their economy to sustain the cost of this war, and that's driving this dispute between defense officials and essentially the finance people who are charged with finding the money for the war. Russia's already spending more than it spent last year in terms of its budget deficit, which is bigger than the whole of last year already in the first 4 months. It had pretty anemic forecasts for growth already this year. They've just slashed that to practically nothing, 0.4%. So they're finding it increasingly difficult to keep the economy going and generating the money that they need for the war. And on the other hand, the Defense Ministry is saying, well, not only do we need the money that we already have, but we need much more, something like $36 billion to keep the war going. So Putin's under real pressure.
So when it comes to the spending cuts that are suggested, where are they likely to come from and how difficult will they be to implement?
Well, from what we've learned so far, President Putin is basically telling the Finance Ministry officials, look, try not to cut spending on defense, look elsewhere. But that means things like social commitments, pensions, which Russia has always considered very important to pay because pensioners are people who vote. They're also people who protest. Putin has spent a lot of his time trying to keep pensioners happy. So that's an area really which will be difficult to find cuts on. Others would be other social commitments like health and education and roads, which many Russians already consider is inadequate. So they would see those cuts immediately.
Yeah. Well, I guess we'll have to wait and see what Russia and what President Putin decides to do with that. Thank you so much for your time this morning, Tony. Well, let's take a quick look at markets before we head into the breaks. Equity futures this morning, U.S. still down. Treasuries also not doing much. Oil down slightly. It surged a bit yesterday after news about Iran and the United States, or Iran suspending talks with the United States when it comes to Lebanon and the fighting there. We'll have to wait and see, as Roz mentioned earlier. Now, coming up, we speak to Neve McBurney from Control Risks on how President Trump is looking to keep the Iran negotiations alive. That is next. This is Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Mixed signals. President Trump says Israel and Hezbollah agree to halt attacks after Iran suspends talks with the U.S. over fighting in Lebanon. Equities retreat from all-time highs as progress towards a U.S.-Iran peace deal stalls, and investors pause after a rally in AI stocks. But investors are still digesting news on AI, with Anthropic filing confidentially for an IPO and Alphabet seeking another $80 billion for its spending. It was just gone 8:30 a.m. across the Emirates. I'm Abir Abu Amar in Dubai. We will take another quick look at markets this morning. S&P futures still in the red, 4/10 down. Now this follows a performance in the green over the past few days. The S&P did close its 9th week in the green. Up until last week, it had a positive close yesterday as well. But this perhaps paints the picture of what we're seeing coming out of the Middle East, the disruptions there, the stalling in the talks. Iran yesterday saying through semi-official media that it will suspend talks with the U.S. over Israel's fighting in Lebanon. So this paints that, but also perhaps a pause in the AI trade, a pause in investors purchasing the AI names, essentially. MSCI Asia Pacific 4/10 down as well, led by the bellwether for tech in the region, the Kospi. Brent crude prices retreating slightly this morning. Now, they did surge yesterday after news came out about Iran saying it will suspend talks with the United States over the fighting that has been happening with Lebanon, or the Lebanese militia Hezbollah. And then when it comes to the U.S. Treasury yields, the 10-year notes not doing much this morning. The yield on the 10-year notes slightly down, 4.43% this morning. But Asia is trading already, and we want to know what details there are. So we have Winnie Su in Singapore for us. Winnie?
Yeah, morning, Abir. As you just mentioned, we are seeing a bit of a slowdown when it comes to that AI rally, especially now with uncertainties around the U.S.-Iran deal. Now, Kospi here, as you mentioned, down 2%, leading declines. We are seeing foreign investors selling Korean stocks for the past 17 days already. Now, the bright spot today in Asia is, in fact, in tech stocks in Hong Kong, with Tencent jumping more than 7% after the Financial Times reported that the company is getting close to a new AI agent launch for WeChat. So it really goes to show how the company is ramping up their AI investments. Now you flip aboard, I want to show you a very exciting chart here as we keep you updated on the global market cap race. So for the latest, we have South Korea overtaking India's market cap and now is officially the world's 6th biggest stock market, following just after Taiwan. Now the value is now around $5 trillion, and that is really supported by the two big chip makers, Samsung and SK Hynix, both in that $1 trillion valuation club. Back to you, Abir.
Thank you so much for that update, Winnie. That's Winnie Su in our Singapore bureau. Now, President Trump says Israel and Hezbollah have agreed to dial back the fighting after he talked with Prime Minister Benjamin Netanyahu and communicated with Hezbollah through mediators. Iran earlier said it was suspending talks with the U.S. over fighting in Lebanon, which it says must stop as a part of a broader peace deal. Joining us now to unpack the details of that is Neve McBurney, Associate Director at Control Risks. Neve, thank you for joining us this morning. Now, look, let's unpack the contradictions we've been hearing about over the past few hours, over the past days, over the past week as well. What do you make of these contradicting statements? I know that we've been seeing similar trends since the start of the war, since the deal was starting to get approached. But what do you make of these latest developments between President Trump, Netanyahu, the Lebanese and Iranian side?
We've had a few really important moments over the last 10 days. Last night was one of them. We think that ultimately the war is going to end, that there is going to be a memorandum of understanding signed between Iran and the US. It'll probably be pretty limited. It will probably focus on the Strait of Hormuz, as had been trailed over the last 10 days or so. But 10 days ago, there was a call between Arab leaders, regional leaders, and President Trump. And for us, that was a major turning point in the path that we're going down. And we see that as the kind of major pivot point towards an eventual end to the war. However, developments last night showed us that there are still challenges and that Iran decided to use its very particular leverage with regard to Lebanon. Because Iran has, since the beginning of the conflict, sought an end to the war on all fronts. And by that, it includes the IDF operations in Lebanon. And it very successfully leveraged, that connection and that red line last night to prompt President Trump, apparently through communications through US diplomats with Nabil Berri, who really, I think, is going to be an absolutely pivotal figure in the coming weeks. But it shows you how much there is unfinished in the negotiations between both the US and Iran, that there is still a great deal to negotiate the finer points. And Israel's own particular position here could be a bit of a spoiling factor over the next coming weeks and months. But we do ultimately think that we're on a positive path, even if it is a very, very long and slow one.
Right. So the positive path that would possibly lead to a broader deal between the U.S., Israel, and Iran. Now, the JCPOA was reached in 3 years. How realistic is it that this deal or this pathway to a broader deal is reached within months, really, and with the imminent threat of a looming war, higher energy crisis, the outlook on inflation is higher? How realistic is that expectation?
So when it comes to the potential documents we have in the months ahead, the one that we can be optimistic about is this memorandum of understanding, this probably single-page, half a dozen points document. When it comes to a replacement to the JCPOA, that is going to take months, if not years, to your point exactly. The original JCPOA took 3 years to negotiate, but that was in a context of where there had been ongoing communications between Iran, US, and European officials for at least a decade before that on something similar and in trying to bridge the gaps then. Politically, the environment we're in is very, very different now. There is a much weaker or less space for diplomacy, although it is ultimately to Donald Trump's credit that he has created, even though an indirect line of communication, quite a strong indirect line of communication with Iran. But when it comes to an ultimate JCPOA replacement, that is probably not going to be signed by the time President Trump's term is finished.
Right. I want to bring it a little bit to the GCC, and this is probably the first time we've seen such a direct involvement of countries in the region in a war of the same sort. Now, when it comes to the sense that I've been hearing about a lot over the past 3-4 months, the new normal, how resilient do you think GCC countries are to overlook this war once, if it is over? And what is the biggest threat? Is it a nuclear-powered Iran or the geopolitical tensions that we're seeing flaring up every now and then?
So If there's any kind of positives out of this war, it is the extraordinary resilience of the Gulf states that we have seen in the last several months. A lot of the processes and systems that were put in place immediately on the war starting were developed during COVID, as every country around the world had to adapt to those conditions. And the war provided a similar moment here. And because of the Gulf states themselves had reacted very well to COVID, they were very well placed to respond very quickly, very effectively. We've seen meaningful policy decisions already from a number of countries. Kuwait looking at tightening up its fiscal policy making in the last couple of weeks. The UAE announcing that it's going to focus on increasing domestic manufacturing. We have seen ADNOC announce an additional pipeline that will end in Fujairah. Saudi Arabia also making significant immediate investments and plans to expand that into its internal logistics sector that will benefit the whole GCC. I mean, that's happened in merely weeks, which is really fantastic, and hopefully all of these things will continue and become more embedded as the economies adapt to this situation. There's no doubt that the geopolitical situation in the region, as long as it continues, will still be very challenging, but that resilience has really shone through, and it shows you that countries can adapt, and they're not necessarily always prisoners to their geography. But Iran's position on the nuclear file, we have seen it reinforce the nuances around its position in the last couple of days. With Iran saying that it was considering signing the MOU that included a clause that says it would not ultimately seek a nuclear weapon, and really that is a public position that Iran has confirmed, even if some people in the analytical community have their doubts about this. But if President Trump can with Iran sign an MOU that includes a commitment from Iran to not seek a nuclear weapon, that will be a renewed public commitment to that, and that will give the GCC states some confidence.
We'll see what happens over the next few days. Niamh, thank you so much for your time this morning. This was Niamh McBurney, Associate Director at Control Risks. Now, coming up, Ethiopian Prime Minister Abiy Ahmed looks set to secure another term. We'll get the latest on that story next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to Horizons Middle East and Africa. I'm Abir Ahmed in Dubai. Ethiopian Prime Minister Abiy Ahmed looks set to secure another term. The election comes at a critical juncture as Africa's second most populous nation faces economic pressures, security challenges, and unresolved regional tensions. Our chief Africa correspondent, Jennifer Sapsaja, joins us now from London to unpack the story. Jen, was this election really ever in doubt, and what does the expected result out of this tell us about the future of Ethiopia's political landscape?
Well, Abir, the short answer is no. There were many people who were saying this was a foregone conclusion even before the voting started. And part of the reason is due to a few factors. If you take a look at the opposition, it had been fragmented over the past few months and year. There's also been concerns just about the domestic situation and security concerns and unrest. There's also been logistical challenges, which inevitably meant that a number of constituencies were deferred from actually voting. So that was part of the concern there. But it just, again, speaks to some of the challenges that we are seeing with Ethiopia domestically and also regionally. Domestically, Prime Minister Abiy Ahmed has been at odds again, renewed tensions between him and his administration and the TPLF, which is an opposition party. There's also been renewed fighting between armed groups in other parts of the region. And it's not just domestically. Regionally, Ethiopia has gained a few more tense tense relationships between countries like Somalia. There's also Eritrea. Ethiopia has been concerning countries like Egypt as well for the building of a dam that we saw open last year. And then there's also complications with the war in Sudan. And so there's really concern about just the political situation in Ethiopia and what that has meant really to any sort of peaceful democratic election. So that's really the context for what we were getting into this election with. So largely a foregone conclusion. Now really investors are paying attention to what happens next with Prime Minister Abiy Ahmed's new administration.
So with his new administration and with his upcoming term or expected term, what are the personal challenges that he would be facing?
There's quite a few that investors are paying attention to. If we take a look at inflation, it has climbed. We've also been paying close attention to what has happened with the Ethiopian birr, which is the currency. And so investors are really watching for stability coming into this new term for Prime Minister Ahmed. There's also the continued talks with bondholders that have really stalled any negotiations with the IMF. That has precluded the country from moving forward and at least stabilizing some of the economic woes that they had experienced in the past few years. So those are some of the downsides. On the positive, though, we have actually seen the new securities exchange launch last year, which many investors were applauding. And so we are seeing some progress there. And Prime Minister Ahmed also relieved the state, a number of state monopolies. And so there has been a bit of progression in terms of the economy within Ethiopia, but really investors are looking for stability and reform to continue in order to feel confident that it is moving in the right direction, despite some of the challenges that it's facing domestically and also regionally.
Jen, thank you so much for the latest on that story. That was Jennifer Zappasacha, our chief Africa correspondent. Now, for a look at some of the other stories that we're following, South African lawmakers have elected Makashule Ghana to lead the committee investigating President Cyril Ramaphosa's handling of a robbery at his game farm. The impeachment inquiry is now underway, though Parliament is seeking legal advice after Ramaphosa filed a lawsuit seeking to halt the process last month. South African gasoline prices are set to hit a record high this month after the government rolled back some temporary fuel relief measures. The price of 95-octane petrol will rise to more than 28 rand a litre, about $1.72 from Wednesday. The increase comes as the Iran war continues to drive up energy costs, though consumers will see some relief from lower diesel and paraffin prices. And Congo has reopened the main airport in the province hardest hit by the Ebola outbreak. Authorities say screening and surveillance measures are now in place to manage travel risks, with passengers subject to temperature checks. The move comes as officials report tentative signs the outbreak may be slowing, though challenges remain in tracing contacts and investigating suspected cases. And coming up, we will discuss Turkey's economy as it cools from the impact of the Iran war. We'll discuss the challenges as the country is facing them. That is next. This is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on Salar de Uyuni in Bolivia, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Now, Bloomberg has learned that the UAE's conglomerate IFFCO Group has drawn preliminary interest from multiple bidders. The assets could be worth several $1 billion, but buyers haven't yet made formal offers, and any decisions will likely only come after courts rule on the company's future. IFFCO has about $2 billion in debt, and its creditors include HSBC and Emirates NBD. Emirates Telecom is divesting 12.5% of its 50% stake in Careem Technologies to Uber. The stake is being sold for a total cash consideration of $100 million. And Turkey's economy cooled in the first quarter of 2026, growing 2.5% year-on-year. That compares with 3.4% growth in the first quarter of 2025. The slowdown came as the central bank moved to tighten monetary policy and deter risks related to the Iran war. For more, we're joined by Onur Ant, our managing editor for the Middle East and North Africa. Now, Onur, let's start with the economic part of things. Why the slowdown in the economy during the first quarter on an annualized base? What are the details that we're seeing out of the latest report?
Well, Turkish GDP, to be clear, has been in a slowing trend for about 4 quarters in a row now. And
In a sense, you could argue that this is exactly what you would expect from a tight monetary policy framework, which Turkey had in place for about 3 years now. So on the one hand, you could argue that tight monetary policy is doing the job, the intended job, like everybody else expected. The problem here is that while economy has been slowing down, inflation has been slowing as fast as expected. It still remains well above 30%, and that just makes it extremely difficult for the Turkish Central Bank, if at all possible, to lower interest rates at some point. So you have this combination of slowing growth and still very high, stubborn inflation. And that's not the kind of combination that any politician, let alone President Erdogan, would like to have going into another election season. Now, the next elections are scheduled in 2028, but given it's Turkey, it's always a possibility that they may be held even earlier.
Yeah, which brings me to my next question, and that is the fact that Turkish courts have recently unseated the leader of the political opposition. What does the opposition look like now, and how does Erdogan's grip on power look like?
Well, I think we can easily talk about a state of political turmoil, which, to be fair, has been the regular state of play in Turkey for the last 15 years or so. As you said, a younger generation of leaders who had taken over the Turkish opposition party, the Turkey Republican People's Party, 3 years ago, had won major election victories against President Erdogan in municipal vote in 2024. And now they have been ousted from the leadership position by Turkish courts. And they say that this is Erdogan's way of engineering a docile opposition through court decisions. Now, obviously, that's rejected by Erdogan and his allies. But the bottom line is Turkish opposition, although being reinvigorated just 2 years ago, is now facing a fresh leadership crisis. And it's just extremely difficult to see how they could mount a credible challenge to Erdogan should the president decide to hold a snap vote earlier than 2028 and seek another term in office, Abir.
Onur, thank you so much for that update, that important update on both the political and economic side of what is happening in Turkey. That was Onur and our managing editor for the Middle East and North Africa. Now, Serena Williams is coming back to professional tennis at the age of 44. She dominated the sport for 2 decades before moving away from the daily grind of competition in 2022. First up for the 23-time Grand Slam singles champion is the doubles tournament at Queen's Club. Now, to turn back to markets and how they're doing before the end of our show, equity futures in the U.S. are still down 0.3%. Nasdaq, Dow Jones doing the same thing. Euro Stoxx 50 futures are up 0.5%, a reversal of the picture we were seeing yesterday. Brent crude prices are slipping slightly this morning after a surge yesterday with the news of Iran suspending talks with the United States over the fighting that we're seeing in Lebanon. Now that's it for Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think,
this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general, and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8? Right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Stocks retreat from record highs as tech momentum stalls and the US struggles to get Iran peace talks back on track. Show me the money. Alphabet taps investors for $80 billion in one of the biggest equity deals of all time. And Anthropic pips OpenAI to the post as it confidentially files for a mammoth IPO. Plus, Bloomberg learns that senior Kremlin officials have warned President Putin that spending on the war in Ukraine is on an unaffordable path. Well, those are your headlines this morning. A very good morning. Welcome to Tuesday. This is the picture in markets today. A come down from yesterday. Asian stocks retreating from their record highs on the lack of an Iran deal. The AI trade losing momentum somewhat. So we're just flat to the downside on the MSCI Asia Pacific Index. Nasdaq futures are also down, though, by 0.4% after the tech index hit a record yesterday. But also reversing yesterday's fortunes, we've got European futures on the front foot today, so up 0.5%. This, as we see, if we flip cross-asset, oil down today by 0.9% on Brent at $94 a barrel, having surged sharply yesterday. And that surge had fueled concerns that higher energy costs would stoke inflation, forcing the Fed to hike. Treasuries now holding yesterday's losses, so we're down 2 basis points on the 10-year yield at 4.43, and gold up a touch by 0.7% at $4,517 a troy ounce as traders weigh the geopolitical confusion. Now, we'll dive into the detail of the latest in the Middle East throughout the programme. But first of all, let's take a look at the risk events on the docket for today. At 10 a.m. London time, we get the latest euro area May inflation data. This could cement the case for that quarter-point ECB hike this month. Then at 3 p.m. London time, we get the US April JOLTS figures in the drumbeat up to Friday's jobs report, of course. And at the same time, we'll be hearing from the Bank of England Governor Andrew Bailey, him giving testimony to the House of Lords Economic Affairs Committee. So will we get more clues on the BOE's rate path ahead as well? Let's set you up for the day ahead. We begin this hour with Asian markets retreating from all-time highs, but Chinese tech firms getting a boost in Hong Kong. Let's figure out what's going on. We could go to Bloomberg's Winnie Su in Singapore. Winnie, what are you watching?
Good morning, Lizzie. As you mentioned, we are seeing that AI rally taking a bit of a breather in Asia today, especially with these uncertainties around the U.S.-Iran deal. Now, you have leading losses. South Korea's Kospi index down more than 1%. But as you just mentioned, the bright side today is, in fact, in these tech stocks in Hong Kong. Here, HS Tech up 3.7%, led by the gains that we see in Tencent, which is up about 7% after Financial Times said that the company is getting close to a AI agent launch for WeChat, and that really goes to show how the company is ramping up their investment in its AI capabilities. Now, you flip aboard, I want to show you this very exciting chart that we have for our region today as we keep you updated on the global market cap race. So for the latest, we actually, it's a different chart that I wanted to show, but we wanted to show you how South Korea's market cap, in fact, overtake India's market cap, and now is the world's sixth biggest stock market, now being valued at around $5 trillion, coming just after Taiwan. So it's really being boosted by the two mega caps, Samsung and SK Hynix, which are both in the $1 trillion valuation club. Now, you also flip the board, we take a look at the currency space, because when it comes to cross asset, we are seeing the Japanese yen here hovering just below that 160 level against the dollar. Now, the continuous weakness in the yen is prompting Finance Minister Satsuki Katayama to again warn of how authorities will step in if they see the necessity of it. And when it comes to South Korean won, also continues to underperform. Yes, we did have inflation numbers coming in hotter than expected, but while we are expecting the Bank of Korea to slightly tilt towards the hawkish side, we are seeing these foreign outflows from the South Korean stocks for the 17th day to continue to prompt funds outside of South Korea. Back to you, Lizzie.
Winnie, thank you very much. That's Bloomberg's Winnie Su in Singapore. Now, before we look at the broader markets, let's just dive into tech for a moment, because the Google parent company Alphabet is raising $80 billion through a package of equity offerings as the company races to fund its ambitious AI spending plans. Now, the record equity deal includes a $40 billion at-the-market programme to sell shares beginning in the third quarter. Let's break down what all this means. We can speak to Bloomberg's senior strategist, Neil Campling, now. Neil, good morning to you. So this is one of the biggest equity deals of all time. It's pretty strange for a large public company. What's the thinking behind it?
I think, Lizzie, there's two factors at play here. Firstly, they're tapping into insatiable investor appetite to get exposure to the AI explosive growth. So there's a huge demand cross-asset for anything exposed. The other element, obviously, is that they need to fund the AI capex. And if we look at Alphabet's cash flow, they're actually going from over $70 billion of free cash flow last year. Analysts are forecasting free cash flow of just $20 billion this year, of $15 billion next year. So free cash flow is lower to fund, obviously, this AI investment. And so really they need to tap the market where they can. There is appetite for it. So they are able to do these kind of huge numbers that we are talking about in terms of the 80 billion, because there is that appetite for it. So the four hyperscalers combined in terms of Amazon, Alphabet themselves, Meta and Microsoft are on track to spend over $700 billion on hyperscale capex this year. And so you need to come to the market to try and fund that. And that's really, I think, what's behind this plan, which, as you say, has been announced in surprise in terms of the size, and also in terms of giving the likelihood that part of this is coming later on in the third quarter.
Now, we've also seen Anthropic pulling ahead of OpenAI with its confidential IPO filing yesterday, Neil. How vulnerable is the ChatGPT maker to being left behind here?
It's incredible. The remarkable speed with which Anthropic has grown it is certainly a risk for OpenAI in terms of Anthropic getting the march on them in terms of coming to market first, but also in terms of the size of Anthropic now relative to OpenAI. If we look at the most recent numbers that Bloomberg have reported, it appears that we have a bigger price in terms of the valuation, as we're showing nearly $1 trillion for Anthropic, bigger than OpenAI. But also Anthropic's run rate in terms of the revenue growth now, annualized revenue run rate, is 35% higher than OpenAI. So I think they're stealing the march in terms of coming to market potentially first, but also stealing a march in terms of that revenue run rate. To give some context, in 2022, Anthropic's revenue run rate was $10 million. It was $100 million in 2023, $1 billion in 2024, and $9 billion in 2025. And we've reported that in April of this year, they're on a revenue run rate of $30 billion, and last month, $47 billion of annual revenue run rate, the fastest growth ever for a software company. So Anthropic is leaving OpenAI behind on a number of metrics at the moment, and even Claude software, just one particular, the Claude app itself, is believed to be on track for $30 billion of that revenue on an annualized revenue run rate. So they really are pulling ahead of OpenAI in many respects.
Okay, Neil, thank you very much. That's Bloomberg senior strategist Neil Campling. Well, let's put this all into the broader context of the markets this morning, because we've got futures pointing to a negative start to trade on Wall Street today. The S&P set to break an 8-day winning streak. Nasdaq futures down 0.4%. With us in studio is Mark Cranfield, Bloomberg MLive strategist. So, Mark, thanks for being with me. Nice to have you still in London. I wonder, when we see figures like this, do we need to start worrying that one of these days that AI momentum is going to fade?
I think we always knew that June was going to be a huge month for the AI narrative, starting with SpaceX, which is really an AI company in disguise. They're trying to raise an enormous amount of money, and now we hear that Anthropic is probably not far behind, and then there's OpenAI to come as well. So investors knew the pipeline of demands on money was going to be enormous, and it was going to be a very choppy month, particularly if the SpaceX one didn't go as smoothly as we're hoping it would. But that's still to come probably in a couple of weeks' time. So, yes, we knew there's going to be a tricky... And now we hear that Alphabet is going to raise $80 billion as well. And it's all related to the same theme. So there are plenty of excuses. If you were heavily invested already, you've been doing extremely well on the whole story. Suddenly all these names come together. They're taking a lot of money out of the market. Maybe you're thinking either it's time to rotate or maybe get out of the story together. If you look at what's happening today with the Chinese tech names, suddenly they're up 3% today because of Tencent. Never write off Tencent. He's come back before. He's doing it again. And it's also an AI-related story. That's his own developments going on there in China, very popular by the sound of it. It doesn't look as though the whole thing is over yet, but clearly people are questioning the valuation story of it. Does it justify the kind of numbers that have been talked about? Will the returns really match what is being asked of investors to put in? We just heard that Anthropic, their run rate is going up extremely quickly, but it needs to, because where they're projecting in the future, where SpaceX is projecting in the future, are very, very high numbers, and investors will be impatient if they don't hit them pretty quickly.
Yeah, you mentioned Tencent gaining on that report that it's going to launch the WeChat AI agent. We'll keep an eye on Prosus if it has a cross-read into the European stocks this morning. But good to have you, Mark Cranfield. Thank you very much, our MLive strategist, of course. Well, turning to the geopolitics this morning, we have President Trump and Israeli Prime Minister Benjamin Netanyahu offered differing accounts of their phone call about fighting in Lebanon. It follows Iran saying that Lebanon must be part of a broader peace deal. So let's see how this is holding up those wider negotiations. We can speak to Bloomberg's Galit Altstein in Tel Aviv now. Galit, good to have you with us. It just feels like more confusing signals out of the Middle East. How aligned are Presidents Trump and Netanyahu? And can Trump ensure that they will end up on the same page?
Yeah, it is a bit complicated, but let's try to put things into order a little bit. So last night, Trump declares that a ceasefire had been achieved in Lebanon once again. That follows a first ceasefire that was declared in mid-April and completely collapsed. And that comes just an hour after Iran says that it will suspend any negotiation with the U.S. over ending the war in Iran until there is a ceasefire in Lebanon. Now, Netanyahu responds to this by saying that Israel will continue to act in South Lebanon, but he does hold off his threats to attack in Beirut for the time being, saying that Israel will not do that unless Hezbollah continues to attack Israeli civilians across the northern border. Now, the distinction Netanyahu is making has to do with the fact that Hezbollah has multiple times obligated to stay out of South Lebanon, south of what is called the Litani River in Lebanon. So in a way, there's more legitimacy for Israel to continue operating there, at least for the time being, as opposed to attacking Beirut, which has been off limits for many weeks for Israel, while the U.S. and Iran have been negotiating a more permanent ceasefire.
Okay, Galit, thank you for the context. Bloomberg's Galit Altstein in Tel Aviv. Well, still ahead, our exclusive conversation with Renee Haas, Chief Executive of ARM, will be joining us from Computex, Asia's biggest technology showcase. Don't miss that conversation live at 6:30 a.m. UK time, right here on Daybreak Europe. But in the meantime, coming up, as stocks slide from their all-time highs, we're going to speak about markets with Anna MacDonald from Hargreaves Lansdown. That's next. This is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome back to Bloomberg Daybreak Europe, 6:16 a.m. here in London. Well, with the US and Iran peace talk progress stalling, stocks are sliding from all-time highs. Let's get more on the markets now with Anna MacDonald, Hargreaves Lansdown's Investment Strategy Director. Anna, great to have you in the studio.
Good morning,
Thanks for coming in. So let's just think about what happens if there is a US-Iran deal. We've been on tenterhooks for it for days. Would it precipitate a rotation away from AI leadership and actually into EM and European equities away from the S&P?
It might do. I think that what we're seeing in EM, which is amazing actually, is that the leadership is even narrower in EM than it is elsewhere. So, you know, without those 5, 6 really big chip stocks and memory stocks, we'd actually be looking at declines in EM because they are really suffering from higher levels of inflation. So if you look at India, for example, actually we're still continuing to see a sell down from there. So once that shift can happen away from AI leadership into thinking about perhaps now those cost pressures that we're seeing coming through just for ordinary consumer stocks, for example, in EM, you might actually see a bit of a refocus on that. But the AI story itself is incredibly strong. I mean, we're seeing the news from Anthropic yesterday. I mean, they are delivering phenomenal growth. So I think you could have leadership from more than a couple of areas, and I think that AI is still going to be a massive focus.
So how do you advise clients to weigh the geopolitics and the AI?
Well, I actually always think that what you really need to think about is the really good management teams will be able to deal with whatever the world throws at them, and they'll be nimble enough. So we are seeing that already. We see good management teams are able to navigate crises like this, like the Straits of Hormuz, but we're also seeing those management teams that are trying to grasp the opportunities of AI. So I think it really comes down to that kind of level. I think that trying to time markets and trying to work out where you are in geopolitics is even harder now than it was before, because Trump can just, he can say something one day, and are we still with the taco trade, or are we thinking, what's he going to do next? And it's very hard to tell.
I also want to talk about the UK, because you've written about the acquisition spree that's going on here, but then Britain seems to be being bought rather than doing the buying. So, is it a vote of confidence, or should we take it as a warning sign?
I have to say I feel quite sad when I see some great British companies continuing to be bought. We've got a very open market. We've got English-speaking companies. We've got a takeover code that is quite accepting and very free market, if you will. But what we're seeing is that overseas companies are finding value. M&A is running at, I think, because some big FTSE 100 stocks have been bought this year, we are seeing M&A of around 43.5 billion so far this year. It was about 35 for all of last year. So it really is continuing a pace. It's including both private equity buyers and other corporates coming in.
But is it just that it's cheap, or is it actually that the UK is becoming investable?
I think it's because their companies are finding value there. So I think they think it's cheap, and those companies are good companies, well-run companies. Whether the whole UK is investable, I think it is investable. Of course it is. But what we're seeing is a general sell-down in equities. Pension funds, for example, are continuing to sell down UK equities, and there's part of a big move to, as we know, a concentration in US technology.
I also want to talk about yields, because we've seen such a roller coaster for gilts recently. Yields rising on the political uncertainty, falling on the economic data, and reassurances that the fiscal rules will stay intact. Is your interpretation that yields are just waiting to spike again if Andy Burnham wins the by-election?
Well, they have been running very high. We already have a yield premium in the UK. And we've actually seen some of our clients are buying at the very long end, because they're buying 2056, 2061. So they're some of our top 3-4 gilts that are being bought. And I think they're looking at, those are risky. They do swing around a lot. But what you think about, if you buy a low coupon, long dated bond, it is a risky thing to do. But, there will be a gradual pull to par, and you will also, all those gains are capital gains free. So you don't get capital gains tax free. So you don't get taxed on that. So that's something quite interesting that we're seeing. Those yields to maturity are looking pretty tempting, mid-5s. So we do expect an awful lot of volatility even in the shorter, not shorter end, but 5 to 10 year. We will see those move around quite a lot as we, 16 days to Macclesfield now, I think. So there's quite a lot of excitement, and a 7th PM in 10 years, who'd have thought it?
Yeah, potentially. Thank you very much. We're all counting down to that by-election. Anna McDonald, great to see you. Hargreaves Lansdowne Investment Strategy Director. Well, coming up, the Serbian president's been discussing his recent visit to China, and we'll bring you our exclusive interview with him next. Stay with us. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now, Serbia's president says that Europe's sleepwalking into economic ruin because of complacency and poor productivity. During Alexander Vucic's 12 years in power, Serbia has become one of China's main entry points into Europe, plowing billions of dollars into its industries from mining to humanoid robots. And fresh from a recent visit to Beijing, Vucic spoke exclusively to Bloomberg's chief Europe correspondent, Oliver Crook.
For us, of course, of an utmost importance are their investments and their commitment to work together regarding our steel mill, regarding our Zijin mine in East Serbia, copper mine, and new investments in brand new and cutting-edge technology smelter, which means nothing to me, but I was doing my best to learn everything from them about it, and that's it.
And so you have the economic part of that relationship.
Yes.
There is, of course, the geopolitical element of that, and there's obviously some objections from your European partners, potentially also increasingly from the Americans. Is there a limit, do you see, to that relationship, that partnership with China for the sort of practical purposes of geopolitics? Did you, for example,
if you ask me,
fighter jets from the Chinese?
I'll respond to you. I'll respond to you in a bit different way,
sure.
Maybe even unexpected. Instead of justifying myself, would like to, because there is nothing to justify, because I was doing my job, as all the others were doing their job. We Serbs, we don't have a big factory close to Chongqing, or Chongqing as we say, or anywhere else in China. But yes, Europeans were saying to us, okay, you need to organize a tender procedure, transparent procedure for that copper mine in East Serbia. We'll find some companies and they will bid for that. And at the end, the only real offer that we got was Chinese offer. Just to continue about it. Everybody was saying, okay, you were Russian puppets, you just wait for the very best moment to attack your neighbors in the region. Of course, it didn't happen for almost 5 years, but no one had never apologized to us. At the end, now it's not anymore about Russia. Now it's becoming more about China. Now don't go to China. Next time, if I go somewhere else, they will say, don't go there. And I don't accept this kind of lists. And my job and the job of my team and our government is to take care of Serbia's interests, not the other people's, not the other countries' interests. And why I'm saying this, because in the last 5 years, we didn't open a single chapter, a single cluster. What do you expect from us?
And on the question of
to die silently?
And on the question of EU accession, how do you see the progress going towards that? You said you wanted to meet all the criteria before the end of this year. Are you still on track for that? Do you find that there's the political will on the European side?
We do a lot of work.
world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Asian stocks bounce back as investors buy the dip, while US futures point higher despite struggles to get Iran peace talks back on track. Show me the money. Alphabet taps investors for $80 billion in one of the biggest equity deals of all time. And Anthropic pips OpenAI to the post as it confidentially files for a mammoth IPO. Plus, Bloomberg learns that senior Kremlin officials have warned President Putin that spending on the war in Ukraine is on an unaffordable path. Well, a very good morning. Welcome to Tuesday. If you are just joining us, 6:30 a.m. here in London. This is the picture in markets, and it's changed since the start of the show. Now we have Asian stocks in the green, up 0.25% on the MSCI Asia Pacific Index, driven by tech stocks in Hong Kong, up nearly 4% on the Hang Seng Tech Index now. We also have Nasdaq futures under pressure, though, down 0.3%. That tech index hit a record yesterday, and Euro Stoxx 50 futures up 0.7% this morning. Now, this, as we see, if we flip cross-asset, Brent weaker 1% at $94 a barrel. So edging down after the biggest gain in a month on that US-Iran standoff. And we keep an eye on Japanese bonds, the 10-year having fallen 10 basis points to 2.58% this morning. And we are looking at aluminium there at a 4-year high, up for a fourth day as the president struggles to keep these peace talks on track. Now, let's get back to the tech story. ARM shares jumping after NVIDIA announcing its entry into the PC market with a new chip featuring an ARM central processing unit. We can now go to Bloomberg's chief North Asia correspondent, Stephen Engel, who's at Taipei's Computex AI Expo. And Steve, you've got a guest on just this subject.
Yeah, Lizzie, we have an exclusive interview, a great opportunity with Renee Haas, ARM Holdings CEO. Thanks so much for joining us here on Bloomberg Television. The big news yesterday, obviously, was about NVIDIA moving into the PC space with the RTX Spark built on the platform, if you will, and the chip designed by ARM Holdings. How important is this as NVIDIA really moves into an area that is dominated by the likes of Intel and AMD, and the timeline and the I guess the runway that this could potentially provide you and the scalability?
Yeah, no, thank you for asking. I think it's one of these classic cases of right product, right time. Two interesting technologies are being put into one. There are 20 ARM CPU cores inside that chip. That's the most CPU cores you can find in any laptop SoC, designed in partnership with MediaTek. And then NVIDIA taking their Blackwell RTX GPU, combining it with that into a super chip, and you have the most performant GPU on the market that can run agentic AI. So as we're moving more and more towards these heavy-duty workloads on PCs running agents, this is the perfect chip at the perfect time. So we're super excited about it.
You know, all the guys that are clamoring around the Computex halls, they're all asking, what about battery life? Because the RTX past iterations, if it's running the games, and that's something Jensen Huang, showed advanced capabilities, agentic AI, and high processing graphics, battery life is a concern. What alleviates your concern that battery life, all-day battery, is a tough thing to fulfill?
This is the hallmark of all things ARM, right? Because we are literally in every single smartphone on the planet, so everything we do is around power efficiency. So we extend that into the laptop space. The previous laptops have been announced on ARM, whether the Mac Neo or the MacBook Air or the Google Chromebook or even some of the Windows machines. They've got the best battery life in the business, 18 hours, 21 hours. So we're expecting the products built with this chip to be terrific.
It can deliver then?
Yeah, absolutely.
Okay. Qualcomm Snapdragon competes on Windows on ARM space as well. What percentage of the PC market do you see ARM really having its fingerprints all over by the end of this year and next 5 years, let's say?
Yeah, I think when you look at all the categories, because ARM is the only supplier on the planet from a CPU architecture standpoint that does all the platforms. What do I mean by that? Mac OS, Windows, Chrome, and Linux. When we look at that all in totality, could we see a 50% number at the end of the decade? Absolutely.
Oh, wow. Okay. But at the same time, you're also moving into, I guess you could say, a strategy shift, a radical move, that you're going to start doing server chips of your own, branded with your own name, maybe. But again, did you see a gap? Let me just ask you that. What gap did you see in the market that you would, not necessarily go against your competitors, but you're going to be putting a product up there against some of your key competitors like NVIDIA?
Yeah, so if you look at the evolution of our technology over the last 4 or 5 years since I became the CEO, one of the things we've seen is a consistent demand of please do more. And we started taking our IP, putting them into blocks that we called subsystems, combining everything to help people build chips faster. We did that about 2-3 years ago. The demand on that has been fantastic. And that naturally started to lead into customers asking us, hey, could you take these subsystems and just finish it off and build the chip? Because in some cases, the final chip, greater than 90% of the IP on that chip belonged to ARM, belonged to those subsystems. So first off, we were asked to do it. Meta asked if we would, and we said yes.
I was going to ask you about Meta. That's pretty much the launch customer.
That was the launch partner. And secondly, it was a market that was really underserved. There are folks like NVIDIA, Amazon, Google, Microsoft who can build ARM server chips, but there are some folks who just don't have that capability. The Cloudflares, SAP, some of the customers with this AGI CPU, and also Meta. So really, we were responding to customer demand.
How do you see this business growing over the next year and next 5 years? As you add, perhaps I would assume you're already in discussion with other launch customers.
Yeah, so we talked about with analysts back in March about a $15 billion type revenue by the end of the decade. We're well on track to hit that. I'm hoping we could even hit that sooner. Demand has been stronger than we anticipated. And I will say that's a combination of just all things AI. But also, frankly, it's a great product. It's 2 times the performance of an x86 at the same power. So demand has been fantastic. So the number we've talked about publicly is 15 by the end of the decade, 15 billion. I'm very confident in achieving that target.
Well, you said that 90% of the ARM architecture built into that. Were you literally simply looking at the market and saying, we can be at the top of the pyramid? I mean, NVIDIA has taken that space.
What we were seeing was, huge demand for power-efficient technology. And when you think about what goes into building out AI data centers, power is one of the hugest pieces of everything. So if you can build a very efficient machine, it helps save money, it helps save power. Then with all things agentic AI, a lot of that work is done by CPUs. Yes, the GPU does a lot of work to generate the token, but the distribution of that token, the administration of that token, the orchestration of that token, that's only work CPUs can do, which is why people have been talking about, oh my gosh, the CPU demand, it's just going off the charts. It's largely because of that.
How much of this is also driven by the fact that SoftBank now pretty much owns ARM Holdings? You, I believe, are the CEO of SoftBank Group International.
That's right.
They have a portfolio of AI companies. Do they look at this space and say, we need to be there?
There's a very close symbiotic relationship between the SoftBank Group and ARM. SoftBank owns 85% of the company-ish, somewhere in that range. But when you think about things that SoftBank has been very focused on, whether it's around energy, whether it's around infrastructure, whether it's around financing, SoftBank and Masa just announced a 5 gigawatt project in France earlier this week. Having connections between what the two companies are doing is really important. So I took on this role inside SoftBank Group International to really help with the coordination. But to be clear, my day job is to CEO of ARM.
Yeah, that's right.
My number one primary duty is to shareholders of ARM.
You have a lot on your plate, no doubt. There are challenges as well. There's some saying that there's an overinvestment bubble in data centers and the like. What do you see? And also, of course, there's this memory chip crunch, not to mention other key components are seeing shortages right now. In fact, I believe it was the SK chairman, Chae Tae-won, saying memory chip shortage could last until 2030.
So I started in semiconductors in the middle 1980s, and I've seen cycles. You know, people would always say semiconductor is a boom-bust business and always driven by oversupply or undersupply with demand. So a lot of folks say, well, why is this different? I would say one thing that's different about what we're seeing right now is the amount of compute that artificial intelligence requires is quite significant to anything before it, and it touches every single industry. It touches everything around humanity. Everyone on the planet will have some interaction with AI, whether that's AI indirectly or directly, but it affects everyone. If you think about world GDP, $130 trillion, knowledge work, white-collar work being maybe a $30 trillion market, that is a large market of which today is largely undertapped. So is memory going to be short till 2030? I don't know. I hope not. But could I see this demand continuing much longer than people have ever seen historically? That I do believe.
So do you maybe look back at 2023 and there wasn't enough investment because a lot of memory chip makers were having trouble?
Absolutely.
They just didn't build in that capacity or foresee the demand that was going to shoot through the roof like it is now.
The folks at Micron, Samsung, SK Hynix, they have tough jobs. And then 2022, 2023, they're all losing money. And
now they're in the $1 trillion valuation
now
club.
They're the $1 trillion club, but cautious, right? Because they look at that and say, if I overbuild, where will I be when the supply crunch eases up? But I do think you may see some more innovative business models. Would hyperscalers be investing in fabs? Would there be more equity partnerships around that, such as secure supply? I think that's quite possible.
Well, yeah, so what kind of resiliency needs to be built into the system so you don't have such peaks and troughs?
There needs to be a shared system, right? Shared risk, shared investment and shared risk. I think asking public companies like a Micron to take all of that risk themselves with no shared risk from the people who are the large consumers, that's very, very hard to sustain. The governments have been helping. I mean, the U.S. government has helped in terms of the work they've been doing with Micron and also encouraging Samsung and Hynix to expand the U.S. But I think it's more than just government.
I've used all the time to talk about the advancements in AI, but what about the smartphone market, which you obviously play a big role in, widely expected to contract this year? What impact are you seeing?
I think it's going to probably contract. The high end of the market, I think, is still going to be okay. For ARM, thankfully, we're not that impacted by the growth of smartphones decreasing because, A, most of our business is in the high end, and we've been successfully in increasing our royalty rates such that our royalty rates have actually, our mobile phone business has been going up while the actual units have been going down.
Yeah, Renee, it's so great to talk to you. And you know, Jensen Huang, you worked at NVIDIA before. He kind of jabbed at you today. He said, he made you rich. That's kind of a nice backhanded compliment, I think.
I guess so, but he was a shareholder, so we helped them too. So it all works out.
Great to see you. Thank you very much. Renee Haas there, the CEO of ARM Holdings, exclusively on Bloomberg Television. Back to you, Lindsay.
A poke in the arm there for Renee Haas. Stephen, thank you so much for bringing us that fabulous interview. Bloomberg's Stephen Engel out of Taipei. Well, coming up here on Daybreak Europe, embarrassment for the UK government after thousands of private messages from Peter Mandelson's time as US ambassador are released. I'll bring you the details of that document dump next. This is Bloomberg.
about 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:45 a.m. here in London. Well, Bloomberg has learned that Russian officials are warning President Vladimir Putin that projected spending on the war in Ukraine is unaffordable. It comes as Russia carried out a large-scale drone and missile attack on Ukraine overnight, killing at least 9 people. Joining us now is Tony Halpin, who leads our Russia economy and government coverage. So, Tony, good morning. How serious are these budget pressures? And, frankly, does Putin care?
Well, as we've seen, the noise is increasing from finance officials about the cost of this war and how difficult it is now for Russia to fund it. Economic growth is slowing sharply. The budget deficit is ballooning. It's already bigger than it was for the whole of last year. But as you've noted, it isn't necessarily the case that Vladimir Putin is going to take that on board and change course. From what we gather in our reporting, he basically told officials, look, you need to make savings, but so far don't touch defence spending. Defence officials, on the other hand, are telling Putin, look, we can win your war, but we're going to need tens of billions of extra dollars this year to do it. So there is this tension, and as we've exposed, so far at least, there's no clear answer from finance chiefs about how they're going to meet this increasing gap.
Well, yeah, where are the cuts likely to come from? How difficult will they be to implement if you're making a guess at where they could trim some spending?
Yes, I mean, the budget deficit is already about 2.5% of GDP. That's pretty much 50% larger than they predicted this year. So the finance officials are definitely looking for savings. Putin is telling them, look, put defense off the table, look elsewhere. But that means they have to look at things like pensions, which Russia's very reluctant to touch because pensioners are one of President Putin's support bases. He's always tried to keep them happy by paying pensions on time. And then other areas like health, education, roads, infrastructure. But many Russians would simply tell you, look, that there's not enough spending on these things already. So if you start to cut there, they'll start to notice that pretty quickly.
And that's perhaps when the pressure comes. Tony, thank you for the scoop. Bloomberg's Tony Halpin there out of Dubai. Well, let's turn to the UK now, because the UK government has published thousands of private communications related to Peter Mandelson's tenure as US envoy, which ended, of course, in disgrace over his links to the paedophile financier Jeffrey Epstein. The disclosures include revelations from senior ministers, such as Pat McFadden's admission that Labour MPs are focusing on who can we tax in order to pay benefits to others. Well, let's speak now to Bloomberg opinion columnist Rosa Prince. I'm sure she's got views on this. So, Rosa, this is one of the biggest ever parliamentary publications. I think it's 1,500 pages of documents that were published. Are these messages from Pat McFadden to Peter Mandelson the most damaging from the document dump?
I think they're embarrassing. I think as an individual, Pat McFadden's probably feeling quite bruised and it'll haunt maybe the rest of his career. But I actually think there are 3 other things that stood out for me. One is the extent and kind of early nature of the backbiting against Keir Starmer's leadership from his top team, the cabinet being very disobliging about him in messages to Peter Mandelson as recently as, as soon as a year into his reign, and even before this scandal really blew up the government. The second is the extent to which Peter Mandelson was able to get his tentacles right across Whitehall. He's a man who loves power and influence, and it seems like everyone within the government facilitated that. He seemed to have this kind of thrall over them, and often that wasn't a good influence. I mean, he was pretty treacherous to Keir Starmer, despite that controversial appointment, really backbiting against him early on, as I say. And the third thing in the documents is actually something that's not in the documents. I think we're really no clearer in understanding how it was that this man who had so many red flags that should have gone off in government about the appointment, his links to Jeffrey Epstein being just one of them, also his very extensive relationships with controversial figures around the world, from China to Israel to Russia. Why was this appointment allowed to happen in the first place? Why did Keir Starmer make it? And there's just not that kind of clear document trail to allow us to understand that. Now, some of that is because documents have been withheld on national security grounds. There are large parts of the documents that are redacted, and some have been held back for the police inquiry, which is ongoing into Mr. Mandelson, who I should say denies any wrongdoing. But those are my takeaways.
Yeah, I mean, that clearly the central question that we were hoping to get answered from these documents. As you say, the rest is just kind of embarrassing for everyone, really. Clearly for the Prime Minister, Rosa, but what about those who are trying to replace him? Do the likes of Andy Burnham and Wes Streeting come out of this unscathed?
Do you know, Wes Streeting probably comes out of this the best of everyone, partly because he had already proactively decided to release his messages between himself and Peter Mandelson, but also because he's one of the people who, Peter Mandelson, who loved gossip, he loved criticising people. He is very down on Wes Streeting, so and given how events turned out, that's almost a badge of honour. But I think more broadly, it's helpful for those who want to replace Keir Starmer because it underlines how dysfunctional his government is. I mean, when the history books are written about why Keir Starmer fell, Peter Mandelson and the disgrace around him and his appointment and all this scandal will be a major factor. So anything that punches that bruise helps to make the case for those who want to get rid of him.
Just finally, Rosa, how's that by-election shaping up for June the 18th? Is Burnham looking likely to win? And, if he doesn't, where would it leave Labour? Because it feels like if they can't beat Reform in a by-election, surely they'd be toast at a general election.
I think that's absolutely right. It's hard to know how the by-election's going. Polling suggests that Andy Burnham can win, but it's a very small sample, and by-election polls are not that authoritative. Reform, who are the major challenger, seem to be having a bad by-election. Their candidate has come under a lot of criticism, and they're also being challenged on the right from a new party, which I've written about for Bloomberg Opinion, Restore Britain. So it looks like the bookies have Mr. Burnham on course to win, but it's certainly not a shoo-in. And I think you're right. I think if he doesn't win, that really leaves the future of this Labour government in a seriously critical position, because there has been so much criticism of Keir Starmer, and yet they will again come back to the fact they haven't got anyone credible to replace him.
All eyes on Makerfield again. Bloomberg opinion columnist Rosa Prince, thank you very much for all of those insights. Well, plenty more coming up on Daybreak Europe. Don't go anywhere. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Jobs Day, and Bloomberg has the report under surveillance.
Gearing up for the latest jobs report.
Why do we see nothing but doom and gloom on jobs? The last two headline reports from NFP have been really, really strong.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
Things really are not deteriorating in the labor market. Will we see firms have a smaller footprint when it comes to employees?
The May Jobs Report, Friday on Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:55 a.m. here in London. And I want to leave you with some terminal charts, starting off with that ISM data that we got out of the US yesterday. So you can see in the white at the end of this chart, prices paid easing modestly, but remaining elevated. Now, that's not the full story, because in the blue, you've got the 5-year break-even rate, which the Fed, of course, looks at as one of the indicators for when to cut rates. And that shows that investors aren't pricing this in quite yet. This is the bond market's response. Now, if we go all the way back to 2021, you can see the Fed missed this signal. They didn't hike rates until March 2022. And by that time, inflation was already entrenched. So the conclusion of this chart, this is not a signal that Kevin Warsh, as the new Fed chair, wants to miss. Now, just another couple of charts. We've got tech in focus very much at the moment. This is how US stocks would have performed without the AI influence. You can see on the UBS tech AI winners up 50% so far this year, and without them we'd be the yellow line. And just finally, we've had the OpenAI Anthropic battle. Who gets to file that confidential IPO first? Anthropic, it turns out, but Anthropic already surpassing OpenAI when it comes to AI adoption. All of that to bear in mind. CHRT TV Go is where to find all the charts we use on Bloomberg TV. Up next, Anna, Guy and Tom will take you all the way to the European Cash Open. The opening trade's next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up,
I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Good morning. It is Tuesday, June the 2nd. Here's what's on the agenda. Alphabet's blockbuster $80 billion equity raise to fund AI. A mixed picture on stock futures after an 8-day rally for the S&P, and a split-screen moment as Trump talks up an Iran deal again, as Tehran says talks have been suspended.
Meanwhile, then, in the markets, in the numbers, Tom, European equity futures are pointing higher, but some of this is a catch-up story to the US yesterday. The US rallied quite a lot after European close yesterday, so we need to factor that in. So we are expecting to see positivity on European equity markets, not so on the Kospi, and this has been a really volatile index over the last hour or so. It was firmly in negative territory earlier on. We were thinking about profit-taking on the AI story. Then it popped up into the green, now down 0.3%. It's that kind of messaging that seems to have been weighing on the Nasdaq futures overnight, so there is some weakness in the session for the US ahead at this point. Brent crude being whipsawed, as have yields been whipsawed by all of those conflicting lines that Tom was just talking about coming out of the Middle East. We'll get to that shortly. The countdown to the opening trade starts right now.
Tuesday the 2nd, good morning. You've heard of de-equitization. We've heard that a lot over the last few years. Now we're getting into the re-equitization phase. SpaceX, Anthropic, OpenAI, and now Alphabet, all coming to the market and in size. The Alphabet story is fascinating, coming to the market with $80 billion in terms of a capital raise through the equity market. 40 of that is at the money, i.e. they're going straight to retail, which I think is fascinating in itself. 10's going to Greg Abel over at Berkshire Hathaway, 30 split, the remaining 30 split into 2 tranches. Why are they going at the money? Why are they going to retail? Tom talks about the fact that some of it's going to build out the OpenAI story. Some of it's also going to pay a tax bill. That's interesting too. So there's a lot going on here. But re-equitization, there are some big lumps of equity coming back into this market.
This from a company that investors had gotten used to in terms of repurchases, in terms of a balance sheet that was a fortress, the fortress balance sheet of Alphabet, repurchases. That has all changed on this huge bet around AI infrastructure and the demand for their TPUs. And in terms of that 80 billion number, that is almost comparable to the capex spend of 2025 from Alphabet. Bloomberg Intelligence now looking at that $80 billion equity number and pushing that out and doing some analysis in terms of what that tells us about their future capex spend. So they've pledged $190 billion of capex this year. And Bloomberg Intelligence suggesting this could put them on course for $300 billion by 2027.
And this is just one company. This is really quite incredible numbers we're talking about. This is one of the biggest. If you put that package of complexity together around Alphabet, it's one of the biggest equity raises that we have ever seen. And it's a sort of unexpected twist in the IPO narrative and the money-raising narrative that we were going to be talking about already this year. But here are some existing, already listed companies coming back to the market for more. Let's talk about the other part of this morning, which is Anthropic moving ahead ahead of OpenAI in the race to IPO, if it is a race. I mean, do you want to go first? Do you want to go second? I've read both sides of the argument this morning.
Going first and going second, I think, is an interesting question. But then you've also got to look below the hood and look at what the lockups are going to look like. How staggered? When do we get the big kind of lockup expiries? What impact could that have further down the road? There's a lot of equity coming into the market. So the initial kind of amount of stock coming to the market could be relatively small. But further down the road, 6 months, a year, whatever it's going to likely look like, you are going to get a lot of equity coming through. And what is this going to be used for? Just back to the Google story, I think it's interesting that 40 is going to be used effectively for stock compensation. That's what they're changing their strategy on stock compensation. So in some ways, again, the Alphabet story is about an exit. The OpenAI story is about an exit. The Anthropic story is about an exit. The SpaceX story is about an exit. There are a lot of people who have got a lot of value in these businesses looking to offload it into a wider market and potentially into 401ks, into ETFs. That is what is effectively happening here.
This is a huge amount. This is a huge amount of liquidity. This is a huge amount for the markets to absorb in terms of debt and in terms of equity. The two stories can be tied together because what Alphabet may be looking at is the kind of revenue that's being driven by the likes of Anthropic. They are on course for their most recent quarter potentially to bring in revenues of 11 billion, close to 11 billion US dollars, double the previous quarter, and according to Bloomberg reporting, getting close to profitability. So they are seeing that demand from their enterprise clients. So the demand is being crystallized. Those corporates and those CFOs are signing off on buying in Anthropic. And that potentially is another signal for Alphabet that this demand is there. They need to build the infrastructure to meet it on their end.
Yes, let's draw a line between this conversation then and then what we're seeing in the wider market story. Because on the one hand, we are whipsawed by the Iran headlines. On the other, we are still buying into the AI growth story. A little bit wobbly this morning, perhaps. US futures pointing lower. The Kospi quite volatile. It's in a bit of profit taking. But we have come so far on that story. And it's interesting to think about the wider economic signals that we're getting around AI. I was looking at the US ISM data, the strongest in 4 years, and AI is part of that. Yes, there were tax changes that incentivized some investment. There's a reduction in trade uncertainty also. But there is also the AI build-out, and that's a key factor there. CPI out of Korea, one of our colleagues over at in Bloomberg TV in Asia talking about, you know, if you're getting structural, quote-unquote, demand for memory, are you also going to get a structural change in the inflation picture in Korea? So that's part of the narrative there. And HP up 27% after hours, as that's another name that's, you know, increasingly we're talking about once again, coming back from the past, if you like, but for demand for servers, demand for networking, and the S&P up for the 8th day.
The inflation rate within the AI story is extraordinary. And if it is structural, then you have to make assumptions going forward in terms of what that's going to mean for the real economy. But the fact that memory chips are priced in the way that they are at the moment, that has to have an impact on the cost of AI for the users that we all think are ultimately going to drive this and pay the right price and use this stuff in the productivity miracle that we're all anticipating. How much does the productivity miracle cost if this is what a chip costs and the inflation rate within that chip space is X plus whatever?
Economists seem to suggest at the moment that this isn't a big enough item in the basket to really move the needle. But is that going to stay the case?
Yeah, and there's a lot of discussion in San Francisco and beyond about token budgets and the fact that companies are burning through these budgets that they may have set in 2025 for 2026. Then you have agentic AI, and they're burning through those budgets as their employees use this agentic service. And so that is an additional cost for them. And at what point does that become too much of a cost for them, or do they have to restructure their budgets?
It has to have a revenue benefit, doesn't it? It has to generate productivity, and if it's not, then it's a cost. And that needs to be, that's what you've got to resolve. So there's a pricing issue with AI that needs to, you need to find a balance there.
So that's the inflationary impulse coming through from AI. And to your point, we're seeing that percolating through different data sets and different regions. We also have to continue, of course, to focus on what's happening with the commodity space. And oil, just a little weaker today, but very volatile yesterday. A big tick up, in fact, the biggest jump in about a month yesterday. After you had, number one, you had further incursions by Israel into Lebanon. We know that Iran has put that as a potential red line for them in terms of signing off this deal. And then you had the Iranians suggesting that they were going to suspend conversations with the US. But no problem, because President Trump comes out in an interview with US media and says we could still get a deal within the week. So we described this in the headlines as a split screen moment. That's what it feels like. And how do the markets work around that? How do investors work around that?
How do you price this? Like distribution of outcomes. kind of, I don't know. I don't know. Do you put it on a kind of what does the bottom axis look like? How do you think about time in this? We're going to have a guest on a little bit later who's going to say, oh yeah, it's going to get fixed by July. Who knows? So I don't know how you put the time factor into the price.
Yes, and does the round number of 100 matter? Does it matter to many people? Does it matter to the president in the US? Does that, maybe not, maybe gas prices matter more. But some people are asking, if you're edging back up towards 100, we're at 94, that's the handle this morning. But if you head up back to 100, and if you've got yields going higher on bonds, does that start to influence once again, and if inventories are much reduced, does that start to influence once again the stock story, which has been pretty immune because of AI?
So do we need to see Brent above $100? Do we need to see yields shooting up on the 10-year? And do we need to see equities and US stocks selling off? So far, that hasn't happened, of course, in the equity space, to pressure Trump to making some concessions to get this deal across the line. Does the relative resilience of the equity market keep the straight close for longer?
Yeah.
Potentially. Flavio Copanzano, Capital Group Investment Director, is going to be joining us to discuss all of this, as will Shanti Kellerman, 7IM co-CIO, Angelina Valavina, Fitch Ratings EMEA Natural Resources Head, will be here to talk about how you price oil right now and think about when we are going to see a straight reopening and what that ultimately looks like, Tom.
Here's what else we are watching then throughout the day. 10 a.m. UK time, we're going to get Euro area CPI, talking of inflation, that data breaking at 10. 2 p.m. UK time, we're going to be hearing from the Bank of England Governor Andrew Bailey, appearing before the House of Lords Economic Affairs Committee. And at 3 p.m. UK time, we get US JOLTS data ahead, of course, of non-farm payrolls, which drop on Friday. US congressional primary elections are held in California, Iowa, Montana, New Jersey, New Mexico and South Dakota. Plus, Israel and Lebanon resume talks in Washington, D.C. after President Trump held that phone call, according to Axios, very contentious with Prime Minister Netanyahu, and apparently convinced him to stop attacks on Beirut.
Some quite incredible language apparently being used in that call. Anyway, diplomacy. What else do you need to know this Tuesday morning? Denmark's Prime Minister Mette Frederiksen will remain in power for a third term after a breakthrough in coalition talks. Frederiksen said she succeeded in forging a centre-left four-party coalition. It comes more than 2 months after a closely fought election. That is the longest time it has taken to form a cabinet in Danish history. The White House says it will reduce tariffs on agricultural equipment to cut costs for US farmers and manufacturers. Levies on equipment such as combine harvesters will drop to 50%. It was 25%. The change will come into force on June the 8th and last through to the end of next year. And it's raining outside, which is great, because here in London we've also got significant travel disruption caused, and it starts today, by a tube strike. Some of the drivers on the city's underground train network are preparing to strike. I think they're already on strike in a dispute over working hours. The walkouts will go ahead all day today and again on Thursday. No service expected on the Circle Line, the Piccadilly Line and on parts of the Metropolitan and the Central Lines. Other tube lines will be running alongside the Elizabeth Line, the London Overground and the buses.
But we all made it in. Let's see how we get home. Coming up on the programme, it is 11 minutes past 7 here in London. We will get back to the geopolitics. Bloomberg learns that Russia's finance officials are warning Vladimir Putin that his spending on the war in Ukraine is becoming unaffordable. We will bring you the details later in the programme. Plus, ARM CEO Rene Haas has been speaking to Bloomberg from the Computex event, which has been taking place with much fanfare in Taiwan. We will bring you some of that interview in just a moment. We will also be joined next by Elliot Hentov, who is head of macro policy research at State Street Global Advisors. We'll try and put some of these themes we've been discussing together this morning. If you want to do that with us, IB plus BBTV Go is the function to use to get in touch with the team that puts together this programme. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Welcome back, everybody. This is the opening trade, 15 minutes past 7 here in London. And European equity market futures looking to play catch-up with their US counterparts from yesterday. And as US futures improve just a little, looking for some upside at the start of the trading day. Tom, the AI story, front and centre.
Yes, let's get back to a key player within the AI space, of course, focused on CPUs now as well. ARM CEO Rene Haas says he expects the balance of supply and demand for every type of memory chip across the board to remain tight for a while. Bloomberg's Stephen Engels spoke to him exclusively on the sidelines of the Computex conference in Taipei about the squeeze on the market, his view on the growth potential of AI, and more.
I would say one thing that's different about what we're seeing right now is the amount of compute that artificial intelligence requires is quite significant to anything before it, and it touches every single industry. It touches everything around humanity. Everyone on the planet will have some interaction with AI, whether that's AI indirectly or directly, but it affects everyone. If you think about world GDP, $130 trillion, knowledge work, white-collar work being maybe a $30 trillion market, that is a large market of which today is largely undertapped. So is memory going to be short till 2030? I don't know. I hope not. But could I see this demand continuing much longer than people have ever seen historically? That I do believe.
So do you maybe look back at 2023 and there wasn't enough investment because a lot of memory chip makers were having trouble?
Absolutely.
They just didn't build in that capacity or foresee the demand that was going to shoot through the roof like it is now.
The folks at Micron, Samsung, SK Hynix, they have tough jobs. And in 2022, 2023, they're all losing money. And
now they're in the $1 trillion valuation
now
club.
They're the $1 trillion club, but cautious, right? Because they look at that and say, if I overbuild, where will I be when the supply crunch eases up? But I do think you may see some more innovative business models. Would hyperscalers be investing in fabs? Would there be more equity partnerships around that, such as secure supply? I think that's quite possible.
Well, yeah, so what kind of resiliency needs to be built into the system so you don't have such peaks and troughs?
There needs to be a shared system, right? Shared risk, shared investment and shared risk. I think asking public companies like a Micron to take all of that risk themselves with no shared risk from the people who are the large consumers, that's very, very hard to sustain. The governments have been helping. I mean, U.S. government has helped in terms of the work they've been doing with Micron and also encouraging Samsung and Hynix to expand the U.S., but I think it's more than just government.
Okay, Bloomberg's Stephen Engel speaking exclusively to Rene Haas, the CEO of ARM in Taipei, of course, on the sidelines of Computex. I was trying to work out whether Rene Haas was suggesting that the memory chip story is now not cyclical. And I'm not sure if that's exactly what he was saying, but he was saying that they're seeing demand that they haven't seen previously and the length of demand. So certainly in the years ahead, he wasn't committing to 2030s and beyond, but he certainly said longer than we've seen previously in terms of that demand story.
But he's saying that the companies like SK Hynix and Samsung are still worried that it's cyclical.
Yes.
And that's the fear that still exists. But he's also talking about almost socializing the risk around that and how you build that out and who takes the risk. And maybe it's not just those individual companies, it's the wider ecosystem. Maybe you include government within that wider ecosystem.
Yeah.
Are we at the point now where the risk is so great that ultimately you have to have a wider base for that pyramid?
Risk to stocks, certainly, but I'm not sure that's quite the conversation. But yeah, really interesting thought to pursue. In that context, in that light, let's just have a moment to think about ST Micro this morning. In the light of continued strong AI infrastructure-led demand, I'm reading from their statement, and based on recent progress made on capacity run-up, ST Micro is raising its revenue ambition for data centres. The numbers here are not enormous by global standards, but certainly for Europe, this could be something that adds...
For Europe.
Yeah.
That's the for Europe, this is quite big.
Yeah.
For the rest of the world, not so much.
And talking about data centre revenue doubling in 2027. So there we go, some more signs of positivity.
Elliot Hentoff is joining us around the table this morning. He's the head of macro policy research at State Street Global Advisors. We appreciate you being here. Always a challenge to get in on a day like today, and it's raining outside. Let's start with the AI story. You've got SpaceX coming to the market. You've got Anthropic, OpenAI. You've got Google overnight talking about raising $80 billion. We've had years of de-equitization of share buybacks, big drivers of the market. Feels like that's going into reverse. What are the implications?
First of all, I don't think it's going into reverse.
Okay.
I do not think this is the end of the 20-25-year cycle of kind of a de-equitization. I think we're in a plateau. The second thing is IPOs are generally not harbinger of great returns. So the correlation, the track record is poor, and one can wonder why is that. There's different theories, hypotheses that it kind of signals the top of the market. It signals kind of the cash out of the.
What do you think?
Well, I do think some of these business models are going to struggle. I think the hard part for investors is to figure out which one is actually going to thrive and succeed.
Any ideas?
I think what I do think is, as a macro researcher, I pay attention to that now.
Yeah,
I have to.
Precisely. So these are so big.
They're so big, and OpenAI's business model has repercussions for the whole CapEx cycle, which basically messes up or influences my macro outlook. So I have to pay attention to what's happening in private equity, so to speak, to get my forecasts right, too.
You have to pay attention to what's happening in space and to what's happening in Chinese robotics. I mean, being a macro tourist everywhere is getting to be a complicated business. We started this programme thinking about AI, also thinking about the role that the Iran war is playing and what is going to bring sufficient pressure to bear, perhaps from a market perspective, on the protagonists involved to bring about some resolution. Now, do you think it's something that markets can do? Is it something that oil and bond markets, stock markets do? Is it what oil inventories do that will bring this pressure to find a resolution?
I mean, the nice thing is we all have gotten a great economics lesson the last 2-3 months in how a supply shock unfolds, how it transmits. So you get the signal from the commodity markets, it spills over into inflation forecasts, bond markets adjust, and that's how you get the pressure on policy. That was the case in 2025 with tariffs. I think that's still the case this year. It's basically ultimately the bond market will be the tool that really drives U.S. policy. And I think you're right. I think you need a squeeze. You need something to crack to kind of to break the deadlock in the negotiations.
But then when we get that breaking of the deadlock and we get some kind of deal, we had a conversation yesterday with a geopolitics guest who was talking about the possibility of a muddy deal. Do we then enter a phase where we just worry about this restarting again? Not necessarily the war, but reclosing the Strait of Hormuz now becomes a tool that certain players think they can return to.
Yes, and we worry about it, but that's fine because we know how to do that. That's a risk premium. We bake it into into asset prices and the world moves on, as long as the physical molecules are flowing, that worries me much less. But yes, that is the world. There will be a residual risk premium. There will be a much higher floor on oil. That also affects the fact that we won't get as much of a disinflationary bust from a deal that comes out of the Iran war. So those are the consequences. I think that's precisely the world. We're not going to get a kumbaya moment. It will be a muddy deal. But muddy deal is what we're looking for versus muddy non-deal, which is what we have right now.
Is there a residual impact on margins then, even if this is cleared up with a muddy deal? And where does that land? How much has that been priced in? How do we think about the margin squeeze, even as we look at Brent at, what, $94 a barrel? Some had predicted $200 a barrel at the start of this conflict. Do we still continue to worry about margins and the squeeze there?
Depends whose margins. I think for the AI story, it's probably peripheral. For the non-AI story, I do think precisely it's a higher cost, higher input. It does eat at margins everywhere, particularly the ones that are energy intensive or high energy importers. Those margins in those markets will suffer as a result. And also the other thing is higher cost of financing. We're not going back to bond yields in February. We're probably going to go a little bit lower than where they are today. But that's still kind of a permanent kind of bump up in the cost of financing. That's
structurally higher yields?
Correct.
Over what period of time?
Well, if really, we're in a new decade. It's been since the 2020s. It's one supply shock after another, some big, some small. But basically, we have not reached the final end point, the final range point for where yields land.
What can't you price at the moment? You can price a muddy deal. What are you struggling to price right now?
Well, you say you can price the muddy deal. I think it's very hard to price it because a muddy deal in June is very different than a muddy deal in July. In August, when we did our initial forecasts at the beginning of this year, we expected rate cuts. And by March, we still held to that view because we thought, okay, maybe this could kind of resolve itself by April. But then each subsequent month changes the forecast. So the timing matters. It's not just about, we cannot price. Currently, we're all in Groundhog Day. I think we mentioned that. Every day we wake up.
We're living it, don't worry.
We wake up every day. And deal or no deal, and the timing really matters because that shifts everything. It shifts where bond yields land, and it shifts where our inflation forecasts land, and so forth.
And with all of that in mind, and the uncertainty and the lack of visibility, where do you think the Fed goes next? You don't think they move this year. You think they're on hold. But then when they do move, in which direction?
That's a great question. I think intuitively, if you looked at the economy just right now, you'd think it would be a step down once you get over that mild stagflationary hit. Thinking a little bit deeper, if you think there's going to be a growth revival by 2027, tighter labor markets, you have stickier inflation in the service sector, probably the step could actually be up.
Are you saying that the US economy is reaccelerating?
It will after this is over.
Okay.
What kind of reacceleration are we talking about?
They've already... I mean, the growth rates are already pretty robust, and I think that it'll be a mild plus. We're not talking about a huge step
We've got non-farm payrolls on Friday. You're not worried about jobs and AI disruption of jobs?
AI disruption of jobs I'm not worried about. I am worried about jobs because there was a softening generally. We think some of the factors that led to the softening, huge policy uncertainty last year, a tightening of the tariff regime, those come off, and therefore you get a little bit of a revival and a loosening. Assuming we have a muddy deal that we can all finally move on with.
Okay, the muddy deal. Elliot, thank you very much indeed, and thank you for braving the rain and the travel disruption for us, of course. Elliot Hentoff, Head of Macro Policy Research at State Street Investment Management. Coming up, we're going to bring you the European bond market open with Capital Group Investment Director Flavio.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
It's the second. Good morning. How are you doing? 30 minutes to go until we start trading equities here in Europe. Futures are pretty positive right now. That's the picture we're looking at. 3, 4, 5, 6, 7/10%. I'm seeing on the screen. Looks like the Spanish market's going to have a good day today. So we are generally called higher. US futures are a little negative. They're not down by a lot. 0.2%. Nothing really to write home about. But there's a little bit of negativity maybe coming across the pond this morning.
Yes, there is a bit, isn't there? Although with the Kospi recovering, US futures, as you say, off earlier low. So we'll watch that carefully. In terms of the bond market story, then, we actually see quite a lot of movement in the European bond market story, and it suggests less concern about inflation. But this is a bit yesterday's story, because we saw Treasury yields shoot up in the session and then come down on all of the mixed messaging we were getting coming out from the US, from Israel, from Iran, with regards to what is happening on the ground over in the Middle East and Lebanon and its role in particular. So perhaps we're just reflecting the dynamics yesterday in Treasury markets into the European session this morning. So we see some buying of fixed income. Let's get to the source of that volatility then in bond markets over the last 24 hours. Oil is ticking lower after its biggest gain in about a month. This as President Trump and Israeli Prime Minister Benjamin Netanyahu have offered differing accounts of a call about the fighting in Lebanon. Earlier, Iran said that Lebanon must be part of a broader peace deal. For more, let's bring in Bloomberg's Abir Abu Omar, who's in Dubai for us. Abir, very good to have you on the programme this morning to give us an update of what is happening here, because we get very different accounts from the US and from Israel, and to the extent that we're not entirely sure whether Iran and the US are still talking or exchanging messages. What can we be certain of?
Yeah, you're right. Good morning, Anna. So look, I mean, the latest we know is we have yet another conflicting sort of narrative between the United States, Israel, and Lebanon. So Lebanon has emerged as a sticking point in the wider negotiations between Iran and the United States. So what we know is that Axios reported earlier an expletive-laden call between President Trump and Prime Minister Benjamin Netanyahu yesterday. And President Trump came after and said that Israel had agreed to not raid the capital of Lebanon, Beirut. This is after Benjamin Netanyahu said that there were plans to send troops or to attack the suburbs in Beirut. Benjamin Netanyahu afterwards said that that Israel had agreed to not attack the suburbs of Beirut, but that the attacks on the southern part of the country will continue. So essentially, this is what's happening in Lebanon. Yesterday, we reported that Iran has said that Lebanon is a part of the negotiations, that it will suspend talks with the United States if attacks against Lebanon and Hezbollah, its ally in the southern part of Lebanon, continue. So it's emerged again as this point that has halted Iran from continuing its negotiations. Just a few minutes ago, the Iranian parliament speaker, Mohammad Ghalibaf, said that not only will the negotiations with the U.S. not carry on if the attacks against Lebanon don't stop, but that Iran will be forced to tackle the enemy, and I quote him here saying that. So aside from the fact that we're expecting this ceasefire agreement that will open up the Strait of Hormuz and continue the ongoing ceasefire for 60 days, that is sort of the preliminary deal between the two. What we know now is Lebanon, the nuclear enrichment program in Iran and sanctions and the frozen assets are going to be a big part of those conversations that will happen at a later stage. But for now, we're still waiting for this preliminary draft deal to happen between Iran, Israel, and the United States, essentially.
And Abir, we're getting some lines crossing from the semi-official Mer news agency in Iran, and they are citing a person apparently close to negotiations with the US, saying that Iran has not yet sent its latest text to the US. Iran is still deliberating on its final text, again, according to the semi-official Mer news agency. Do we know to what extent the leadership in Iran has coalesced around a position, Abir?
So look, again, this adds to the confusion to the confusion that we've been seeing over the past couple of days, and I'm just seeing this line coming up right now. But what we know is that the new supreme leader of Iran, Mujtaba Khamenei, or the new Khamenei, is against sending the enriched uranium outside. Now, what we know is Iran could reach some concessions about sending the enriched uranium or the highly enriched uranium to a third country. Some talks emerged about that being either Russia or China. But what we know for now is that the contention point for the time being is opening up the Strait of Hormuz. We know that Iran as well yesterday said that or threatened that another strait may be at risk here, and that is Bab el-Mandab, that is close to its Houthi allies in Yemen. And that is the strait that connects the Red Sea with the Gulf of Aden and the Indian Ocean, Tom. And that has been the waterway that Saudi Arabia has been using, for example, or resorting to divert away from the traffic in the Strait of Hormuz. So if that is under threat now, that's yet another risk to global energy prices that have been accelerating down slightly this morning. They were gaining yesterday after the talks emerged about Iran threatening to pause the negotiations with the U.S. until Lebanon is no longer attacked.
OK, Bloomberg's Abir Abu Amar in Dubai with that update. Thank you. Let's bring in at this point Flavio Capanzano, Investment Director at Capital Group. Flavio, good morning. If the strait remains closed, to what extent is that priced into the bond markets? How much potential further pressure for upside yields is there at this point?
Yeah, first of all, thank you very much for having me here. It's, of course, a very fluid situation. So we don't know. The way is interesting. The way you can look at the bond market is like the market really focus on one side of the equation. This shock is clearly stagflationary, and they focus only on one side, which is inflation. That's why you saw this repricing in the bond market. What we think is important is cutting through the noise and see also the other side of the coin, which is growth. And growth in the U.S. so far has been robust, has been resilient. But again, we are going to have this week more data on the labor market. But our concern is that you can start to see more erosion in the real income, particularly in the low, middle part of the consumer in the U.S. So it's going to affect growth, and particularly because it's a different world compared to a few years ago. Saving rates in the U.S. is lower than in the past. It used to be 10, 12%. Today we talk about 6%. You see wage growth has been much lower. It used to be 6, 5%. Now it's more 3%. So when you combine all these together, the growth picture started to be a little bit risky. And that's why then when you look at the bond market with the Treasury at 4.5%, the 2 years at 4%, actually is quite attractive. And probably in terms of risk reward, price more the inflation risk, doesn't price very well the downside risk. And you see the Fed, actually, the market is pricing expecting Fed potentially hike, we believe actually is going to hold and potentially cut at some point.
Very interesting. So you're really worried about growth for the details that you've just unpacked for us there. So that takes you to the long end of the curve. So you're finding opportunities at the long end of US Treasuries, but you're seeing opportunities in Japan and emerging markets as well.
So it's interesting. What we saw, we started the year more with underweight in the long end, and given valuation today in the US, we actually increased duration in the 10 years in the long end. When you look in the other part of the market, it's a different story. So Japan is an example where actually you saw the repricing. But we believe Japan is an interesting one. It's an inflection point. Bank of Japan is clearly behind the curve, and we think actually Bank of Japan need to increase rate once or twice this year. So what you see in the bond market is very interesting. You started to see much more global dispersion. So not all the central banks will move in the same direction. So you might have a Federal Reserve that hold and cut versus Bank of Japan, and probably ECB is going to hike. And that's why it's important to have a global and active approach, which is also shown, I don't know if you heard, but we basically published a fixed income survey where we ask 300 institutional investors the view on fixed income globally, North America, Europe, and Asia. And the trend that emerged is, one, they find fixed income still attractive. So 50% of the survey show they want to keep allocation on fixed income, and 25% they want to increase the allocation to fixed income. And the second interesting point is investors, they want to have more a global approach diversified outside the US, including emerging market. So emerging market debt is an asset class that's becoming increasingly interestingly moving more from a satellite asset class into more a core. So this difference between developed and emerging market debt becoming more and more blurry.
Why is the govie market worried about growth and the equity market or negative growth? And why is the bond market worried about? Let me get this right.
Yeah,
I'll get this the right way around. Why is the equity market shooting for the stars and the bond market worried about growth?
Well, I can see there are kind of different signals. The equity market is definitely focused on corporate earnings has been extremely strong.
Yeah.
You have this AI that's going to drive productivity for corporates. Actually, we believe that. You can eat these over the next 12 months, you can see impact on growth. But over the long term, growth in the US might be quite strong as well.
Is that deflationary or inflationary?
The productivity actually is disinflationary.
Okay.
So which
doesn't
is
feel
important.
Like that at the moment.
Which doesn't feel like that. That's why the bond market doesn't feel like that. The bond market is almost pricing a 2022 scenario. We don't think it's the case. And we don't think it's the case because the starting point of yield is also very different. And that's why we find opportunity in the fixed income market now, because it's a different situation compared to a few years ago. But over the long term, very long term, we believe growth in the US is going to be resilient. Inflation might go down in a combination of AI impacting investment, but then also productivity bringing inflation down.
So if AI build-out is inflationary, but then when you get the adoption and the productivity gain, that's deflationary. I mean, it feels like we're going to be in the AI build-out phase, though, for a long time. When you're talking about, companies like, we just got a line coming through from SK Hynix to double memory production capacity over 5 years. Does it seem as if the AI deflationary impulse is still way out in the future?
Well, I think that's why you can see the bond market from two perspectives. You can see the inflation side and the growth side. So you can start to buy bond more as a protection for downside risk on growth, which is one aspect and is not zero probability. So you can see that angle there, which is what we believe more. And you can still buy bond over the long term because you think actually inflation is going down. That's why the case for bond over the medium long term is still the case. What you describe is a situation where the volatility is going to remain extremely high, extremely elevated, and rates, they're going to stay higher for longer. We don't believe rates are going to go back to where we were pre-COVID, but it's definitely an environment where fixed income is going to do relatively well, despite volatility is going to remain extremely high.
And your survey suggests that there's still, people wanting to be exposed to fixed income. Do you talk to clients much about tips? I feel like we don't talk about tips, and there's a lot of inflation around, and there has been, and we still have not talked about tips much. What am I missing there?
Absolutely. I mean, on tips is always an interesting asset class because you need to separate the two components, the break-even versus taking long duration risk. And where we find more attractive today is in the break-even. The break-even is interesting because the inflation, if you look at the tips market, doesn't really reprice this big reflationary environment. So investing in tips through basically just isolate the break-even is an interesting way to protect your portfolio for that potential increase in inflation. So it's interesting because today the way we position portfolio in fixed income is not for just one outcome. You really need to have multiple outcomes. So you buy some duration to protect you from the growth. You can buy some break-even to really protect for the tail event where actual inflation reaccelerate, and this is a kind of a cheap option today.
What's going to happen with the fiscal story next year? At the moment, the US is running a 6%, north of 6% fiscal deficit. That feels unsustainable to me.
Yeah.
What happens to the fiscal impulse next year?
Well, the fiscal problem or issue is not just a US one. Yep. It's a global problem. Sure. And you can see where we are actually, it's not concern, it's more the impact on the yield, it's more probably in Europe and the UK. Europe is an interesting case where we touched briefly where we believe actually, first of all, the impact of the oil price in Europe is going to felt more than the US.
Yep.
Europe as a country is more affected by energy price. So that's one, and brings ECB potentially to hike rates. So it doesn't look through the cycle. There is the other side, which is the fiscal impact. And Germany is going to spend a lot of money in terms of expansion, which has an impact on the bond market in terms of issuance. We expect more than 100 billion issue net supply from the German bond, which is going to put more pressure on the German bond side. Yep. And so that's why on the relative value, you can see more pressure on the German bond in the euro rates in the long end than in the US.
And in the Treasury market. Flavia, nice to see you. Thanks for stopping by to see us.
Thank you very much.
Flavia Capozano, Capital Group Investment Director here on the Fixed Income Story. Tech titans are gathering in Taiwan. The AI boom is, of course, the hot topic of Computex.
I announce his stock price goes up. Nothing happens to mine.
Let's also state for the record.
I'm very happy about that.
Let's also state for the record that you were a shareholder and you sold.
Yeah. Well, I needed the cash.
Sort of floating head of Rene House there. Somebody might have thought about maybe the black background and the black jackets. Just putting it out there. That was, of course, the ARM CEO, Rene House.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Tuesday morning, it's the second. How are you doing? US futures are a little soft. We're not down by much. We're off our lows. European futures are up. We're up 3, 4, 5, 6, 0.7% in some cases. So a more positive picture maybe beginning to emerge. So hard, though, to figure out what is going on out there, particularly with the AI trade and particularly with the oil trade, neither of which look like they're giving us any clarity at the moment, other than we're going to build a lot of data centres and we don't have any oil right now.
Yes, these things seem to be true at the same time. So equity markets, as you saw there from the screen, expected to go higher at the start of European trade play, catch up with the US. Let's talk about today's markets in 3 minutes on the opening trade with Markets Live executive editor who, drum roll please, is in London. Mark Cudmore, very pleased to see you. Thank you very much for being with us on set this morning. So let's talk about productivity and whether you really see a productivity boost from AI. If I were being optimistic, I'd say, look, the last tech trades we got excited about were around social media and the Internet of Things. And we got excited enough about those. And did they really ever threaten to deliver a productivity boom? But maybe AI really will. You're not a believer.
I do think there's a productivity boom from AI, but it's how big of a one. We're pricing an extraordinary one. We're pricing that, these companies are all going to make an extraordinary amount of profit in the same overlapping sector, like Anthropic, ChatGPT, Gemini, whichever, XAI. They're all going to completely dominate this space. They're all going to take in a whole load of revenues from all these other industries, even though these industries don't make enough money on the projections to pay all these companies all those amount of earnings. And there's a real productivity boom, but how much of one and how quickly is it coming through? It's really hard to define. I think it's the key question, and when do we going to get that answer? And because that's the kind of earnings rug pull at some point. I think at the moment, there's real earnings being made there, but it's the projections going out that really kind of worry me. So at the moment, I worry that we're conflating the fact that we can produce much more with actually value add, and that's why I don't think we're really getting it.
Google out overnight is going to raise 80 billion, going to get the Anthropic IPO. They're all coming. These are massive risk transfer exercises. How do you feel about them? Well,
that goes into the point that this is such an interlinked system. We've talked about this a lot, right? Where they're all, co-investing each other, co-financing each other, but also the fact is a lot of the incremental improvement in profit of the big, mega cap techs is the increase in share value of their investments in these other, Amazon's profits get boosted by the fact that its Anthropic share, goes up X%. And that means that when there's a problem, this is just going to be so bad because, after the GFC...
There is going to be a problem, right, at some point?
There's definitely going to be a problem at some point. But it's just... But after the GFC, we kind of... The one bastion of, good kind of financial strength were the mega cap tech. They were these kind of cash machines, and they didn't have a massive amount of debt. And now they're suddenly building up their debt. Now, again, they're still pretty strong. There's not a sudden problem with them. But we're suddenly we're really pushing this to the limit. Now, does that push to the limit for another 6 months, for years? I up until about a few weeks ago, I was like, it's at least another earnings season away. And whenever you get to another earnings season, you go, at least another earnings season, because it's going to be an earnings rug pull. But I have to say, I'm no longer as complacent about the fact that it keeps on going forever, because I really think we're just seeing an extraordinary euphoria.
I think that was Mark admitting he was complacent.
Yeah, yes. Is that maybe we need to put a pin in that. Right? We're talking about funding that's going towards, in many cases, data centres that suck in as much energy as a small city. And we're looking at energy. We're looking at Brent right at about $94 a barrel. Yeah. So the Strait of Hormuz is closed. $94 a barrel. Data centres need energy. Increasingly in the US, they're turning to oil and gas. But there seems to be a lag there. How comfortable are you with the oil prices right now? Should we draw that connection to the AI story?
Yeah, I'm very uncomfortable because the front contract's not really the big issue. It's the December contract, right? So December oil prices are still above $85 a barrel for December Brent crude. That's more than 35% above the 1 year average price. That is a major inflationary shock coming through. And everyone kind of talks about fibre optic cables from the dot-com bubble, but they had much longer use case, right? These are like chips that are going to have to be usurped by better chips within only a few years, even though we've changed the accounting on that conveniently.
Bloomberg Markets, lovely to see you. What a joy. joy to have you in the studio.
That was him with jet lag. That was a lot of energy for jet lag.
It's even better.
I'm trying to be awake tomorrow. Where's that coming? We all need to bottle that. Bloomberg Markets, live executive editor Mark Gudmore, of course. More of Mark tomorrow. You can get up-to-date analysis and insight from Mark and the rest of the less jet-lagged team. Go to MLive Go on your terminal. Let's get your stocks to watch with Chloe Melly. Chloe.
Good morning, Tom. The biotech company Abivax is going to be in focus today after some positive drug trial results. But what's going to be really interesting there is that we actually saw the American shares of that company jump quite significantly and then plunge immediately after. So we could see a similarly extreme reaction in Europe as well this morning. And another key thing to keep in mind is that those results could prompt takeover offers, with one analyst saying that this was one of the most valuable assets in that space. And some of the suitors could include names like AstraZeneca, Eli Lilly and Pfizer. So definitely one company to keep a close eye on this morning. Moving on to a very different sector, and we're going to be talking about chocolate, because Barry Callebaut has lowered its medium-term sales growth guidance. And so this comes just a couple of weeks, a month now, after it cut its profit guidance for this year, for 2026, which sent the shares plunging, as we can see here on the graph. And this is a company that has been dealing with weak consumer confidence and also very volatile cocoa prices. So we'll be watching out for any reaction from the market on this weaker medium-term guidance. And finally, let's talk about BP, because the FT reported that the same person that appointed the chairman, Albert Manifold, who was fired just a week ago, is going to be leading the search for his successor. And so some investors are criticizing this, saying that there's a need for a fresh approach. And so we could be watching out for any potential weakness there as this boardroom drama continues for BP.
OK, that's one drama. Chloe, thank you very much. Much drama to go around this morning, it seems. Chloe Melly with the stocks that she is watching this morning. I'll throw in a couple more. ST Micro on that upgrade to guidance around data centres. And we'll also be watching Prosus on even read across from their holding in Tencent, which has done pretty well in today's session.
With an AI version of WeChat, which is this eponymous super app that's used by almost everyone in China.
You got better things to do now? Where are you going?
I'm off to South by Southwest, London, to moderate a panel with a focus on AI. I'll try and answer some of those questions for you around return on
You'll be back tomorrow with answers.
That is the promise.
OK. Wow.
That was bold.
Okay. That was very bold.
That was very bold. We'll be back with the market open. This is Bloomberg.
The world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
You U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Tuesday morning, good morning. Let's talk about Monday before we talk about Tuesday. This was the session yesterday over in the United States. Europe went out here. We've got some more upside. We need to price that into futures. The session yesterday in Europe was negative, so we're going to bounce back a little bit into Tuesday's session. So let me show you the futures, give you an idea of what is going on. This is the picture we're looking at, fairly positive. You've got the Euro Stoxx 50 up by 0.8%. FTSE futures are up by 0.5%. DAX futures are up by 0.7%. There's a few single stock stories out there, but it feels very much like a top-down kind of macro market this morning. You're trying to figure out what is happening with the AI trade. You saw a little bit of caution maybe creeping into the Asian session. You still got an oil story, which is very hard to price. And what happens there, I think everybody's struggling with right now, particularly when it comes to the time factor and when the Strait is going to reopen and when we're going to get some more barrels of oil. All of that is coming. But this morning, at least from a European point of view, from a top-down stage, Anna, we're looking at a positive story.
Yeah, looking at a positive catch-up trade then here in Europe. In terms of that AI trade, which we've been watching as it develops through South Korean markets and into NASDAQ futures this morning, a lot of volatility there. Well, we've got a European dimension to watch. ST Micro nearly doubling its forecast for revenue from its data center business to $1 billion this year. Also talking up the prospects for revenue next year, saying that could also double in 2027. So we watch that. On to chocolate, and the Swiss chocolate maker Barry Callebaut announcing new guidance as part of a strategic overhaul. It's lowered its midterm sales growth range to 2 to 4%. So this under the third CEO in less than 5 years over at that business. And Abivax, this in the pharmaceutical sector, reporting cancer cases in a crucial clinical trial. So that kind of really muddies the waters in terms of what kind of future trajectory we get from this French biotech business. Guy.
OK, here we go. Tuesday session. Let's talk about the equity market open. Let's give you some numbers and show you what is going on. We are expecting it to be fairly positive here in Europe this morning. We're expecting the FTSE to be up by, let's call it, circa 0.5%. So we'll watch that one as we climb towards that kind of a level. Stock 600 could be open 0.6% once we finally get maybe all of those stocks trading. So we're up by 0.3%, maybe a little bit more upside still to come through from that market. The DAX is actually called up by around 0.7%. We're going to watch what happens with the chip story this morning, the AEX. Maybe we don't get quite such a positive picture coming through from maybe some of the names like ASML. But the CAC is up by 0.6%. The IBEX is up by, let's call it 0.6%. So positive start. We're not up a lot, but we're up. And I think after yesterday's negative session, we're closing a little bit of a gap with the rest of the world this morning, Anna.
Yeah, absolutely. So a bit of positivity coming through then at the start of the trading day, as we expected. Still no opening price on the DAX, nor on the AEX, which is interesting with the focus on what we've heard from ST Micro this morning. So we'll come back to the technology sector. In terms of where we see the biggest gains coming through, travel and leisure is the best performing sector this morning. And if I click into that, is it the travel or is it the leisure? It seems to be some of the leisure. Entain is doing well. TUI, though, also. So it's also reflecting a slightly weaker oil price at 94.33. Basic Resources also doing OK, up by 1.4%. Technology doing OK, up by more than 1%. And the ST Micro share price over in Paris is up by more than 5%. So that is certainly something we're watching. They've guided higher, an upgrade to their revenue guidance for this year and for next. So we'll continue to watch that. We also have a movement on the we're waiting, for a movement on the Barry Callebaut share price. That one is still not open. The Abivax share price still not open either. So those are other companies that we're watching this morning. Also, Prosus is halted in the Netherlands, and we saw Tencent up by 10%. Prosus holds quite a bit of Tencent, and so often we see those two move on the back of each other. We see Prosus move on the back of Tencent.
So I wondered whether the caution that came out of Asia overnight and the fact that we've got futures in the States on the NASDAQ negative would mean that actually maybe some of the European tech story would not do well this morning. But that is not the case. ASML is the biggest points gainer. Siemens, ST Micro, Schneider Electric, all tracking higher this morning.
Yeah.
Those are where the points are coming from first thing.
Yes, and it was interesting, actually, through the Asia session, that tech narrative was evolving quite a bit, and we had seen weakness on the Kospi, then that retraced.
Yep.
But all the way through that, we actually saw Chinese tech doing OK. And I know on the Markets Live blog, they've been talking about whether we're going to see some sort of rotation into that theme, but that's, going to have geopolitical challenges about it, isn't it? But certainly one that we are watching. So, European equity markets then up by 0.5% on the Stock 600 this morning. Let's bring into the conversation Shanti Kellerman, co-CIO at 7 Investment Management, with us on set this morning. Shanti, good morning to you. Thank you for getting in to see us on a Tube Strike day. Let me ask you about what your view is of equity markets broadly, globally, given the amount of euphoria we see around the AI trade, the amount of money being raised to fund the AI build-out. How are you investing into the AI trade right now, or are you a little more cautious?
We're still quite positive on equity markets. Investor sentiment is quite strong, and in contrast to retail sentiment, which is chronically weak. Then we have good momentum, and then on the growth side, you do have higher oil prices, but also the massive amounts of capex we're seeing generally is a good long-term signal for equity markets. I think valuations are probably the main detractor when you look at the outlook for equity markets, but that's kind of outweighed by those other factors we see right now.
And so, which sectors are you particularly enthused by? If you're still into stocks, so whereabouts in particular?
So we run a sector strategy, and in that we have more in information technology, and we've recently increased that. We also have a fairly large exposure to communication services, which are both very much front and center in the AI trade. We have a bit of energy in that as well, which came in kind of March, April time, in response to that. But I think when you look at those sectors, you see strong earnings revisions upward. You see the actual earnings coming through. And then you also see, there's high capex from some of those companies, but then that's cycling back into the hardware providers and kind of providing that certainty of buying power out into the future.
You like the energy sector, but everybody seems to believe that the crisis in the Gulf is going to be over soon. Presumably, won't oil prices come down fairly dramatically? Won't oil stocks come down fairly dramatically if you believe that the situation is about to be resolved?
So I think there's the short-term issues we've got there. There's also the longer-term demand for power related to AI. Okay. And I think that is something, maybe we will, yes, oil prices will fall if the Strait opens up. But longer term, you have a lot of demand that's going to need to be met if we're actually going to be running it. We get a lot of innovations to try to run chips with less energy, but I don't think the volume of compute that some of these companies want to do, we're not going to get there without more energy.
Talking about those companies that want to run that kind of level of compute, a lot of them are about to come to market. What do you think about these IPOs? Should investors be buying them? Does this sort of portend some sort of signal for the market? It's an awful lot of equity coming out. It's a huge risk transfer exercise. They're going into the indexes. What do you make of this process and what the signal is from it?
Yeah, I'm a bit reticent about the exceptions that have been made to put things into indices straight from the get-go, because that's never been done before, and it doesn't give a lot of those passive investors the choice or the certainty of having stuff that's in the index be things that are tested. There's certainly a lot of enthusiasm. I think there probably is enough capital out there to fund it, but I think we're certainly going to have a negotiation period on how much people are actually willing to pay for those. And I think right now what you're seeing is testing the market to see what the demand is, where the valuations will go to.
Yeah, Shanti, just as a test case to understand how it affects investors' thinking, I mean, how will it impact? You talked about having in your sector modelling quite an exposure to information technology, which I assume will include some of these companies. So how will you have to respond to these big listings? Will you have to remove some of the exposure to IT elsewhere to avoid going too overweight tech, or is that not going to be a concern?
Yeah, so with the analysis we've done, we think if you do get, the three big ones in, you probably end up with something like a 5% weight in the S&P 500, which is significant, but not, it's not like it's going to 20. Yeah. So we'll have to, a lot of the stuff we do works on earnings estimates, momentum, those sorts of things. You won't have a lot of that data for those companies to begin with. So I think it'll force people that run some of those more quantitative strategies like us to have a little bit more judgment, because we simply won't have that until we have a few quarters.
I was going to ask you about alternative strategies, because you talked in your notes ahead of our conversation about selling put options, about relative value FX trades, and I wonder what's dictating the kind of alternative strategies and how much you're leaning into those at this point.
Yeah, so those worked really well for us in March, and I think our view is we'd rather have strategies we can test and understand than own things like infrastructure or real estate, which can often behave the same as normal markets. I think things like put selling is just a chronic thing where the market overprices that hedging risk. So if you're willing to take the other side of it, you can make a quite good return. And the other things like FX can be quite uncorrelated to other parts of the market. We've also seen trend perform really well this year. It had a bit of a weak patch last year with the tariffs, but this year has been a lot stronger. So it's just about finding things that are actually diversified rather than optically diversified.
So what is it that the rest of the market worries about that you don't worry about, that you're able to take the other side of that put trade?
So I think there's a lot about structuring about how you do the options and what volume, in what size, over what timeline. So that is really important. And I think you also have to accept with those strategies that there's a window where you outperform and then be aware of the market conditions where you'll underperform because it will happen in certain market environments, a sharp crash or a really sharp rise.
How correlated is Europe to all the kind of big technology stories that you've talked about so far? Can I hide in Europe? If there was to be a downdraft in tech, is Europe going to do well, or is it going to be just an outperformance relatively high? I'm still going to lose money on that trade.
Yeah, I think Europe has, Europe's share of tech has improved a bit, where you have, these companies like ASML, SAP, Micron, Infineon. So I think that has improved. A lot of it is still, still high exposure to energy, still very high exposure to consumer. And I think it's suffered from being on the weak end of that quality growth trade, which hasn't worked very well. And I think the other thing Europe will always struggle with is it's just a more highly regulated environment than somewhere like the US, and that imposes more costs on business and makes it a bit harder to grow.
You don't like Europe by the sounds of things?
It's not my
favorite. From an investment point of view?
I think there's some great companies there, but as a whole, I think they probably need to do a bit of work on capital markets and regulation.
I've heard that before.
Can I ask about Asia with a view to tech? Because we're just getting this red headline crossing the Bloomberg terminal now saying SK Hynix to double memory chip wafer capacity over 5 years. Seems to chime with some of what we were hearing a little earlier about them investing in what might be a structural change or might still be part of a cyclical environment for chip companies. We'll wait to see. But what are you doing around Asia, and how do you think about investment in Asia tech? Because we've also got more than 40 companies in the Hong Kong pipeline waiting to come to market in terms of Chinese tech, and a lot of that is robotics companies. I mean, how are you thinking about where the next leg is going to be in the AI tech gains?
Yeah, I think emerging markets has almost become an AI trade to some degree. And what's quite different is we usually have this dynamic where when US didn't do as EM and US were a little bit uncorrelated and that they were different, and I think that's converging more and more. I think EM, still the problem with it is you bundle together all these different markets that do very different things. So as the markets get bigger, we're able to cut them up into pieces a bit more to actually invest in those specific themes. Asia certainly has production capacity that doesn't exist anywhere else in the world. Is going to be absolutely critical to that. And I think when you look at a lot of these orders, there certainly is demand for that, that growth in memory.
It's going to be interesting to see how cyclical chip industry still is, if we're going to build a lot of capacity. Shanti, nice to see you. Thank you very much for stopping by to see us. Shanti Kellerman, co-CIO at 7 Investment Management. Thank you very much. Core 6 looks like this morning. Tech certainly playing a big part in the narrative. As you can see, you've got Schneider doing well. ASML is doing well. Prada, just pay attention to that. That's just having a ripple effect into the wider luxury space. Nestle's a little softer on the consumer front. There's a chocolate story this morning that is always worth focusing on. Anyway, let's turn our attention to what else we're watching. Let's get back to the chips rather than the chocolate. Chloe Melly is here.
Good morning, Guy. Indeed, we are seeing ST Micro up almost 10% this morning after raising its forecast for data center revenues for this year to about $1 billion. And that is compared to a previous forecast of nicely above $500 million. So this is a huge boost, and this really contributes to this overall AI optimism, AI enthusiasm that we have been talking about for some of those European chip stocks. And so we are seeing a big boost this morning for ST Micro. It's also an AI-related story for Pros, which owns about 20% of Tencent, and Tencent shares have advanced quite significantly as well on reports that it is testing a prototype AI agent. And so this is really confirming this, the fact that it is working on those AI efforts. And so we are seeing Pros benefit from that as a result of its shareholding, and we're up about 11% this morning. So a big boost there as well. Moving on to a very different sector, the supermarket sector, with the whole delays down this morning after Goldman Sachs cut the recommendation on the stock, citing some challenges in the U.S. market, where there are challenges related to the food assistance program, and also there are slowing retail sales in that region. And so this is impacting holders negatively, and we are seeing that reflected in that weakness in the shares this morning. And finally, let's move over to the steel sector, because we have Morgan Stanley upgrading Salzgitter this morning and saying that there are opportunities there from the new steel regime from the European Union, which is reducing import quotas, and that could really support pricing for that company. And so we are seeing that upgrade reflected there, with the shares up almost 8% for Salzgitter this morning.
Chloe, thank you. Chloe Melly with the stocks that are moving. It is Tuesday, the 2nd of June. 12 minutes past 8 then. So we see these... I was going to call them modest, but, 0.7%, that's not all that modest gains on the Stock 600 this morning. Coming up, it's one of the largest equity deals of all time. More on Alphabet's plan.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
It's Jobs Day, and Bloomberg has the report under surveillance.
Gearing up for the latest jobs report.
Why do we see nothing but doom and gloom on jobs? The last two headline reports from NFP have been really, really strong.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
Things really are not deteriorating in the labor market. Will we see firms have a smaller footprint when it comes to employees?
The May Jobs Report, Friday on Bloomberg.
Welcome back to the opening trade. We are 16 minutes into our European equity market session, and we've got decent gains coming through across European equity markets. A host of factors. One is just catching up with some of the gains on the US session yesterday. But there's also some optimism around tech, and it's had a volatile session in the Korean market. But into Europe, we've got some positivity around some tech themes. ST Micro is one of the businesses that is on the rise this morning, and they've upgraded their guidance for revenue out of data centers for this year and then into next. Process also on the front foot. That's a read across from the Chinese market, where Tencent was up really strongly, agentic AI in focus there, and Process holds a big stake in Tencent. But we're also watching this filter through into other parts of the chip-making space. So Infineon is stronger, up by 5%. This is a positive day for technology stocks, then, guys.
Not biotechnology companies, though. Abivax is down really sharply on the back of a trial related to a bowel disease trial, which is being complicated by cancer, according to the latest reports that we're reading. Anyway, it will complicate the path of that drug to markets. So that stock is down pretty sharply. But let's talk more about what is happening in the tech space. Alphabet, 80 billion raise. Equity we're talking here. This isn't debt. This is a package of equity offerings. 40's going direct to consumers. You've got 10 going to Greg Abel over at Berkshire Hathaway. You've got another 30 that's split into two tranches, 15-15. The move comes amidst AI funding spree, which is huge. And you're now starting to see some of the big companies within that space potentially talking about going to market. Anthropic apparently has privately filed for an IPO. OpenAI will not be far behind. Let's talk to Bloomberg intelligence analyst Matt Bloxham. Matt, let's start with Alphabet. This is the company that used to throw off cash, that used to buy back stock. It's now selling stock. It's now selling debt. How different a business is this, and what does this 80 raise tell us about its trajectory?
Yeah, I mean, the big difference here is clearly that we're still in the midst of this massive AI spending bubble. And, as you said, this company generates a huge amount of cash, trailing 12-month basis, over $170 billion. But this year they're going to spend $180, $190 billion on investments, mainly in AI infrastructure. And the year after, they're saying it's going to be significantly higher. My colleague Mandeep Singh in the US thinks it could top $300 billion of investment next year. So as much as it's generating a huge amount of money, it needs more to kind of fund this growth. And, we are in the middle of an AI arms race. We've got Anthropic, we've got SpaceX, we've got Meta, all these companies, Anthropic, and these people, you want to get your infrastructure out there, and there's a kind of scarce supply of resources. A lot of this investment that Google's making is going to go into making their own chips, a very vertically integrated business model. So they need the money.
So some of it's about competition with NVIDIA on the TPUs, its own chips, as you mentioned. Some of it's competition with other AI models, the likes of Claude, and that takes us on to Anthropic. So what have we learned then? I mean, this was this private filing, or the fairly secret filing at the moment.
Yes.
But why now? Why is Anthropic in this race with OpenAI right now? And is it a race? Is that the right way to describe it?
I think it is a race. It's a race in many different perspectives, Joanna. I think clearly the Anthropic filing, and clearly the first step towards an IPO, this has been very well signalled. I don't think it's a big surprise, but the interesting tension here, a few months ago, it was just, who's going to file first, OpenAI or Anthropic? Clearly, Anthropic's got there first. They've got very strong revenue momentum right now, so it makes sense for them to try to get there first. Capital is scarce, and now you've got SpaceX looking for $75 billion of IPO funding. You've got Google looking for $80 billion, and now you've got Anthropic and potentially OpenAI. You don't want to be the last person coming to market asking for money, because there may well not be that much left, or the terms on which you can get it may not be quite so attractive.
One of the big debates right now is the memory market still cyclical, or is it not cyclical? SK Hynix this morning coming out and saying it's going to double capacity, which it's like the base is already large, but it's going to double capacity over the next 5 years. Is a doubling of capacity going to be too much or not enough?
I mean, that is the $64 trillion question, maybe. And I know Ed Ludlow was asking this question yesterday of Jensen Huang. And, I think clearly there's a huge amount of optimism. we don't know, but what I would hope is that this company is building that capacity in a very modular way.
Almost.
To the extent that, if this does turn out to be a kind of a temporary peak, that they can actually pull back and not double it, but maybe, kind of modestly increase it. But, I think it's a clear signpost of, just how tight supply is right now and just how much demand is coming through. Like, you get the sense that we haven't reached that kind of short-term peak demand yet, if they're talking in terms of doubling capacity.
There's so many different strands to the tech theme this morning, all AI related, of course. And overnight, we haven't even talked about Hewlett-Packard. Shares soared more than 20%, I think, after hours, didn't they, on the back of their results? And I'm put in mind of that story we wrote recently about iconic tech names of the sort of 90s and decades past. What does this HP story tell us?
It tells us that the AI deployment story is entering a different phase. So obviously the focus historically has been around NVIDIA and their training chips. And actually, as you go into corporate deployment of AI, a lot of kind of more straightforward servers can actually deliver the performance you need to do the inferencing and deployment of the applications. And that's a great opportunity for HP Enterprise, and also we saw last week with Dell. And so specifically with HP Enterprise, guiding to a kind of a 31% increase in revenues this year, and I think it was something like 10% next year, which is almost double what the market was expecting. So, as enterprises demand more infrastructure to kind of run their AI models, this is playing into the kind of more traditional server makers.
What do we know about that end user demand? At the moment, companies are kind of trying to figure out kind of what does AI do, how do I use it, how do I deploy it properly, how much is it going to cost me? Are we getting the rate of return that corporates need in order to justify the expense? Because the expense is substantial. You look at the cost of building this stuff, it is massive. Therefore, the cost of kind of running this stuff is going to be substantial as well. These companies are going to need the end user to pay up. And if the end user is going to pay up, it needs to have a benefit. And that's the bit that I think people are still struggling with.
Yeah. And I think most CFOs are struggling with that. They don't really know how to calculate the return on AI investment. I think there's just a sense that at some point it is going to deliver a return. I think most companies that are going all in on AI right now, it's actually increasing their overheads, not reducing them, but they're hoping...
It's inflationary at the moment.
Exactly, yeah. And, and I think that, but there's an expectation that they can see that in some certain use cases, there is a deflationary opportunity or a productivity gain opportunity, and that ultimately, whether it's a 1 or 2 year view, that will balance out. But that is the real kind of issue that's going to determine whether this is an AI bubble or an AI kind of sustained boom, is whether enterprises and the CFOs do start to see that return come through. Because you can't continue to run with higher overheads for any more than, maybe a 6 to 12 month period. If you're a public company, that's going to squeeze your margins, and shareholders going to put you under pressure. So something's going to have to give, and I think that is a massive outstanding question, the ROI question.
And so maybe it makes the next question impossible to answer, Matt, but we were talking to Mark Cudmore from the Markets Live team earlier on, and he was saying he's worried about a kind of double counting of earnings estimates. So this isn't the earnings they're getting now and the revenues they're getting now, which are in some cases impressive. But when you go out into the future, if they're all looking at how big is the addressable market and how big could we be in that, is there a sense that there's a lot of companies going after the same revenue, perhaps, and they won't all get it?
I think that's absolutely right. And you see that very clearly in the SpaceX IPO filing and the $28 trillion market opportunity. When you actually kind of look into the detail of that, there's a huge number of players in each of those markets fighting for the same end user revenue. And I see, implicitly within that, there's probably actually a lot of revenue passing between different players. So at some point, it's going to come out in the wash. And there's so many people investing right now. It's difficult to see that all of these players are going to be truly successful in addressing the opportunity.
Okay, Matt, thank you very much. Thanks for briefing us, giving us a full briefing on some of those tech themes. Bloomberg Intelligence analyst Matt Bloxham. So, guys, you mentioned we're having a good day for European tech, but not a good day for European biotech in the shape of Abivax. That stock now down by 28%.
Quarter of its value. third of its value nearly wiped out on this drug trial news that we are getting. We're going to take you back to what is happening with the oil story next. We'll park single stocks for just a moment, and we're going to come back and figure out exactly what is going on with this oil story. Very hard to price right now. Very hard to get a handle on what the timeline looks like right now. Angelina Valavina, head of EMEA Natural Resources at Fitch, is going to be joining us very soon to update us, give us her thoughts on when she thinks we're going to see some clarity maybe emerging, some pricing clarity emerging. We'll do that next. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
This is the opening trade, 30 minutes into Tuesday's session, and European equity markets then very much on the front foot this morning, up by 0.6%. And some of these markets doing really well. The German market, the French market, up by 0.8%, as we see higher expectations for what technology can deliver in Europe. That's in the shape of ST Micro. A bit of read across from the Asia technology session. That's in the shape of Process going higher. And in fact, Guy, we've got most sectors in positive territory here in Europe. There are some in negative territory, and that partly explains why we've got the FTSE 100 underperforming a little bit today.
Energy's under a little bit of pressure. That's a factor when it comes to what's happening with the FTSE. Broadly, though, 455 up, 136 down. We are definitely on the front foot when it comes to Europe, despite the volume picture. Let's talk about where that is coming from. It is definitely coming from tech. Process is up on the 10-cent story. Infineon is up more broadly on what is happening in the chip space right now, despite the fact that we are seeing SK Hynix talking about doubling capacity over the next 5 years. You've got SAP starting to see maybe some of these software companies working their way through the SaaS apocalypse narrative. SAP is up by another 1.6%. So tech is the driver in Europe this morning. you are seeing some weakness elsewhere. So biotech is under pressure. Abivax is definitely down. Take a look at its stock, down by 26% this morning on the back of a drug trial that doesn't look quite as positive as maybe the market had hoped for. Bayer is also softening up a little bit. And I also think some of the consumer stocks are down a little bit as well, which I think is interesting. Some of the more defensive stocks. You look at what is happening in the food space, a little bit of pressure there. Look at what is happening in the tobacco space, a little bit of pressure there. So definitely we are looking at the tech story much more positively this morning here in Europe. We have some tech. It is up. The defensive names, which we have a lot of, are under a little bit of pressure. Net, though, the market is higher, Anna.
Yes, absolutely. Let's get up to date on some of the other stories that we need to know this morning. NVIDIA CEO Jensen Huang says he pays his workers, quote, as much as possible. Huang made the comment when responding to a question about Samsung and its recent compensation agreement that will deliver bonuses of as much as $400,000 to some chip engineers. He gave his view amid a growing global debate about how profits from the AI infrastructure boom should be shared. One of the world's most prominent short sellers, Andrew Left, has been found guilty of securities fraud by a US jury following a closely watched trial. The Citron Research founder was convicted on 13 of 17 counts and could face more than 20 years in prison, with sentencing set for August. The case marks a win for the Justice Department and puts a spotlight on the practices of activist short sellers. And Bloomberg has learned that the European Commission is weighing plans to grant member states additional fiscal flexibility to cope with the impact of high energy costs due to the Iran war. The proposal under discussion would allow governments to spend around 0.3% of GDP on energy-related spending outside the EU's fiscal framework. Guy.
Anna, let's talk about an area we haven't talked about for a while, which is what is happening in the banking space, particularly the ongoing saga surrounding UniCredit and Commerzbank. UniCredit this morning updating on its offer for Commerzbank stock, saying that it now has commitments as part of that offer to take its stake in Commerzbank well above 30%. Now, that obviously gives the whole story a little bit of momentum from Andreas Orchel's point of view. Shareholders have attended enough stock to increase the direct stake from 26.8 to north of 30, well north of 30. This is according to people familiar with the matter. So this gives Orchel influence now, much more influence in terms of this process as it unfolds, which feels like it's accelerating. Still got a couple of weeks to go in terms of this offer that is currently out there, Anna.
Yes, I mean, this is a saga that just rolls and rolls, doesn't it?
Yep.
I mean, starting out as a fairly small shareholder, but right from the start, the reception from the German government around this was very negative, wasn't it? It was as much about the style of the approach, the way that this stake has been accumulated, it would seem, that the German government did not appreciate. And so we'll see whether any of this, whether the time passing mends any of that relationship, because it would seem as an important stakeholder to have on board if you're trying to buy Commerzbank would be the German government.
So that was a nice little foray out of our two main subjects that we spend most of our time talking about at the moment. It's nice not to talk about AI or oil, but we're going to do that story now. Back to the oil story. Ticking lower a little bit this morning. We've had a pretty big gain, though, over the last few days, and largely that is holding up. President Trump and the Israeli Prime Minister Benjamin Netanyahu apparently offering differing accounts of a call that they had regarding the fighting in Lebanon. Now, Lebanon's critical because Iran indicating that is absolutely pivotal to its outlook. Iran saying that Lebanon must be part of a broader peace deal. Let's discuss all of this uncertainty and what is happening in the Gulf. Angelina Valavina, head of EMEA Natural Resources and managing director at Fitch Rating, joining us now. Good morning. Nice to have you on the show again. Let's talk about the timeline and where we are. It's a great pleasure. When do you think the Strait of Hormuz is going to be open?
It's a very good question and a very difficult one. So our current assumption is that the reopening will take place in July. And this is what our current Brent price assumption is based on, which is $87 per barrel for Brent on average for 2026. As I mentioned, there is a lot of uncertainty in terms of the peace deal negotiation, the timeline, and also what it will entail. But the most important bit for the oil markets is the Strait of Hormuz. The reason why we made this assumption about July is because this is the timeline where several factors will meet together and might influence this timing. So one is obviously the driving season in the US starts in May and it will peak in July. The second point is the US GDP economic data, inflation data for the second quarter will be published around July, August. Obviously, there are midterm elections in the US. But another important factor is China, because China currently has oil reserves of 1.2 billion. And it used to import about 5 million barrels per day through the Strait of Hormuz. They transited through the Strait of Hormuz. And if those reserves that the country has are sufficient to cover those imports through the Strait of Hormuz up until the end of October. So the confluence of these factors might mean that the Strait of Hormuz will be reopened there around that timeline.
Around that timeline. What is your degree of certainty that that will happen?
The risk is binary. This is how we look at it. If it reopens earlier, then the price will be lower, because we do believe that the key bottleneck in terms of the price dynamics is the Strait of Hormuz, and in terms of the risk premium. If it reopens later, then the price will be higher. But as I mentioned, the risk is binary. It's very difficult to predict it.
Very difficult to predict, absolutely. And I wonder if the nature of the deal that reopens the Strait, Angelina, has any bearing here. We spoke to a guest yesterday who talked a lot about the possibility for what she called a muddy deal, meaning that not everything will be resolved, not everything will be, there won't be a solution to everything, but maybe the Strait reopens. But does that put us into a position where the threat of reclosure of the Strait hangs over the market and therefore elevates prices?
The degree of uncertainty will remain high, and that's why the geopolitical risk premium will stay in the oil price. So our current assumption is that if it reopens in July, then the price on average will stay between 100 and 110 in May and July. And then it will fall to around $80 per barrel in August, and then to roughly $70 per barrel from September. And that's the time when it will reflect the levels which are implied by the market fundamentals, so supply and demand, but will still retain the residual geopolitical risk premium. The reason why we believe that the price will fall quickly and sharply is three. One is that we expect the production in the Middle East to ramp up very quickly to sort of near normalized levels. The second reason is there has been no material damage to the oil infrastructure in the region, at least so far. And the last reason is the supply response, non-OPEC supply response, has been quite strong year to date. And we do believe that the OPEC supply response might be quite strong after the reopening of the Strait of Hormuz. And the production will ramp up not only to the level which was before the war, but up to the maximum production capacity of OPEC, which used to be 3.6 million barrels per day.
Angelina, can I ask you about physical crude if we don't see the reopening? So accepting that your base case is that we get that reopening in July. If we don't see that, when does the inventory story start to look really unsustainable, and when does that take off as a narrative that will then come back and really influence futures prices?
So in terms of the oil stocks and inventories, we started the war at 8.2 billion barrels, which is quite a substantial number, and it is more in line with what we've seen at the end of 2020. There was, the IEA announced a drawdown of 400 million barrels, so we will be down, let's say, to 7.8 billion once the drawdown flows into the market. And then again, if the Strait of Hormuz remains closed until July, we do not anticipate another release, but it is not impossible because we've seen 2 releases of reserves in 2022. So there is a precedent for that. But overall, 8.2 billion are more than sufficient to cover all the volumes which transited the Strait of Hormuz before the war for over a year. Then going back to the point of the Chinese reserves, because the key importing countries through the Strait of Hormuz were Asia, and China was the main one. China, India, and quite a few other countries. 91% of the oil which transited the Strait of Hormuz went to Asia. So if we look at the Chinese oil reserves, it's 1.2 billion, and they are sufficient to cover their volumes, which they bought through the Strait of Hormuz up until the end of October. That's, from our point, is a very important issue and a very important point to consider.
Okay, yeah, really interesting then. The stockpiles could take us for another year at some level. Angelina, thank you very much. Thanks for joining us. Angelina Valovina, Head of EMEA Natural Resources and Managing Director at Fitch Ratings. Let's move on to other news. At least 11 people have been killed across Ukraine as Russia carried out large-scale drone and missile strikes. The overnight attacks come as Bloomberg learns that Russian finance officials have warned President Vladimir Putin the nation's war spending is on an unaffordable path. We're joined now by Bloomberg's Tony Halpin, who leads our Russia economy and government coverage. What's the latest from the overnight strikes? Take us through the level of escalation that we've seen recently then, Tony.
Yes, this is the second, what Russia has called sustained strikes on Ukraine, and in particular Kiev. There were more than 70 missiles, more than 650 drones. And it's quite noticeable that while Ukraine is really quite successful these days in knocking out drones, they're having less success against ballistic missiles, and that's in part because they are struggling to find sufficient quantities of air defense missiles to support their own air defenses. Very large scale, as I said. Russia has threatened these strikes in the last 10 days, and this is the second of them. And so far, it's ignored US and European warnings against doing these kind of things.
I'm reading a lot at the moment about the fact that there is growing pressure in and around the Kremlin regarding the cost that this war is imposing on Russia and the Russian economy and the Russian people. How severe are the differences within the Kremlin? How could this unfold?
Well, there are two clear blocks. There's the finance, the economic block, which is making clear that the price is growing ever more heavy on Russia. The budget deficit already is bigger than the whole of last year, and growth has slowed practically to zero. 0.4% is projected for the whole of this year. They've just slashed what was a fairly meager projection in the first place. But on the other side, there's the defense ministry saying that they want billions of dollars more in spending because they want to prosecute the war, and they're assuring President Putin that his war aims will be achieved. So there's this struggle going on. Putin's in the middle. He's not indifferent or unaware of the difficulties that they face, but he's very clear, I think, that it's somebody else's problem to find the war money that he needs for the invasion, and he intends to prosecute it without any changes. We will see how far that develops as the year unfolds.
Yeah, and do we get a sense of whether this path then of war spending is sustainable, Tony? I mean, oil prices are considerably considerably higher than they were just a few months ago. There are limits, of course, to what Russia can earn selling to certain sources, but there's a lot of demand out there for energy products.
Yes, I think Russia doesn't really feel that the increase in oil prices is going to make that big a difference. It would have to be over $100 a barrel for more than a year, really, to help ease some of those pressures. So there's no doubt that this tension is going to continue throughout the year, and Putin is going to have to face the consequences of that in the discussions with officials. But the question is whether or not that changes his calculations in regard to the war. So far, he's showing no sign that he's ready to do that. But if those pressures increase through the year, if the domestic discontent in Russia over some of the consequences of the war become more visible to the Kremlin, they have elections coming up in September that they need to manage in some way, then that calculation may change. Certainly for now, at least, financial officials are simply saying, look, the pressures are getting bigger and bigger. It's getting harder and harder for us to maneuver here. Something's got to give.
Tony, thanks for the update. Greatly appreciated. Tony Halpin joining us on the latest out of Moscow. Serbia's president, meanwhile, has pushed back on accusations of being a Russian puppet and has defended his warm ties with Xi Jinping. During Alexander Vucic's 12 years in power, he has positioned Serbia as a conduit for China and as an ally of both President Trump and Vladimir Putin, despite a cooling since the full-scale invasion of Ukraine. Fresh from a recent visit to Beijing, Vucic spoke exclusively to Bloomberg's chief Europe correspondent, Oliver Crook, in Belgrade.
For us, of course, of an utmost importance are their investments and their commitment to work together regarding our steel mill, regarding our Zijin mine in East Serbia, copper mine, and new investments in brand new and cutting-edge technology smelter, which means nothing to me, but I was doing my best to learn everything from them about it, and that's it.
And so you have the economic part of that relationship.
Yes.
There is, of course, the geopolitical element of that, and there's obviously some objections from your European partners, potentially also increasingly from the Americans. Is there a limit, do you see, to that relationship, that partnership with China for the sort of practical purposes of geopolitics? Did you, for example,
if you ask me,
fighter jets from the Chinese?
I'll respond to you. I'll respond to you in a bit different way,
sure.
Maybe even unexpected. Instead of justifying myself, would like to, because there is nothing to justify, because I was doing my job, as all the others were doing their job. We Serbs, we don't have a big factory close to Chongqing, or Chongqing as we say, or anywhere else in China. But yes, Europeans were saying to us, okay, you need to organize a tender procedure, transparent procedure for that copper mine in East Serbia. We'll find some companies and they will bid for that. And at the end, the only real offer that we got was Chinese offer. Just to continue about it. Everybody was saying, okay, you were Russian puppets, you just wait for the very best moment to attack your neighbors in the region. Of course, it didn't happen for almost 5 years, but no one had never apologized to us. At the end, now it's not anymore about Russia. Now it's becoming more about China. Now don't go to China. Next time, if I go somewhere else, they will say, don't go there. And I don't accept this kind of lists, and my job and the job of my team and our government is to take care of Serbia's interests, not the other people's, not the other countries' interests. And why I'm saying this, because in the last 5 years we didn't open a single chapter, a single cluster. What do you expect from us?
And on the question of
to die silently?
And on the question of EU accession, how do you see the progress going towards that? You said you wanted to meet all the criteria before the end of this year. Are you still on track for that? Do you find that there's the political will on the European side?
We do a lot of work.
Serbian President Alexander Vučić speaking there with Bloomberg's Oliver Crook.
And speaking of the geopolitics, which she was referencing a lot of there, later today we'll be hearing from the Norwegian Finance Minister and the former NATO Secretary General, of course. That is Jens Stoltenberg, that conversation from Oslo. You can catch that exclusive 45-minute Bloomberg Newsmakers conversation live on Bloomberg YouTube and Live Go channels. That's at 3 p.m. UK time.
OK, let's talk about what's coming up. Economic data out of Europe and the United States a little later on today. Also, what can you be expecting from these numbers? Which one should you be focusing on? The JOLTS data, for a while, certainly captivated our attention. How useful is it now? What's happening in the labour market? Inflation front and centre, certainly here in Europe. CPI readings coming up later this morning. How will the ECB react to that? We'll discuss it all next. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up
and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Okay, welcome back. Let's take a look at what is going on. We are 52 minutes into the session, and actually things continue to look even more positive than they did at the open. We continue to climb. Tech is the main driver of this. You've got names like Infineon and Prosus all doing quite well today. Even SAP's having a fairly solid session. So you're getting outperformance coming through from the French market and the German market.
Absolutely. Let's think about some of the things we're watching for today. In about an hour's time, just over, we'll get Euro area CPI, so that puts the inflation story front and centre. Thinking of which we will be focused on the Bank of England story at 2 o'clock UK time, when the Governor, Andrew Bailey, will be speaking before the House of Lords Economic Affairs Committee. Then we turn to US data, US jolts due out later on. That's early afternoon UK time, of course. We'll also get US congressional primary elections. They're being held in California, Iowa, Montana, New Jersey, New Mexico, and Dakota. That's a long list. And, of course, we will be watching everything that's taking place in Lebanon. Israel and Lebanon resume talks in Washington, D.C. We'll see what's happening on the ground at the same time. But let's get back to the markets.
Let's talk about the data. Jolts data out a little bit later on. Job openings, very lagging indicator in terms of what you get in terms of that data series. We're also going to get CPI out of Europe. If you're the ECB and your job is to make sure inflation doesn't get out of control, is this going to be enough inflation to signal a rate hike? Let's try and get an answer to that question. Skylar's here to do it. What do you think?
Yeah, I mean, I think the clear answer is yes.
There we go. Job done. Moving on.
Well, we have the regional inflation numbers as kind of a precursor, so we have a pretty good idea by the time the European number comes around what it's going to be. The expectation is 3.2%. That's clearly
more than 2.
More than 2. And I think the idea, as well as we head into next week's ECB meeting, is that officials are thinking if you don't hike at this point, it's a monetary ease, because that's what the market expects. You know that oil prices are still much higher than they were in 2025, so that inflation will continue. Even if you look at 4Q26 commodity prices in terms of the futures curve, which is backwardated, that's still significantly higher than 2025. So there's a credibility component of, you know, even if they're worried about the demand side of the equation, about growth, they should hike at this point. I think the real question is, when does that second hike come? Because that's what the market's looking for.
There is going to be a second hike?
I mean, it's very much what's priced in. I'm a little bit more skeptical, but I think you need to see demand deterioration before the market turns away from that.
We talked to a couple of guests earlier on in the programme, Skylar, who came at things from a fixed income perspective, and both of them seem to be putting more emphasis on the growth dynamic than maybe expected. Maybe that's obvious if you look at fixed income and you're preoccupied by what's going on with oil prices. What will we learn about the growth dynamic from JOLTS data, from the things we're going to hear from the US data picture this week?
Yeah, I mean, absolutely. We've seen so far that the US economy has held up with this resilience. We got ISM manufacturing yesterday, and it was a very similar picture where your headline number was higher than expected, and it rose further into expansion territory. Importantly, though, you also had the employment number come out strong. Prices paid was a little bit below expectations, but it's so high that, you can kind of put that on the back burner in terms of not really being a disappointment from an inflation perspective. And we'll get jobs data throughout this week that I think just confirms that. So JOLTS later today is expected to come in line with the previous print. What I'm really watching for later this week is the unemployment rate, because that's what the Fed's watching. But the key message from that is if growth remains resilient, then equities can keep rallying, and it means that the Fed can focus on the inflation mandate. Now, further out into the year, I start getting more worried about growth and demand destruction. I think particularly for Europe and the UK, that's a really big concern. Yeah. If you get these hikes, particularly in the UK, where the idea was they were above neutral previously, you need to start considering that from a fixed income perspective.
Okay, Skylar, thank you very much. Skylar Montgomery-Coney from the Markets Live team. 8:56 here in London, and we're all at work, so that's great.
Should we have a quick look at the people that are not at work yet?
Not yet at work, yes, because there is a tube strike taking place today. Not all the lines are closed, but some of them.
No. So outside, there's a number of things going on, one of which is it's raining. And you can see the umbrellas, which is never good. If you're going to have a tube strike, at least make it on a sunny day. So
that would help, wouldn't it?
Cycle to work.
I think I might just find somewhere to sleep here, at work. Maybe that's the solution
for the future.
We're going to find
Anna tomorrow morning under her desk.
Yes, under this desk, perhaps. 8:56 in London, then we will hand over to the Pulse. That is coming up next. European equity markets actually doing pretty well, up by 0.9%. Tech, a lot of themes to focus on there. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg. Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Alphabet taps investors for $80 billion in one of the biggest equity deals of all time, and Anthropic pips OpenAI to the post as it files confidentially for a mammoth IPO. Now, the U.S. and Israel offer differing accounts of a phone call about the fighting in Lebanon after Iran suspended talks because of the ongoing clashes.
Plus, at least 11 people are killed in the latest Russian strikes on Ukraine, as President Putin is warned that the war is unaffordable. So there is, of course, a lot going on in geopolitics that's filtering through to what we're seeing on the markets. Now, U.S. stocks seem to be pausing a little bit their rally after an 8-day winning streak. Investors, I guess, juggling these unprecedented euphoria around the vast economic potential of AI against the war in the Middle East that has brought about a historic disruption in oil supplies. Let's also take a look at the European markets map. You see the U.S. 10-year 4.4296, euro dollar 116.49. If you look at Europe, again, what we've seen is a pattern over the last couple of weeks of really the U.S. giving a kind of impetus, followed by Asia, and then Europe follows that. The CAC 40 gaining some 1%, the FTSE gaining 0.5%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Alphabet has announced plans to raise $80 billion through a package of equity offerings in one of the largest equity deals of all time. Now, the fundraise comes as Google's parent company races to fund its ambitious artificial intelligence spending plans. Well, with us now is Matt Bloxham, tech analyst at Bloomberg Intelligence, and in a second we'll be speaking to John O'Toole of Amundi. I'm so happy I'm speaking to you, Matt. It's every 24 hours that we need to get our fix on these incredible stories around AI and some of the IPOs. So what's the thinking behind this Alphabet fundraise?
Yeah, it's really what they need to fund the massive expansion in the infrastructure base as the AI boom continues. So if you kind of look at what's been happening with their investment, this year they're going to spend about $190 billion on investment, mainly on AI infrastructure, and they've already guided to a significant increase in that. And next year, now my colleague Mandeep Singh in the US thinks that CapEx next year for Google could top $300 billion. They generate about $175 billion of cash flow every year. So, they need to find the money from somewhere. They've been tapping the debt markets aggressively, $85 billion raised in the last 12 months through the debt markets. So you kind of need to balance the kind of sources of capital over time. And obviously, their valuation is high. There's a huge amount of equity investor interest in the space. So, it kind of makes sense from a number of perspectives.
So the other big story yesterday, Anthropic pulled ahead of the OpenAI IPO by filing confidentially for an IPO. I mean, what does that mean for ChatGPT?
Well, it means that there's pressure on OpenAI to kind of move in the same direction. They've tried to kind of calm the nerves that this might be some big race. I mean, it is ultimately a race for capital, and I think Anthropic is tapping into the fact that they've got great operational momentum right now. Their revenue is growing exponentially. There's clearly a lot of positive sentiment about Anthropic because everybody's talking about Claude and the positive effects it has on enterprises. So I think that the timing is perfect for Anthropic. They recently raised money at close to $1 trillion. So, really tapping into that positive perspective.
Matt, and I know I want to get to you on Hewlett-Packard Enterprise in a second, but actually, is it first mover advantage? I mean, does it matter if you IPO like 4, 5, 6 months ahead of someone else, or if you file for an IPO?
I think given the scale of the numbers we're talking about, I think it potentially could, because $75 billion from SpaceX, $80 billion from Google, potentially a similar number from Anthropic. There's only so much capital the market can kind of find unless, we continue to get completely blowout numbers and, another round of kind of upgrades. So, I think you want to be sooner rather than later.
Fair. Hewlett-Packard Enterprise, I mean, shares are up some 20% in pre-market trading. Why?
So as the AI story evolves, we're shifting from the need for these super powerful NVIDIA chips, GPU chips to train, to high performance but more general purpose CPUs to actually deliver the enterprise applications that sit on top of AI. And this is where Dell last week and HP Enterprise come into play, incredibly strong players in the more traditional kind of enterprise server market. And they're seeing that demand now come through to their business. So they're talking about over 30% revenue growth this year and about 10% growth next year. Kind of quite unusual for a company to give a kind of 18-month forward guide on revenue, but it just demonstrates the enduring nature of the demand. And those figures are about double what the market was expecting. So kind of really positive outlook. And I think we're going to continue to see strong demand in this kind of more general purpose CPU market as we get more and more enterprise deployment of AI.
Matt, thank you so much. As always, Matt Bloxham there, our tech analyst at Bloomberg Intelligence. Now, the tech optimism, of course, fueling gains for European stocks. We're also joined by John O'Toole, Global Head of Chief Investment Officer Solutions, CIO Solutions at Amundi. John, thank you for being here. Look, the problem, and actually I like your insights because it starts with diverging market signals. And this is what we talk about, the pulse day in, day out. You look at bond markets, they're saying one thing. Equity markets are focusing on other things. Who's right?
Equity markets do what equity markets do best. They discount the good elements, let's say. We are getting a very different read through from bond markets. Equity market resilience is not across the board. It does reflect real economic strength and power and earnings power. I mean, if we look at the earnings that have come through and the expected earnings for 2027, they're very strong, 16% in the US, 9% in Europe, 20% in emerging market equities. So equities have something to shout about. Obviously, they're discounting all the positive news that's out there. Bond markets are reflecting more on the shift we've had from rate easing to rate hikes, the potential incipient inflation pressures. We're in a situation where inflation rates have been above central bank targets for a very long time. People have become accustomed to that. However, central banks' reaction function is to inflation expectations. And interestingly, they've actually declined in the last couple of weeks. So if we look at...
John, I mean, is it right to say that actually if inflation's going up, and we started the year in thinking that, for example, the Bank of England and other central banks would cut, and now we're looking at interest rate hikes. We're looking at Brent at 94, 95. There's no real end in sight in this geopolitics news. So is it right that equities go on from like record high to record high thanks to AI, or is at some point something going to break, or are we going to see a correction?
It's unknowable. I mean, the tech and the history of tech innovation is quite positive if we look back. We're going through a moment of transition, sentiment. You see the Hewlett-Packard story. This is changing and shifting. This was not a story that was on the blocks 2 years ago, 18 months ago even, and the massive CapEx spend that we've seen. The CapEx spend is investment. That's real economic activity. So there's a real thing happening here. The IPO sentiment around that, all of the excitement, I mean, that will add to the sense of market froth and how these large names, even though some limited free float coming in, the sentiment seems set to continue. Whether it's right or wrong, we will see how these market pricings converge. So you do have divergent things happening, but that's not a new phenomenon, I would say. And as a multi-asset investor, that gives us opportunities to build kind of robust portfolios because not everything is moving the same way.
It's quite unusual to have the Strait of Hormuz closed and nothing really happening in the equity markets. I know that we've always had divergent signals, but this feels like pretty big. How do you see the energy shock pass through to earnings and to companies longer term if there is no geopolitical solution in sight?
Solutions seem to be hard to come by. If you had been given foresight, 6 months ago, of all that has happened in the meantime, we would probably all be surprised to see levels where they are, particularly in terms of equity markets. My colleague Anna Rosenberg was on here yesterday talking about her base scenario being a kind of a muddled through deal, a muddy deal. So I don't think we're going to get satisfactory answers to all parts of the geopolitical puzzle. We are surprised the extent to which oil prices have not increased. So it might be reasonable to assume that oil prices might be a lot higher than they are. What you are seeing is refined product has moved a lot. So gas prices, heating oil futures, these kinds of things have risen a lot compared to Brent. But that is a big issue, and it's a duration call, and how long this goes on for.
Where does inflation end up in all of this?
Higher. So if we look at, even though inflation expectations in 5 years out, 10 years out are still quite moderate, 2.5% in the US. So not that far from where they've been. They've actually come down 20 basis points recently. Likely higher, 3% handle. But are they going to run away? We have central banks ready and waiting to react. And the hikes that you talked about, I mean, they're still quite limited in scope, I would say.
Whereas, I mean, do you look at market dislocations? Is there anything, as head of CIO Solutions, when you look at, I don't know whether gold, we rarely talk about nowadays for a number of reasons. I know we talk a lot about Japan, but if you look at the massive or biggest market dislocations, what opportunities do you see?
So we've seen opportunities in high-yielding commodity currencies, for example. So the Norwegian krone, Australian dollar, as a way to improve our risk diversification. These have performed super well, 7-8% year to date. And this is a kind of a proxy for what's happening in commodity markets and the squeeze that we see in oil. We have had exposure to gold and continue to have exposure to gold. I think we've penciled in the 5,500 level for Q1 2027. If I look at consensus, I'm seeing lots of targets around 6,000. Gold has been a source of stability in portfolios, one of the best performing asset classes last year, and again, it serves its place in a portfolio. So we're all about diversifying away from the super concentrated things in Mag 7, for example. We've diversified to Europe, Japan, emerging markets. LATAM, for example, is massively undervalued, trading at 10 times earnings versus US trading at 21 times earnings. Europe is still relatively cheap versus its long-term averages. So there are ways to
Does it
mitigate.
go up? Does Europe go up from it's relatively cheap for a good reason, actually, because of the exposure to, for example, Ukraine and energy prices, and also the market's quite fragmented.
It is seeing some inflows, despite the fact that the European real economy faces serious headwinds from the energy situation. Growth has been anemic in Europe for some time. There's quite a dispersion between a country like Spain that's fast growing, or Italy, France, around about 1%. The German infrastructure project, the release of the debt brake, these are structural long-term boons for Europe. Europe will, like everywhere else, benefit from the AI productivity gain.
Does it, even if it doesn't make it their own? I mean, I know we're talking about, Mistral, but actually the models we're not sure are there. This is a largely U.S. story.
It is, but I mean, you saw the investment a couple of days ago from Japan, SoftBank into France, big investment. So Europe will come, and it'll have to, the strategic autonomy topic that we speak about in terms of defence and in terms of other realms, I think in technology and even here in the UK, that is a strong debate.
Where does that mean that when you look at, for example, is it country by country, or is it really sector by sector in Europe that you want to be invested in?
Well, we're top-down investors. We look country by country, but obviously, if we look at the shape of yield curves, that has implications for sector positioning. And what we've seen is a flattening of yield curves. So short-term rates backing up in anticipation of central bank hikes in response to inflation. Longer-term rates are pretty well anchored, in fact. So that type of reaction can improve growth stocks. Actually, growth tech stocks can also improve defence stock positioning in terms of stability in the portfolios.
John, thank you so much for joining us. John O'Toole there, Global Head of CIO Solutions at Amundi. Now, ARM CEO René Haas says he expects the balance of supply and demand for every type of memory chip across the board to remain tight for a while. Bloomberg's Stephen Engels spoke to him exclusively on the sidelines of the Computex conference in Taipei about the squeeze on the market and his view on the growth potential for AI.
I would say one thing that's different about what we're seeing right now is the amount of compute that artificial intelligence requires is quite significant to anything before it, and it touches every single industry. It touches everything around humanity. Everyone on the planet will have some interaction with AI, whether that's AI indirectly or directly, but it affects everyone. If you think about world GDP, $130 trillion, knowledge work, white-collar work being maybe a $30 trillion market, that is a large market of which today is largely undertapped. So is memory going to be short till 2030? I don't know. I hope not. But could I see this demand continuing much longer than people have ever seen historically? That I do believe.
So do you maybe look back at 2023 and there wasn't enough investment because a lot of memory chip makers were having trouble?
Absolutely.
They just didn't build in that capacity or foresee the demand that was going to shoot through the roof like it is now?
The folks at Micron, Samsung, SK Hynix, they have tough jobs. And then 2022, 2023, they're all losing money. And
now they're in the $1 trillion valuation
now
club.
The $1 trillion club, but cautious, right? Because they look at that and say, if I overbuild, where will I be when the supply crunch eases up? But I do think you may see some more innovative business models. Would hyperscalers be investing in fabs? Would there be more equity partnerships around that, such as secure supply? I think that's quite possible.
Well, yeah, so what kind of resiliency needs to be built into the system so you don't have such peaks and troughs?
There needs to be a shared system, right? Shared risk, shared investment and shared risk. I think asking public companies like a Micron to take all of that risk themselves with no shared risk from the people who are the large consumers, that's very, very hard to sustain. The governments have been helping. I mean, the U.S. government has helped in terms of the work they've been doing with Micron and also encouraging Samsung and Hynix to expand the U.S. But I think it's more than just government.
Brenna Haas there, the chief executive of ARM, speaking exclusively with Bloomberg's Stephen Engel. Now, coming up, President Trump seeks to calm tensions over fighting in Lebanon after Iran suspended peace talks. More on that next, and this is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's Jobs Day, and Bloomberg has the report under surveillance.
Gearing up for the latest jobs report.
Why do we see nothing but doom and gloom on jobs? The last two headline reports from NFP have been really, really strong.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
Things really are not deteriorating in the labor market. Will we see firms have a smaller footprint when it comes to employees?
The May Jobs Report, Friday on Bloomberg.
And the conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, Bloomberg has learned that Russian officials are warning President Vladimir Putin that projected spending on the war in Ukraine is unaffordable. It comes as Russia carried out large-scale drone and missile attacks on Ukraine overnight, killing at least 9 people. Well, joining us now is Tony Halpin, who leads our Russia economy and government coverage. Tony, thank you for joining us. So first of all, how serious are the budget pressures becoming?
Well, the pressures are certainly becoming more apparent. Last year wasn't a particularly good one for the Russian economy, and this year is shaping up to be even worse. The budget deficit is already larger than it was for the whole of last year, and fairly anemic forecasts for Russia's economic growth this year have already been downgraded to practically zero, 0.4%. So finance officials are simply telling Vladimir Putin, look, it's getting much more difficult to finance this war. The cracks are becoming more visible. We need to do something here. And at the same time, defense officials are telling him, no, we need billions of dollars more to prosecute this war. we will achieve your war aims, Mr. President, but we need more money. And there's the tension that Putin is now trying to navigate.
And so Russian officials are looking for spending reductions. What are those cuts most likely to come from? And will it shorten the war?
Yes, Putin's facing some difficulties here. He's basically told his officials, look for savings somewhere else, but not in defense. But that means then finance officials have to go and look at things like social spending, particularly on issues like pensions, which Putin has always been very keen to protect because pensioners are one of his key support bases. They've got elections coming up in September. He doesn't want to alienate them. At the same time, there are areas like health, education, roads, infrastructure, where ordinary Russians would say there's too little being spent on those things already. So if you start cutting spending there, that will become much more visible. So he faces some difficult choices, but it doesn't necessarily mean that he's going to row back on his war aims. His generals are still telling him that they can win the war for him, despite the evidence of the last 4.5 years. He still seems intent on taking Ukraine's eastern Donetsk region. They've told him that they can achieve that. So right now he's telling his finance officials basically, look, make the sums add up, but right now the war goes on.
Tony, thanks so much. Tony Halpin there with the very latest, of course, on Russia. Now, the mayor of London has blamed Donald Trump supporters and Russia for a wave of social media posts in recent months criticizing life in the UK capital. Speaking with me at the South by Southwest London, Sadiq Khan, who has been heavily criticized in the past by US President Donald Trump, also said that Britain's vote to leave the EU had inflicted damage on the city.
Brexit has caused a big challenge. I mean, our GDP is down by like 10%. Impacted business, impacted trade, impacted investment, and I'll be quite clear about this. I think we should rejoin the European Union.
So Europe feels much closer than it did 5 years ago?
Well, one of the things I think this government's done really well is to reset relations with the European Union. It's just a fact that, Keir Starmer is in much friendly terms with President Macron, with the Chancellor of Germany, with those in the European Union, and that's really important. They're our nearest trading partners, our biggest trading partners, and we should have close alignment.
Well, that was the Mayor of London, Sadiq Khan, speaking with me at South by Southwest London. Now, Iran's semi-official news agency says it's still discussing the final text of the deal to end the war with the U.S. This comes as President Trump and the Israeli Prime Minister Benjamin Netanyahu have offered differing accounts of a call about the fighting in Lebanon. Earlier, Iran said Lebanon must be part of a broader peace deal. Let's bring in Paul Wallace, Bloomberg's managing editor for economy and government in the Middle East and Africa. Paul, thank you for being with us. So, more confusing signals. How aligned are President Trump and Prime Minister Netanyahu? And can the U.S. president actually ensure they're on the same page?
Hi, Francine. This is a key question, and I think what we saw late yesterday was Trump effectively scrambling to ensure that what's going on in Lebanon doesn't derail his talks with Iran. He wants a deal. He's made that very, very clear. Iran and the U.S. are close to an interim peace deal that would, extend their ceasefire for another 60 days and should lead to the reopening of the Strait of Hormuz. But what is going on in Lebanon with Israel's deepening invasion of the country, and as well as continuing attacks on the IDF and on Israel's northern communities, threatens to scupper those U.S.-Iran talks. Whether or not they can get on the same page completely is a big question. I think what we saw yesterday was not so much Trump getting a ceasefire in Lebanon because of attacks continued overnight and into this morning, both Hezbollah attacking Israeli targets and vice versa. But if there is a bit of a de-escalation and the fighting there is less intense, that might just be enough to appease Iran, which is the main sponsor of Hezbollah, and to get it over the line with these talks. Trump said late last night that he's looking at about another week of negotiations. That's a rough timetable he gave. So if we go by that, then we've got at least another few days of back and forth negotiations between the U.S. and Iran.
So, Paul, how close is the peace deal?
We're calling it an interim peace deal. The basic framework has been in place for at least 2 weeks. It will be a 60-day extension to the ceasefire. the US will lift its naval blockade of Iranian ports, Iran will reopen the Strait of Hormuz. That's the basic outline. Then the two sides would go into wider negotiations about Iran's nuclear program, which would be very complicated and may not succeed. But basically this interim deal, this 60-day deal, if you like, is close, but there's still details they need to iron out. Hormuz is one of them. Will Iran allow free passage of ships through the strait? That's not clear yet. That's something America is demanding. There are other things like how many billions of dollars worth of Iranian frozen funds will be unfrozen. These are funds in countries like Oman and Qatar. Iran is talking about wanting, $12 billion of funds unfrozen straight up. That is going to be hard for the US and Trump to accept. It would go down very badly with Iran hawks and with Israel too. So these are the kinds of things they still need to negotiate. They're close, but there's no guarantee they'll manage to get over the line.
Paul, Iranian press basically say that Iran is being strict due to previous U.S. breaches of trust. But is there any doubt in your mind that Iran and the Iranian regime is now better off than it was 5 months ago?
It's a tough question. Militarily, Iran has been absolutely battered since this war started in late February with the U.S.-Israeli bombardment of Iran. But there were hopes in Israel and the U.S. of regime change and a collapse of the Islamic Republic. That hasn't happened, and there are some signs that even Iranians who are very much opposed to the Islamic Republic are sort of rallying around it for now. So it remains to be seen.
Paul, thank you so much. Bloomberg's Paul Wallace there with the very latest. Coming up, is it time for global economic rethink to fix the world's problems? Well, that's the idea in a new book from economics professor Mariana Mazzucato. She's coming up next, and this is Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Alphabet taps investors for $80 billion in one of the biggest equity deals of all time. And Anthropic pips OpenAI to the post as it files confidentially for a mammoth IPO. Now, the U.S. and Israel offer differing accounts of a phone call about the fighting in Lebanon after Iran suspended talks because of the ongoing clashes. Plus, at least 11 people are killed in the latest Russian strikes on Ukraine, as President Putin has warned that the war is unaffordable. Now, my next guest says an economic trap has led to an endless cycle of patching up global problems rather than rebuilding the economy to help development. Now, she argues that how we achieve collective goals through collective action, participation, and reciprocity matters as much as what the goals are. Well, Mariana Mazzucato's new book is called The Common Good Economy, A New Compass. And Mariana is also professor of economics of innovation and public value at UCL. And she joins me now. Professor Mazzucato, as always, thank you so much for joining us. This is a great book because it also has quite a lot of common sense. Like, if you look at the global economy and you look at the UK, what's going on that doesn't feel right now?
So there's no lack of ambition. Just think of what happened with this government. They come in, they adopted these 5 missions. I was actually quite honored. They cited my previous book on missions, but then we don't achieve them. But this is a global issue. We have the Sustainable Development Goals since 2015, super ambitious, no poverty, no hunger, life below our oceans, climate change, gender parity, so on and so forth. So the book says it's actually by design, not by coincidence, that we're failing. Because if at best we think of the role of government as fixing a market failure, as opposed to shaping the economy for people and planet, then of course any sort of policy, even those that are pretty well informed and might have some common sense, the word you just used, will fail because it doesn't actually lead to transformation. We don't have a goal-oriented economy. We don't pay enough attention to putting those goals in the contracts from the beginning instead of picking up the mess after.
Mariana, when you talk about goals, what is it? Is it about measuring, or is it actually about not being distracted?
Things like reducing the digital divide to zero, net zero goals that everyone talks about, but then we don't achieve it, as the teenagers tell us, blah, 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 blah. Goals around health. Just think of what happened during COVID. The goal wasn't the vaccine. The goal should have been to make sure that everyone in the world who wanted to be vaccinated could be. And that depends on how we produce the vaccine. So the book is all about how do we produce with good at the center, so we don't then produce badly and then think that we can just correct the market failure later. And I have a bit of a historical section in the beginning. I know that your program actually likes to talk about details.
We love
Page
details.
33. No, anyway, so the historical section actually looks at how political philosophy has been more ambitious than political economics, because Aristotle, but also Michael Sandel, today, these are philosophers, old and new, said we need the telos, the goal, but also the polis, not the police. Polis meaning the community. No, community, polis. Yeah. And so how we build community, how public and private work together, how capital and labor work well together. And that's definitely not happening in a moment in capitalism where the labor share of global income is at one of the lowest it's ever been. How the state works with civil society organizations, including trade unions. Now, this matters, but what does it mean to put good in the contracts? Just think of water. Water is a huge problem. We have sewage in this country, in the UK, in our rivers and seas because of how we have mismanaged water. How could Thames Water not have, within the contracts they had with the state, that they actually had to invest in the infrastructure and reinvest profits instead of just giving it out to shareholders? Put the good result in the contract from the beginning. And by the way, 80%...
Mariana, I mean, do you need do you need that in a contract, or do you just... If you have a chief executive that wants to do good, does it have to need...
That's random. As much as I love those chief executives, and you and I often meet in these places where, the
global business is
the global
moving.
businesses are there, and that's very important, by the way. Someone like Paul Polman, when he was running Unilever, very important how he talked about a goal-oriented, purpose-oriented company. I do not dismiss that at all. I celebrate that, but sorry, it's not enough. If it's not, coming back to water, 80% of industrial wastewater is not recycled. Now, it's the state that's giving the water rights to Pepsi-Cola, to Anheuser-Busch, and so on. Why is that need to recycle not in the contract? Let's also look at some good examples. The steel sector, which in the UK right now is very much in the headlines, because in this country we always go back to privatize, nationalize, as opposed to govern it for the common good. In Germany, because they actually had a goal, the Energiewende, they made sure that all the money, public money, from the public bank that went to the steel sector was conditional that the sector innovate and invest towards reducing the material component of production throughout the whole supply chain. Here, we haven't done that.
Do we have good quality politicians? Do we have good quality civil servants to actually push it through? Because the main difference that I've always been told between, for example, our societies in the West and China is that China have long term, so they say, look, 10, 15, 20 years. Yeah. And actually, civil service attracts the best of the best.
Sure. So you might remember, now I can't remember because you were very kindly invite me on a lot, but one of my, my last book was called The Big Con, the infantilization of our government. So this lack of capacity and capability is not, because of the earthly deterministic forces. It's due to choices we have made to outsource so much of that capacity, to consultify it. Deloitte was getting paid $1.5 million a day to do test and trace during COVID, instead of, the civil service being invested in to be able to govern these wicked challenges. And the reason the subtitle of that book, The Infantilization of Government, was used was because a Tory lord, Theodore Agnew, called it out. He said, in Brexit and in COVID, we ended up outsourcing all the tasks, and these civil servants who come into government wanting to tackle wicked, tricky problems are just sitting there seeing Deloitte send them silly emails, because in the end, Deloitte actually, interestingly, was using the knowledge in the civil service. But really, this issue that we haven't been investing in, instead of thinking of big state, small state, what's a strategic, or what I used to still call entrepreneurial state that works well with business around problems and catalyzes public and private sector investment. And in a country, this one, where we have been underinvesting on both the public and the private side, this is incredibly important.
So one of my favorite chapters is called Access for All and Reward Sharing. Yeah. I mean, is this the problem that the UK has? Is this why Labour is failing at the moment? Is it because it doesn't have access to all, or is it more of a temperament problem of the Prime Minister that he just can't hold his party together? So, okay. A lot of issues there. One is, no, it's definitely not just the UK. However, the UK, I think, has a particular problem because the ideology. So even once Labour came in, instead of saying we're going to work with business to solve problems, they said, oh, we're going to be business friendly. What does that even mean, to be business friendly? Does it mean to give Palantir all the NHS data, as opposed to asking what can we do to actually achieve really bold health outcomes with well-designed contracts that preserve privacy and working with businesses, small and large, around the missions that the government had set itself. But what keeps happening across governments is that we socialize risks and privatize rewards. And the fact that during COVID you had some countries like France that all the support given to Air France and Renault was conditional that they actually commit to lowering carbon emissions, whereas here we gave $600 million to EasyJet, no conditions attached. Now with steel, just bailing them out, maybe putting them into public hands until things are good, and then selling them off for garage sale prices, back to the private sector. This is a recurring problem. But that has to be the quality of the politicians. So we can go down that route and talk about individuals, and of course there's many names also floating now on who might, replace Starmer and if he should be replaced. I don't think that's the biggest problem. I think at least, most politicians I meet around the world, of course there's some that are corrupt. There's also many corrupt or weak ones in the private sector. That's, a problem in general. Humanity. There's nothing in the DNA of the public sector that is going to create a weak politician or policymaker. If you don't come in with a strategy and a vision that can then catalyze the much-needed investment that we need in this country, that's a problem. So if you come in with good ideas, which I think the government had, but without enough kind of gusto and almost conviction, and to really go after those goals in such a way that then business sees kind of future opportunities in particular areas, whether it's clean growth or different kind of well-being targets, then it's going to be hard to reverse a cycle of underinvestment. We are 28th in the OECD for private sector investment. Everyone always talks about public sector investment. We forget that business in the UK, not all, but many businesses are making profits but not reinvesting those profits. That's, again, the Thames Water, Carillion, but also, many companies that should be
there should be some pressure that to work well together means reinvesting in good working conditions and energy efficient supply chains, and really making sure that we're innovating towards solutions. But that requires confidence. And what I see is a lack of confidence.
Who gets it right? Is there a country? Is there a leader? Is it a partnership?
So the book's divided into three: theory, policy, places. The places bit is the bit I got most excited about because I just hadn't really thought how important places are where we build community centers, youth centers, but also public squares, public libraries, public pools in the summer where so many kids are actually excluded because we have not invested in them, but also in the global arena, as you know, because, again, the places where we often meet, global South countries feel that they not have been respected in the Bretton Woods institutions. They have no voice. Yeah. But the middle part of the book, it tries to tackle what you just asked, which is there's so many good examples, but they don't scale. Right? So whether it's what's happening in the Amazon, where the indigenous communities are saying, great, you set up an Amazon fund, but how about if we actually have a voice, given that we have knowledge? They have a wonderful saying. There's a secretary for traditional peoples who I've been working with, Adele Moraes. She says, there's people in the forest. They have knowledge about the hydrological cycle that we were just commenting on. They have knowledge about biodiversity and preserving the forests as really, important carbon sinks. So why do we have to pay all these NGOs to kind of come in and do good? Really recognizing the value of people for the value creation that they can provide in this collective effort, but then rewarding them, not in a condescending redistributive way, but pre-distributive way. And that's one of the key themes of the book, pre-distribution. Get the relationships right from the start so you don't have to pick up the mess later.
Mariana, thank you so much, as always, for joining us. Mariana Mazzucato, Professor of Economics and Innovation and Public Value at UCL, and author of this great new book, Common Good Economy, A New Compass. Now, the UK government has published thousands of private communications related to Peter Mandelson's tenure as US envoy, which ended in disgrace over his links to pedophile financier Jeffrey Epstein. Now, the disclosures include revelations from senior ministers, such as Pat McFadden's admission that Labour MPs are focusing on who can we tax in order to pay benefits to others. Well, with us now is Rosa Prince, Bloomberg opinion columnist. Rosa, so some of the messages that, we were talking about from Pat McFadden to Peter Mandelson, are those the most damaging from this massive document dump we had yesterday?
I think they're pretty embarrassing. I think they are personally difficult for Pat McFadden, and those words will haunt probably the rest of his career. But I think there are some other equally damaging, actually, aspects of the revelations. One is really the extent to which people within the government were criticising Keir Starmer and his leadership going back, well, over a year, way before this current crisis in his leadership. The second thing I think they show that is very damning is the extent of Peter Mandelson's influence over all areas of government. He really had a finger in every pie, and Labour as a kind of establishment allowed him to do that. They enabled that. And the third quite damning thing in these documents is actually what they don't contain, and that is a proper explanation for why we are here in the first place. Why was Peter Mandelson appointed to this very important and sensitive role, given all the red flags that there had been? And we had hoped to find out finally an answer to that. And I think that was missing from the information, even though it was thousands of pages long, as you say.
Rosa, the documents, of course, undoubtedly damaging for the Prime Minister. What about those trying to replace him, the likes of Andy Burnham and Wes Streeting?
On the whole, I think that it's probably quite helpful for them. What these documents display is a very dysfunctional government. It shows that even members of Keir Starmer's own cabinet, allies like Pat McFadden, who usually is one of his biggest cheerleaders, were already saying that he wasn't up to the job. Peter Mandelson described it as lacking verve. So I think that kind of makes the case for those who think that he should go. It undermines his authority. It shows that he hasn't even got the support of his top team. There will be questions, though, for some of those candidates, such as Andy Burnham. He, at the weekend, said that he thought Labour MPs should be given more power and their conscience should come into play when deciding legislation. Now, that's exactly the opposite of what Pat McFadden was saying, who was saying that Labour MPs were unrealistic and that they were blocking reforms, particularly on welfare. So I think that's something that Andy Burnham, who at the moment is the kind of front runner to replace Keir Starmer, will have to address.
Thank you so much, Rosa. Bloomberg opinion columnist Rosa Prince. Now, coming up, Iran says Lebanon must be part of a broader peace deal as President Trump aims to keep talks alive. More on that next, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Now, the Turkish foreign minister has told Bloomberg he thinks the U.S. and Iran seem genuine in their desire for a ceasefire, but he's cautious of Israel. Hakan Fidan has been speaking exclusively with Haslinda Amin in Singapore.
Late last night, I had a phone conversation with my counterpart in Iran, Minister Abbas Araghchi. It was about the recent the Israeli attack on Lebanon, because Iran thinks that they had an understanding with the Americans to hold ceasefire on all fronts. So that's why they engage the discussions and on talks. They think that the recent intervention of Israel and the invasion and operations is a clear violation of the ceasefire agreement. I think so it will make it extremely difficult for them to continue with the talks. As a result, as you know, this morning President Trump has, issued a tweet in his statement that he spoke with Prime Minister Netanyahu and the representatives of Hezbollah, and they agreed on to halt the ceasefire. And apparently, Israel has given up from the land operation at the moment. So I think both sides can go back to where they left to continue with the talks. I hope that they can reach an understanding within a few days.
So you're confident and you're optimistic that we could see a ceasefire on Lebanon? Well,
yes or no? Yes, I am confident that the Americans and the Iranians, they are sincere on they want to have a ceasefire. And they want to see the opening of the Strait of Hormuz, sincerely. But I am not sure about the intentions of Israel and possible repercussions of things that they are doing at the moment. So that's why I am cautious. I am confident that the Americans and the Iranians, they really want to have the ceasefire and the opening of the Strait of Hormuz and the continuation of the further discussions, especially on nuclear files and the other related subjects. But as for Israel, they don't have any intention of seeing a stability in the region. So I am not sure about that.
Well, that was Hakan Fidan, the Turkish foreign minister, speaking with Bloomberg's Haslinda Amin. Now, President Trump and Israel Prime Minister Benjamin Netanyahu have offered differing accounts of a call about the fighting in Lebanon. This comes after Iran said Lebanon must be part of a broader peace deal. Let's get analysis with Anush Eshtashami, international relations professor at Durham University. Professor, thank you for joining us. What's the common ground at the moment? How quickly do you think we can get lasting peace?
Thank you very much for having me. I think short-term peace is within reach. As we know, this draft MOU has been in hand for more than a week now. All parties seem to agree to most of it. Lebanon, as you rightly point out, remains a sticking point because Israel has national security interests in southern Lebanon. And Hezbollah thus far was not part and parcel of the negotiations between the US and Iran. Now that Iranians have brought it into the equation, it makes it very difficult then to untie that knot that is between Israel and Hezbollah. If that is resolved, if that is shelved even, then I think we can move forward very rapidly towards this 60-day ceasefire.
What happens after the 60-day ceasefire? Because there's a lot of negotiation in terms of who's in charge, for example, of safe passage in the Strait of Hormuz. Then you still have the nuclear question, which last time took years to get together. So is it going to be a stop and start every time?
I think they've recognized that they need to unpack these various problems that they face. The nuclear program, I think, has kind of lent itself to a resolution because IAEA has made it very clear that the minute there is open dialogue, they will want to inspect Iranian nuclear sites again. They want to assess the damage. They want to look at the enriched uranium, report back to IAEA. And then once Iran and the United States agree, the inspectors are on the ground. The removal of the highly enriched uranium can then become part of a negotiation rather than dispute. Strait of Hormuz is a different matter, I think. Iranians have basically stumbled upon that as a geopolitical asset. They've always threatened to close it, but they never really realized how effective it would be. Of course, it's hurting them as well, but nevertheless, they've made it clear that this notion of a toll has been shelved. They're much more concerned now about joint responsibility for managing the Strait of Hormuz. That is very different than controlling it. And if they say that they want to do it with Gulf partners, Oman in particular, then I think, again, there is room for negotiation and decide that you have a regime that looks at, for example, the environmental damage that shipping causes, the flow of traffic in and out. But the one sticking point remains US's Fifth Fleet in Bahrain and whether Iran is prepared to tolerate American naval vessels going through the Strait of Hormuz or not. That, I think, will be one of the sticking points.
Anush, talk to me a little bit about how you think, what does the Iranian regime want today? Is it different than it was 3 weeks ago? And is that different to what it was 6 weeks ago?
I think they're kind of responding to what Trump wants most of the time. They do seem to have the red lines. The red lines are that this should not be a ceasefire, it should be a peace treaty, that nuclear program should be resolved once and for all, that access to the Persian Gulf should be everybody's responsibility, but Iran has the longest coastline, that reparations should be paid for the war, and that Iran's interest should be recognized. Some of that is rhetoric, some of it is actually real security concerns. Remember, in the JCPOA back in 2015, Iran did make a commitment not to develop nuclear weapons. It did agree to discuss the range of its ballistic missiles, and it did agree to some kind of a collective arrangement for security in the region. I think those are still there for the Trump administration to visit. It's first whether he's willing to do it. Secondly, whether Prime Minister Netanyahu is prepared to go along with it. Because what Israel is really worried about is that for all the effort they've put in since the 12-day war of last year, and now in February and March, that Iran might get away with some military damage, but actually remain intact, keep its missile program, maintain a nuclear program as well, and continue to use Hezbollah, amongst other non-proxies, to probe Israel's security.
Professor, I have a viewer question, and thank you to all of the viewers, that watch every day, but also that send in questions, because they mean the world to me. So this viewer has written in, Professor, saying, who's actually in charge in Iran? Is it the clerics or the IRGC?
I think it's a combination of both. I think the government provides the public face for the regime still. I think the killing of the supreme leader February 28th and 40 of military political commanders has created a vacuum, but the regime is so layered that new faces have emerged. But because all of that took place in a survival conflict situation, inevitably the role of the RGC has surfaced, and the RGC are now very much in charge of much of Iran's national security debates. What that has not translated into us thus far is access to political levers. Now, whether Mojtaba Khamenei is in a position to contain them or not, I think that remains to be seen. But the fact that President Pezeshkian, Foreign Minister Arakchi, Speaker Ghalibaf continue to be this, if you like, the civil faces of the regime, means that the civilians are still in power. But also what we haven't seen is the RGC challenge the legitimacy of the elected government. For better or for worse, Pezeshkian remains in power. They may be incompetent, they may be unable to make much change on the ground, but nevertheless, there is still this balance of power in place. That may change. Of course, RGC worries about the impact of peace, the lifting of sanctions ultimately, and what that means for them, because they profit from monopoly of access to trade. But that is something for another day, I think.
Yep, thank you so much. And of course, one of the big questions is also whether some of these, shipments get paid in yuan and the support of China. Anush Etashami, international relations professor at Durham University. Thank you so much for joining us. Now, the picture for the markets is really U.S. stocks that have been a little bit on a tear in the last couple of, trading sessions, are taking a bit of a pause after AI trade seems to be fueling the S&P 500's longest winning streak in more than a year. Again, the investors are also gauging the prospect of an end to this war in the Middle East, with U.S. President Donald Trump struggling to get efforts towards an Iran peace deal back on track. Later today, we'll hear from Jens Stoltenberg, the former NATO Secretary General, now Norwegian Finance Minister. Catch that exclusive interview, Bloomberg Newsmakers. That's a conversation live on Bloomberg's YouTube channel and on the Bloomberg terminal at LiveGo at 3 p.m. UK time.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's
a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It is 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the trading day. A stock rally sitting at all-time highs with U.S. futures slightly lower ahead of the JOLTS jobs data that we're going to get out a little bit later this morning. AI momentum, though, showing no signs of cooling. Alphabet lines up a massive equity war chest for AI spending, and Iran said to be discussing the final text of the Memorandum of Understanding to extend the ceasefire with the United States in the Middle East. Let's get a check of what's going on in markets around the world. S&P futures right now down about 0.1%, and we're looking at NASDAQ futures slightly off as well. Let's get a check at what's going on around the world. For that, we go to Winnie Su in Singapore for the latest from Asia. Winnie?
A very good morning from Asia. We did see actually the AI rally seeing a bit of a slowdown earlier today, but markets really rebounded quickly in the afternoon. As you can see on the board that we have HS Tech, Hong Kong's tech stocks, in fact, leading the rally, and that is also driven by the gains on Tencent, which closed above 10% here. Now, this is coming after Financial Times reporting that the company is now close to this new AI agent launch for WeChat, which is showing how the company has been really able to improve its AI capability. Now, you flip the board, I want to show you a very exciting chart from our region today as we update you with all these, the latest on the global market cap race. Here on the chart, you can see that South Korea's market cap has now finally overtaken that of India and is officially the world's 6th largest stock market in the world. And it's only just following Taiwan, and right now sitting at around $5 trillion US. All
right, Winnie, thanks very much. Let's get to London now for a look at what's going on in Europe with Justina Lee. Justina?
Good morning, Matt. I feel like every day Winnie talks about AI, and I'm here to talk about, of course, the Iran situation, because that basically explains everything we're seeing on this board today. Now, with oil coming back down a little bit, Trump seemingly calming down some of those tensions over Lebanon, we're seeing a better day for the stocks Europe 600, travel shares kind of being supported, of course, those tech shares as well. And kind of the dollar is a bit weaker today, so we're seeing a bit of a stronger euro here. And, of course, those 2-year German bond yields coming down a little bit, kind of also following the move in oil. Now, when it comes to European fixed income, of course, the focus is still on the regional inflation figures. And if we flip the board here, we just got those CPI figures out of the Eurozone. And we can see that it's up a little bit to 3.2%, back over that 3% threshold. And I think that's probably going to cement those expectations for a rate hike from the ECB coming up later this month, Matt.
All right, Justina, thanks very much for that. As we showed you here in the U.S., we're looking still at slight losses on futures for the S&P and the NASDAQ, although there has been a bit of a turnaround in the Asia trade. Let's take a look at what's going on with treasuries right now. We have yields coming down across the board. The 2-year yield at 4.0204, the 10-year yield at 4.43, and the long bond trading at 4.95. In terms of oil, we have those prices coming down as well. WTI off $1.64 to $90.52 a barrel. Brent crude down $1.81 to $93.17. For some of the individual stocks that we're following, let's get over to Chloe Melee in London. Chloe?
Good morning, Matt. HP Enterprise shares are soaring this morning after guidance came in above expectations thanks to really strong demand for AI servers. And this follows, of course, in the footsteps of the very strong blowout results that we had from HP's rival Dell earlier. And this is really confirming that this hardware computing equipment sector is going to see this huge boost from AI. And so we are seeing the shares up more than 24% this morning. Moving on, but staying within this AI enthusiasm story, and we've got Marvell Technologies also soaring more than 22% after NVIDIA's CEO Jensen Huang said that this could be the next company joining the $1 trillion club. Of course, Micron has joined that exclusive club recently, and we'll be keeping an eye on whether Marvell follows in that footsteps anytime soon. And finally, let's go over to France, where we are seeing the biotech company Abivax sinking this morning after some new clinical results. And so it has a bowel disease drug that actually was more effective than expected, but the company also reported cancer cases in several patients, and those might be unrelated to the treatment itself, but it still complicates the path towards regulatory approval. And so we are seeing that reflected in that huge drop in the shares this morning, more than 28%.
All right, Chloe, thanks very much. Chloe Melee there looking at some of the individual movers that we're following for you. Coming up this hour, we're going to drumbeat to a slew of jobs data this week with Seema Shah of Principal Asset Management. We get the JOLTS out today, and we get the non-farm payrolls out, of course, on Friday. Alphabet racing to keep up with its own AI spending. Google's parent company announcing a plan to raise $80 billion through equity offerings to support its AI ventures. The fundraising efforts include a $10 billion deal with Berkshire Hathaway, as well as $40 billion of share sales at the market over the next few months. Matthew Bloxham joins us from Bloomberg Intelligence to talk about this. And Matt, I have to say, it seems unprecedented. I have never read numbers this big in terms of an at-the-market offering. How are investors going to react?
I think they'll probably react positively, but clearly, the public investors are being asked to find a lot of money. If you put this alongside the SpaceX IPO, which has looked to raise $75 billion, and possibly an Anthropic IPO and an OpenAI IPO coming too, so $80 billion is a huge number. But then when you look at what Google's planning to spend on AI investments, it's not actually that much. They're going to spend something like $190 billion on capex this year, mainly for AI infrastructure. Next year, that number could head towards $300 billion, and they generate around $175 billion of cash flow every year. So they need to tap markets to help fund this investment and to stay competitive with their big rivals. They've tapped the debt markets over the last year to the tune of about $85 billion. So, it's the public equity market's turn to help fund the growth strategy.
It makes sense, frankly, if you look at forward PEs for Google. They're still trading at under 30. Many companies, NVIDIA, trading at are closer to 20, around, I think, 21 right now. Are we going to see more of these, Matt? Are we going to see more at-the-market offerings?
I think we potentially could do, yeah, and I think certainly a lot of other big tech companies are going to be watching this very closely to see what the appetite's like. But, all of the hyperscalers are still in a huge round of investment, and, I think they've kind of looked at private investment, they've tapped the debt market, so potentially it's the equity markets that are going to have to continue to fund this going forward. And for the equity markets to have the appetite for that, then these companies need to continue to deliver really good top line growth to keep people confident that the AI opportunity has a long way to run yet.
As long as the demand is there, the investors are likely to fund it. HP Enterprise extending double-digit gains after its outlook, its annual sales outlook topped estimates.
Yeah, and coming back to what you just said, as long as the demand is there, and clearly the demand is there right now. Hewlett-Packard, talking about 30% revenue growth this year. The market was looking for about 20, and next year looking for at least 10% growth in the markets at 5%. It's almost unheard of these days to see a company guide 18 months out, but just demonstrates the enduring nature of the demand they've got. And it plays to this shift we're seeing in the AI technology, that it's not just about the NVIDIA GPUs that are needed to train these big models. You can actually use more regular CPU-based servers to actually do the inference and actually run these AI models in a corporate environment. And that's where Hewlett-Packard Enterprise and Dell both excel. And we saw Dell deliver strong numbers last week, and this week it's Hewlett-Packard Enterprise delivering a kind of very similar narrative about the outlook.
Hey, by the way, a story I saw today, SK Hynix is going to double memory production capacity over 5 years. Initially, I thought this is huge, but I guess 5 years is a long time in these markets.
It is, but doubling is huge, and obviously there's this big debate that the memory market has historically been incredibly cyclical, and a big question mark about whether big increases in capacity may well lead to a kind of bit of a supply cut further down the line. That's still possible for sure, and you'd like to think that the way they're going to deploy this capital is going to be fairly gradually, so that they can continue to keep a relatively balanced kind of structure of the market and not see a big glut of supply in a year or two's time, which would squeeze pricing.
All right. Hey, Matt, thanks so much for joining us this morning. Matthew Bloxham there of Bloomberg Intelligence covers the tech universe for us out of London. More headlines coming out of the Computex event in Taipei. Bloomberg's Stephen Engel spoke exclusively to ARM CEO Rene Haas about its $15 billion chip revenue goal. Take a listen.
So if you look at the evolution of our technology over the last 4 or 5 years since I became the CEO, one of the things we've seen is a consistent demand of please do more. Yeah. And we started taking our IP, putting them into blocks that we called subsystems, combining everything to help people build chips faster. We did that about 2-3 years ago. The demand on that has been fantastic. Yeah. And that naturally started to lead into customers asking us, hey, could you take these subsystems and just finish it off and build the chip? Because in some cases, the final chip, greater than 90% of the IP on that chip belonged to ARM, belonged to those subsystems. So first off, we were asked to do it. Meta asked if we would, and we said yes.
I was going to ask you about Meta. That's pretty much the launch customer.
That was the launch partner. And secondly, it was a market that was really underserved. There are folks like NVIDIA, Amazon, Google, Microsoft who can build ARM server chips, but there are some folks who just don't have that capability. The Cloudflares, SAP, some of the customers for this AGI CPU, and also Meta. So really, we were responding to customer demand.
How do you see this business growing over the next year and next 5 years? As you add, perhaps, I would assume, you're already in discussion with other launch customers.
Yeah, so we talked about with analysts back in March about a $15 billion type revenue by the end of the decade. We're well on track to hit that. I'm hoping we can even hit that sooner. Demand has been stronger than we anticipated. And I will say that's a combination of just all things AI. But also, frankly, it's a great product. It's 2 times the performance of an x86 at the same power. So demand has been fantastic. So the number we've talked about publicly is 15 by the end of the decade, 15 billion. I'm very confident in achieving that target.
Well, you said that 90% of ARM architecture built into that. Were you literally simply looking at the market and saying, we can be at the top of the pyramid? I mean, NVIDIA has taken that space.
What we were seeing was, huge demand for power-efficient technology. Yeah. And when you think about what goes into building out AI data centers, power is one of the hugest pieces of everything. So if you can build a very efficient machine, it helps save money, it helps save power. Then with all things agentic AI, a lot of that work is done by CPUs. Yes, the GPU does a lot of work to generate the token, but the distribution of that token, the administration of that token, the orchestration of that token, that's only work CPUs can do, which is why people have been talking about, oh my gosh, this CPU demand, it's just going off the charts. It's largely because of that.
And that was Bloomberg's Stephen Engel in conversation with the CEO of ARM, Rene Haas. Now let's get to some of the other top stories trending on the terminal this morning. Short seller Andrew Leff could face decades behind bars after being found guilty by a federal jury of using disingenuous social media posts to manipulate stocks. It's a landmark trial that's expected to have a chilling effect on short sellers who now fear that publishing negative research and exiting trades quickly could lead to federal audits and legal charges. Left sentence hearing is in August. He'll remain free until then, and he'll likely appeal as well. A significant milestone for Unicredit CEO Andrea Orcel's pursuit of rival Commerzbank. According to Bloomberg sources, Unicredit has secured commitment that would lift its Commerzbank stake well above 30%, up from around 27%. Crossing that 30% threshold, of course, gives Orcel growing influence and makes it ever more difficult to fend him off. And Tencent jumped the most since late 2022 after the Financial Times reported that it's testing an AI agent for WeChat. The FT says the Chinese internet giant plans to begin a compliance process for a public launch as soon as this month. A successful launch could push Tencent closer to rivals ByteDance and Alibaba. Coming up, President Trump and Prime Minister Netanyahu give different reports of their intentions in regards to the fighting in Lebanon. More on that next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Matt Miller in New York. Mixed messages over the Middle East. President Trump and Prime Minister Netanyahu giving different narratives on the fighting in Lebanon as the U.S. and Iran are still struggling for a peace deal. President Trump, posting on Truth Social, said, quote, representatives of Hezbollah have agreed to stop shooting at Israel and its soldiers. Likewise, Israel agreed to stop shooting at them. Prime Minister Netanyahu then posted a different intention, saying, quote, the IDF will continue to operate as planned in southern Lebanon. Let's get more from Bloomberg's Abir Abu Omar in Dubai. So, Abir, I guess it doesn't matter what President Trump posts on Truth Social. If the leader of Israel says they're going to keep fighting in Lebanon, they're likely going to keep fighting in Lebanon, right?
Yeah, good morning, Matt. So look, some conflicting statements that we've seen over the past 48 hours. Essentially, the phone call that happened between President Trump and Prime Minister Netanyahu suggested, according to President Trump, that he told him to not attack Beirut or not to launch raids on the suburbs of the capital of Lebanon, to which Benjamin Netanyahu had agreed. President Trump actually said that troops that were on their way or headed had pulled back, which Netanyahu Netanyahu said was the case, but then Netanyahu said that he will attack Beirut if Hezbollah does not stop its attacks against Israel. And then he said that, as a matter of fact, Israel will continue its attacks on the southern part of Lebanon. So there's a distinction between attacking Beirut, which is what Israel had intended to do a couple of days ago, and then the southern part of Lebanon, where it has its deepest incursion in about 25 years. But in the broader picture here, bringing Iran into the mix, Iran had said that it suspended conversations or negotiations with the United States because to Iran, Lebanon is a sticking point in reaching to this interim deal. We've been calling it an interim deal because it is a temporary deal that would extend the ongoing ceasefire for about 60 days with the opening of the Strait of Hormuz and then some other parts of the negotiations, including Iran's frozen assets, oil sanctions, will be discussed at a later stage. But Lebanon has emerged as a sticking point for Iran. It has emerged as a non-starter for Iran. They want Israel to stop the attacks there for them to carry on with any sort of negotiation with the United States. President Trump said yesterday that he'll give it a week. So over the next few days, we'll monitor the situation. But this back and forth has been quite confusing. And it goes to show that it's been the case over the past 4 months, really, where President Trump comes, whether it's on a Truth social post to say that a deal is imminent, but then Iran comes back with its own concessions.
All right, Abir, thanks very much for that. Abir Abu Omar reporting out of Dubai. Turning now to trade, EU lawmakers have given preliminary approval to a U.S. trade deal just days after negotiations overcame disputes to finalize the text. Joining us now is Bloomberg's Suzanne Lynch. So I guess the EU is going to offer concessions to maintain only a 15% tariff rate on its exports.
Yes, I mean, this is the latest stage in this long-running saga over this EU-US trade deal that was agreed last summer in principle by Donald Trump and Ursula von der Leyen, the head of the European Commission. And since that, it has been going through the EU's process. And this morning, we had a key vote from the Trade Committee in the European Parliament. They gave it the green light. Now, the full Parliament will vote on this on June 16th, but we do expect that to pass. But as you say, there are some safeguards, some extra information that was inserted by members of the European Parliament here who, you know, over the last few months were concerned, for example, about Donald Trump's threats on Greenland, the kind of seesawing trade policy that we've seen emanating from the White House. So, for example, there's now a sunset clause which says this deal will expire in December 2029 if it's not renewed. And also, there are some safeguard mechanisms to ensure that steel and aluminium in particular, that if that goes beyond 15%, well, then the EU does have some wiggle room there. But look, this is another stage in that full ratification of the trade deal that I think both Washington and Brussels want.
I want to first of all congratulate you on the pronunciation of aluminum. That was perfect. The Supreme Court struck down President Trump's use of emergency powers to put tariffs on. Does this not have any effect on the deal with Europe?
Well, these are, particularly with the steel and aluminium tariffs, these were Section 232 tariffs, which were that separate strand. And I mean, a lot of people here in Europe believe, when this deal was signed, that actually the US got a very good deal here. You know, the EU is raising those levies, whereas the European Union would be faced with 15% tariffs. Now, they have been assured that these 15% rate is locked in on the US side. But as we know from President Trump, since that Supreme Court ruling, he has looked at other mechanisms by which he could impose trade. So it's a question of trust now. The EU believes it can trust Donald Trump on this, and that's why they're moving forward with their ratification of the deal.
Suzanne, thanks very much for your coverage. Bloomberg's Suzanne Lynch talking through the tariff deal in the EU. This is Bloomberg.
in case you missed it on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield back on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
It is 5:30 a.m. in New York City, 10:30 in London. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the trading day. Stock futures are hovering at a record high ahead of the JOLTS job data. AI momentum showing no signs of cooling down. Alphabet lines up a massive equity war chest for AI spending. And Iran said to be discussing the final text of the Memorandum of Understanding to end the war with the U.S., or at least extend the ceasefire. That kind of optimism continues to drive markets day in and day out, regardless of whether or not we ever get a resolution. You can see futures right now are off just a bit, 0.2% on the S&P 500 as we closed at about 75.99 yesterday in the cash trade. The Nasdaq down 0.1% as our Russell 2000 futures. We see Treasuries yields coming down across the curve. So if you take a look at the 2s, the 10s, and the long bond, they're all lower at 4.44 and 4.95 respectively. We also see Brent and WTI coming down. NYMEX crude right now off $1.53 to $90.63. Brent crude down $1.66 to $93.30. Bitcoin, by the way, falling finally under 70,000. The first time in a couple months we've seen it dip that low at 69,256. For some of the individual stock stories we're following for you this morning, let's get out to Chloe Melee. She's standing by in London. Good morning, Chloe.
Good morning, Matt. We've got HP Enterprise shares surging this morning about 27% after better than expected guidance. And that was thanks to very strong demand for servers and networking equipment from AI customers. And so this echoes, of course, what we've already heard from Dell. And this really confirms that those hardware computing equipment names are really benefiting from the AI boom. And speaking of AI and staying within that same theme, we also have Marvell Technologies doing very well this morning, up more than 23% after the NVIDIA CEO Jensen Huang said that this company could be the next trillion-dollar company. We, of course, had Micron joining this very exclusive club just a few days ago, and so it seems that Marvell is the next name to keep an eye on for this. And finally, let's go over to France, where Abivax, the biotech company, is sinking this morning after some clinical trial results for its bowel disease drug. So the medicine was actually more effective than anticipated, but the company also reported several cancer cases among patients. And so this could complicate the path towards regulatory approval, even if it turns out that those cancer cases are not related to the treatment itself. And so we are waiting for more details there. But in the meantime, we can see a huge drop in the shares in Paris this morning.
All right, Chloe, thanks very much for that. Chloe Melee in London with our single stock stories. Now, a slew of jobs data is dropping this week. Starts with JOLTS today at 10 a.m. Then ADP comes out tomorrow. Jobless claims on Thursday, all leading up, obviously, to the granddaddy of all economic statistics, the non-farm payrolls report on Friday. Joining us now is Seema Shah, Chief Global Strategist at Principal Asset Management. And Seema, what kind of read do you expect to get on the labor market? Because there have long been concerns that AI was going to erode jobs, but we haven't really seen that happen on a macro level.
Good morning, Matt. No, look, as you said, we're going to see a lot of jobs data this week. One of the things that I think has characterized the data that we've received in the last 3 or 4 months is that they've been very unstable, almost kind of moving from one month to another, just very variable. So we're looking to see some kind of stabilization this month. I think we've still got a little bit of skepticism generally about the data, and specifically with regards to AI. To our minds, this is still really early days to see that clear impact. We're certainly not seeing job losses. That much is very clear. But I think that we could see more and more evidence as we go on through the next couple of months. And yeah, certainly what we're hearing from small businesses, from the surveys that we do, they are actually investing more in AI, and they feel quite positive, and they're not yet feeling the need to remove staff as a result of that investment.
Seema, what do you make of this incredible rising equity market. I mean, 9 consecutive weeks of gains. We hit record high after record high. Yesterday in the cash trade, we closed at basically 7,600. And yet valuations aren't so high if you look out 12 months.
Right, and I think that's really key, because what we've seen from the equity market is, yes, there's some positivity and joy about the kind of resilience of the macroeconomy to the Iran conflict and the spike in energy prices. But actually, it's really been about AI, earnings delivery, the fact that these companies, not just that there's big expectations, but actually they continue to deliver. So I think that's what's driving markets. So actually, as we look forward, the macro backdrop is important. But if anything, I think it's really the delivery of those companies which are going to be the more significant driver of markets going forward.
What about yields and oil prices? You know, it strikes me that they might be higher than they are, especially considering the fact that we never seem to get a resolution. You know, it's a crisis in the Middle East that's dragging on now for more than 3 months. And yet, and inventories continue to fall, and yet the Brent crude price is low at $93 a barrel.
Yeah, you know, I mean, and I think there's actually a lot of headline fatigue within the market. You know, as you said, the news flow just goes back and forth, and we never really seem to get any clear resolution. But with regards to the oil price and the fact that it is as low as maybe it's low, certainly lower than what we would have expected given the amount of shortages that are starting to come through. I think one of the things we're seeing is that there is still that assumption that there is going to be a resolution to the conflicts. If we're looking further out towards the end of the year, the assumption is that oil is going to be flowing once again. Generally speaking, though, from a bond yield perspective, the fact that yields have risen, particularly in the US, I think specifically within the US, a lot of that is also down to the strong economic backdrop and, of course, inflation as well. But I think that's why the equity market has been essentially been able to look through the rise in yields and instead really focus on the very strong earnings growth season that we've had, and that is expected to continue over the coming quarters.
How do you expect a resolution to this conflict? I mean, a war for which Iran has been preparing for decades. They don't look like they're going to back down. And the U.S., President Trump would really have to lose face if he makes an agreement without the unconditional surrender that he has stated is necessary.
Yeah, look, I think it's anyone's guess in terms of how this is going to pan out, what the kind of timing is. But certainly from our perspective, whatever resolution there is, and assuming that there's some kind of reopening of the strait, we're still not expecting a kind of snapback in oil prices where they go back to the $50 a barrel. There's just too much damage to the infrastructure. There's too much movement that needs to be done in terms of supply side, that we would still expect oil prices to remain elevated. So staying above the $80 a barrel mark through to the end of the year, instead of coming right back down, unless, of course, the caveat to that is if you were to see really significant demand destruction, economic weakness. And only in that kind of scenario do we see oil prices really plummeting back down to the pre-conflict levels at some point this year.
Do you see economic weakness coming in the U.S.? Because we've certainly, on the top line, you know, the CapEx has been amazing to watch. These trillion-dollar IPOs look like they're going to sail through. The upper end of the consumer is doing very well right now, whereas the lower part of the K, as people say, is struggling to pay for gas and food.
Yeah, look, we've just been revisiting our economic forecast, and actually, I mean, we're still quite positive. We're expecting growth of around 2.1% this year, and that's really driven by continued strength in consumer spending from an aggregate level. And as you know, as you very rightly point out, that is not a picture which covers everyone. The higher income households are doing incredibly well still. The lower income households are clearly showing some stress. And actually, even from a business perspective, large companies are doing well. Small businesses finding a lot more challenges in this environment. But overall, this is still a strong environment, particularly given the AI capex. I think that circling back to the labor market, that still is the key. So as long as the labor market is staying quite firm, quite stable, we're not seeing a rise in job losses, then consumers, households can continue to spend. So I think it all comes back down to the labor market. If that holds firm, then we would expect this year to be another strong year. And then that should be a key foundation for equity markets and broad risk assets going forward.
Seema, great to get you on the program. Thank you so much for your intel. Seema Shah there of Principal Asset Management. Let's get to some of the other top stories trending on the terminal this morning. Short seller Andrew Left could face decades behind bars after being found guilty by a federal jury of using disingenuous social media posts to manipulate stocks. It's a landmark trial that's expected to have a chilling effect on short sellers who now fear that publishing negative research and exiting equity trades quickly could lead to federal audits and legal charges, which I think is precisely the point that the prosecutor wants to get across. Left's sentence hearing is in August. He'll remain free until then, and he has said essentially that he will appeal. The U.S. will reduce tariffs on agricultural equipment such as combines and harvesters to reduce costs for American farmers and manufacturers. According to the White House, those tariffs would drop to 15% from 25%. The concession takes effect June 8th and would run through the end of 2027. Golden State Warriors basketball star Steph Curry has signed an endorsement deal with Chinese sportswear giant Li Ning. The partnership starts with basketball and golf products and will then expand into lifestyle categories. The deal signals improving ties between the NBA and China, the league's largest overseas market. Coming up, mixed messages around the fighting in Lebanon, clouding Washington's path to reach a peace deal with Tehran as the IDF warns residents of southern Lebanon to leave ahead of an attack. More on that next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
London. This is Bloomberg Brief. I'm Matt Miller in New York. Differing messages about the fighting in Lebanon clouding a potential U.S.-Iran peace deal, or rather the fighting itself is what is clouding that deal. President Trump posted on Truth Social, quote, representatives of Hezbollah have agreed to stop shooting at Israel. Likewise, Israel agreed to stop shooting at them. The question is if Israel really did agree to that, because Prime Minister Netanyahu of Israel said that the IDF will continue to operate as planned in southern Lebanon. And just minutes ago, the IDF repeated its warnings for residents of a southern Lebanese city to leave, ostensibly ahead of an attack. Joining us now from Washington is Bloomberg's Kasia Klimasinska. So, Kasia, it seems that the Trump administration is trying to put forward a message that Israel is going to stop the fighting, although Israel says it's intent on continuing to fight.
Yes, President Trump, most importantly, wants to get a deal, at least an interim deal with Iran. He wants to see the Strait of Hormuz open. He wants the energy to flow. So yesterday he issued two statements. One of them was him saying that the talks with Iran are progressing at a rapid pace. And then he said that he had this phone call with Israeli Prime Minister Benjamin Netanyahu, and that he agreed that Israel will stop attacking Hezbollah in Lebanon. And Trump said that he also talked to Hezbollah representatives who agreed to do the same, to hold the fire. But as you mentioned, the view out of Israel is different. Israel said that its position hasn't changed, and perhaps most importantly, those attacks in southern Lebanon appear to keep going. Iran also said today that it's reviewing the final offer that it will send back to the U.S. So we'll see whether at least whether we'll have this interim, perhaps memorandum of understanding between the U.S. and Iran. Trump also told ABC yesterday that that could happen within a week.
The Trump administration is signaling it's going to scrap its $1.8 billion anti-weaponization fund for now, but it's unclear whether the Justice Department is still going to grant the Trump family and their businesses immunity from prosecution in perpetuity. What do we know about that probably more important part of the agreement?
A lot is unclear here, so even Republicans on the Hill, Republican senators demand to see the details. They want to know for sure that the Trump administration will walk away from that fund. We could call it a slush fund that Trump allies might benefit from. But as you said, also, we don't know whether Trump and his family will get some sort of immunity that will allow them to not face any prosecution in the future regarding their taxes. So it's not only the Democrats that are criticizing this entire deal between the DOJ and IRS, but also Republicans on the Hill threatening Trump to hold some legislation that he wants to go through until they see the details.
All right. Looking ahead to today's primaries, Kasia, what do we expect?
A big primary night in many states, in New Jersey, in California. The interesting issue here is the crypto industry, kind of a new kid on the block that is spending a lot, including in this cycle, trying to make sure that candidates that they see as, let's say, supporting innovation, that they will win the seats in the House and Senate. Of course, a very important election cycle for Democrats. They will look to gain back the control of House and Senate. And so some key states for them, for example, Iowa, a state that Trump has repeatedly won, full of white rural voters that typically vote Republican. But in this election cycle, Democrats are looking at maybe even picking up 3 out of 4 House seats in that state.
All right, Kasia, thanks very much for that. Kasia Klimasinska, there, Bloomberg's D.C. breaking news team leader. Thanks very much for that. Turning to tech, Alphabet's dwindling free cash flow in the spotlight after announcing plans to raise $80 billion in equity for AI spending. Google's parent eyeing a $10 billion deal with Berkshire Hathaway as part of this, and a $40 billion program to sell shares at the market to help sustain its blockbuster CapEx spending. And, the headline is Google is going to raise more in this deal than SpaceX in its blockbuster IPO. So the numbers keep getting larger. Matt Bloxham of Bloomberg Intelligence joins us now for more. It's just eye-popping, the amounts of money that we're raising here, Matt, but I guess the demand keeps coming.
Yeah, it really is unprecedented. That chart that you just had up there just kind of shows the scale of investments that these companies are making. And for Alphabet, this year CapEx is going to be in the 180 to 190 billion dollar range, which is up massively year on year. And next year it could move towards $300 billion. So huge demands on capital to invest in AI infrastructure, to seize the opportunity, but also to make sure that they're staying competitive and maybe one or two steps ahead of their big rivals. But as you said, $80 billion from Alphabet, $75 billion from SpaceX. Who knows what we're going to get from Anthropic and OpenAI. So these are really big demands being made of the public markets.
We're going to hear from HPE's CEO a little bit later on Bloomberg Tech. Looking forward to that. HP Enterprise extending gains in the market this morning, topping Wall Street's expectation for sales guidance. I mean, we're looking at, like gaining another quarter of market cap. It's huge, these gains. What's the story there?
Yeah, so the revenue guide was the really big story here. So for this year, that ends in October, aiming for about 31% revenue growth. The market was around 19%, and a quite unusual guide for the 2027 year, talking about 10% growth at least, and the market about 5%. It's almost unheard of to hear about a company giving a guide that far out, but it just talks to the enduring nature of the demand they're seeing. And what's happening here is that as AI transitions from the training environment, which is where NVIDIA really dominates with their high-performance GPUs, as companies deploy AI into their businesses, they're finding they can actually use more general-purpose servers that use CPUs for that kind of inference. And that's where Hewlett-Packard Enterprise and Dell too are incredibly strong. And we saw Dell post really good numbers last week, and this time it's the turn of Hewlett-Packard Enterprise, and it's a consistent story that there's growing demand for CPU-based servers to do the inferencing for AI.
The huge demand that we've seen driving up, Micron and SK Hynix shares by 1,000% in the past 12 months has spurred the latter, SK Hynix, to say it will double memory production capacity over 5 years. How big is this news, Matt?
It's really big, and I think it does talk to the degree of scarcity there is in the memory chip market right now, and the pressure that is putting on the technology market in terms of input costs. For everything we use, from servers all the way through to smartphones and PCs, and I think it's them indicating that they are doing things to kind of ease that pressure. And I think it's also a little bit kind of preemptive and protective, because if they're not being seen by their customers to be investing in additional capacity, then those customers may well look and invest in their own capabilities, or partner with other rivals to kind of source that capacity, or they may shift their technology environment so that they're less memory intensive. So I think this is a little bit protective for the market. Obviously, it's tapping into an opportunity, but it's also saying, hey, we've got you, we're your supplier of choice, and we will continue to be for the next 5 years.
All right, Matt, great to get your analysis. Matthew Bloxham covers tech for us at Bloomberg Intelligence out of London. Appreciate your time this morning. Coming up, jobs data and, well, all week long, really, and some earnings to watch. We'll get you set up for your trading day and the week. This is Bloomberg.
is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
This there and Palo Alto Networks. This is Bloomberg Brief. I'm Matt Miller in New York. Let's get a look at what's ahead for today. First up, earnings from Dollar General before the bell. A lot of grocery there. And Palo Alto Networks after the market closed for a little bit of a look at that corner of the AI trade. Jolt's job openings coming out at 10 a.m. New York time, the beginning of really a week of labor market data. Plus, U.S. Secretary of State Marco Rubio set to testify before the Senate Foreign Relations Committee. That also starts at 10 a.m. New York this morning. In terms of the indicators that we're watching, Brent crude coming down. You can see off $1.33 to 93.65 on optimism that we'll get a memorandum of an understanding, at least out of Tehran. S&P futures are down 0.1% after we hit an all-time, another record high yesterday in the cash trade at 75.99. And the 10-year yield coming down really with yield across the curve, the 10-year trading at 443.35. That's it for Bloomberg Brief. Surveillance is up next. This is Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Nothing matters except AI, 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 and a little more AI.
It's a very narrow market. The earnings are being driven very, very small slice.
We're in a high-risk bull market.
It does feel a bit like a meltdown.
Our personal view is to hedge.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, demand meets supply. Alphabet planning a monster $80 billion equity capital raise as Berkshire Hathaway is tapping into a $400 billion cash pile. Anthropic is taking steps towards a blockbuster public offering. Stocks just about holding on to record highs.
Which is the notable aspect of all of this, given how much supply is coming to market. This is coming on the heels of bankers going to all of these tech companies and saying, this is your moment. If you want to tap the public markets, well, welcome to now. And ultimately, you have a race to try to see who can set the tone first. Is it going to be Anthropic? Is it going to be OpenAI? SpaceX clearly has the lead. Everyone loves what they're seeing. Earnings are coming in strong. Are they tapping the market at the very top?
It's funny, we're talking about this race to IPO, Anthropic, OpenAI, SpaceX. Alphabet got there first. That $80 billion equity capital raise is bigger than the SpaceX IPO. They got in early.
Yeah, if you look at the $75 billion raised from SpaceX, or potentially to be raised by that nearly $2 trillion IPO, you look at Apple, and they are re-IPOing for $80 billion, which is the biggest ever offering of its kind, including different tranches, including a $10 billion piece taken down by Berkshire Hathaway. They need creative ways to finance themselves. If they all do it with debt, then they have to worry about concentration risk. They are becoming creative as they are trying to finance multi-trillion-dollar capital spending programs. Alphabet wants to recreate itself as a chip company. It has gained in the TPU space. It is seeing from the market is wide open for them to do
Alphabet
so.
has their hands in everything. They're a competitor of NVIDIA now in the chip space. They're a competitor, obviously, with Anthropic and OpenAI when it comes to Google Gemini. This company is one of the biggest buyers of stock on Wall Street, which is why I was shocked yesterday when I read this headline that they want to raise money. Mandeep Singh of Bloomberg Intelligence said it's all about compute. Compute equals revenue. Chase compute, you're chasing revenue.
So we've got some of the biggest companies on the planet. Just take a beat. The biggest companies on the planet investing like they're confronting existential risk, right? Now they're starting to tap all different parts of the capital structure. Okay, so they've gone after the debt market in different currencies over at Alphabet. The 4-month binge is $60 billion, by the way, on the debt side. And now they're going after the equity side. The other interesting piece of this story, I think, is the Berkshire Hathaway piece of this. They've been sat on a $400 billion cash pile for a while now, and they're starting to tap into it too. The amount of money sloshing around, the amount of paper that's been moved in just the last 4 months has been absolutely incredible.
What's even more mind-numbing is that you haven't seen valuations go down. They just continue to go up, which really suggests how much cash there is. Is it going to run out at some point? Well, ostensibly, yes, which is the reason why Anthropic wants to get in before OpenAI so that he can set the tone maybe in a more positive way before the gates close. Nonetheless, this is the reason why people are saying this monetary condition, the financial conditions right now are incredibly easy. So for companies that want to raise money, the moment is now.
We hear this question a lot. What innings are we in? How long is the runway? The first place I'd be looking for potential constraints are so-called capital constraints. Look at Alphabet this morning. Alphabet's down about 2 or 3%. That's not a big move. That's not a major sign of capital constraints. That's what I'm laser focused on right now. Didn't see pushback in the debt market. It's hard to make the argument this morning that you're seeing pushback in the equity market.
Over the past 12 months, Alphabet shares are up more than almost 120%. A 2.5% pullback is not really a pullback. To your point, this is a market saying we are wide open and we believe in your objective.
My whole thing, though, is as we see more of these numbers, as we see more of these companies come to market, what is going to happen in Washington, D.C.? We are talking about an insane amount of money. Mandeep Singh said, even though the CFO of Alphabet said in April that the company's capex in 2027 will be, quote, significantly higher than the $190 billion budgeted for 2026, Bloomberg Intelligence says 2027 capex could reach $300 billion. Actually, next year, 2027, could reach $300 billion. That is an insane amount of money. And at some point, you're going to hear this become a huge issue on the right and the left, because they're going to say everyday people should get a share.
Well, let's talk about the earnings, and we'll get to that point in just a moment. The earnings from HPE, check it out, in the pre-market, that stock higher by 26%. We've seen moonshot after moonshot following earnings. This is another one. And if you look at the guidance from that company relative to expectations, they're absolutely crushing estimates.
Well, this is what I was going to say. On one hand, you could say, take a look at this and say, investors are just getting irrational. Investors are looking at this backdrop and they're saying, we're caught up in AI fever. Then you take a look at the expectations. Revenue will increase about 31% in the fiscal year ending October. That was versus expectations for 19%. You don't see raises like this. Then they gave a guide for 2027 just to say, look, we have the idea that this is going to continue up about 10% versus the 5.3% that was expected by the street. The beats are phenomenal, which is the reason why so many people say, when you ask them, are you worried about froth? They turn, they look at you, and they say, earnings, earnings, earnings. And when you ask them again, they say, earnings, earnings, earnings. That's what we hear from everyone.
Earnings driving that move in the pre-market. HPE higher by around 25% this morning. Futures just pulling back from all-time highs, down about 0.1%. Coming up this hour, we'll catch up with Martin Horn of Barings as Alphabet plans to raise $80 billion. Ted Morrison of Baird as Anthropic passes OpenAI in the race to go public. And Kit Jukes of SocGen on why a rate hike is off the table for now. We begin this hour with Alphabet planning to raise $80 billion in equity to ramp up spending on artificial intelligence. Martin Horn of Barings writing, equity market leadership is narrow, with IT stocks driving performance. This is an earnings-led tech rally rather than multiple expansion. Martin, we've heard that a few times. Welcome to the programme, sir. It's good to catch up with you.
Good morning.
Here comes the supply, Martin. Alphabet tapping the equity market. We're going to see major IPOs later this year. How do you think the demand stacks up with the increase in supply we're expecting in the year ahead?
Well, you know well that the financial markets for a while have been dealing on a wall of momentum. We've seen it in other asset classes like gold, like Bitcoin, like meme stocks, like Mag 7, enthusiasm. And right now we're in the middle of the AI growth and the wall of money that's available to fund these huge, huge IPOs, and the debt issuance that's going along with some of the hyperscalers is there. How far it will go, we're all testing the market right now. You wouldn't want to be a small IPO following the big three that are coming in the near term. But at the moment, it pays, I think, not to over-intellectualize what's happening in the market, because we've seen what momentum of money does. You guys summarized it really, really well in your introduction. This is backed by earnings, so it feels a little different from the dot-com bubble vibes that we may have got just a few months ago. And now we see some substance coming through that's just going to bring that enthusiasm to greater levels, I think.
Yeah, sort of the less you know, which is something that we keep hearing from some of our strategists here in New York. A question about something you noted. Smaller companies might not want to IPO right now. Who are these big companies sucking capital away from? Is there a crowding out effect as a lot of people clear the decks to buy into these IPOs?
Listen, we're all in unknown territory on that, because we've never seen three big IPOs, the likes of which we've got lined up right now, on quite the same scale with quite the same enthusiasm surrounding them. There's lots of sort of technical analysis going on that you have to buy these three names, and that certain market participants will be forced into buying these IPOs on the break. So that feels a bit bubble-esque. That feels a bit dislocated from where true valuations lie. But as you guys have noted on over many, many months, being too prescriptive about where true valuations lie is really a crystal ball gazing exercise at the moment, because the earnings trajectory you're seeing out of every one of these companies that's issuing in the AI space right now is just going up and up. And we would not have forecast quite what we're seeing today 6 months ago. Let's see what we're going to see in 6 months from now.
Can you hedge against this trend? Does it pay to?
I don't think so. I think if this falls off the tracks, all markets are going to sort of correlate to one. So I think this is such a momentum trade that if we lose enthusiasm or belief in the AI trade, that is partly driven by the fact that we can all see it. Your organisation, my organisation, all of the businesses out there are trying to reconfigure their business model. So we're buying into this wholly at every level of the industrial footprint, if you like. And if this falls off the tracks, I think you're going to see a major market correction. God willing, we won't be there.
As you note, the leadership is so narrow with these specific stocks. Do you see any momentum or catalyst for it to broaden out?
You would hope so. You would hope so, because that would be a healthier market trend. But actually, at the moment, if you're an active manager or a passive manager in this space, you know where the growth is coming from, and you know that the current earnings season is only going to enthuse you more. So, you know, we haven't even touched on Iran and what's going on in the real world. And if you sort of broaden your reach out to inflation and rates and how companies are going to deal with tariff problems, what's going to happen to energy and energy pricing with this AI rollout, all of that would make you feel a little less bullish about sort of the broader marketplace. And at the moment, I think the one trade that everybody's following is in that narrow band, and we're going to see that continue in the near term anyway.
Well, that's where the optimism is. We're 10 minutes into the program. Maybe we should talk about Iran. There's no deal in sight at the moment. Very different readouts between Israel and the United States in terms of what's happening. If we remain in this paralysis till the end of the year, what is going to be the risk and the impact?
Well, look, there's a lot of clever analysts that will tell you that June 30th was quite a big date for certainly gas restocking. If you look at just the European gas supply levels or holding levels right now, they're at about 40%, when normally at this time of year they would be at 55% of what you need to get you through the kind of winter months. So we're lagging. 30th of June was a big date, because that's when you get the big restock for winter periods occurring in places like China, in places like Europe. So we are going to be lagging going into the winter. That seems like a reasonable assumption. And that could lead, depending on who you listen to, either mild disruption, which ultimately is what we saw after in 2022 when Russia invaded Ukraine and Europe had similar issues with fuel supply, to really severe disruption, depending on how long this goes on for. We all believe that all parties are motivated to find a solution, so we're clinging on for that for now. But every week that goes past, we've got to adjust that assumption as we see new news feeds. I'm afraid the wider financial market just isn't focused on this right now. It's all about AI.
And yet they haven't found one. Motivated, but haven't found one. Martin, it's good to see you. It always is. Thank you, sir. Martin Hoare there of Barings. You've said this a million times, Bramo. You can't have an edge on this topic, so people started ignoring it. And they focused minds on what was happening in technology, high conviction bets. I've asked the question, has tech rallied despite the situation in the Middle East, or because of the situation in the Middle East? And the response I've had is maybe both.
Yeah, on one hand, you have, of course, really good earnings, which is the reason why people are going on in spite of what's going on in the Middle East. But it also is the one isolated reality that really doesn't have some sort of linchpin in the Middle East, which means it's analyzable and potentially you can get an edge, which is the reason why people view it as such a refreshing trade versus saying, will they or won't they? in the Strait of Hormuz.
We'll play that game in just a moment, will they or won't they? Just about pulling back from record highs this morning, down 0.1% on the S&P. With an update on stories worldwide, with your Bloomberg Brief, Yahira has more. Hey, Yahira.
Hi, John. We are seeing Hewlett-Packard Enterprise shares rising 25% in the pre-market. The company forecasting a bigger than expected sales jump for this year and next, citing strong demand for its AI servers and networking. Anthropic moving ahead in the AI race, filing for an IPO ahead of rival OpenAI. The company saying in a blog post that the number of shares to be offered and the price have not yet been set. And the cost of competing in AI keeps climbing. Alphabet is raising $80 billion through a package of equity offerings, including an investment deal with Berkshire Hathaway. The company plans to use the money to build infrastructure for artificial intelligence and meet soaring demand for its chips. That's your Bloomberg Brief. John.
Yahira, thank you. Thanks for the update. More from Yahira in about 30 minutes' time. Up next on the program, peace talks hitting a wall.
Iran is very much intent. They want very much to make a deal. So far, they haven't gotten there. They come to the table. They're begging to make a deal. They want to make a deal badly, and we'll see if we get there.
There was a moment in the last 24 hours where it felt like trade talks from 8 years ago. Talks are on. Talks are off. Talks are on. Talks are off. That was the last 24 hours.
Yeah, and from Iran, talks are off. The U.S., talks are on. Iran, not so sure. The U.S., yes, they are. Israel, we're still doing our thing. The U.S., everyone's in peace. I mean, it's sort of this curious moment.
The deal's coming. Up next, Colonel Wayne Sanders of Bloomberg Intelligence, live from New York City this morning. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Eight-day winning run on the S&P 500 this morning. This morning, we're throwing a lot at this equity market, an $80 billion equity capital raise from Alphabet. That stock is only down by 2% this morning. Futures are negative by just 0.1%. The more bullish side of the story, I guess, is Berkshire Hathaway sitting on a major cash pile. Signs over the last week or so, two major signs. They're starting to put some of that cash to work under new leadership.
Greg Abel is making his stamp known, and this comes after he took the helm. These are his first big purchases. On one hand, you have Berkshire Hathaway going after a home building company at a time when they're expecting, I'm sure, some policy response to the affordable housing crisis, and then going after getting a stake in the tech build-out. This is notably a departure from Warren Buffett, who really stayed away from some of the tech build-out. Does this invite everybody else to come in? Does this indicate a dearth of of other opportunities? Or does this indicate that sitting on cash is going to be an ultimate problem given the fact that we're in an inflationary moment?
So there are plenty of bearish angles on the Alphabet story, and we'll cover them extensively. Don't worry about that. But the bullish angle, we're deploying $400 billion of cash potentially, at least a little bit here and there, and you want to be bearish? Right now, that would be the bullish angle to this story.
And the bulls are winning, because if you're a bear, how are you going to hedge and how are you going to keep your money and what are you going to tell your investors when you're far, far behind? We were just talking with the guy from Barings who basically said there's no way to hedge against this. And if you do, it's not clear that it's actually going to be a hedge, because if you do get some sort of break in this story about the AI build out, everything's going to correlate to one and everything's going to go down. So you either get on the train or you get steamrolled over. And ultimately, that's where everyone is.
Check out the bond market this morning. Yields a little bit lower. We're down a basis point or two at the front end of the curve, 4.01%. Kind of anchored around 4 more recently. Off the back of this move in crude yesterday, higher, now lower, just by a touch. We're down 1% on Brent to $94 a barrel. Under surveillance this morning, peace talks hitting a wall.
Iran is very much intent. They want very much to make a deal. So far, they haven't gotten there. We have to have a deal that's acceptable to me. They come to the table. They're begging to make a deal. They want to make a deal badly, and we'll see if we get there.
They think that they are getting very close to making a deal.
So here's the latest this morning. The president holding an expletive-filled call with the Israeli Prime Minister Benjamin Netanyahu. According to Axios, Trump calling Netanyahu crazy as Israeli strikes in Lebanon weigh on peace talks with Iran. Bloomberg's Tyler Kendall joins us now for more. Tyler, good morning.
Hey, John, good morning. Well, this reporting goes on to say that President Trump's anger seemed to be primarily driven by the fact that the escalation in Lebanon was risking derailing the U.S.-Iran peace negotiations. Keep in mind, Israel is not a party to those talks, but Iran has repeatedly maintained that a ceasefire in Lebanon needs to be part of any deal. And that prompted President Trump to get personally involved in the diplomacy, holding this reportedly tense call with Netanyahu, as well as a separate conversation with representatives of Hezbollah. After that, he said that both sides did agree to stop firing on each other and that then the U.S.-Iran talks were proceeding at a, quote, rapid pace. Israeli Prime Minister Netanyahu did confirm that Israel was planning to hold off on some planned strikes near Beirut in response to Hezbollah firing nearly 300 projectiles in recent days. But he said otherwise, the Israeli campaign in southern Lebanon would continue. It marks just the latest friction point in the ongoing negotiations. But, John, it's also probably worth pointing out for context here, before the conflict started, the U.S. wanted to see Iran stop its support of proxy militia groups like Hezbollah. But at the moment, that doesn't seem to be part of the ongoing conversation. In fact, yesterday, Iranian state media reported that the, quote, axis of resistance would be activated on all fronts in reference to the militia groups that it supports, and threatened that its proxies in Yemen could move to close another vital shipping route off of the coast of the southern Red Sea by utilizing some of those proxies in Yemen.
That's the last thing we need. Tyler, thank you. Tyler Kendall down in Washington, D.C. To build on this conversation, Colonel Wayne Sanders of Bloomberg Intelligence. Colonel, welcome to the program. I won't pretend to know where we are in negotiations. Let's focus on something where we have some visibility. How many ships are actually getting through the Strait of Hormuz right now? Because it just feels to me there's a bit of drip feed picking up here, there and everywhere in the past few days.
Yeah, absolutely. I think the U.S. CENTCOM and Fifth Fleet are really trying to be able to provide additional flexibility for these, right? They're still, from the way that they're looking at it right now, is anything that is Iran-based, they're still not letting through. But in terms of an increase in some of the momentum, you're actually starting to see some of that throughout the Strait. So we know that that part is actually good, but there's always going to be that threat. Just like Tyler was talking about, you're still going to continue to see potential threat from axis of escalation at this point in time.
Well, I have a question here. What is the basis right now the U.S. is trying to negotiate? Is it the nuclear deal in your mind, or is it just minimum to get the Strait of Hormuz open? And do you think they'd be willing to ease up the blockade in order to do that?
Yeah, I think that they would do it from a phased approach. If they can actually get the Strait of Hormuz open at that point in time, and even if they said, OK, I need 30 days or 60 days to reach an additional part of the nuclear deal, what I think they're trying to do is increase the amount of momentum to be able to move the straits open, right? It's been closed for so long. It's been so restricted. And insurance has gone up. Everything else that's gone along with that has played into. So a lot of the political and information side of the House is playing into that military piece of it. So it is probably one of the biggest levers, though, that the U.S. has, is to hold on to the blockade to make sure that Iran cannot get any of their oil in or out. And so you're seeing that even from Qasem Island. You see that as part of Karg Island and some of the additional, even the military posturing in the area, both from Iran and from us.
There's the proxies, there's the firing on U.S. forces in the Strait of Hormuz. It's not letting certain ships through. It's claiming, the Iranians, that negotiations are off. What is it going to take potentially for this administration to say, you know what, they are off and we're ending the ceasefire?
Yeah, I think the U.S. doesn't want to be the ones that actually do it. I was actually a little surprised when Iran fired this weekend and actually injured some U.S. soldiers. I thought there may have been a response. I thought that by Monday morning, we probably would have seen something, maybe not a large escalation, not something that brings us out of the ceasefire, but more than what you've seen from Fifth Fleet and CENTCOM so far against Qasem Island strikes and some of the other ones in the area. They've kept that right now as pretty much a self-defense measure, saying, hey, look, you shot at U.S. bases, you've shot at Gulf state allies of ours, and they look at that as an imminent threat, so we are going to return fire, as opposed to putting something into place that says, I am going to actually strike strategic targets that has a larger center of gravity impact to you.
Colonel Sanders, who is President Trump negotiating with?
So I love this question because, depending on who you're talking to at the day, right, you have the balance of power in Iran right now is you still have the presidency, you still have the supreme allied leader, you still have the head of the IRGC, and you also have the Supreme National Council. So you have these four instruments of power at that point in time. And so this becomes one of the biggest pieces that's so difficult right now is you could be talking to somebody within the presidency side of the House as part of the foreign minister and have those discussions go, everything is going really, really well. And then you have an IRGC commander that launches a couple of Fatah 110 ballistic missiles against a Gulf state, and it starts to degrade the ability and legitimacy of one of the other heads to be able to make that deal. So really, you're looking at trying almost like a four-headed hydra that you have to address all at the same time to get all four of them in place at the same time to be able to reach this agreement.
Colonel, appreciate your time. As always, sir, thank you. Colonel Wayne Sanders of Bloomberg Intelligence. That question is the right question.
A four-headed hydra, that's who he's negotiating with. It's a difficult moment. People are tuning out because how do you understand these different headlines that are changing by the hour and really have a different tone depending on which branch of the four-headed hydra it's coming out of?
I often reflect on the ghost call with China of several years ago. Important because it signaled intent. Not because it happened or it didn't happen, but it signaled intent. The president wanted to bring down the pressure, the volume, the noise. There's more than one party in this negotiation. It was never the same as the trade story of a year ago, 8 years ago.
Can people ignore it in the same kind of way and just take the signal and not necessarily the fact?
Futures this morning pulling back by just 0.1%. Up next, we'll catch up with Ted Mortensen of Baird as Anthropic pulls ahead in the race to IPO.
about 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Live from New York City this morning. Good morning to you all. 8-day winning streak on the S&P 500. Just a small pullback. We're down by 0.1% on the S&P 500 and just about unchanged on the Nasdaq. If you saw that picture, you really wouldn't have a clue about the news flow of the last 24 hours. That $80 billion equity capital raise from Alphabet is an absolute monster.
If you get a sense of it, some perspective, the SpaceX IPO is planning to raise $75 billion of cash in this nearly $2 trillion IPO. This is bigger than that, as you just pointed out, which is notable given that we already are going to get a whole host of other IPOs sold over the next couple of months ahead. We're talking about Anthropic. We're talking about SpaceX. You put this all together, the market is Teflon. The market is saying, if you want to come to market, the time is now. And ultimately, whether it's Iran, whether it's the glut, whether it's concerns about inflation, it doesn't matter because ultimately this market very much wants to get invested in AI.
And when you look at these numbers, where are they putting this money to? It's TPUs. They're in that market, which is potentially going to take share from NVIDIA, or at least be a serious competitor. But they are also a serious competitor when it comes to the likes of OpenAI and Anthropic, which are all trying to get to market as well. Google is all over the map. This is to build data centers, and this is for more compute, as been deep sea.
There's a tax bill in the mix as well. We'll spend some time on that later. The stock is down by about 2% in the pre-market. As we count you down to the opening bell, 3 hours away. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. Following Dell's blowout results, the bar was pretty high for HPE, and it managed to clear it with room to spare. Shares are soaring more than 25% in the pre-market after it raised its outlook significantly, pointing to massive demand for its AI servers. And it was so confident about the demand backdrop that it even issued an early outlook for 2027, well ahead of Wall Street estimates. Meanwhile, Jensen Huang still over in Taipei and still moving markets. The latest is Marvell. Shares also soaring more than 25% in the pre-market after the NVIDIA CEO called the firm the next trillion-dollar company while on stage with its CEO. But Wang, not exactly a neutral observer here. Earlier this year, NVIDIA did disclose a $2 billion investment in Marvell as they work together on things like custom AI chips and networking technology. And ahead of its earnings tomorrow, we are seeing the chip maker Broadcom shares soar nearly 7% in the pre-market after HSBC raised its price target to $600 and said the next leg of growth may be right around the corner. Frankly, over at HSBC, expecting custom AI chip revenue to inflect higher in the second half of this year due to increased spending from none other than Alphabet, OpenAI, and Anthropic. John?
Yahara, thank you. Thanks for the update. Jensen on tour, got to Alaska, got an Air Force One, never came back from Asia, did he? That was a few weeks ago. I don't think he left.
Well, he's doing pretty well over there. I mean, honestly, his ships are made over there, and he's got some business.
He likes the street food. He's out and about with the people. Yeah.
He's having a great time. All right, on our radar this morning, the big one, Alphabet raising $80 billion in equity to fund an unprecedented AI spending spree. The three-part deal is one of the largest of all time. The package, including a $10 billion share sale to Berkshire Hathaway. Berkshire already holding nearly 40 million shares of Alphabet as the new CEO, Greg Abel, increasingly leans into tech and AI and starts deploying that $400 billion cash pile. And finally, Anthropic confidentially submitting paperwork for its IPO. The AI giant aiming to beat rival OpenAI to the market. The price and number of shares to be offered unannounced. Anthropic's valuation sitting close to $1 trillion.
When you ask analysts, they say they're racing. When you ask them, we're not racing. We just are going to keep our options open. Yesterday, we heard from Sam Altman, Dario Amodei talking about how it just could be a good time. Nonetheless, both of them want to set the tone. Ultimately, the one who gets in first is going to have more of a carte blanche to get a sense, A, of how much money is out there, B, tap into the enthusiasm, and C, get ahead of any snafus that the other guy might make. I know that right now it seems like Anthropic has the edge. Does that really increase the impetus for OpenAI to kind of gun it to market first? And how long will this market remain so wide open?
Isn't this surprising, though, that Anthropic gets there first? Before this year, everyone was saying it was going to be OpenAI. And Anthropic was really the underdog. And now they've pretty much overtaken OpenAI in terms of where everyone is, the excitement is, where everyone wants to know more about the compute and the models like Mythos. They're ahead of OpenAI, but it is too early, I guess, to say.
I was listening to Altman yesterday with Faber. Thought he did a fantastic job. For Altman himself, it was interesting how much daylight he's starting to put between him and Amodei when it comes to talking about the future of this technology and what it might do to society. I have to say I prefer his version of the future compared to Anthropic's, but increasingly putting some daylight between the two companies.
And putting a little bit of daylight between himself now and himself maybe 2 years ago. Indeed. So it clearly is a PR move to try to put a little bit of a warm and fuzzy approach given how much pushback there's actually been. I just think if anyone needs vibe coding, a use for their tokens, if they need to get up the leaderboard to make sure that they're really deploying it.
You've got ideas.
Yes, please. I think a biopic or, just a sort of interesting look at the rivalry between Sam Altman and Dario Amodei.
The movie.
The movie. It could be them as fruit, whatever you want to do. I think it would be very well received.
The better will be Sam Altman versus Elon Musk. Besties to bitter enemies.
Them as fruit. Okay, I think that's what you said, right? Yes.
No, mine are humans.
Okay, all right. Good to know, guys. That's the definition of AI slop, right? Yes. Brammer can't keep it together. OK, let's move on. Ted Mortensen of Baird writing Anthropic represents the new, an enterprise AI operating layer for knowledge work and software development. Ted joins us now for more. Ted, good morning. It's good to see you in person. Thanks for being here. Is there enough space for everyone?
There is in this cycle. This is not even close to the 2000 cycle. The only comparison is animal spirits. But this is a major infrastructure rollout, nothing that we've seen in my lifetime.
Unpack some of that for us. How much runway do you think there is here, and why?
Oh, geez, I think you're talking anywhere from 5 to 10 years. The infrastructure comes first, software comes second. And Anthropic is one of the most disruptive companies. You don't see companies going from 9 billion to 47 billion in revenues in less than a year. I mean, that's eye-popping.
That said, do we have a sense of exactly what world this is building? In other words, if this is that disruptive and all of these dollars are going to projects that are worth it, how transformative is this going to be in a way that people really are not wrapping their heads around?
The AI stacks are totally different from what traditional SaaS or software was. I mean, this is a forklift upgrade. Not only on infrastructure, but software. And they're not tied together. I mean, infrastructure is first, software is second. But what Anthropic has done is they've not only created this market for coding, which now for a software company, your cost of goods sold goes basically to zero. That's number one. So there's huge operating margin leverage. Second of all, just this knowledge work. If you haven't used Claude, you should, because it will change the way you go about your business almost every single day. It makes you so much more productive. So it's very disruptive. The difference between OpenAI and Anthropic is, if you look at OpenAI, they chose to go consumer. And Anthropic is all enterprise, and that's where the money is.
Does it matter who goes first?
I think it's important to get through the window, because you never know when the window is going to be shut on your hands, on your fingers. You just...
Did Alphabet just go first?
Yeah, they went first, and that surprised a bunch of my clients. I mean, but that's what's important. The $80 billion basically extends this cycle through 27, just on CapEx. If you're a cloud titan, you know, what Google's saying is, hey, we need augmentation from our free cash flow. So 80 billion is a big number. And then you combine all these other offerings that are coming, the infrastructure build's gonna go through 27 pretty aggressively.
When it comes to Anthropic, you say they focus on enterprise while OpenAI was focusing more on consumer. How can you be an offering for enterprise if you are labeled a security threat by the DoD? No, seriously, is this not at some point going to hurt them?
It could. The narrative will be sculpted in the next few months, but Mythos is a big deal. I mean, when Jerome Powell and Secretary Bessent call an emergency meeting on a Friday and get Glasswing, the people, what's called Glasswing, the vendors together, I mean, talk about an eye-opening experience. And that's why Palo Alto and CrowdStrike are straight up. There are other small cap companies like Tenable that fit into that Glasswing security issue. This is opening up a whole different total addressable market.
Do you think then the government's going to have to find other inputs that aren't Anthropic because of the supply chain risk that the DoD labeled it? Or do you think at some point the DoD is going to have to lift their hands and say, we have no choice, we're going to have to work with them?
I think it's B.
B, wow. Okay, so the DoD, so basically Pete Hegseth and Emil Michael say you won.
I think there's going to be a cooling off period, and this is a national defense issue. You cannot have them sitting on the outside.
Ted, can I ask you where you think the money's going to be made? I don't know what the sequencing looks like here.
Yeah,
Clearly,
that's a good question.
The chip players right now are making all the money, but when you describe the sequencing over the next 10 years or so, infrastructure, then software, where do you think the money will be made?
I think it's going to be in some specific software companies that are consumption-based. I mean, you've already seen it through Datadog, you've seen it through Snowflake. I mean, these stocks are straight up because of consumption adoption of what I call the new versus the old. So from a software perspective, I think what the street misses is these free cash flow, software names, free cash flow, much better than some of the infrastructure names. So over the long term, the software names that get that foothold are going to be absolutely money machines. So it's going to take a while for that infrastructure to pivot, but we're going to see some new software companies just like we saw new software companies in the 2000 cycle.
Who's losing here? Who's not keeping up and likely to fail?
I think it's the smaller cap companies that are features. They don't have the free cash flow. They don't have the engineers. They don't have the scale. The other area would be and it's well known, the SaaS companies have to pivot. I mean, when you have revenues that are 90% SaaS and 10% consumption, that pivot is ugly. And for my institutional clients on the software side, the reason why the IGV was down 30% at one point was just because nobody could work through their models on that transition between SaaS and consumption, and they couldn't get to a free cash flow number. So if you can't get to a free cash flow number, how do you put a multiple on a stock? Now, it's getting much clearer. I think some of the checks coming out of Salesforce on Agentforce are getting a lot better. Even Workday, which nobody's really focused on, it's kind of a value name. I'm on 70-plus conference calls during an earnings season. It's like the Baton Death March. Workday actually talked up their agent momentum. Nobody's paying attention. You got to listen to these calls. So they'll get there over time. And as they pivot, the free cash flow expands.
Ted, just final line of questioning from us. We're laser focused on potential capital constraints. No sign of pushback in the debt market, not for the likes of Alphabet. They've just gone on a $60 billion 4-month debt binge. No sign of pushback in the equity market, not for Alphabet again this morning. They're looking to raise $80 billion in equity capital and the stock's only down by 2%. You seeing any signs of that emerging? Any pushback, any capital constraints anywhere?
Yes.
Where do you see it?
I see it on the debt side. Why do you think all these companies got to go public? They can't raise it in the debt markets, whether it be private or in the normal debt markets. The numbers are too big. That's why on a capital side, they've got to go public. And where my big concern is, and again, is listening to a lot of companies, is inflation is straight up in the tech area. You listened to HP last night. They're not only facing shortages, but they're passing on tremendous price increases. And the enterprise companies, call it the Global 2000, their IT budgets are up 3 to 4%. Do you think they can absorb, a 10 to 20% price increase on a server? The answer is no. So I think there's going to be an issue with inflation, and I'd watch the 10-year very closely.
So final question then on inflation, and we can talk about the bond market.
Yep.
But just final question on the pushback that we might see. Do you see that ending in softer demand, or do you see that ending with cuts to operational expenses elsewhere? How does a company respond to those high prices?
They go to refurbished markets. I don't think the street is focused on the enterprise at all. They're hurting on price increases. I mean, they have to upgrade all their infrastructure over the next 5 years, networking to storage. I mean, they're somewhat IT constrained. What's fueling this market is the cloud titans. And it's going to go for a while just because of that Google news last night. I mean, you just put gas on a fire. So,
just to wrap it up, because a lot of people want to know, you said watch the 10-year. What are you expecting to happen?
I think personally, this is just my personal opinion.
Please go for it.
It's not the firm's opinion. I think that we're going to lose control of the long end. And if the 10-year goes through 5%, I think there's going to be a lot of portfolio managers that look at multiples and try to figure out. I mean, war is very inflationary, by the way. And now we've got one of the biggest cycles in history where we've got over, call it $735 billion of spend. And the supply chain can't absorb this. So the only thing, if you look at the memory shortages, they've got to pass it on. And I think the inflation inputs in tech are only up. They're not down. So that's going to flow into some of the data, and I think it's really going to surprise some people.
I could speak to you for hours. Ted, it's good to see you.
Okay.
Thank you, sir. Thank you very much. Ted Mordenson there of Baird with a interesting note at the end there on the bond market.
Ultimately, if you have existential spending, and you have this much existential spending, you have it in wartime, you have it in technological build-outs, you have to imagine that's going to come in some sort of ramification when it comes to inflation.
10s this morning, 4:43. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. Secretary of State Marco Rubio testifying on Capitol Hill today for the first time since the start of the war in Iran. His testimony comes as a growing number of Republicans question the price and economic impact of the war. Speaking of, President Trump and Israel Prime Minister Netanyahu offering differing accounts of their call about Lebanon. Trump using a social media post to tout an agreement between Israel and Hezbollah. Netanyahu saying military action in southern Lebanon will continue. The White House says it will reduce tariffs on agricultural equipment to cut costs for U.S. farmers and manufacturers. Levies will drop to 15% from 25% from next week until the end of the year. President Trump citing rising costs as a justification for the cut. That's your Bloomberg Brief. John.
Hey, Yahara, thank you. Thanks for the update. Up next on the program, the Fed holding steady.
Our base case view is that the Fed is likely on hold. We think that they're on hold through the middle of next year, and then it's going to be data dependent.
Kit Chicks of SocGen just around the corner.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Eight-day winning streak this morning, pulling back by just 0.2% on the S&P, down a tenth on the Nasdaq. On the Russell this morning, down by 0.15. Under surveillance this morning, the Fed holding steady.
Our base case view is that the Fed is likely on hold. You know, we've seen a huge shift in expectations. We never believed that the 2 or 3 cuts that we were expecting at the beginning of the year. We don't believe we're going to see the hikes that markets are now pricing. The Fed's going to be on a wait-and-see mode. We think that they're on hold through the middle of next year, and then it's going to be data dependent.
So here's the latest this morning. U.S. manufacturing activity expanding at its fastest pace in 4 years. Investors are waiting more data to reinforce bets on the path for interest rates. Kit Jukes of SocGen writing, while President Trump's hopes for Fed easing may be disappointed, hikes are off the table for now. Kit Jukes joins us for more. Kit, welcome to the programme, buddy. Good to see you. My apologies about the result over the weekend. I'll squeeze that into the end of the conversation, Kit. How high is that bar for that rate hike of this Federal Reserve?
It seems very high now. It's not going to feel so high in 6, 9, 12 months' time. I think the world will eventually change. Look, the U.S. economy is, without doubt, not just outgrowing the rest of the world, but it's growing pretty strongly.
If that's the case, Kit, what is the barrier to potentially raising rates, and not just once, but several times? And we were just talking to somebody talking about how he sees the 10-year yield getting unmoored with all of the capital spending from big tech giants. We're seeing inflationary pressures coming from myriad different places. I mean, would it be a problem if they hiked rates?
Well, if you leave it too long and you hike rates too much, too fast, too late, then you know that is a recipe for a recession. Equally, I almost want to flip it sideways over here, where the danger is with the slowing economies. We're going to raise rates. The market thinks we're going to raise rates at the ECB several times, which seems to me a sort of a quicker way to a problem. But yeah, I think that you know, I've always assumed the Fed's smart enough that they don't get too far behind the curve, and that what we'll find is that the story just changes through time, and that one of the things about Kevin Warsh now turning up and being there will be that it'll be possible to turn that story around, make it clear that this economy is doing better than others, the terms of trade shocks in its favor. Obviously, the technology boom is still happening, and gradually there'll be a rethink.
If that's the case, I'm wondering if you push that through the currency channel, what that means. If you have rate hikes that are a mistake, in your view, from the ECB, they could potentially create an economic problem, and you have a U.S. economy going strong and a Federal Reserve that sits on its hands, do you want to own the dollar or do you want to sell it?
I want to own it. I mean, I'm not relaxed about it, but I get asked, why, if we think that rates are going to go up in Europe, why don't I want to own the euro? Because they're going up despite there not being enough growth. And fundamentally, that's the issue. That tightening into weak growth environments is just going to make things worse. Whereas in the United States, what's holding me back is a central bank that doesn't recognize the problem at hand. But they'll get there because that's the kind of organization it is. There's a lot of people on the FOMC, a lot of regional governors who will react to what they see in front of them with the economy. And I think in due course, that's going to argue that, yeah, we're at neutral, not at super easy policy, but we need to be better than that. Numbers like this morning's, they just push in that direction.
Kit, though, there was an ECB report that says gold replaces U.S. Treasuries as the world's top reserve asset. Are you worried about de-dollarization?
At the margin, I mean, the dollar's been the world's reserve currency to a much greater degree and for longer than, for example, the pound was. So that the global economy is so dependent on it that we get de-dollarization at the margin in the same way as that there's not enough gold in the world to replace a fraction of the U.S. treasuries that people might want to own instead. So, yeah, at the margin, there'll be some of that, and the dollar will be less dominant, but it'll probably still be more dominant than sterling was 150 years ago.
What does the ECB have in common with Arsenal Football Club, Kit?
That they are too defensive. That's the fundamental issue in my heart. That their game plan isn't going to win them the Champions League. That's probably the quick way of putting it. The U.S. the Fed is much more like Paris Saint-Germain. And in the end, this could be long drawn out. It could be painful. It could go to extra time and to penalties. But I don't think the ECB can win this with premature tightening and such a defensive strategy.
The parallels are extraordinary. They really are. Kit, thank you, sir. We appreciate it. You're a good sport. Kit Jukes there of SocGen. In Kit's note, in the last 24 hours, Arsenal played football like the ECB are set to run monetary policy. 25% possession on Saturday. 25 basis point rate hike coming in a week's time, apparently.
Yeah, a defensive strategy that was ultimately doomed. And ultimately, I will say, if the U.S. is like PSG, then we're at least not rioting the day after. Though there is a sense right now that maybe the ECB is in a pretty negative position and the U.S. is sort of in a good spot. His point, though, if the Fed doesn't hike soon enough, it could actually have a problem on its hands that could potentially lead them to them raising rates too quickly and cause a recession.
I'm surprised at the ECB. I really am, because they've made this mistake before. They made this mistake once, then twice under Trichet. And it's interesting to me that they're so keen on making it again.
If they have a desire to avoid that mistake, at what point do they become a dual mandate central bank? If they truly are a single mandate central bank, they will be doomed to make this mistake in any kind of supply side shock. And ultimately, that is what they're facing right now.
And that's the new era. That's the new era we've been in ever since the pandemic. Equity futures this morning pulling back by not even 0.2% on the S&P 500. So much to cover in the world of tech. We've got an $80 billion equity raise over at Alphabet. Anthropic moving forward with an IPO potentially as soon as the next several months. And then you've got stocks like HPE absolutely flying in the pre-market. Up next, we'll catch up with Evan Brown of UBS, Mo McHugh of PSP Growth, Dan Stuyven of Goldman Sachs, Neil Dutta of Renmac. The second hour of Bloomberg Surveillance just around the corner.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk
about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This economy really is on fire.
Growth is very solid for the foreseeable future.
It's actually one of the healthiest labor markets I've seen in decades.
We've underestimated how less rate sensitive we are.
The Fed is really well positioned here.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. An 8-day winning run on the S&P 500, the longest daily winning streak of the year so far. This morning, we're down by 0.2% on the S&P 500. On the NASDAQ, we're down 0.1. Tech stocks in focus. One stock in focus, Alphabet, an $80 billion equity capital raise. Berkshire Hathaway getting in on the act. Alphabet down 2% of the pre-market.
Which is nothing when you take a look at the nearly 120% gain over the past 12 months for these particular shares. This would be one of the biggest capital raises ever in the equity markets following the $75 billion SpaceX money raise that is expected at any time with their nearly $2 trillion IPO. And it comes ahead of, and you pointed this out, Anthropic potentially as well as OpenAI. What does it say about where we are in markets? And that, I think, is increasingly what we're hearing from strategists. It means that the window is open and you need to climb through that window as quickly as you can before it slams shut. Does it have any signs of slamming shut? Not yet. But why not get in while the getting is good?
But the character of the U.S. equity market is changing. It's changing. We've gone from capital returns in this dominant weighting on the S&P 500 to capex intensity rising. We've gone from shrinkage to supply in the equity market, and not just the issuance from Alphabet, but also the IPOs lined up for the next 12 months. Things are changing, and they're changing fast.
Ted Mortensen said the reason why they're tapping the stock market is because, frankly, it's a better option for them. They're getting too big to raise it just in the debt markets. And even though the debt markets are wide open, and oh boy, are they when you talk to anybody, they are starting to put a little bit more constraints. People are looking for different security or secured assets. They're having a shorter time frame, maybe 5 years rather than 10 or 30 years. Equity is a perpetuity type of instrument. So they're saying this is the time to do it. When does it pay off? Can you hedge? All of these questions that are existential, the answer is you can't think about it. You just do what Chris Verone does. The less you know, and you buy.
Well, Alphabet's saying this is an expansionary moment. And right now, what they are doing in terms of AI solutions, services from enterprise to consumers, in their statement, they're at levels that are exceeding the company's available supply. Bloomberg Intelligence is now saying we're looking at $300 billion in CapEx next year. So this train, that continues at least for another year and a half.
Think about that quote from the CEO a few summers ago. The biggest risk here is underinvesting, not overinvesting. That was a CEO confronting what he believed was existential risk. And he's piling into this by raising more money. $60 billion raised in the debt market worldwide in 4 months. That only just wrapped up and now going into the equity market for another $80 billion. And there's still more appetite for the next 12 months and the 12 months after that, and so on and so forth.
When you look at the trillions of dollars that are probably going to be necessary over the next couple of years to finance the build-out that people are talking about, they're talking about data supplies, they're talking about TPUs, GPUs, the production of it, the staff to really recreate all of the software, the education to go into all of the companies and figure out exactly how to do this, the energy production and all of the assets. It is incredibly capital intensive. Now we have to say, what is going to be the ramification for the economy? Is this going to create efficiencies? Is this going to be inflationary? We're talking to Torsten Slok saying that it is going to be inflationary. And if so, who's going to pay the bill? Will there be failures in terms of other companies? Or ultimately, do prices just keep rising at pace, leaving a problem for the debt market?
Well, I think we've framed this a few times in a way that I think Ted Morrison's thinking about things anyway. You've got all these companies, some of the richest on the planet, by the way, tapping the debt market, tapping the equity market, raising capital, and then pushing it into a supply-constrained economy. One that has seen negative supply shocks across goods, labour, energy, and everybody's talking about bottlenecks. Well, they're not backing away, are they, with higher prices? They're going in for even more and spending even more. And you'd have to believe that comes with some inflation. How much inflation we get in the next 12 months, I don't know, but certainly some inflation. And Ted was talking about that being a risk to the bond market. Inflation being one and crowding out being two. And that's something we've got to think about as well.
If companies need to completely recreate their entire infrastructure, they're going to have to raise prices, or else they're going to have to accept much smaller margins. Who's going to pay those higher prices?
Alphabet this morning down just 2%, which is remarkable. Just speaks to the amount of demand out there in this equity market still. Coming up this hour, we'll catch up with Evan Brown of UBS as Anthropic takes steps to go public. We'll speak to Mohamed Q of PSP Growth as Alphabet looks to raise $80 billion. And Neil Dutta of Renmac as the Fed prepares to drop its easing bias. We begin this hour as some of the world's biggest tech companies are preparing to tap the equity market. Evan Brown of UBS Asset Management writing, there's growing need for funding among the AI giants, and we can see there's no shortage of interest in investors to participate in the theme. Evan joins us now for more. Evan, good morning.
Good morning.
Can you sit this out?
I think you have to be invested. I mean, ultimately, I think we're still early stages in this AI build-out. Adoption is relatively low for consumers and businesses compared to where we think it can get. At the same time, you don't want to forget the other areas of the market. I think it's encouraging that as concentrated as the market has been, we're starting to see other areas like software rebound, and the discussion is becoming a little bit more nuanced on that theme.
When you have a company like Alphabet, you don't have to speak to them specifically, but just for example, just so we can navigate this conversation without you getting in trouble. When you have a company like Alphabet choosing to tap the equity market after aggressively going through the debt market in the last few months, what does that tell you about valuations, if anything?
Well, I think it just speaks the sheer demand for funding of these Mag 7 companies, that they're tapping the debt market and the equity market and really transforming from capital light to capital intensive, shows you just what an imbalance there is in the supply and demand for compute. But I think the market is showing you that either in debt or in equity, it's willing to finance it.
The less nice way of saying this is, are they getting it at the top? I mean, ultimately, Alphabet's really good at timing the market. They always have been in the debt space. Is this essentially them saying this is a small window before valuations plunge?
I don't know if that's the case. I mean, I think there is something strategic in the sense that we are going to get some of these big IPOs coming soon. And so if you're a major public company, maybe get in there and raise capital a little bit more beforehand. But look, this is, these are some of the most impressive companies we've seen in the market, these Mag 7 companies, and they've shown an ability to perform, and I wouldn't bet against them.
Can equity valuations keep climbing if you don't have participation from the bond market? If you don't have yields that are relatively calm and there, continues to be, yes, inflation fears, but mostly muted ones?
Yeah, what's interesting is I think it's less about valuations right now and more about people betting on earnings. So valuations themselves don't look extraordinarily high relative to where we've been over the last few years. But part of that is because people have such optimistic views on where earnings are going to be. And so the question is, will this AI build out, will it, will the ROI really justify what people are projecting on earnings? And I think that, that remains to be seen. But at this point, it's hard to fight what we've seen in terms of Q1 earnings, and the guidance is just really, strong economy, strong outlook for these companies.
A lot of people were kind of shocked about Alphabet. Were you shocked that they came out with this massive announcement, also right before Anthropic and OpenAI?
I'm not shocked by any of the big numbers that we're seeing thrown around in terms of financing these days. And we think about the CapEx needs that a lot of these companies are committing to. So, I'm not surprised by it.
We just had another positive earnings shock. Not a negative one, but a positive one in HPE. Some of these single name stock stories, what are analysts finding so difficult coming into this year? Because this is highly unusual to see beats this large. Usually analysts are accused of being overly optimistic, right? Usually, and late. They never cut their targets, their outlook in time. What's changed this year? What's going on right now with these massive beats that we're seeing across single names?
I think what we're seeing is that this AI trade and all of the bottlenecks in between, and how that's driving up pricing for key components of the build out, is something we've never seen before. Bottom line, and so I think analysts are underestimating the sheer demand that we're seeing for different components of the value chain. And, I don't know that we're going to see that in perpetuity. We've had an extraordinary Q1 earnings season, but...
Do you think we're priced for that in perpetuity?
I don't think the market right now is priced for that in perpetuity. I think the market is, upgrading its earnings cycle, the earnings projections, but not to an extreme degree.
Not to beat a dead horse, but you start thinking, what are the upside surprises in these earnings? And they come in tandem with upside revisions to CapEx plans from some of the hyperscalers and CapEx plans globally, because they're paying higher input costs. Essentially, this is an inflation story. I know that I keep harping on this, but ultimately, things are costing more, so the people who are on the receiving end of that are seeing upside surprises commensurate with how much prices are increasing, right? So you look at this and you start thinking, why does that not trickle into the rest of the market? At what point is this inflation that can be contained in this story, and at what point does it really affect your perception of the bond market?
No, I think it's the big debate was AI, is it going to be disinflationary or is it going to be inflationary? And at least right now, it is inflationary, to your point, between the rising input costs that we're seeing, between electricity prices, between software prices surging. And I think that is why you're seeing a bond market that flipped from cuts to the potential for hikes. It's not just what's happening in Iran and oil prices. We've seen oil prices come down quite a bit over the last few weeks, and we're still pricing in some probability of hikes. I think a lot of that is just the strength of underlying demand in the economy, strong nominal GDP, and a big part of that is the AI CapEx story.
Another way of asking a question, are bottlenecks in tech a reason to push the 10-year yield closer to 5%?
I mean, I think it's one part of the story of, broader parts of the story. One other one is the labor market, which we have seen stabilize. One other part is just the resilience of consumption, which we have seen, fed by the stimulus that we've gotten, tax refunds and the like. So you put all of these things together, and that speaks to an economy that's, doing much better than people expected.
You alluded to it. Even if we resolve the situation in the Middle East, is there still an argument for higher yields and not lower ones?
I think so, yes. I mean, and I think the fact that you've priced out some tightening, but you haven't priced out the tightening, as we've seen oil prices come down of late. And even if the Strait of Hormuz opens up tomorrow, I think the market will still be pricing in some probability of a hike as opposed to a cut, because we're seeing underlying strength in the economy.
Evan, it's good to see you. Thanks for being here. Thank you, buddy. Evan Brown there of UBS Asset Management. We certainly saw that in the data just yesterday in the ISM.
Yeah, outperforming once again in terms of just manufacturing, prices paid continuing in expansionary territory, employment still in contractionary territory. Going forward, it's going to be really interesting. If the Fed were to hike rates, would it matter? Would it matter to these valuations? Increasingly, you hear not really.
What problem does it solve? Just hammers housing, right? Just hammers the part of the economy that's not doing well at the moment anyway.
Although you could argue if they raise rates, that could potentially tame the long end. I mean, at some point, it might not be an either-or type of scenario if there truly is this type of inflationary pressure.
10's right now, down 3 basis points, 4.42. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. Dollar General earnings just in, and shares are up 3% in the pre-market. The discount retailer reporting first quarter earnings that beat estimates. The company reiterating plans to open about 450 new stores in the U.S. this fiscal year. Prominent short seller Andrew Left has been found guilty of securities fraud. The Citron Research founder was convicted on 13 of 17 counts and could face more than 20 years in prison. Sentencing is set for August. And NVIDIA CEO continuing his tour. He says he pays his workers as much as possible as questions grow over who benefits from the AI boom. He added he does not plan to replace them with AI, Wang dismissing those concerns as nonsense, saying AI will only boost revenue, profits, and GDP growth. That's your Bloomberg Brief. John.
Yahara, thank you. Thank you for the update. More from Yahara in 30 minutes' time. Up next on the program, skyrocketing AI demand.
Everyone on the planet will have some interaction with AI. Could I see this demand continuing much longer than people have ever seen historically? That I do believe.
Up next, we'll catch up with Mo McHugh of PSP Growth, live from New York City this morning. Good morning.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Equity futures pulling back from all-time highs on the S&P 500. The S&P on an 8-day winning run, the longest winning streak on a daily basis of the year so far. Equity futures down by 0.2 on the S&P, on the Nasdaq down by 0.1. Check out Alphabet. We're talking about an $80 billion equity capital raise. The stock is down just 2.5% in the pre-market. The earnings have been stellar. How many times have you heard that over the last month? Check out HPE. Crushing estimates. That stock up in the pre-market by a solid, an emphatic 25%.
I mean, it's just sort of mind-boggling when you take a look at some of the earnings beats. 31% in the fiscal year ending in October. That's a projection versus an expectation of 19%. I mean, we're talking about a 12 percentage point gap between what they actually came out with and what was projected. This is one of the largest makers of computing equipment. They have insatiable demand right now, and you are seeing that in the projections out 2 years.
This is the biggest positive earnings shock I think I've ever seen across single names and maybe the index level as well. Outside of recoveries, I think you've got to go back decades to see anything like this on the earnings front.
Yeah, you noted that analysts tend to be overbold. Nobody has a sell rating. They're not bullish enough because we cannot wrap our heads around how quickly this is expanding.
The stock is up at a pre-market by 25%. Under Savannah's this morning, skyrocketing AI demand.
Everyone on the planet will have some interaction with AI. If you think about world GDP, $130 trillion, knowledge work, white-collar work being maybe a $30 trillion market, that is a large market of which today is largely undertapped. Could I see this demand continuing much longer than people have ever seen historically? That I do believe.
So here's the latest this morning. Alphabet's raising $80 billion through a massive equity deal as Anthropic submits paperwork for its confidential IPO, filing ahead of rival OpenAI. Mandeep Singh of Bloomberg Intelligence joins us now for more. Mandeep, welcome to the program. The numbers are huge. What signal do you take from the timing and the size of that equity capital raise from Alphabet?
I mean, the size isn't that big of a deal given, Alphabet's market cap. It's more the signal here, which is, to me, what Google is suggesting is they won't be doing any buybacks anymore, at least for the time being. They are issuing equity because they feel the opportunity is huge and they want to pretty much front-run these IPOs in the sense their CapEx numbers are going to be much bigger than what consensus has right now, which is around $250 billion. We think it'll probably be $300 billion for next year in 2027. And they want to lock in as much compute as they can in terms of getting that capacity from TSMC, where NVIDIA is paying, $120 billion in prepayments. Remember, Alphabet is not just a model provider. They're also the biggest chip maker after NVIDIA. And that's where they have a much bigger opportunity than the Anthropic and OpenAIs of the world.
Mandeep, you mentioned getting ahead of the IPOs. Are there any big public companies, maybe Microsoft, Meta, thinking about doing the same thing?
I don't think so, simply because Microsoft and Meta are reliant on NVIDIA to give them the GPUs, for their data centers. In the case of Alphabet, that's the unique value proposition they have, is they don't have to rely on NVIDIA, even though they buy NVIDIA chips, but it's more for their cloud business. And in this case, I think the market won't like it if Microsoft and Meta were to do the same, simply because of the drag on free cash flow and the earnings that you will see with more stock issuance. So from that perspective, I think Alphabet's situation is unique here, and they are trying to take advantage of their market cap as well as the position they have, across the board when it comes to the different categories.
They're certainly doing that. Mandeep, appreciate the time. What an afternoon yesterday. Mandeep Singh there of Bloomberg Intelligence. Mark McHugh of PSP Growth writing the following. Berkshire is effectively putting its stamp of approval on the idea that AI is not just market hype, but a durable infrastructure shift worth funding at scale. Mame's in the studio. Mame, good morning. Good to see you.
Good morning. Good to see you.
It's great to see you in person.
You too.
Let's talk about the supply. Tons of it. Is it going to be met with a lot of demand?
I think demand is showing no signs of slowing down. And we're talking about building out essentially the railroads and the electricity grids of AI, right? So everyone's piling on. Everyone wants to grab as much as they can. This is almost like a war on oil. That's like the new compute. So I don't see demand slowing down at all.
I asked this question earlier on this morning. How much runway do you think there is here? People are wondering what innings we're in. That cliche kind of question on Wall Street. How much runway do you think there is here?
I think it's still early innings. I do think the questions will start to be asked in terms of when is the payback on this CapEx, because these numbers are staggering. I think Alphabet, right, the reason they're raising this much equity is their CapEx spend this year is going to be $200 billion. And of the Mag 7 together, I think we're talking 600, 700 billion, maybe even more, depending on what week you ask it is. And so far, no one seems to be asking, where's that return going to come from? Who's going to fund it? But I think we will soon, but the fact that people are not asking that question yet shows me that we're still in the early innings of AI, and this is just a land grab.
Demand is outstripping supply again and again and again. With HPE, we saw that as well. That really this is an issue of just supply not being able to keep up. How much pricing power is there? I mean, can they just keep raising prices to the moon for some of these parts that are in the choke points that essentially are necessary for the build out?
It sure seems that way, doesn't it? I think you touch on an interesting point, which is where is the choke point? And I do think if you look at sort of the core suppliers, GPUs, memory, yes, like they're strictly at where the bottleneck is, and that makes sense. And I think they probably will command pricing power for quite a bit. But where I start to worry in the market is if the rally becomes broader. I could see a world where there's so much frenzy around AI that anything that even touches the supply chain gets seen as an AI beneficiary. And I think that's when you get into trouble is, I don't know if this is a good example, but data center cooling, right, is marginally touching the space, but also obviously very different than memory. I do think for the core spaces of memory and GPU, you probably see that rally go for quite a bit longer.
Yeah, like when a shoe company becomes an AI company, then potentially that raises some concerns. I just wonder, how much companies have to show return on investment going forward to keep investing at the pace that they are to rebuild their entire infrastructure, or is that not necessary yet?
Yeah, and I think in some ways, right, we can talk about the Anthropic IPO in a little bit. Seeing Anthropic's numbers could be interesting on this front. Well, first of all, we at PSP, we think about this a lot. We actually hosted an event a month ago where we gathered Fortune 500 CEOs and AI entrepreneurs together in one room and be like, what is actually valuable to being built? Like, when do you see ROI? Or is it just build, build, build? And it was probably some interesting insights there. But back to Anthropic, the interesting thing we could see from them is from the very beginning, the narrative has been about enterprise adoption. It's not just about having the best model, it's about having how do we drive actual productivity in customers. And they've done well as a result, but seeing their numbers, hopefully we will soon, will show that if retention is good, if we're continuing to see spend increase among the largest corporate spenders, then maybe AI skeptics could be a little wrong in terms of how far we are in the AI adoption curve after all.
Let's talk about the Anthropic IPO. You say it's going to be not just a massive deal in terms of being first for OpenAI, but also along the entire AI stack. What are these smaller AI companies going to be looking for?
Yeah, I think everyone will be watching them. It's going to affect the whole AI stack because essentially Anthropic is the first AI native company to go public. And they're going public at $1 trillion valuation. And there's this belief in the market that AI is going to be so much bigger than traditional software. So if traditional software is $1 trillion market globally, AI could be 10 times that, 20 times that. I've heard 50 times. Like 50 times is the highest I've heard in terms of how much bigger AI will be than traditional software. So if you're thinking there's a market that creates $50 trillion of new market cap, obviously that has implications up and across the stack. And if you look at any of the listings around top AI companies, I think Bloomberg has one that's top 24 AI companies to watch. You can look at the Forbes AI 50 as a rough proxy for what the market thinks is like the top tier AI companies. All of them are valued at least $1 billion or more, which means investors think there are going to be tens of billions, they're going to be $1 trillion, and it's every part of the stack. It's not just the models like OpenAI or Anthropic. You have AI infrastructure companies, so this is like Base 10 fell together. You have application layer companies, so this is like Synthesia, this is like Decagon, Abridge, Harvey. All these companies sitting at billions of dollars of valuations is going to be looking at Anthropic to see if the public markets will truly view AI as a different crop of companies.
Mama, it's good to see you. Thanks for being here. Thank you. Mama Q there of PSP Growth. Remember when $1 billion used to mean something?
Yeah, billion
used to be a real number.
Billion there, trillion here, trillion there. Soon you've got real money.
It's difficult to internalize the size of some of this. Coming up, Dan Stroyven of Goldman Sachs on the two-sided risk facing crude prices, plus Danny is looking at Marvell. That stock apparently could be a $1 trillion name.
My friend started saying.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Equities pulling back by 0.2% on the S&P 500. Just a small dip, a small pullback from all-time highs on the S&P 500. 8-day winning streak. Can we make it day 9? Only a small drift lower on the Nasdaq. We're down by not even 1/10%. That's the story in the equity market. 2 hours away from the cash open. The opening bound just around the corner. Let's get you some single names, some morning movers. Danny Berger has more. Hey, Danny.
Hey, John. Some big moves this morning despite an overall down market. HPE up 26% this morning in earnings that blew everybody out of the water. For this, the current quarter, its projections, which beat Wall Street expectations, even gave a glimpse into early next year, which is rare for this company. You've seen the sell side try to scramble to keep up. We've seen price target raise after price target raise. It makes networking equipment for AI data centers, so you can imagine why that's been in demand. Another AI-related story, Marvell, also surging in today's trade. Shares are up 23%. Jensen Huang is at a conference, a tech conference in Taipei, brings the CEO on stage with him and says, hey, Marvell, this is the next trillion-dollar company. That's quite the endorsement. They make networking equipment that's necessary for AI, or rather chips that allow different AI components to talk to each other, and Jensen Huang calling out those chips as especially being in high demand. Finally, decidedly not AI. It is Dollar General, also out with solid earnings. The company beating expectation, raising its forecast. The company saying, look, our value proposition is paying off, and that's why you're seeing shares up 4.5% in the pre-market, John.
Danny, thank you. Appreciate the update. Danny Berger there with some single names this morning. On our radar, Alphabet looking to raise $80 billion to fuel massive AI spending plans. The money expected to come through a package of equity offerings, including a $10 billion investment from Berkshire Hathaway. Elsewhere, Anthropic confidentially filing for an IPO, putting it ahead of OpenAI in the race to go public. The move adding to growing momentum as both companies scramble for the capital needed to secure chips and data centers. And finally, the president tearing into the Israeli prime minister. According to Axios, Trump calling Netanyahu crazy as Israeli actions in Lebanon put Iran peace talks at a standstill.
So this is some of the scuttlebutt behind the dueling messages that we heard. President Trump coming out and saying that there seemed to be some sort of ceasefire between Israel and Lebanon. Israeli Prime Minister Benjamin Netanyahu talking about how nothing has changed in their ultimate goal. A real question about what is going to be intertwined with some sort of ceasefire with Iran. And who's agreeing to what? Again, who's negotiating with who? Who's agreeing to what? Where are we? Which is the reason why this is really fun.
I mean, when John brings up the ghost call, the phantom call when it comes to China, at times it does feel like the president is almost negotiating with himself, just negotiating in public to send signals to the regime. I think the Wall Street Journal editorial board really nails it this morning. Iran's regime sees this as one war, and it's been testing Trump on all fronts. So testing him in the Strait of Hormuz, will you hang on to the ceasefire even if we're sending your troops drones? Testing him in terms of they see Lebanon and Hezbollah as part of this. So testing him there when it comes to Israel. Even as Iran is saying, we are no longer talking to you, the president is still clinging to the ceasefire, and you can see he does not want escalation.
He's committed to de-escalation. And the market picked up on that a while ago. And arguably, maybe that's kept prices in the futures market at some point along the curve more behaved than it otherwise would have been. But ultimately, I don't think you can overstate the importance of the drawdown in inventories. That's been the real cushion here that's cushioned this crude market, and things would have been a whole lot worse. How sustainable that is, get a lot of pushback to that question when we ask it. When it becomes a major problem, you'll know when you know, and when you know, it's going to be a big number on the screen.
And a lot of people are saying that you're going to know in the next couple of weeks because we're heading into driving season. That's what we heard from Mike Wirth of Chevron when he said, we're going to hit tank bottoms. You could feel shortages even here in the United States. At a certain point, you can't just keep jawboning a physicality in this world. And that essentially is the point that we're raising. This isn't fun. It's not funny. But a lot of people are looking at this and trying to say, when do we have to care? Not yet. And they keep putting it off, expecting that there will be some sort of resolution, even as this ends up being a physical problem, even if it's resolved today.
Tyler Kendall's in Washington. She joins us now for more. Tyler, welcome to the programme. I remember when the Strait was reopening on April 17th, and here we are in June. Where are we now?
Well, John, at this point, it doesn't appear that we're any closer to that deal to reopen it, though we know that the White House would like that to be prioritized in any memorandum of understanding. President Trump came out yesterday and said that he was optimistic towards a deal. He said that we are now seeing a, quote, rapid pace in terms of the negotiations. But Iranian state media so far has really put out that there are still some really big sticking points, including when it comes to this waterway. We heard earlier this week Iranian state media saying that Iran would have the, quote, exclusive authority to operate the strait, something that is considered to be a non-starter by the U.S. There has been efforts by the U.S., as you well know, to help get the oil flowing through, including Bloomberg News confirming that the U.S. CENTCOM is providing information to certain vessels to help them transit through, but we're not going to see that military deployment of assets to actually physically escort tankers. I can say that satellite imagery analyzed by Bloomberg News earlier this week did indicate that about a quarter of the tankers that were backlogged have made their way through, but it has been at a trickle and is still, of course, very far below those pre-war levels. John, we'll have to see where this ultimately goes from here, because we know that the U.S. isn't going to lift up that naval blockade, give up that leverage in these conversations in order to strike a deal.
Tyler Kendall with the latest in Washington. Tyler, thank you. Crude still elevated, Brent at 94, WTI around 91. We caught up with the Chevron CEO recently, Mike Wirth, telling us and warning there may be more risks to come.
June and July are going to be critical months, and you can see the trajectory of these inventories in the data, and it's concerning. About the time that the new supplies reach the market, demand may have turned down and the price cycles down.
Dan Stuyven of Goldman Sachs writing the following: we see significant upside price risk from potentially more persistent Middle East supply losses, but also meaningful price downside from weaker demand. Dan joins us now for more. Dan, good morning.
Good morning.
We'll get into the sequencing in a moment. I just want to start with the risk of this inventory story running out of oxygen. How close are we to that becoming a problem?
Yeah, so we are the most focused on tightness in the product markets rather than the crude market, in particular the diesel market. And if we were to continue to draw at the recent pace in terms of OECD commercial diesel stocks, we would hit an estimated critical inventory threshold of 20 days of demand covered by August.
By August?
In practice, I suspect we're not going to hit it because higher prices would reduce demand.
But you say August, and I'm thinking, OK, then could this go on for a bit longer, this back and forth? Can we get through another month of this, these negotiations that go nowhere?
The lower inventories go, the higher the fair value of oil prices should be. But the honest answer is we don't really have good historical evidence of what it means to go to tank bottom. So it's an empirical discovery process that the economy and markets may have to go through if the strait were to remain closed.
Where is the demand destruction going to come from? Because it hasn't come from the developed economies in any way. And frankly, politicians have been incentivizing people to continue with their habits.
Yeah, so three areas of surprising and large demand weakness. One, petrochemical feedstocks. Two, global jet fuel demand. And three, gasoline demand, especially in China, but also in several Western European countries. In China, we estimate that as of April, gasoline volume sales were down just over 20% year over year. China has reduced its imports of crude by 40% year over year. That's really, I think, a key reason why crude prices are not higher.
So do you think that people are overstating the potential for a supply shock in the next couple of weeks even, should the Strait of Hormuz continue to be closed?
I think the longer the Strait remains closed, the more inventories roll around, the higher oil prices should go. The exact sort of tipping point is uncertain. We are the most focused on the diesel market, where our models point to August as a potential inflection point.
Even in the United States, it's August for diesel?
Yes. So if you look at U.S. weekly petroleum statistics, and the beauty about the U.S. data is we can track everything weekly in real time. If you look at the last 8 weeks, it's the largest draws in U.S. oil stocks in history. Diesel stocks in the U.S. are at the lowest level since 2003. I think U.S. refiners have helped to fill in the shortfall of refined products in the East and in Europe. And as long as trade is free, the tightness will be felt very much in the U.S. too.
How much do you see actually getting through the Strait of Hormuz right now? We've had reporting that ADNOC is getting product out. The Japanese Prime Minister had a call yesterday with the Iranians. They got 15 ships out. Are you seeing more get through because individual nations are striking their own deals with the regime?
So we think that about 10 to 15% of normal oil volumes are coming through, 2 to 3 million barrels per day. But it's a challenging data problem as ships turn their satellites data off. So we are also tracking arrivals of oil. We're tracking inventories data, 10 to 15% of normal. But it's a challenging data measurement issue.
If the Strait of Hormuz were to open today, how much would oil prices go down because of the demand destruction that we already see in certain places?
I think the risk premium at this point has come off quite a bit, along with positioning. I would expect that if the Strait reopens fully and on a sustained basis, that the risk premium comes down somewhat further. But I think oil prices will stay high. We have Brent at 90 in the fourth quarter just because inventory levels are very, very low. Most of the risk premium at this point has come off.
So wouldn't you say that the upside risk is substantially greater than any kind of downside risk going forward, and that ultimately people are still on the low end of the pricing curve, both now as well as in December?
Yeah, we see the risk as two-sided, but skewed to the upside on net. If the demand weakness we're seeing in gasoline markets in China and Western Europe were sustained, we would predict Brent at 80 by year-end. But in practice, I expect that that demand weakness should unwind once conditions normalize. On net, still upside from a more persistent Hormuz supply shock.
Our experience with this story of the last 3 months, terrific engagement in the first month. The second month, things started to fade. And the third month, no one even wants to talk about it. Can you describe the arc of your conversations with clients? How engaged are they still with what is taking place in the Middle East?
Clients are tired. It's a challenging trading environment with headlines moving prices up and down. I think positioning in oil markets is significantly more limited than at the start of the conflict.
Have they stopped engaging in the market because of that? Have you seen certain pockets of this market in commodities where liquidity started to dry up because people aren't engaging in the way they were before?
Traders are telling me that liquidity, especially in the refined product markets, is pretty poor at the moment. And I think many corporate clients, investor clients have already set up the hedges they wanted to implement. And many of them are in a wait-and-see game.
So when you see liquidity dry up, how much signal can I take from the paper market, from futures, right now?
Yeah, somewhat less than in normal times where liquidity is higher, for sure. So that's why you need to complement the price information with looking at stocks, imports, exports, anecdotes from clients on the ground. All of these are necessary to get a sense of what's going on.
Dan, appreciate it. Thank you, sir. Thank you. I think everyone's exhausted by this story, including Dan himself, I'm sure. Dan Stroyven there of Goldman Sachs.
Yeah, but the point that you were making at the end was fascinating to me because ultimately it indicates you can't really get comfort from the long end of the oil curve right now if it has less information than it normally does. And Mike Wirth of Chevron saying
doesn't even look at it.
Probably he doesn't look at it.
And his best case for the consumer.
Right, in his range talks about that as being the best case. And the potential bad cases being to the moon. Where is the downside surprise and how great could that be? Potential to the upside that seems not unlimited, but problematic.
Skewed asymmetrically to the upside.
Thank you. Yeah, that's the way it
I think that's where you would go in. I'm reading your mind, Bramo. All right, break crude right now.
I appreciate it.
94. Let's get you an update on stories worldwide. With your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. SpaceX will reserve up to 5% of shares in its upcoming IPO for certain employees, along with friends and family of executives. The company has already disclosed that participants on its so-called friends and family list will not be subject to a lockup restriction. NBA star Stephen Curry signing a 10-year endorsement deal with Chinese apparel brand Li Ning. The agreement includes basketball products, lifestyle wear, and a full golf line. The four-time champion ended his longtime partnership with Under Armour back in November. And a 24-hour strike by some London Underground drivers started today, causing major disruptions around the city. Talks between the union walked out over a dispute over plans to introduce a voluntary 4-day working week. A second strike is planned for Thursday. That's your Bloomberg Brief. John?
Yahira, thank you. Thank you for the update. More from Yahira in about 30 minutes' time. Up next on the program, higher for longer.
This economy really is on fire. If there is a rate hike cycle beginning because of these factors that we both have a low unemployment rate and at the same time we also have upper pressure on inflation, then all those things would certainly argue for the risk to the upside.
Neil Dutta, Ran Mack joins us next. Live from New York, you're watching Bloomberg TV.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Things are pretty quiet at the index level this morning. We're down by 0.2% on the S&P 500, down by not even 0.1 on the Nasdaq. Things are very noisy at the single name level. Check out Alphabet, down by 2%, not a big move, but they're making major moves. An $80 billion equity capital raise to build out the big AI push over at that company. And other companies are absolutely raking it in. HPE in the pre-market, the stock is absolutely flying. It's up by 26%. Revenue will increase 31% in the fiscal year ending in October, according to them. Analysts were looking for growth expectations of something closer to 20%. So analysts were bullish. they were nowhere near bullish enough.
Yeah, because demand just keeps outstripping supply. The book report came out from Peter Bukvar, and I thought that this headline of the email gives you a sense of where people's minds are at for the economic ramifications. This is going to cost you. Talking about how the data center is keeping the build-out is keeping the U.S. economy afloat. And guess what? It's really expensive, and you're seeing that in the earnings. You're seeing that in the capital raise, and you're seeing that in just how big the beats are for the people who are in the choke points of some of this build-out.
So what does it mean for the bond market? Might sound like an odd question, but I think it's a question we need to explore a little bit. So yields are close to 4% on twos, 10s around 443. Two dimensions to the fixed income story off the back of this conversation in tech. One is inflation, and the second is crowding out. There's a lot of debt coming to the market to fund this big push, and to your point, there's a lot of price pressure building in that sector as well.
At a certain point, right now, AI is inflationary. How long is it going to be until it's disinflationary, number one? And number two, how much do you have to have a much faster growing economy to support some of this build out without seeing potentially constraints coming into play? And this is the reason why Jim Caron over at Morgan Stanley put out a note yesterday where he was saying that people need to get used to a world with higher inflation, higher benchmark rates, and higher growth. And right now, people are trying to get their heads around that after decades of exactly the opposite.
Where does it leave this Federal Reserve? Under surveillance this morning, higher for longer.
This economy really is on fire in the sense that we both have strong growth and we also have upward pressures on inflation. If there is a rate hike cycle beginning because of these factors that we both have, a low unemployment rate, and at the same time we also have upward pressure on inflation, then all those things would certainly argue for the risk to the upside, namely that rates are going to stay higher for longer.
So here's the latest this morning. Investors are waiting a slew of jobs data this week, likely to confirm expectations that the Fed will drop its easing bias. Neil Dutta of Runmac warning the Fed is focusing on the wrong side of its dual mandate, writing the more relevant issue right now is how weak income growth is. Neil joins us now for more. Neil, welcome to the programme. I'm guessing you're pushing back against the idea this economy is on fire.
Well, I think certainly to your point earlier, I mean, parts of the economy are on fire. We've seen rapid growth in information processing equipment and software. But I think, there's a disconnect in terms of strong nominal GDP growth on the one hand and very weak wage and salary growth on the other. We'll see how that reconciles. But generally speaking, I think, incomes, labor markets are the more stable measure of activity. And so I tend to put more weight on that.
So, Neil, why do you think the Fed, at least for now, seems to be more preoccupied with the other side of the mandate?
Oh, sure. I mean, well, look, inflation owns the Fed's reaction function right now. There's very little doubt at this point that they're going to drop their additional adjustments language. But I think the reason why inflation's been the focus is because we've been running above target for a while. And when you look at things like non-housing services, they appear to be, flattening out, or the progress has stalled over the last, 6 months or so. So, there's only so many times you can say, well, this is a function of this idiosyncratic factor. This upward pressure is a function of tariffs, and that'll go away. If everything is idiosyncratic, then nothing is. And so I think that's the reason primarily why inflation kind of owns the Fed's reaction function at the moment. And of course, while income growth is slowing, the unemployment rate isn't rising. So you need to see more of a cathartic crack in the labor markets to kind of get the Fed's attention.
What does a cathartic crack look like, Neil?
Yeah, if the unemployment rate starts going up a couple tenths every month for several months in a row, that'll be something that'll get their attention.
At this point, if you don't see that, and if you see incomes continuing to be subdued, do you think that the next move is going to be a hike or a cut? I mean, do you think that the Fed can feasibly cut rates to help people who are more rate sensitive at a time when you're seeing valuations run away and it doesn't seem to be that financial markets see any kind of tightness in any way?
Yeah, well, I don't know that the Fed can do anything about what's happening. I mean, financial market conditions can shift abruptly for reasons totally unrelated to the economic fundamentals, as we know. I think what it basically does is lock the Fed into place. Even when you talk to the people that are calling for hikes on the street, right? What are they saying? It's sort of like stages of grief. Like it's almost like a momentum trader with the sell side, right? It's like, oh, they're going to drop their easing bias, then they're going to, talk about balance of risks. then they're going to hike. Look, and how many times do you think they'll hike? Oh, maybe once or twice. Well, look, I have news. I don't think the Fed will only go once if they go, okay? The Fed will probably go 75 to 100 basis points. They'll take away all the insurance cuts that they put in last year. So going out there and saying they might hike once at some point in the second quarter of next year, that'll be wrong. Okay, so that's sort of what I would say. So to me, it's about distribution of sort of, this is a probabilities business, right? Either they're going 75 basis points with respect to hikes, or, you know, oil prices settle down. We kind of go back to where we were at the end of February, and then the markets start pricing in cuts again. Maybe that's early next year, or they do nothing at all. You basically have an extended hold. I think those are the distribution of outcomes. And if I have to pick, I would say the path of least resistance is probably that they do nothing. So I would sort of lean against the idea that they're going to hike.
Neil,
that's
don't
kind
they
of
just
where
need
I'm
to
at.
say this, though, in a sense, to make sure that they keep inflation expectations under control?
Well, they're doing that, right? I mean, they're basically dropping their balance of risks or sort of their additional adjustments language. They're telling you that they're prepared to move in either direction should the economic conditions justify it. But I really have a tough time seeing them hiking if there's not much meaningful inflation pressure coming out of the labor market.
If for them to hike, what would you need to see in terms of, you mentioned
I just
oil
told
prices?
you, the labor markets would need to reaccelerate, meaning wage growth would need to perk up.
Neil, very simple. We appreciate it, sir. Neil Dutta gets fired up about the Federal Reserve, doesn't he?
He gets very fired up. And about NICs. I mean, if you look at these NIC tickets and the cost of them, you would think the Fed needs to hike. Ask him. Nick, are you... Neil, are you going to the Knicks game?
Well, in classic K-shaped economy fashion, I will be. I'm not going to MSG, unfortunately.
Okay.
But I will be going.
Cut rates. Neil Dutta of Renmat. Neil, thank you. Neil wants cheaper tickets. I don't think you get them by cutting interest rates.
No, but it seems like he's going to go anyway, at least maybe not in Madison Square Garden. I mean, what is it, $75,000 people could resell their tickets for?
Ridiculous, Brahma.
No, there's some that are $250,000.
It's absurd. But then there's the debate, do you sell or do you not sell? If you're a diehard fan and you've got,
If you're a diehard fan,
tickets.
I guess you go.
I've spoken to diehard fans about this.
They're holding on to the tickets?
A lot of them are holding on to the tickets. It's been decades of just brutal torture, so...
It's someone else's money, so I don't want to tell people what to do with their money. We'll say this, though. I do appreciate when the stadium is full of actual fans and not people who just paid up ridiculous amounts of money for the whatever the spectacle of the moment is, and in this case, it's the Knicks at MSG.
I feel like this is a perfect parallel for some of the chip supply shortages.
Please, make this work for us, Bramo.
Because it's sort of like demand is insatiable and supplies are limited.
Yeah.
And so do you hold on to your supplies that could potentially be productive, or do you sell potentially for a big profit in the moment? But that money, what is it worth versus the experience?
OK, I think that kind of worked.
Thanks.
Appreciate it, Bramo. Thank you. Up next, we'll get back on track. Monica DeCenso of JP Morgan, Colin Sebastian of Baird, Mike Reid of RBC, Osun Kwon of Wells Fargo. The third hour of Bloomberg surveillance just around the corner.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions.
a poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Nothing matters except AI, 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 and a little more AI.
It's a very narrow market. The earnings are being driven very, very small slice.
We're in a high-risk bull market.
It does feel a bit like a meltdown.
Our personal view is to hedge.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your scores look like this. Record highs through Monday. Coming into Tuesday, equity futures down by just 0.2% on the S&P following an 8-day winning run. Quiet at the index level, lots to talk about at the individual single name stock level. Let's start with Alphabet. $80 billion. Equity capital raise, and the stock is down by just 3% this morning.
After a nearly 120% rally over the past 12 months, this is a $40 billion so-called at-the-market program to sell shares from time to time. This is $30 billion of underwritten offerings of shares of mandatory convertible preferred stock, as well as, and this is the interesting part, $10 billion coming from Berkshire Hathaway. Greg Abel is putting their cash pile to work. Is this giving people a sense that this actually has legs, given the fact that Berkshire Hathaway in the past hasn't been that hot on tech? Or is this just a sense there isn't anything else to invest in? Right now, if you're going to invest in anything, you better get a hold of some of this AI stuff.
So Berkshire's sitting on what, $400 billion cash pile?
Crazy.
Let's round it up. Does it make a difference to you that it's Greg and not Warren? And if it was Warren, would you take a different signal from this morning?
Absolutely. I think Warren Buffett was pretty vocal. He did take a stake in Apple. It wasn't necessarily as profitable as some of his other stakes. People talked about how he didn't get his head around some of the technology trade that other people did. He didn't have the same level of success. Greg Abel clearly is taking a different tact. At the same time, it clearly is Berkshire Hathaway and comes in tandem with other types of investments, the housing one in particular, that are more traditional in line with the Berkshire Hathaway types of investments.
And when it comes to Alphabet, when you have this company, it is almost an infrastructure play as well, not just what is going on in models like Google Gemini. I go back to what Mandeep said. They are in both places right now. They are competitors with Anthropic and OpenAI, but absolute, they are competing with NVIDIA because they have the chips as well.
They're just exploiting pockets of liquidity up and down the capital structure. They've been so busy all year. $60 billion 4-month debt bench. I know I've repeated that number a few times, but that's massive. That is bigger than they borrowed in the debt market in the whole history of the company up until the last 6 months or so.
I'm losing sense of scope when we start talking about numbers like this. You were joking before about $1 billion here and $1 billion there.
It's
and
difficult to
$1
internalize these numbers.
I'm struggling to put that in perspective with the grocery prices or my day-to-day life. And I know that might not necessarily be relevant. Groceries versus an AI company are completely separate. But do these valuations make sense in the price environment that we have currently? Or does there have to be a rejiggering of our sense of the world? And I don't mean to be too philosophical, but this is ultimately where it comes to the underlying economy and it comes to the question of the bond market. At what point are we either underpricing growth and inflation or are we overpricing the hopes and dreams of AI?
Well, let's start with capital constraints and the signal you get from price. Not seeing pushback in the debt market to Alphabet. They raised a lot of money. There was a lot of demand. They had to go into different currencies to do it. They were smart about it, but didn't see much pushback. And you have to say, and we mentioned this a few times already this morning, pull up Alphabet again, look at the stock price. Not seeing much pushback at the single name level either. Alphabet is down by 2.8%.
The signal here is go for it. If you want an IPO or you want to raise money in the equity market, now is your time, which is why you have a race right now between OpenAI and Anthropic. The Dario Amodei versus Sam Altman create that video I'm willing to watch. This sort of rivalry coming to the fore of who's going to get there first.
Well, I do like the timing because, as I've said, Alphabet got there first. They saw what was on the horizon and they said, no, thank you, we're public already, we'll have some of that.
Yeah, hold our beer.
Thank you very much.
And guess what? We did it really well.
Bigger than the SpaceX IPO, this capital raise. Coming up, we'll catch up with Monica DeCenso of JP Morgan as capital demands ramp up. Colin Sebastian of Baird as Alphabet looks to raise $80 billion. And Osun Kwan of Wells Fargo on how the mega IPOs could be a headwind for the stock market. We begin this out with stocks holding on to record highs as Alphabet is planning to raise $80 billion in equity capital. Monica DeCenso of JP Morgan Private Bank saying the following: stay invested in the AI supercycle, but be selective. Monica joins us now for more. Monica, good morning. Good to see you.
Morning. Thank you.
I'm just thinking about the clients that you speak to, investors, individuals, families, family offices. How much exposure do they have to these names already through private markets?
It's funny. Talk about private markets with everything that's happening, these headlines overnight. I think so many people assumed that's where you had to be to get the value today, to play AI, and then you see this news overnight and you realize maybe there are more opportunities in public markets. Now you look at a name like Alphabet, which has run over 100% in the last year, and to see it holding in this well this morning is pretty interesting. And so I think the bottom line is there are absolutely opportunities in private markets, but there's still a lot to do in the public side as companies make investments. And you look at these companies like Alphabet with a significant free cash flow generation, it still feels like there's value on both sides.
Where do you think the value is then in the equity market? Let's explore that a little bit more on the public side. Where do you see it at the moment?
You know, at the beginning of the year, we were a little worried, right? Because you looked at valuations over 20 times, you know, earnings growth, high single digits, and you said, okay, maybe that's about where it should be, maybe a little stretched. And then you had all the geopolitical fears, and you said, okay, can we actually hold on to 20 plus times? And now here we are, and what's happened, obviously, earnings have significantly outpaced what we thought. But it's not just earnings growth, it's revenues are accelerating, margins are expanding, and again, it's not just tech, you're actually seeing breadth. Because a year ago, the big concern was it's just the Mag 7, it's just tech. We're seeing that margin expansion in most sectors, actually. And so that's what's really interesting, that you're finally seeing some of this follow through in the market. To me, that tells me fundamentals actually might be better than people thought, and maybe 20 times isn't outlandish for equity markets.
What's driving the broadening out? It's certainly not coming from cheaper commodity prices. It's not coming from disinflation. So where is it coming from?
You know, it's funny because a year plus ago, everyone would push back and say, how can margins expand? And that's where you get to this AI story. And you haven't seen it, I think, as significant as it will be. But I do wonder, are you starting to see some benefit from these investments? Again, it's really hard to put numbers around it. And I think that's where the market struggles. That's where investors struggle. Because if I can't put an estimate on it, how can I look at a valuation and say this stock is worth, X in 2 years? But it seems like it has to be there. And then you wonder, okay, if companies raise prices, never actually took them back down. If there's been some moderation in the rate of inflation, and that obviously helps on the margin side as well.
There's always some unknown when you're investing in a technological cycle. But if I think about, say, the Industrial Revolution with the train, you're investing a train to get from here to there. With this, it's different. People don't totally understand exactly what iteration is going to be one at the end of whatever this is. How difficult is it to remain nimble and to remain lithe at a time of such incredible uncertainty around the thesis that's raising trillions of dollars.
I think it's really difficult, and it's why you've seen this concentration, I think, in these tech names, right? Those are the deep pockets, clear beneficiaries at the beginning. When we talk about being nimble, being selective, now most of my clients are saying, where else can I invest? Where are the sectors that haven't worked? Who could be a beneficiary of AI? And I look at something like financials. Sector that's been down while the S&P is up over the last few months, and yet probably stands to benefit from rates hanging in here. And certainly if you're a financial institution, you will benefit from AI. It makes it easier to underwrite credit. If you get a little smarter, a little more nimble in some of your businesses, and suddenly you can make an argument for another sector to benefit. And so I think that's where we're trying to look, is who hasn't participated in this rally. Another sector that I love looking at, healthcare. If you believe in AI, how can there not be significantly more innovation on the biotech side, globally? And you have seen a dislocation between healthcare and tech over the last couple of years. And so,
is it on the margins is why you say the upside is underappreciated when it comes to AI? Is it on the margins of these other sectors that could benefit?
I think it's just, I used to be a sell-side analyst. We'd estimate numbers going out 1 or 2 quarters. That's kind of what you did. How do you predict 3-4 years out and actually do a DCF and figure out what these stocks are worth when you have really no idea how to put pen to paper on this? And I think that's what the market struggles with. It's what investors struggle with. And so when you have these game-shifting things, it happened in the dot-com bubble as well, people struggle because it's really hard to see 5 years out. And so that makes equity investing a bit challenging. And I think, again, it's why people go to the obvious places. But now we're starting to see money want to shift to other areas, and this is going to be the challenge over the next year. Who are the next 2 to 3 sectors that will benefit from this trend?
You say the critical question for every client is your portfolio built for a world of higher and more volatile inflation. Are your clients right now more concerned about AI and the future and how to predict this 4 or 5 years, or actually the conflict in the Middle East, or people have just completely moved on?
It's so funny. The questions around the conflict in the Middle East, at the beginning of the year, it was all about AI and is it a bubble? That has dissipated. I think because this earnings story has started to calm those fears. Then it's about the Middle East. Yet, to your point, I don't see portfolios that reflect this fear about higher rates, higher inflation. And so and that's normal. People tend to kind of lag a little bit with these shifts. But after this equity rally, I think you have to look even at some of these tech names and say, okay, should I take a little bit off the table and think about rebalancing? Do I have enough in the sectors that will benefit if inflation remains sticky/higher? So I think, again, core real estate, infrastructure, things like that. We look at large family offices we work with, still significantly underallocated to where they say they want to be. And I think no one wants to chase, but it does feel like you probably need to have a little more balance there. These things didn't matter in your portfolio 5 or 10 years ago when rates were lower. Now they're going to be much more important, I think.
Monica, this was smart. It's always good to catch up with you. Thank you.
Thanks.
We appreciate it. Thank you. Monica DeCenso there of JP Morgan Private Bank on the opportunities in public markets still with this big push from some major companies.
Now it's who's the next one. We heard that yesterday. Who is going to be the next Anthropic or OpenAI in this time where everyone can be a billion-dollar company? Why not you? Start it in your college dorm room. I mean, that's essentially the hope and dream.
You got plans, Bremo?
I mean, I don't plan to go back to college, but I do think that this is the discussion among a number of college kids
At home. Is this Casa Bramo again? Is this dinner time?
Actually, there was a really good op-ed by a Stanford senior who was talking about how everybody felt like, well, have you created a billion-dollar company yet in your dorm room? Because I'm working on one.
Oh, my goodness. And if you haven't, you're behind.
And if you bet,
I couldn't handle that.
I mean, Torsten Slot just put out a note about how this is accelerating job creation and company creation because everyone wants to have a small business. I can have it at my kitchen.
I was reading the Bernie Sanders op-ed, and I was just looking at things in a different way. I'll be sitting this out, and then we'll just tax everyone 50%, right?
Mm-hmm. Is that where you're going?
That's what Bernie's going to do.
Yeah, that's the legislation.
That's what Bernie would like to do.
That's the legislation.
Senator Sanders, I should say.
Yes, that's the legislation he's going to be introducing. He wants Americans to have direct ownership in these AI companies because he says they are using our culture, our history, everything humans, Americans have put out there to compute all of this and create all of this.
So look, whenever these conversations start, they're always anchored to the crazy, to the extreme. So, yes, you can say some of that is extreme and it won't happen, but that's the start of the conversation that's going to build up into the midterms, then build up a little bit more into 28. And what do you think the Democratic primary is going to sound like on this issue in the next few years? What do you think it's going to sound like? What kind of policy proposals do you think are going to come out of that?
It's not just Democrats. It's also Republicans. We're seeing this pretty broad-based. I asked a banker, does this present a problem for some of the tech companies that are going to be issuing debt, considering the potential regulatory overhang and the potential pushback? He said it actually accelerated valuations because there is a race to build out data centers as quickly as you can now before they get better regulated. And then it will improve the valuations of those data centers. So, either way.
Two things. Even the Trump administration administration is telling Meta, Microsoft, you need to subsidize Americans' electricity bills when it comes to those data centers. Second, Steve Bannon says that Bernie Sanders doesn't go far enough. Steve Bannon was a key architect to Donald Trump's rise. So it's not just going to be the Democratic primary. It's also going to be the Republican primary.
It's just the start of the conversation. NASDAQ futures this morning down by just 1/10%. Let's get you an update on stories worldwide this morning. With your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. Alphabet is raising $80 billion through a package of equity offerings, including an investment deal with Berkshire Hathaway. The move underscores just how expensive the AI race has become, with the company planning to use the money to build out AI infrastructure and meet growing demand for its chips. Meanwhile, Apple is planning a new iPhone feature that will let users split bills for group dinners or other events. The feature, tied to Apple Cash, will allow users to take a picture of a receipt, assign items to different people, and generate payment requests. And in sports, Serena Williams is returning to tennis. The 23-time Grand Slam singles champ will play doubles with a yet-to-be-revealed partner at next week's Queen's Club tournament in London. 44-year-old Williams is making her return nearly 4 years after stepping away from the sport. That's your Bloomberg brief. John.
Yahara, thank you. Thank you for the update. Up next on the programme, the morning calls, plus Colin Sebastian of Baird on Alphabet's historic spending surge. That conversation up next, live from New York City this morning. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
I think it's still early innings. I do think the questions will start to be asked in terms of when is the payback on this capex, because these numbers are staggering. Where I maybe start to worry in the market is if the rally becomes broader. I could see a world where there's so much frenzy around AI that anything that even touches the supply chain gets seen as an AI beneficiary.
That was Mum AQ of PSP Growth. Just fantastic a little bit earlier on this morning. If you're just joining us this morning, good morning to you all. Equity futures pulling back just a little bit. We're down 0.2 on the S&P. On the NASDAQ, we're down by 0.1. That's the price action this morning. Let's get you some morning calls. First up, Goldman downgrading Intuit to sell, saying estimates are too high as it faces heightened competition. Your second call from JP Morgan, nearly doubling its price target on CrowdStrike to 800, saying it's one of the best positioned names to benefit from securing AI. Just can't keep up. And finally, Bank of America raising its price target on HPE to a street high $80, citing strong demand and further wins in networking. That stock this morning up by 28%. Let's talk about tech and the AI race continuing to heat up. Anthropic confidentially filing for what's expected to be a massive IPO ahead of its longtime rival, OpenAI. Bloomberg's Ed Ludlow tracking the story for us. Ed, good morning. Talk about that race, SpaceX, Anthropic, OpenAI. We have to start with Alphabet because Alphabet got there first. What is the window that Alphabet was looking at?
Yeah, I mean, $80 billion, it's hard to kind of say, well, is that a lot of money? It's more than SpaceX plans to go to market for in an IPO. The structure of it's very interesting. You know, Berkshire Hathaway quietly at the end of last year.
ओके गाइस फिलहाल अगर अभी चेकआउट करोगे क्रूड ऑयल देखो मुझे थोड़ा सा बेरिश ही लग रहा है थोड़ा ऊपर आता है सेलिंग में हो तो बने रहो ऊपर से फिर से सेलिंग में आता है हल्का सा अपसाइड पे तो वापस सेलिंग प्लान कर सकते हैं मुझे बेरिश ही लग रहा है फिलहाल के लिए अनटिल अनलेस कल का हाई प्राइस के ऊपर जाता नहीं है के बाद नीचे आता है तो वापस 85 $84 के आसपास जा सकता है ऊपर निकलना है तो कल का हाई ब्रेकआउट बहुत ज़रूरी है उसके बाद ही कहीं 9,800 टू 10,000 का लेवल शो कर रहा है कल जिस तरह से मार्केट ने मोमेंटम किया था अपसाइड की और मोस्ट प्रोबेबली इट विल गो फॉर अ सेलिंग कुछ क्लैरिटी भी नहीं है फिलहाल के लिए यूक्रेन सॉरी नॉट यूक्रेन बट ईरान एंड यूएस कॉन्फ्लिक्ट के बीच में साइडवेज है नेचुरल गैस भी क्रूड ऑयल के साथ साथ न्यूयॉर्क सेशन ओपन हुआ है लेट्स सी थोड़ा सा वॉल्यूम अब रिकॉर्डिंग कंटिन्यू होना चाहिए इंडियन मार्केट भी अच्छा था गैप डाउन के बाद कंटिन्यूसली बुलिश ही रहा सेकंड हाफ में क्लोजिंग होते होते थोड़ी सेलिंग जरूर आई थी बट रिकवर कर गया था क्लोजिंग पे कल देखते हैं गैप अप होगा या फिर फ्लैट ही ओपन होता है एक्सपायरी अच्छी थी 23,500 स्पॉट पे ऑलमोस्ट जीरो हो गया प्रीमियम उसके कल मॉर्निंग से ऑलमोस्ट 100 पॉइंट की रेंज में ही चल रहा है. लेट्स होप अब थोड़ा मूव करेगा. नेचुरल गैस भी रेंज के बाहर निकल रहा है. काफ़ी देर से रेंज में रुका हुआ था. मॉर्निंग पे मैंने बताया था मार्केट पे यही कर सकते हैं कि या ऊपर लेवल पे सेल करो, लोअर एंड पे बाई करो, बट रिस्क रहेगा उसमें. किसी साइड ना ब्रेक जरूर करने वाला है. डाउन साइड ब्रेक लग रहा है. रेंज के बाहर निकलता है डाउन साइड पे तो एक बाइंग का प्लान करेंगे लोअर एंड पे वापस से. सेल ऑफ आया था सपोर्ट ब्रेक करने का, उसका साइडवेज चला गया था. $3 के आसपास तक गिर सकता है, नेचुरल गैस वहीं पर सपोर्ट है। $294 से $284 के बीच में कहीं। ठीक है, एक बार परसों बाइंग आ चुकी है ऑलरेडी। रेंज एक कैंडल क्लोज होती हो गई, कैंडल क्लोज आई थिंक। यस, कैंडल देखो क्लोज हो गई है, रेंज ब्रेक हो चुकी है। इसको रिमूव कर सकते हैं, इसकी जरूरत नहीं है अब। दिस इज सपोर्ट एरिया, वी कैन एक्सपेक्ट प्राइस थोड़ा सा और गिरे और फिर बाइंग का प्लान रखेंगे। टारगेट इतना तो नहीं मिलेगा खैर। और फॉल होने देना, अभी आया नहीं है एग्जैक्ट सपोर्ट पे प्राइस। एंड मैं फॉरेक्स चार्ट देख रहा हूँ तो उसके अकॉर्डिंग जब एंट्री बनेगी तभी करेंगे। 0.90। ये जो रेंज ब्रेक हुई है क्रूड ऑयल में अब फ्रॉम हेयर, ये जो रेंज बना के बैठा था, अब ये रेंज ही ऑटोमेटिकली रेजिस्टेंस की तरह काम करेगी। इसके ऊपर के टारगेट मिलना मुश्किल है क्योंकि काफ़ी देर का कंसोलिडेशन है, ब्रेकडाउन हो चुका है, तो इट इज़ एक्ट लाइक एज अ रेजिस्टेंस एज वेल। तो बड़े टारगेट नहीं है, ध्यान रखना, छोटा ही टारगेट दिख रहा है। देखेंगे, पहले नीचे सपोर्ट पे आता है, हो सकता है रिटेस्ट रेजिस्टेंस पे वापस चला जाए रेंज के अंदर, तो फिर वो रेंज पे सेलिंग ही बनेगी सीधा। Between the range of 290 to 306.8 रेंज बन चुकी है इसकी अब 15 पॉइंट की। 6 PM हो चुका है, डेटा आने वाला है, ध्यान रखना 7 PM यूएस मार्केट ओपनिंग, देन 7:30 जॉब ओपनिंग का डेटा है। को नेचुरल गैस ऑलमोस्ट सपोर्ट की ओर पहुंच रहा है, फॉरेक्स में आएगा तभी लेंगे, ठीक है। एमसीएक्स के अकॉर्डिंग मत चलना, बिकॉज प्राइस गैप थोड़ा सा ज़्यादा ही है दोनों जगह पे।
The 2000 cycle, the only comparison is animal spirits. This is a major infrastructure rollout, nothing that we've seen in my lifetime. What's fueling this market is the cloud titans, and it's going to go for a while. You just put gas on a fire.
Fantastic conversation earlier this morning with Ted Mortensen of Baird on how Alphabet just extended the runway for CapEx investment with an $80 billion equity capital raise. If you're wondering what happens in commercial breaks, I often share some of that with you. All these conversations about AI, CapEx intensity, tech revolutions, Alphabet, etc., etc. Bramo has not talked about anything but barnacles on vessels in the Strait of Hormuz for the last 3 hours.
Okay. I have talked about other things, but that's been the bulk of it. I've been really interested in some of the tangible ramifications of ships hanging out in the Strait of Hormuz,
so what's
waiting.
The problem? Where are we at?
That barnacle growth is a real problem in the Strait of Hormuz, in that region, as well as algae and other things, and jellyfish. And it's clogging up the propellers. It's clogging up all sorts of the functioning of these ships. So they've got to clear out all the barnacles and algae and jellyfish in order to even get moving again.
According to the Financial Times, it's a huge issue in terms of degrading their speed and fuel efficiency.
Thank you.
So, okay, this will become a problem, maybe. But the biggest issue is right now they are trapped. 2,000 ships are trapped. The Strait of Hormuz is not open. And the Chevron CEO, Mike Wirth, said there's going to be a line. We don't even know who can get out first, let alone who's going to be the first one to go underneath the ship and clean up the barnacles.
Bramo, if you go out for drinks tonight, you'll lose people at the Strait of Hormuz. You won't make it to the barnacles on the vessels, right? That's where we're at in conversations right now.
Yeah, which is why I'm not going to be going out to drinks tonight.
Equity futures on the S&P. Neither will I.
Yeah, I was about to say, what are you talking about?
I'm the least social person around the table. On the NASDAQ right now, just about unchanged. That's the price action. This is the week ahead. Some data a little bit later. 10 a.m. we'll get jolts, so look out for that. 1 p.m. we get a White House press briefing. On to tomorrow, results from Broadcom, CrowdStrike, plus ADP, durable goods, and ISM services. Claims are on Thursday. Payrolls are on Friday. In focus for this market right now, though, is the AI arms race, heating up with record spending plans and blockbuster IPOs on deck. Osun Kwon of Wells Fargo writing, we continue to expect the speed of the rally to slow. We remain bullish on AI, but we believe the mega IPOs will be a headwind. Osun joins us now for more. Osun, good morning.
Good morning.
This is a change. We've gone from shrinkage to a lot of supply on the horizon. How is that going to change your approach to this stock market?
Yeah, there's more supply, and it is a headwind. I don't think it's going to be a big headwind right away because the issuance size is relatively small compared to the overall market cap of the S&P. But as more lockups expire starting in August and on, I think in the second half of the year, I think the setup is more cautious. We essentially went from being very bullish in April to sort of starting to moderate the tone a little bit. We're still more bullish than bearish, but as we look into the second half of the year, I think the market's going to become more volatile.
Where are you looking to lighten up in anticipation of that?
I think you still have to own AI, right? I think you have to own the underlying AI stocks. Our call is to sell cover calls against it because call premium is very, very rich. It was basically everyone's consensus that this is 1999. That's reflected in the options market. If you look at call premium, it's insane. So we like taking advantage of that high premium in call options against the underlying assets.
What's the hangover from the sugar high look like? I mean, are we talking about actual declines, some sort of correction, or are we just talking about a cooling out and a flattening out for a number of months?
Yeah, so the reason why we like selling calls over buying puts is because we don't see that much downside risk either, at least right now. Because until growth actually starts to slow down, which hasn't happened yet, or we see more risk around the AI CapEx cycle or monetization, which we are not seeing yet, I think it's too early to be more bearish. So we like the idea of, the rally is likely to slow down. I think the sugar high rally that we were calling for is toward the later innings of the rally. So if that's the case, I think you can make extra income by selling some calls.
How much are you seeing certain companies that are not necessarily directly related to the AI trade try to refashion themselves as AI companies? I'm not just talking about Allbirds. I'm talking more broadly about companies that can say that they, too, can hinge off some of the economic expansion tied to this technology.
Yeah, I think some of that is true. That if you look at Q1 GDP growth, 1.6% GDP growth, 50% of that was driven by semis and hardware. And if you include intellectual property, so things like software, it was 95% of GDP growth that was driven by basically tech and AI. So AI is really the economy overall. And I think that's the rising concern to us, that AI is getting maybe too big, that unless other parts of the economy starts to grow, there's probably a ceiling on how much AI can grow. So semis and hardware right now is about 2.5% of overall US GDP. And based on hyperscalers' consensus estimates, that number is going to go up to 3%. It's above the internet peak level, 2.9%, and in line with the railroad investment cycle back in the 1850s. So this actually might be as big as it gets unless other parts of the economy starts to grow more.
You think when it comes to the Fed that stocks are skewed to the upside when it comes to Warsh's first meeting, even though everyone knows that they're going to remove the easing bias. So what's he going to say that you think stocks are going to take off?
Yeah, no, I think it's going to be tough for them to out-hawk the market. So already one hike is priced in by January. So for them to out-hawk the market, I think it's going to be difficult.
Osung, always good to catch up with you, buddy.
Thank you.
Thank you. Osung Kwon there of Wells Fargo on the issuance, the supply we'll see later this year and the volatility he's expecting.
Yeah, just the idea, his last point there was really interesting, that the economy has to grow into this AI cycle, or else you're going to see some sort of capping out and just what kind of sugar high there is. You have to see participation. You have to see return on investment. You have to see people keep up with the numbers that are getting more and more incomprehensible.
They're building out capacity aggressively. And then you ask them to describe the future, they're not really sure what it looks like. They're not really sure what it looks like. But they have this conviction that the biggest risk right now is underinvesting. Now, when you have some of the biggest companies on the planet with access to capital markets that they have, both debt and equity, Alphabet, telling you something like that, you pay attention, you take note. And the moment that Alphabet told us that a few summers ago, that was a major headline for me. That was a major statement. Here's a company telling you exactly what they think about the risks on the horizon and how they're going to invest accordingly in the coming years. And look at the numbers now.
Yeah, they're bearing fruit in a massive way. Just think about what Peter Scheer was talking about. When you talk about the buggy whip and how they went out of business when an automobile came and put the horse and buggy out of business, are cars what they were to humans, or are cars what they are to horses? In other words, are we the horse or are we the human? Because ultimately you knew that a railroad was going to move things from one place to another. A car was going to move things from one place to another. Is AI going to help us do our jobs, or will it do the job for us? And these are the questions that people are asking.
It depends who you ask, but that is why you see policymakers like what Jonathan was talking about, Bernie Sanders, an opinion piece saying Americans and everyday individuals actually need to be the ones that reap the benefits of this because it is just too explosive.
Enhance or replace. Pick your poison right now. There's a message that's more palatable to Washington and I think for a lot of the country, and maybe Mr. Altman's got the message.
AI can't remove barnacles. That's the reason why I find it fascinating.
The important stuff.
Thank you.
We know how you'll be spending the rest of today.
100%.
Okay.
Seriously.
Coming up tomorrow, stacked lineup for you. Cameron Dawson, New Edge Wealth, Michelle Weaver, Morgan Stanley, Libby Cantrell of PIMCO, Alicia Levine of BNY. From New York City this morning, good morning. This was Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But Do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the 3rd floor or the lobby. You actually have to start in the basement.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
30 minutes till the start of trading. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, an $80 billion gamble. Alphabet lines up massive funding for AI spending.
Anthropic's confidential IPO filing could give it an edge over OpenAI as the rivals race to go public.
And Ken Griffin's Citadel is launching a program that will pay for trading insights from other hedge funds.
I think the Alphabet story is incredibly consequential from this market. This goes from balance sheet spending to a capital markets story, and we're competing for capital between this and IPOs right now.
Yeah, it's a story of dilution. $40 billion of at-the-market stock sales.
Yes.
And they will raise more money than SpaceX with this.
Yeah, and let's look at what it's doing pre-market because of that dilution, falling 3%. But again, I think this is an entire of the market story. Yeah, it hits Alphabet shares, but that money needs to come from somewhere. And if we're going to be spending money on $80 billion worth of Alphabet, huge IPOs coming to market. I know we're talking about Anthropic filing soon. Money's got to come from somewhere. There's more supply coming into this market.
But there's so much of it, right? I mean, the bond spread story, the hedge fund story, they have way too much capital. They can't even put it to work.
Could that change? Could that change at some point if we keep getting more of this?
I imagine it will at some point. Hewlett-Packard Enterprises, HPE, is surging on much stronger demand for AI products than estimated. The stock had gained more than 60% in the past month before today's move. And you can see it's another 28%. I'm looking forward to Ed Ludlow's interview of the CEO on Bloomberg Tech a little bit later.
As am I. But first, let's dig into the equity sale with Bloomberg Intelligence senior analyst Anurag Rana. Anurag, I wonder what even the logic is for this, because these hyperscalers can easily go to the bond market. Bond market absorbs whatever they want. They can go to private capital. They're happy to put together deals with them. Why do something that ultimately sends shares lower and is dilutive for them?
Yeah, but it's only 3% lower. Frankly, it's also the same thing Oracle is doing. It's basically told the bondholders, we don't want to mess up the credit rating, and we're going to do equity offering as well as a bond offering. So, these guys will look at cost of capital for them through multiple areas, and wherever they find the best deal, they'll go for it.
Yeah, and I mean, $40 billion. It sounds like a lot of money, but we're talking about a $4.5 trillion market cap. Are we going to see the other hyperscalers come to market this way and sell shares at the market price?
See, I do not know about selling shares or how they're going to lift in terms of how they're going to raise capital, but they have to go out and say, well, we have to match what Google is doing in terms of at least the sentiment. It may not be the same dollar amount of capex going up, but I'll be very surprised if either Amazon or Microsoft don't come out next month or whenever they report and say, well, we're going to raise capex too for next year, because at the end of the day, it's all driven by this boost of or the backlog growing for each of these cloud providers, and one of them just can't go out and say, well, I'm going to stop spending.
Is this something that we should think about beyond then Alphabet in that case and what you're saying, Anurag? Should investors, growth investors especially, start thinking about pricing in more equity dilution?
See, again, as I said, I can't comment about equity dilution because Microsoft so far hasn't even, I think, entered the bond market at this point. So Microsoft is just funding a lot of that by itself or signing leases with others. But again, financial flexibility aside, one thing is for sure at this point, that the need for compute remains very strong. And that's an area where, if you thought you needed X yesterday, after 4 o'clock yesterday, we thought, well, we need X plus, another 10% or another 20%. So that story is not, we are not seeing the tail end that we're going to see a decline in CapEx. So we're looking at 26 CapEx very strong, 27 most likely much higher than 26.
Gracias, Anurag. Bloomberg Intelligence senior analyst Anurag Rana reporting there from right outside of Wrigleyville in Chicago. Hewlett-Packard Enterprise is soaring pre-market after saying revenue for the fiscal year will increase by more than 10%, more than 10% more than Wall Street estimated. Let's bring in Bloomberg Tech's Ed Ludlow to help us set the record straight here. And by the way, you have a CEO interview coming up on Bloomberg Tech.
Yeah, so the question is, what is new in the outlook? If you raise your outlook, what literally accounts for the new part? Is it a single customer that came in and changed the balance of the year? Is it in aggregate something that's picked up in a specific sector? But what's kind of interesting about it is that for the sort of dual outlook, so full year 2026 revenue growth of about 31% when the street was looking just below 20%. And HPE went a step further and said, actually, for full year 2027, revenue growth will be about 10% when the street was seeing basically half that, with HPE making the argument if we give you this even further outlook, we're giving you evidence that this is durable, this is real. And so in this cycle of raising cash through equity markets or debt markets, capital expenditures, HPE puts the server together. And so you might see it as a leading indicator for what's actually happening in the real world, where that capital expenditure is being spent.
And I'm sure you also spent a lot of time on Bloomberg Tech today talking about the IPO race after Anthropic files confidentially leapfrogging OpenAI. Sam Altman did once say on CNBC, it doesn't matter the timing, we'll IPO when it's right for us. Is that fair, Ed? Is this ultimately just a race of who gets to the market first, much as it is a race of who has the better models?
Yeah, I've been on the phone all night about this. And it also links to what's happening with Alphabet, right, in their equity raise. It is a first mover advantage to Anthropic, but not just first mover advantage to go public. There's nothing in the confidential S1. There is no price range, no volume offering. We don't have any terms disclosed. But there is a race now for what is a limited, finite pool of capital. There is not infinite liquidity out in the world. So SpaceX raising $75 billion, Anthropic maybe in the fall, OpenAI, we still are reporting that the confidential filing could come any time. And Alphabet going to market to raise $80 billion. There's an HSBC note this morning that says exactly that. It is a race and competition for capital at this point. There is a lot of interlink between Alphabet and Anthropic as a case study and example. Anthropic is spending $1 billion or more a month on SpaceX compute. They all need cash. They're all their fates are all closely tied. But that's a really interesting way of looking at it.
I love that way of looking at it. These deals are all competing for the same institutional pools of capital. Ed, thank you very much. Bloomberg Tech co-host Ed Ludlow, and as Matt mentioned, he'll be sitting down with the HPE CEO Antonio Neri today at 11:40 a.m. New York time. And as Matt also mentioned, the pools of capital
are huge.
And they are looking for deals and ways to make more money. Among them, Ken Griffin Citadel is prepping a program that would pay other hedge funds for their best ideas. Joining us now is Bloomberg's chief hedge fund correspondent, Nishant Kumar. Nishant, I think about strategies like this often on the sell side. You pull a bunch of sell side analysts, get their best ideas, maybe trade on it. What does it look like to do the same thing on the buy side?
Well, it's the same thing. Actually, sell side is the origin. 2.5 decades ago, Marshall Wace pioneered that process. It collected information from sell-side analysts and sliced and diced and removed all the noises and biases and tried to get signal out of it and then potentially trade on those ideas, or at least some of those ideas. It's no different than someone sitting at another hedge fund or asset manager or an analyst on those desks providing with the same idea. So it's the same process actually. So just the sell side is extending into the buy side for this process.
I love the last graph in your story where you point out, Nishant, that the hedge fund industry's big multi-strat firms like Millennium, Citadel, Point72, they have more capital than they have the capacity to deploy. Where is all this money coming from?
Well, all these multi-strats have record of producing steady returns for, a long period of time. And that's why investors are getting to them and investing more and more to them. So much that, most of these large hedge funds have stopped actively raising money. And some, including Citadel, have even returned like billions of dollars in the recent year. And that's why this alpha capture makes sense. Because they have so much money, if they want to manage more money, they want to look for newer ways to deploy that capital. Some hedge funds are doing it by allocating a part of money to external traders. Some are using alpha capture model so that they get more data, more intelligence, and potentially they can turn some of those signals and intelligence into trading signals and ideas that they can trade on.
All right, Nishant, great story. Recommend everyone check it out on the Bloomberg terminal or Bloomberg.com. Bloomberg's Nishant Kumar covers hedge funds for us out of London. Now, quick check at what's going on in the markets. We're looking at red arrows here. S&P futures down 0.3%, but we did see the cash close yesterday at near as damn it to 7,600. I think it was 7599.9. And you can see NASDAQ futures are also down about 0.25% here. Treasury yields are coming down, so 443, 444 on the 10-year, and oil is coming down as well, although Brent's only off 15 cents. It's trading at 94.78. Let's get a look at some of the single stock stories we're following for you today. Dollar General raised its earnings outlook as shoppers look for discounts, and this is one Meredith Whitney flagged to us yesterday.
Indeed, yeah. I mean, it does show that there is strength. This is certainly not an upper-end consumer shopping here, shopping there. A similar type of strength coming through for the consumer. Victoria's Secret is surging on an earnings beat and a raise as the CEO Hillary Super's turnaround plan gains momentum. Citrini made a great point. Setting fashion trends, the people who are spending are women between 18 to 24, and portfolio managers are decidedly not young women aged 18 to 24. So it was like a big missed opportunity for this market.
But the insane thing is that this stock is already up 160% in the past 12 months. So this goes on top of that.
And it also had a lot of short interest in it, a lot of short sellers because of that big gain, so getting punished today.
I saw that S3 data. All right, Marvell is surging after NVIDIA CEO Jensen Huang merely suggested it should be worth more. He said it's the next $1 trillion company. That's would be more than a fourfold increase for the company, and it's headed that direction today with a 16% gain.
Anyway, its market cap just about $200 billion. So yeah, has some ways to go.
Coming up, President Trump has just named Bill Pulte as acting director of national intelligence. More on how and why from Washington, D.C. next. This is Bloomberg Open Interest.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top of the bottom, make the sushi shape the more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1 to 6.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Let's get now to high interest. Look at what's making headlines around the world. Short seller Andrew Left, the founder of Citron Research, was convicted of securities fraud after prosecutors accused him of misleading social media posts to move stocks and profit from rapid trades. A Los Angeles jury found him guilty on 13 counts. Left denies wrongdoing. He plans to appeal and faces sentencing on August 31st. President Trump says the U.S. could reach an interim deal with Iran within days. He said that again. Despite tensions sparked by Israel's expanding military campaign in Lebanon, Iran wants a Lebanon ceasefire included in any agreement, while disputes remain over shipping routes, frozen assets, and Tehran's uranium stockpile. And President Trump has just announced he is tapping Bill Pulte, the head of the Federal Housing Finance Agency, as the acting director of national intelligence. Trump posted on social media Tuesday that Pulte would also remain in his role as FHFA director. And as chairman of Fannie Mae and Freddie Mac, Tulsi Gabbard has announced that she would step down from her role as director of national intelligence just this month. Let's get to Bloomberg Washington correspondent Tyler Kendall. Tyler, so what do we know about Bill Pulte's experience in the intelligence industry? What does he bring to the table for President Trump?
Well, Matt, at this point, there's a lot of big questions here about exactly why President Trump made this announcement and why at this moment, though, of course, it does follow, as you mentioned, Tulsi Gabbard giving her resignation in for DNI. President Trump saying that Bill Pulte will remain as the head of the FHFA. But keep in mind that an acting position means that he doesn't need to be Senate confirmed. So perhaps it's unclear if we'll get total answers around what his experience in this particular area does look like. Pulte is, of course, a very staunch ally of this White House. We have become very familiar with him because he has led some of the administration's staunchest criticism when it comes to the Federal Reserve, and also led that probe that we are still waiting to see resolved when it comes to alleged allegations of mortgage fraud by Fed Governor Lisa Cook. Bloomberg News had reported back in November that Bill Pulte was originally passed over for some top posts at the Department of Housing and Urban Development before ultimately being tapped for this FHFA position that he currently leads. But President Trump, in this post on Truth Social, really applauding Bill Pulte, calling him this loyal ally, and saying in part, quote, that he has been managing the most sensitive matters in America, the safety and soundness of the markets, and over $10 trillion at Fannie Mae and Freddie Mac. So we'll see how this dovetails into the president's national security priorities, because, of course, there is now this hole with Tulsi Gabbard leaving the administration.
Tyler, it also raises important questions, given we are in the middle of a war right now, and one that seems, again, to ever be on a knife's edge, with the president saying recently, I think you're talking about over the next week in terms of reaching a deal, but at the same time, what's happening with Israel and Lebanon? Because this had been the sticking point and why Iran reportedly has stopped talking to the United States. The president says that they will be reaching some sort of agreement, or they'll stop shooting at each other, I think was his exact words. Have we heard from the Israelis on whether that's the case?
Well, we seemed to have gotten a different tone from Israeli Prime Minister Benjamin Netanyahu after what was reportedly a very tense call with President Trump yesterday. Netanyahu did confirm that Israel has plans to pull back from a planned attack near Beirut, but that ultimately the Israeli operation in southern Lebanon would continue. Now, we should, of course, say that Israel isn't a party to the U.S.-Iran negotiations, but Iran at this point has long maintained that a ceasefire in Lebanon is going to be required for any sort of deal. And it really did show up as the sticking point here, as we saw President Trump had to pursue the diplomacy himself, getting on the phone directly with the Israeli Prime Minister as well as with representatives of Hezbollah. At this point, the White House says that it has made progress, that it has appeared to have gotten over this apparent roadblock. President Trump said that negotiations are continuing at a, quote, rapid pace. And we can say that Iranian state media did report overnight that negotiators are looking at the, quote, final text that they want to supply the U.S. to review. But Matt and Danny, at this point, we also heard from Iranian state media saying that there is still this very high risk that we could ultimately see the talks collapse.
We did see just a couple of hours ago headlines from the IDF saying that Israeli forces were likely to go into southern Lebanon, reminding residents of a city there to evacuate. I want to know about an issue much closer to home. President Trump's $1.8 billion weaponization fund. It may be put on hold, at least that's the signal we're getting from the administration, as I understand it. But do we know about the immunity that he's given himself from future IRS probes and maybe even from any future litigation from the federal government?
That right now is the biggest question, Matt, because we did get this signal yesterday from the Justice Department that they would temporarily halt this planned weaponization fund. So that means it's going to be put on hold for now. But then there's conflicting reporting. Some sources are saying that the fund is completely scrapped. Others are saying that this is just a halt. But the biggest question remains how this impacts one of those provisions in that settlement between President Trump and the IRS, which established this fund on one hand, but then also, as you're mentioning, established that President Trump and his family members wouldn't be subject to probes in the future. It's not just Democrats, though, who have raised these questions. We really saw yesterday Republicans put up demands that they want more clarity on exactly whether or not this fund is going to go away. And they do have the power to make those demands because currently it's Republicans who are holding up this planned reconciliation vote to get more money for some of President Trump's top priorities related to immigration and law enforcement. We were actually live on the air last week on Balance of Power when Republicans had said that they weren't going to move forward with those priorities over concerns with this weaponization fund, what sort of guardrails could be put on it. But now it appears that the party is coalescing around this idea that they want the fund to be done with altogether and completely. So definitely need some more clarity here, including from Senate Republicans who are demanding that they need to see some firmer commitments from the administration on exactly what this is going to look like in the future.
Tyler, thank you very much for that. That's Bloomberg's Tyler Kendall, again, on breaking news coming out in just the past few moments that President Trump has tapped Bill Pulte, the current head of the Federal Housing Finance Agency, as the director of national intelligence, a man who does have no experience in military or intelligence, but is quite loyal to the president. Coming up, why Rayanne Mitrione from Callan Family Office says the S&P 500 may be undervalued as it hits another all-time high. This is Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got
got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Earnings have been so stellar this quarter that the S&P 500 is actually trading at a bargain compared to the start of the year. Rayanne Mitrioni from the Callan family office says valuations are elevated, but this has been an earnings-driven market. On a forward PE basis, the S&P 500 is actually trading at a slightly lower valuation than where it started the year because earnings projections have grown significantly. Let's bring in Rayanne herself, the Callan family office market strategist and founding partner. So how much further does it have to go then? Because we've already seen record after record really driven by strong earnings.
Good morning, Danny. We've certainly seen a lot of momentum, especially since the March lows. And a lot of that really has been supported by the strength in earnings that we saw in the first quarter. We came into earnings season with an expectation of earnings growth of 13%. And that really ended up around 29%. So that's a really big difference. And all along the way, we've also seen estimates moving up for the rest of 2026 and into 2027 on where those projections for earnings are. So even though we've seen stock prices move up, the earnings are moving up, basically in tandem. So we haven't seen valuations get that stretched as a result of this move.
Yeah, the forward 12-month price earnings ratio for the S&P is less than 22 right now. Does that continue, you think, even as we raise the P?
I think that can continue. We've seen, we're having record productivity and profit margins. And if that continues, obviously, that's good for earnings. That's good for the broader economy. Yep. And that'll continue to support stock prices. It's not that there are no risks out there, but there's certainly a lot of support of why this can continue.
All right, you know what, Rayanne, we're going to take a quick break, come back with the opening bell, and then more with Rayanne Mitrione after this.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail.
But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Moments right from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. Let's check quickly on futures after hitting 75.99 in the cash trade yesterday. You can see S&P futures are off about 0.2%, even as yields come in and oil drops, although it's very slight, that drop in crude. NASDAQ futures really unchanged now. At the New York Stock Exchange, Dime Commercial Bank ringing the opening bell. Over the past 5 years, the shares are up 7%. But if you've reinvested your dividends, it's a 28% gain. Maybe you would have been better off with the index. Xenon Pharmaceutical ringing the opening bell down at the NASDAQ. They're celebrating some success in epilepsy drug trials, and their shares over the past 5 years are up 185%.
Okay.
So that's why they're so happy. Plus, it's a bucket list thing, right? You get to ring the opening bell. You get to start trading in America.
It looks like they maybe, No, they look very happy. Good for them. Very happy.
This guy has a Band-Aid on his head.
I thought it was confetti for a moment, but I think it is a Band-Aid. I don't think they drop confetti at an opening bell, do they? They should.
I think it is confetti.
Oh, really? They do confetti?
Yeah.
Oh, that's cool. I did not realize that. Anyway, Matt, at the open, I'm watching Alphabet after it announced plans to raise $80 billion to help fund its vast spending on the AI. A lot of that is going to come through equity offerings. And again, this is so consequential because this is no longer just a balance sheet story. This is no longer just spending on debt. It is a dilutive event. Not just for Alphabet, but for the entirety of this market. There's a lot of the same institutional pools of capital competing for not just Alphabet shares, but the mega IPOs. Yes, Matt, there's a lot of money chasing things, but what happens when that supply starts to catch up?
I think it's not just a dilutive event. It's just so cool to see SpaceX say, we're going to raise $75 billion, and then Google says, hold my beer for a second.
Yeah, we could do that in our sleep. We don't need it. We don't even need to IPO, you know?
Hewlett-Packard Enterprise is surging on much stronger demand for AI products than estimated. The stock had gained more than 60% in the past month before today's move. Now it gets ratcheted up another 35% in the cash trade, 63.49 the level. Let's bring back Callan Family Office market strategist and founding partner Rayanne Mitrione. And Rayanne, you know, everywhere you look, there's just mountains, I mean, not in my bank account, but everywhere in markets, mountains of cash, right? Keeping spreads super tight. Hedge funds have so much capital, they don't have the ability to deploy it all. Google can just snap its fingers and raise $80 billion. Where is this coming from, and what happens if it gets reversed?
That's a great question. And certainly when you see this much momentum moving up and supporting in one direction, if anything were to change, it can move hard in the opposite direction. It creates some fragility. But there is no shortage of interest in investing in all things AI related. And we do think we're still in early stages of this. So while we're seeing this incredible CapEx that's been happening, you know, 500 billion last year, or north of 700 billion this year, potentially over $1 trillion next year. And everyone wants to be a part of that story and invest in any way they can. So even though we're seeing these incredible capital raises, there does seem to be the demand to support it right now.
I still was talking to someone and just looking at private markets, which I know you also participate in at Cowen Family Office. The insurers have been a large pool of that capital that's been going towards a lot of the AI infrastructure build out. But someone made the point to me that if you look at what plans are going forward and the intense need, there literally isn't enough capital to fund the necessity that we need for AI infrastructure. You combine that with all the debt that's being offered, be it 100-year notes from various hyperscalers that's easily being swallowed. You add in the mega IPOs from SpaceX to Anthropic to OpenAI ran. Is there a big risk that supply starts to catch up with demand?
There is a risk because everyone is in this area, but the demand is extraordinary. And like I said, I really do think we're still in the early innings of this. And there is going to be explosive demand as companies really start to figure out more broadly how to use this, how to integrate it. And the demand is going to be extraordinary, really, across industries, across companies, across the world. So for now, it does seem like it makes sense that everyone is doing all this spending and raising capital to be competitive in this environment, because there will be significant returns on this over time.
Is there any place you think, Rayanne, that the market hasn't yet identified a bottleneck? We've moved from, first these large language models to the chips, obviously, and then the power, and now we're looking at like HVAC guys who are going to help build these data centers. Like, what's the next thing that this market's going to bid up?
That's a great question. I mean, we certainly have seen that there's this seemingly unending demand for chips, and it's certainly spilled over into industrials and into the power generation sector. It's hard to say where the next winners will be that will benefit from this, but really anything that's going into building out these data centers and continuing to deploy on this AI, anything can happen in this space.
In the meantime, perhaps in the consumer, real economy, whatever you want to call it, those earnings look really strong too, Rayanne. I mean, just today we had one of the dollar stores reporting very strong earnings, Dollar General, which, is not a high-income consumer. Victoria's Secret also posting extremely strong earnings. Does that lead to its own sort of problem, though, that perhaps the consumer is not as weak as we thought, and some of the inflation is demand-led, not just supply?
There is some of that. It's a little bit on both, right? We've seen inflation tick back up somewhat as a result of oil prices and the spillover from there, but consumer spending has remained strong. And some of that was supported most recently by the tax refunds that were elevated, and we'll see if that continues. But so far, there's not much to support that there's any significant weakness coming from the consumer. And that really is great, because consumer spending makes up 70% of our economy. So we want to make sure that that's continuing, but obviously not to the level where inflation continues to move up in a concerning way, because that obviously leads to other issues.
I mean, we heard from Beth Hammack today saying, this inflation number may not, at 3.8%, may not get down to 2 if they don't help with some policy, which is like, okay, that's what they're supposed to do. But do you see the Fed raising rates? Is that potentially going to turn the inflation problem around, or just gum up the economy?
It's a question mark. I mean, we came into this year talking about rate cuts, and now that's basically entirely priced out, and we're looking at basically 50-50 odds of whether we'll see a rate hike by the end of the year. And right now, the Fed has the luxury of really waiting and seeing what direction this goes in, if we see inflation continue to trend up or start to stabilize, because we have had a lot of stability as it relates to the labor market and the economy broadly. So they're able to kind of pause and see where we go from here and what the data shows. But it's possible, if it continues, that we do see a rate hike at some point in the future.
Hey, Rayanne, thank you very much for joining us this morning. That is Callan Family Office market strategist and founding partner Rayanne Mitrione. Let's now get a check on your equity markets about 8 minutes into your trading day. And we fall from highs after reaching 5 consecutive highs for an 8 straight day rally, the first time we've done that so far this year. We're only down about 0.1%. Again, is it because of a dilutive event of Alphabet, of all the need of capital going into various places in this market? Leading us this morning, some of the AI plays, Broadcom, NVIDIA, those go to the top of the pile. We've been hearing from Jensen Huang at that event in Taipei. And we're also seeing Hewlett Packard, really strong earnings too. To the downside this morning, it's Microsoft, Alphabet, Amazon, Intel, Palantir. So a lot of the mega cap names dragging us lower. Again, Alphabet with that big equity raise. Looking at the sectors, communications are down. I showed you what Amazon was doing, so that's part of the reason that we're down. Consumer discretionary falls, even though we've had some good earnings from the like of Victoria's Secret. At the top of the pile, you see utilities, industrials, and energy, Matt.
All right, coming up, Google falls just slightly after an $80 billion equity offering. We talk about that and Anthropic with an analyst from Jefferies. Brent Thill joins us next. This is Bloomberg Open Interest.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Heading for your first down day in 8 after 5 consecutive records for a total of 23 record highs so far this year. The S&P down just about 0.2%, a third for the NASDAQ 100. Let's get you some top calls, the analyst action that we are following this morning. First up, Goldman downgrades Intuit to a sell, saying fundamentals may be worsening as competition heats up in tax software. Shares take another leg lower this morning, down 8.5%. Next up, Arete is upgrading Meta. They cite the company's flexible cost structure, growing subscription opportunities, and progress in AI development. Shares down 0.5%. Finally, analysts weighing in on HPE after the company beat expectations, sharply raising guidance. Morgan Stanley points to strong server demand. KeyBank highlights better than expected cloud and AI results. Those shares up 24%, Matt.
All right, so some big moves in today's market to the upside for the most part, but Alphabet is going the other way. The Google parent raising $80 billion through a package of equity offerings to fund its AI plans. Shares, as you can see, are down 4 2/3% as the company takes advantage of the recent stock market rally and growing interest in its homegrown chips business. Let's discuss with Jefferies equity research analyst Brent Thill. He has a buy rating on Alphabet. And Brent, what do you make of this latest raise? I mean, I thought $75 billion was a stretch for SpaceX, but this seems like a pretty easy move from Google.
Yeah, I mean, we're going to spend $1.2 trillion as an industry next year on AI build-out. So 80 billion is kind of a rounding error. When you think about it, these numbers are huge, but Google is in such a great spot, and they're leading this charge with an integrated stack of their own frontier model, their hardware, the semi infrastructure, and they have more data than anyone in the world, which you need for AI. So when you go back to ultimately what's happening and why they're doing this, they are in such a leadership position with Gemini, and you have OpenAI and Anthropic confidentially filed to go public. It is literally 3 vendors at the top of the leaderboard if this is a PGA tournament. And these guys right now are Scotty Scheffler. They are so far ahead of everyone else. I think what they're saying is, look, we need to get ahead of this, and we need to get ahead of what is about to happen, especially with SpaceX, Anthropic, OpenAI about to go public. I think it's a good move. I think it's a move that they're trying to get in front of what is about to hit and ultimately get the right funding. And I think that our due diligence suggests they're in a great fundamental position. They're not doing this from a position of weakness. They're doing this from a position of massive strength. And just recently, they've launched a new solution called Google Anti-Gravity, which lets developers build applications really fast. And this is the potential to have a breakout hit. So they just, they have a collection of things going really well. And I think ultimately, get in front of what is about to hit. And we know we're going to go from $700 billion to $1.2 trillion to spend. The AI investment cycle is still really early. We're not in a bubble yet because we haven't been able to fully roll out these data centers and get the services up. And so I think, again, it's a good move tactically for them to make this transition.
Brent, can I just clarify then? Is it a race for capital? For example, if Alphabet tried to do this after we got these mega IPOs, would they struggle to get that fundraising done, to get the equity sale done?
Perhaps. I mean, I think ultimately a lot of our clients are asking, what do I sell to get ready for SpaceX, Anthropic, and OpenAI? I mean, we're talking about a lot, when you think about the proposed size of these transactions, I mean, it's trillions. So ultimately, what do I bring down to make room for? And so I think there's going to be a transition. So, my independent advice is if anyone was looking at the public markets right now, you'd want to do it now ahead of this or just wait, because there are, 3 giant weight turbulences that are about to go through the air. And so, clear it, get it done now versus what's happening. I think Google could come to the market anytime, honestly, given their strength and their size, their cash flow. I mean, remember, they have $126 billion in cash. They've got massive cash flow. So I don't think that this is an immediate need, and they're in a they've got a bad balance sheet. That's not what's happening.
Brent, on the one hand, these PE ratios are not shocking, right? I mean, wherever you look, you see the E rising, so that the P can barely catch up with it. Google is trading at only 28 times forward earnings, which isn't a crazy like .com number. On the other hand, there's just, it seems like a sea of cash going into every asset in these markets, whether it's fixed income or equities or hedge funds, private assets. Like, there's so much money. Where is that all coming from?
There's a lot of money that's going into this, and I think it's being funded by a whole group of companies. Everyone thinks it's super narrow, but it's actually a pretty widespread group of capital. Ultimately, I think that the question is this capital going to pay off in an ROI? And I think it's too early to make the call long term, but tactically, we're seeing a big ROI on this investment. The capital is freely available, and I think, again, we've seen this across the board. You know, when the CEO of SoftBank says this is 50 times larger than the internet, this, in my opinion, will create capital from globally to chase this. Remember, every board globally is talking about AI. This isn't a bunch of Silicon Valley companies here in San Francisco talking about AI. These are global companies, boardrooms, and they never ever talked about Bitcoin, Web3, client server to cloud. They never talked about any of the other tectonic shifts ever in the boardroom, okay? Every board's talking about this globally. So the money's coming globally, and it's coming from every industry, from healthcare to aviation to financial services. And I think the pushback now is, okay, well, we're gonna spend 1.2 trillion in the next into next year on CapEx. Where's the ROI? And you're going to have to wait for that ROI.
One aspect of the ROI, because there's been recent stories. There's one from Axios last week that an unnamed company accidentally spent $500 million in a single month on, I guess, oops, token maxing. I didn't set any limits on Claude and how much my employees could use. Apparently, Mythos, according to the information, is incredibly expensive too. For now, Anthropic, the other LLMs, are subsidizing a lot of it. Once that stops, are we going to see a lot of business models really pressured in just how expensive it is to run these models?
Yeah, I mean, I think, our spend went from a few thousand to hundreds of thousands. So, when you look at, I think we're all going through this, but ultimately what's happening is if you get the ROI, you're taking money out of your IT budget in other places like services. Remember, services is a $2 trillion industry. You think about employees. Every company in tech is slowing their headcount, if not reducing their headcount. So ultimately, this is coming out of human capital. At some point, and this will slow job growth and potentially cut it. And we're starting to see signals of this. It's not I don't think it's as severe as what the CEOs of OpenAI and Anthropic have said, but I think we're seeing the money coming from other places other than just the IT budget. Some have been incremental dollars given to by the board from other areas. Some I think we're going to see in other areas, and ultimately I think we are going to see a job slowdown and potentially cuts happening, and those jobs will be repurposed somewhere else. So that's happening right now.
So do you think that, well, okay, we don't have time to go into it, but if we do see a job slowdown and cuts, it'll be interesting to see how the Fed reacts to that. Maybe that's not really the ball of wax we want to unwind here. Brent Thill, thank you so much for joining us from Jefferies. Hope we can catch up with you again soon. Coming up, SpaceX is working to pay lower banking fees than usual for its IPO, which is like, duh. If you're going to raise the most money ever in an IPO, obviously your fees are going to be way lower. That's next anyway. This is Bloomberg Open Interest.
up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
SpaceX is negotiating to pay minimal fees to Wall Street handling its IPO, but banks are still likely to rake in about $500 million from the debut. Bloomberg Chief Wall Street correspondent Sri Natarajan joins us for more. Sri, I'd imagine that the power is with SpaceX here, because everyone wants to be part of this IPO, that they could probably throw their weight around.
Look, everyone in the finance operation at SpaceX is very much like Matt Miller. They're going to the banks and saying, if you're going to help us raise $75 billion, do not expect your usual fee. But the interesting part here is, on a typical IPO, and when we say typical IPO, think less than $1 billion, which is what you'd raise in a normal, regular IPO. Banks charge between 4 to 7%. And that fee does go down pretty sharply for the mega IPOs. But even in those cases, and if you think about some of the biggest ones in the last decade, the Facebook, Uber, Alibabas of the world, it would still be a little over 1%. So if SpaceX comes in at under 75 basis points or under 0.75%, that will be one of the lowest IPO fees on record. And it's also an interesting point because the last time we even hit that mark, or at least we can think of a big occasion, was the General Motors IPO back in 2010. And that was a whole different scenario because at that time, Wall Street was negotiating with the US government, which was the majority owner of the automaker back then.
This will still be the most money anyone's ever raised in terms of fees from an IPO, right? Even if it's only a fraction of a percent.
And that's the important point here, that even if it comes in at 0.6 or 0.7%, you're talking about a fee payday that comes in at roughly $500 million, yes, split among 23 banks, where you expect the lead left, the Goldman Sachs and the Morgan Stanleys, to have the biggest chunk of that fee pool. This is an extraordinary fee event for the bank. But the one note of caution is, as we think about the rest of the year and as investors, analysts try and factor in what will this mean for bank earnings and bank results, and you think about OpenAI and Anthropic, you may want to consider what you may have previously thought was going to be $1 billion, $1.5 billion payday is not going to turn out that way, and you should expect some sort of a discount when OpenAI and Anthropic hit the market as well. So that's just something that investors have to factor in, because when we heard the news that Goldman and Morgan Stanley were leading the SpaceX IPO, you should take a look at the stock and the reaction there at that time. And those stocks both were up, I think, 5 or 6% on the day because there was a lot of enthusiasm behind that. So this maybe tempers that enthusiasm ever so slightly, but there is no taking away from the fact that this is an extraordinary event for the banks, and this will be an extraordinary year for them if these IPOs go smoothly.
Sri, thank you very much. This is Bloomberg.
Tariffs, I think,
are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
ABC News. I'm Sherry Preston. President Trump has tapped Bill Pulte to be acting director of national intelligence. Pulte is a federal housing finance director and the chair of mortgage giants Fannie Mae and Freddie Mac. He'll keep those jobs and will take over for Tulsi Gabbard, who resigned last month. The polls are now open across the country in many states holding primaries. ABC's Alex Stone has more on the very crowded races in California, one for governor, the other for Los Angeles mayor.
The top two vote getters for both governor of California and mayor of Los Angeles will move on to the general election tonight. Unless one candidate in those races gets 50% of the vote, then they win outright. But that's not likely based on polling. For governor, former Health and Human Services Secretary Javier Becerra is leading polling here. The question is who will be in second place and continue on to November, Republican Fox News host Steve Hilton or Democratic activist Tom Steyer. And for mayor of L.A., Karen Bass is in the political fight for her life against one-time ally Nithya Raman and former reality TV star Spencer Pratt. Alex Stone, ABC News, Los Angeles.
Russia bombarding Ukraine overnight. At least 17 people in Kyiv were killed, says ABC's Patrick Reevell.
We saw Russia launch a very large number of ballistic missiles, which are the most difficult thing for Ukraine to shoot down right now. It's only able really to do so with U.S.-made interceptor missiles, and that is why you are seeing President Zelensky issue again this plea for the U.S. to help with that.
The southeastern city of Dnipro was also hit. President Trump says the U.S. will have a deal made with Iran over the next week, following a phone call with Israeli Prime Minister Benjamin Netanyahu on Monday that was described as tense. Iran insists Israel's further incursion into Lebanon is a violation of the ceasefire. Secretary of State Marco Rubio on Capitol Hill. He appears for back-to-back congressional hearings, first time since the Iran war began that he's faced questions. You're listening to ABC News. President Trump reacting to the Justice Department's promise to abide by a judge's ruling blocking the $1.8 billion so-called anti-weaponization fund. ABC's Jonathan Karl.
The president, I called him up about this, asked him what he was going to do about it. He told me he's going to abide by the court's ruling. He said, look, this weaponization fund is a wonderful thing. He told me it's a wonderful thing. But what can you do? If a court says it can't happen, and right now a court is saying it can't happen, you know, what can you do? So it's stuck now in the courts.
A change in policing at immigration protests outside a privately run ICE detention center in Newark, New Jersey. ABC's Phil Tate is there.
Now, Newark police, they're front and center, securing the half-mile stretch near Delaney Hall. Mayor Baraka called state police's tactics overly aggressive, announcing Newark police would be taking over. Days ago, state police were brought in by New Jersey Governor Mikey Sherrill in an effort to prevent ICE from escalating violence and to keep the state of affairs in check.
Security extraordinarily tight for the World Cup, including for those who want to see the games from the sky.
Drone operators who enter restricted airspace could be fined $100,000, as nearly a dozen cities across the U.S. host 78 World Cup matches. Officials say immigration agents will be involved in security operations, but their focus will be on counterterrorism, not immigration enforcement.
That's ABC's Hannah Battah. I'm Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube, streaming live on Bloomberg.com as well. Scarlett Fu, Paul Sweeney with you here, the Bloomberg Intelligence Program over the next 2 hours. Coming up, we're going to check in with Ethan Bronner, Bloomberg Israel Bureau Chief, to get the latest reporting out of the Mideast. Matthew Bloxham joins us, Bloomberg Intelligence Senior Tech Analyst. Some of the tech stories. How about Alphabet coming to the market, raising $80 billion of new equity? Folks, this is the first time they've come to the equity market since their IPO, and they did a quick follow-up for the insiders, but that's it. So this is really big news there, so we'll get the latest there. Andrew Clinton, CEO at Clinton Investment Management, to discuss the latest on the markets here. Carly Gardner, Senior Commodity Strategist and Broker to Carly Trading, talk about the oil market. We've got oil kind of steady here. WTI crude oil about $92 a barrel, so we'll get the latest on global crude. Right now, let's go to John Tucker, kick this whole thing off with the Bloomberg Business Flash. John.
All right, this Bloomberg Business Flash brought to you by Eisner Amper. Most advisors tell you what happened. Eisner Amper tells you what to do about it. Assurance, tax, outsourcing, and advisory services built for businesses that can't afford to guess. EisnerAmper.com. So the data at the top of the hour, I had to clear my glasses because I thought it was a mistake. Job openings jumping in April, actually to the highest level in almost 2 years. Layoffs also fell. So available positions, this is the JOLT survey, available positions rose to 7.62 million from 6.89 million in March. So more signs the labor market remains resilient. I guess if you could fog a mirror, you can get a job. I mean,
I don't know. If you ask a college graduate that, I'm not sure that's.
I know, that's the question, right? What kinds of job openings are available?
Right. Oh, I can think of all sorts of jobs for my college graduates. The major averages right now, they're mixed. Oil slightly higher, up, 7 cents for Brent, 75.05. 8 of the 10, 11 major indices groups in the S&P 500 were higher. The biggest drag coming from communication services that's home to Google parent Alphabet reflects some of the market. I'm guessing this reflects some of the market dilution after this big deal that they put together, this huge equity deal. HPE, Hewlett-Packard Enterprise, best performing stock in the S&P 500, up 25%. Second quarter results beat expectations, raising the full year forecast. Everybody's building out their AI infrastructure. Meantime, Evan Brown at UBS says there should be no shortage of investors to fund the build-out of AI.
I think you have to be invested. I mean, ultimately, I think we're still early stages in this AI build-out. Adoption is relatively low for consumers and businesses compared to where we think it can get.
Right now, the S&P 500 down just 4, the Dow down 123. The NASDAQ Composite Index 8 points higher right now. Anything in the green would be a record for the major averages. Who paid for lunch yesterday?
Not me.
Because Apple said to be launching a new service aimed at making it easy to split the bill. Sources tell Bloomberg this new tool is going to allow iPhone users to photograph the receipt, assign items to different people at the table, and generate payments requests. So this will be included in the iOS 27, the next version of the.
And it'll also
operating
divvy up
system.
taxes and tip for you as well?
I guess.
Because
I mean,
that's always the part that
I pay
gets
for
tricky.
everything. Nobody pays.
just go to lunch with Paul or Tom. Make
I
it
like
easy.
that. Okay.
We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Market Drivers today is brought to you by IBKR. For the past 3 years, Interactive Brokers' individual clients averaged 24.3% annually, beating the S&P 500. Lower cost and access to 170 plus global markets matter. Visit ibkr.com/performance. As John was just reporting, we got some red on the green on the screen here today. Let's take a look at some of the stock movers today. I'm Paul Sweeney alongside Scarlett Fu. We're joined by Bloomberg's Matthew Griffin. Matthew, what are you looking at today?
Well, Paul, you speaking of AI infrastructure, one name that's been on my screen all morning is Marvell Technology. The chipmaker shares are up about 25% after NVIDIA's Jensen Huang said that they will be the next business to hit a $1 trillion market valuation. Marvell, that's ticker MRVL. They don't make these AI processors that NVIDIA does, but they make other types of chips and networking equipment that are used in data centers. And of course, all of this spending going into data centers is just pouring across the supply chain into companies that make, every product, big or small, that's used there. We're seeing another example of Wong's sort of golden touch here. You had software stocks rallying yesterday after he defended them against some of these AI concerns. And this may be one that's a bit close to home. NVIDIA actually took a $2 billion stake in Marvell 3 months ago as part of a partnership.
And there we go back to the whole circular financing thing and the insidious relationship between all these different players. All right, what's next?
Well, Scarlett, another one that is seeing a big rally today is Victoria's Secret. They have a new ticker, VSXY. They're up 48% this morning after they beat earnings expectations and boosted an outlook. They now see annual net sales as much as $7.13 billion. They saw a little under $7 billion before. There could be a bit of a short squeeze going on here. Data from S3 Partners shows that almost 20% of their tradable shares are held short. That being said, this is also probably some fundamental optimism. There's this turnaround effort going on under CEO Hillary Super, and investors showing today that this is a step in the right direction.
All right, here's the hard segue of the day from Victoria's Secret to Deere. What's going on John Deere?
Yes, and Deere not seeing the kind of explosive rally that these other names are, but, up about 3% respectable. That's ticker DE. That's after the Trump administration said it was going to cut tariffs on farm equipment starting June 8th. It's these metals sector tariffs. That's actually the ones that are applied to things like tractors, combines, harvesters. They're cutting them to 15% from 25%. This is something that has emerged as a problem for the administration in an election year, midterm year. Farmers are struggling. They don't want this equipment to be any more expensive than necessary, and tariffs have been a pain point here. They also cut levies on residential HVAC systems, construction equipment, so you've got names like Carrier and Caterpillar also rallying.
All right, good stuff. Thank you so much. And of course, you brought us a story about Caterpillar being a great play for those who wanted to get into AI but wanted to go through an industrial route. Matthew Griffin is one of our Bloomberg Equities reporter here, and for more conversations like what you just heard, subscribe to our Stock Movers Reports, 5-minute audio reports on the biggest winners and losers in the stock market, available on Apple Podcasts, Spotify, or anywhere you listen. All right, when it comes to the Iran war, the president now says he thinks the U.S. can reach some kind of peace deal with Iran soon, with discussions continuing at a rapid pace. But a ceasefire in Lebanon is critical, according to analysts. So let's bring in Ethan Bronner. He is our Israel bureau chief, joining us right now from Tel Aviv. Ethan, it feels like Lebanon is key here. So what is the latest between Israel and the U.S. when it comes to figuring out the role of Lebanon?
Hi, Scarlett. Look, I mean, it's very confusing, as it has been for many weeks, in the sense that the president, spoke with many invectives angrily to the prime minister of Israel last evening, telling him not to go into Beirut and he's got to work hard for a ceasefire to get this thing going. But an hour after that, the prime minister issued a statement saying, we've made clear that we're going to go into Beirut if we need to, if Hezbollah continues to fire at us. Now, Hezbollah has not continued to fire at Israel since 2 a.m. Israel time, so the last 15 hours or so. But it's a little hard to believe this thing is going to hold. And there has been action in southern Lebanon between Israel and Hezbollah. So it's kind of unclear, I'm sorry to report.
And it's just, I think, for many folks here in the U.S., Ethan, that what's going on in Lebanon between Israel and Hezbollah is probably less well known here. How could this play out? If the U.S. and Iran come to an agreement, are the parties in Lebanon going to heed to it? What do we know about that?
Well, I think that what is clear is that, at least for the beginning, Israel will do what the United States asks of it. And if there really is a deal, I think that Israel will hold off. I think it's complicated with Hezbollah. So Hezbollah is armed and trained and paid for largely by Iran, and Iran has also been encouraging Hezbollah to attack Israel. Now, there's a whole chicken and egg problem here because, Israel was outside of Lebanon for many years, and Hezbollah would sort of shoot rockets and so on occasion. Now Israel is deep into Lebanon and moved 1 million people out because it says that Hezbollah has been firing into Israel as part of solidarity with Israel's war against Iran. So now the question is, who leaves first? And there's another huge technical problem, which is these fiber optic drones that Hezbollah has been using very effectively against Israel. People have almost 60 seconds at most to get out of the way, and people have been harmed and killed here. So, there's an election coming up in 3 months here. It's a pretty messy situation.
It certainly is. One thing that Paul brought up, and I think is important, is that we have not had in-person negotiations on this war in, it feels like, weeks, if not months. The last time was when J.D. Vance went to Pakistan, and we haven't gotten anything similar to that since then. How critical is something like that, these face-to-face negotiations? Because right now it's just the two sides exchanging messages.
You're right. I think it is a good point. Obviously, if we're going to get anywhere fundamentally, it seems likely that face-to-face is going to be required. On the other hand, we have nothing to go on but what we're being told. And the president says we're getting close through these message exchanges. There's reason for skepticism because he's been saying it for a long time, but perhaps they are. One of the things that's so hard to know is, how difficult things are for the Iranian government. We know that things are difficult for the U.S. government, but how difficult is another question. The United States also has midterm elections coming up in November. The president claims not to care about them, but obviously he must. Gas prices and fertilizer prices and the general instability that this is creating. On the other hand, as a result of where we are, Iran and Hezbollah and Hamas seem stronger than one might have expected a year ago, and that's got to worry the president.
Ethan, thank you so much. Appreciate that. Ethan Bronner, Israel Bureau Chief for Bloomberg News. He's based in Tel Aviv. Again, the situation remains very fluid. We have the rhetoric coming out of both sides, coming from the president and also coming out from Iran, but you just don't know, are they talking past each other? You don't know what the actual communications are and what level they're taking place.
Yeah, we're getting conflicting messages constantly on this, and it continues, right? Nonetheless, markets seem to be kind of moving past it. The S&P, little change on the day. And I want to take this opportunity to highlight how it seems the stock market, at least, is completely unconcerned with geopolitics. And for people who are investing for the long term, for retirement, for their personal savings, That's good news. Or maybe we're building up to something that's unsustainable. These are some of the topics that we're going to be discussing on our new show, Bloomberg Money. Tom Keene and I will be hosting it every Friday
where
at
she was
12 noon.
going with this.
No, I had a point. I had a destination. This will be airing for the first time on Friday at 12 noon. We're going to be speaking with Jeffrey Rosenberg tonight of BlackRock for our launch party, where he'll talk about how this is not your father's bond world.
Interesting. Yeah, well, it's personal finance. That's a key issue for our viewers. That's coming up.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Let's start with information technology, best performing major industry group in the S&P 500 right now. And that, of course, is home to the semiconductors. Hewlett Packard Enterprise, individual leader in the index. It is up right now, 26%. After some bang-up earnings numbers. And Marvell Technology shares, they're up right now 25%. And thanks Jensen Huang, he predicted the company's going to be the next to hit the $1 trillion valuation mark. S&P 500 dead flat right now, 7,600. The Dow Jones Industrial Average down 162. NASDAQ 100 is up 49 points. Brent, the active contract, up 18 cents, 95.14 right now. In the yield space, pretty much dead flat. Twos are at 4.04%. The 10s at 4.45. Fees? We'll tell you what fees you're going to earn. Elon Musk, SpaceX negotiating to pay less than 0.75% for the $75 billion they're trying to drum up in the IPO.
I charge,
but that's still a lot of money.
I charge 7%.
Well, that's you, because you could demand that.
The lowest I ever charged was 3%, and that was under great duress.
But I mean, for something of this size, I imagine the fees would go down.
Under 1%, it's pretty standard.
Anyway, all right, so
Still,
look for that.
it hurts.
We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. Appreciate that. A lot of stuff happening here. We're going to get right to it. Scarlett Fu and Paul Sweeney. This is the Bloomberg Intelligence Program. We're broadcasting live from the Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Anthropic they filed first. It seems like they beat ChatGPT, whatever that thing is, OpenAI, all that kind of stuff coming to the public markets. I guess it's a little bit of a race to.
Yeah, and it definitely feels like OpenAI has lost some momentum with the trial, the court case between Elon Musk and Sam Altman. And Anthropic is all that anyone's talking about, right? Claude over ChatGPT all day long.
Matthew Bloxham joins us here. He's the senior media and tech analyst for Bloomberg Intelligence, based over there in London. Matthew, what do you expect? I mean, we're going to get SpaceX kicking off Thursday, presumably the roadshow. But let's talk about Anthropic here. These two big AI IPOs that are coming down the pike here. How do you think? What do you think investors are going to be looking for?
Well, I think with Anthropic, that they're just kind of looking for as much detail as they can get about the kind of revenue model, the momentum behind it. Obviously, we've been hearing data points recently that we're kind of back end of last year, then maybe the annualized revenue run rate was around the kind of $10 billion mark. It could be closer to $50 billion by the end of the year. And where they are on that pathway and what the economics of the business look like. Yes, it's similar to SpaceX. You just kind of live off breadcrumbs and suddenly you get a big download of data that kind of really helps you to understand the business model more.
Matthew, we characterize OpenAI and Anthropic as being in a race, but is it actually like that? If you have Anthropic going public before OpenAI, does that mean there's less demand for OpenAI's IPO?
Yeah, I think it's definitely right to characterize this as a race, regardless of what the companies might say. That these are huge numbers that companies are raising. I mean, we don't know yet how much either of these companies will look to raise. But if SpaceX is looking to raise $75 billion and Google's out there looking to raise $80 billion, it's going to be in the tens of billions of dollars. And there's only so much capital out there. And so, I think it's definitely better to go earlier than later, because if you go later, you're at risk that either the capital flow has dried up, or that those IPOs that went before you didn't go so well, or the market's taken a bit of a turn, and so you're kind of left, maybe either having to accept a lower valuation or a small amount of money. So I think going sooner is always better than going later when you're raising money.
I'm an old EV to EBITDA guy. Maybe I'll go a little price to free cash flow, but I don't know how you're going to value these AI stories. Do you think the market is going to be valuation sensitive at all, or is it just you take what you get?
I think it's a little bit of both, but I mean, we what have we got to play with? Nothing really more than EV to sales, and they're pretty eye-watering multiples. Even on that kind of forward multiple at $1 trillion, Anthropic's going to be on about 20 times sales. So you are having to extrapolate many years out to kind of reconcile that with an EBITDA multiple or an earnings multiple. And there's clearly a huge number of assumptions you're having to put in to get to those kind of forward estimations. So it's a kind of a moonshot trade, really, isn't it? That, you're kind of buying into the fact that in some way, shape or form, these companies that are coming to market are going to be the foundational businesses of the next 30, 40, 50 years of technology. And that, it's going to work out eventually for you.
Remember PEG ratios? and eyeballs and all the different metrics that people used to come up with during the dot-com bubble days. Feels like a total addressable market is a new one for this era.
Correct.
So, Matthew, before we say goodbye to you, as investors get ready to partake in these IPOs, they're likely going to lighten up in some of their exposure to existing tech holdings because otherwise they have too much concentration risk. What kinds of companies are most at risk then?
Yeah, I mean, it's just a good question, isn't it? I mean, it could be everything from NVIDIA, TSMC. I think you're kind of clearly going to be needing to think about companies where you have had great performance and that perhaps you're kind of prepared to do a bit of profit taking, maybe taking the view that actually, even if you sell a bit of NVIDIA, intrinsically, you're kind of going to get some benefit and some indirect exposure by kind of playing it through one of these other names. So yeah, it's a tricky one, but I think, probably a lot of portfolios are already inherently kind of fairly concentrated. So, given the numbers we're talking about, you're going to be having to look at these like mega cap names to kind of trim exposure.
Yeah, and it's going to be a test for that. What we hear about from strategists all the time, that there's a $7 to $8 trillion of capital on the sidelines just waiting to be deployed. We hear that all the time. I don't know.
8.3 trillion stuck in money market funds. But once you do lighten up on some of those NVIDIA holdings, for instance, how do you get back in and when do you get back in is another question.
Yep. Matt Bloxham, thanks so much. Appreciate it. Matt Bloxham, he's a senior media and tech analyst at Bloomberg Intelligence. He's over there in London, manning the shop over there. Let's talk about the municipal bonds. I'm the largest private creditor, I believe, to the state of New Jersey. So when I call the governor, the governor picks up on the first ring. Mr. Sweeney, how you doing? That's how many munis I own, being in a high-tax jurisdiction like New Jersey. Our next guest knows a thing or two about the municipal bond market. Andrew Clinton, CEO of Clinton Investment Management. Andrew, talk to us about the municipal bond market. How's that been performing this year?
Interestingly enough, munis have been doing pretty well. They're one of the best performing asset classes within the fixed income space year to date, outperforming treasuries and corporates. They've returned very strong returns over the last year in particular, and we're starting to see investors really taking note of that in terms of flows into the asset class. We're actually on a near record pace in terms of inflows into mutual funds in particular.
Let me ask a dumb question. Paul Sweeney lives in New Jersey, so he buys New Jersey muni bonds. Can I, as a New Yorker, buy New Jersey muni bonds, and do I get that tax benefit?
So you would get the tax benefit at the federal level. But again, as you think about it in the context of benefit at the individual level, Paul might actually benefit from owning something outside the state of New Jersey, as you might benefit from something outside of the state of New York, but it may not be New Jersey, or it may not be New York for you. Meaning that if you're a New Jersey resident, you could own something, let's say, from Texas or Florida or Nevada, where there is no state income tax and yields may be significantly higher, such that it more than offsets the actual local tax that you pay on the out-of-state bond.
What's a new issue situation look like? I know that it was a record year for issuance in 24, same in 25. How about how's 26 looking up?
So you're looking at record record new issuance again this year as well. So roughly 4% increase over last year. The good news is that actual inflow has been well matched with the amount of flows into the marketplace. So there's demand for those new issuance, and quite substantial demand, as we're seeing many deals multiple times oversubscribed. So clearly clients are starting to see the benefit of the very high tax-free cash flow they can achieve. 4% tax-free today is close to 7 or 8% taxable equivalent, and that's clearly resonating.
Andrew, you've been trading munis for over 30 years. For investors who buy munis, are they trading them or are they buying and holding to maturity?
I would say there's two segments to the muni market. There are those who are more passively oriented, where they buy bonds and simply hold them to maturity.
Paul Sweeney.
And that's a very effective way to achieve tax-free cash flow. As a professional manager ourselves and others like us, what we do is we try to add value above and beyond what you can achieve just simply by cash flow. That means considering credits that maybe you, Paul, might not consider on your own. For example, we're, as a manager focused on credit, we're suggesting clients think about moving down in credit quality, because the default differential is not meaningfully different between a AAA rated muni and a BAA rated muni, but the yield differential is quite significant.
How significant?
So it's roughly 100 basis points more income for a BAA rated security versus that of a AAA rated security, depending on the credit. And yet the default experience, according to Moody's, over the course of the last over 50 years has been 1% difference between AAA and BAA, meaning that 0 AAA rated bonds have defaulted versus 1% of BAA. So there's significant value moving down. Right? Saying it another way, very few, if any, BAA rated securities have defaulted and mature without a credit event, and yet you're getting substantially more yield as a result. So that's, again, the two different marketplaces create different opportunities.
For an average investor, what do you think is a reasonable allocation to the municipal bond market?
It's a great question in the sense that it depends on your particular investment horizon, meaning how long you plan to stay invested, and then ultimately your risk-adjusted return expectations. And that is to say that if you're a client who has achieved a great deal of success and you've accumulated a fair amount of wealth and you want to preserve that wealth as opposed to accumulate significantly more wealth, you could see an allocation of munis being quite high. I would even say in today's market, where you're getting equity-like returns from just the yield alone, you could argue a larger allocation to munis today makes much more sense than it perhaps did in 2021 when yields were close to 1 or 2%.
Yep.
So I would say that it varies by client, but for the most part, we see client allocations anywhere between 20 to 50% or more in some cases for clients who are saying, you know what, I've achieved all the success that I want, and I just want to preserve what I have.
Yep, there you go. Andrew Clinton, thanks so much. Appreciate that. Andrew Clinton, CEO, Clinton Investment Management, joining us live here in our Bloomberg Interactive Broker studio. You have to ladder your munis.
Explain.
By maturity. So
right.
Ladder somewhere.
So you have it all charted out?
I don't. Tony O.C. does at DBS. He's my man. That's what
okay, so you're a buy and hold guy when it comes to munis.
Yeah. Except all my compensation was back in the day was tied to, Wall Street and my bonus.
Yeah, so this was...
I didn't need any more risk in my life. That's where, some knucklehead screws up a trade December 31st. Poof.
Yeah, you can't be overly concentrated in equities and finance.
No. So I
now
sold
you're
every share the day it invested all throughout my Wall Street career.
Now you're just leveraged to the state of New Jersey.
Exactly. All right, what's going on in the markets out there? We got the S&P up a couple of bucks. The Dow's down 68. The Nasdaq's up 25. So absolutely nothing is going on. So that's not a bad thing. 10-year Treasury yields kind of hanging in there, 4.44%. And WTI crude oil, we're steady here.
Not doing anything either.
No, pretty steady. Tom Keene was shocked at Bitcoin today, off 4.8%.
Below $70,000.
Yep, below $68,000. He's wondering if he gets in off the triple leverage all cash and go out and buy some crypto. So we'll see how that plays out. We're going to have more coming up. This is a Bloomberg Intelligence. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Investors pretty much seem to be on the sidelines right now. Major averages, I'll call it little change to mix. Treasuries barely budging after the first batch of jobs data, the JOLT survey, only adding to signs of labor market resilience. So it seems to be reinforcing the case for the Fed to keep rates higher for longer at this point. Hewlett Packard Enterprise surging, the company delivering an outlook for annual sales topping the street's estimates. This is HPE up close to 25%. That's actually the best performing stock in the S&P 500 right now. And then here's one from the past, Victoria's Secret. Their ticker is now VSXY, so very sexy. Are they going to bring back those runway shows?
Hope so.
Okay, there's one yes vote here. That's jumping. The company beat earnings estimates, boosting its outlook. Victoria's Secret up 41%. Meantime, Seema Shah, principal asset management, says investors have pretty much been focused on one topic.
It's really been about AI, earnings delivery, the fact that these companies, not just that there's big expectations, but actually they continue to deliver. So I think that's what's driving markets.
Right now, the S&P 500, 2 points higher. It's actually good enough for a record, 7602 on the index. The Dow down 47 points. NASDAQ Composite Index 13 points higher. And look at crude real quick. Brent is up, down 27 cents a barrel, 94.69. So the personal finance company Wallet Hub releasing its report on states where people have the highest income. You want to go down the list, or at least the first few? Virginia, number one.
Really?
New York,
Lobbyists?
number two. What's that?
Lobbyists?
I don't know. But Virginia, New York, and New Jersey rounding out the top
Not
three.
California?
No.
Wait, this is income.
This is, the highest income. West Virginia, dead last. The median yearly income, this is nationwide, $83,700. And also speaks to, I guess, what we call the K-shaped economy. The highest earning 10% of individuals in the U.S. earn over 12 times more than those in the lowest earning 10%. So there's
California not up there at all, but that's because it's wealth, not income for those guys.
I guess, yeah.
You know, it's their equity stakes, and then they buy, they borrow, and then they die and leave it to their heirs.
Exactly.
Hopefully. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, good stuff. Thank you so much, JT. All right.
Oh, you know, since I mentioned New Jersey, I didn't know this. I'm reading the NVIDIA book.
Which one?
Oh, whatever the latest one was. I can't even remember the title of it. But I didn't know Chris one of the co-founders, Chris Malachowski, born in Ocean Township, New Jersey.
Jersey people are everywhere.
Jersey guy.
Yep.
You can't get away from him.
Jersey Mike subs and
Is he part of the whole Denny's lore where Johnson
he
and...
was in the back table.
Okay.
Starting the company.
Cool. At the Denny's having breakfast. All right, let's talk about oil prices. As Paul mentioned, there's not a whole lot going on in markets this morning. Equities are pretty much flat. The S&P 500 is higher for a ninth day. That's a continued melt up to record highs. Oil prices are not doing much of anything, with Brent just below 95 and WTI just below $92 a barrel. Carly Garner is senior commodity strategist at DeCarly Trading, joining us from Las Vegas. And Carly, when it comes to oil prices, it's all about the Strait of Hormuz and when that is going to be open. And we know that's a big point of contention between the U.S. and Iran in these ongoing negotiations or messages that the two sides are exchanging. What do you think the oil market is pricing in right now when it comes to the Strait of Hormuz and when we'll get some transit through there?
Right. Well, you're absolutely right. The entire oil industry is being held hostage by this strait and the activities going on there, or the lack of activity. The one thing that I could say is going into the weekend on Friday, the market was kind of pricing in some thawing out of the Strait of Hormuz. And obviously we got maybe not quite the opposite, but perception of the opposite. So the market had to take that back. And I think that's really all that was yesterday. That said, the headlines are coming in fast and furious, and we don't know what to trust. The reality is none of us know what's going on under the hood. So we're just kind of guessing. My advice is for people to look at price action and look at history. Those are the two things that we know and are guessing. And if we look at over the last two significant rallies and actually rollovers into bear markets even, it occurred, in my career anyway, in the last 25 years, I'll just leave it at that. One was in 2008. Oil prices peaked around $150 a barrel. They peaked in July of 2008. And in 2022, we saw oil prices, after the war with Russia and Ukraine started, oil prices peaked in June of 2022. So we're entering a bit of a danger zone for crude oil reversals. And I think that's probably what we're going to see. I don't want to say when, because I can't see into the minds of the negotiators. And the negotiators are, their tactics on both sides are chaos and uncertainty. And so that's where we are. But I'll also mention in 2014, we weren't in necessarily a wild runaway bull market like we are now. But in 2014, the oil market peaked in July as well. So we have to be really careful. This is the time of year where the prices start to succumb to pressure. And I think that's probably what we're going to get at some point this summer.
Carly, what do we know about the supply of oil, the global supply out there, whether it's in, tanks somewhere floating on the ocean? I mean, when do we get to a point where we really start to miss this 20% of the crude?
Right. So I thank you for asking that question. It's been, I think a lot of people 2 or 3 months ago wouldn't have expected oil prices to be in the 90s, given all that we've seen over the last few months. So I think we're, there's a lot of management here. It's SPR releases, those sorts of, and just job owning the market, have managed to keep prices lower than what maybe they could be. That said, I think that while everybody's focused on the Strait of Hormuz, which is a big deal, I mean, we started with 20 million barrels a day moving through. We've recovered probably close to half of that just in bypassing and things like that. So there's still a big deficit there. But I'm focused on what's going on where people aren't even looking. So for example, Venezuela's bringing oil online. It's not going to be, fill in the gap for a 10 million barrel shortfall, but it's a start. We're also seeing OPEC kind of cracking. The UAE is leaving OPEC. Members don't leave OPEC to produce less. They generally just want the freedom to produce more. And that might set a precedent that takes some of the cartel's pricing power away. So there's a lot of things happening that aren't in the headlines that are working against oil prices. And I think once we start seeing any type of movement through the Strait of Hormuz, as you mentioned, there's a lot of oil floating around on tankers. It's not going to take all of those tankers to come through at the same time for the markets to start pricing in normalization. And if we're looking at a chart, $92 per barrel is a very significant pivot line. Above 92, I think the bulls have a little bit of an edge. And if there's another bullish headline, let's say bombs drop or something like that, we could easily see 108, 107 in oil. But I don't think we're looking at $130, $150 oil like some analysts are looking at. I think the price is probably kept at 108. And as I mentioned, if we start getting some progress in Hormuz, it's not going to take all the ships coming through. If we literally just get some trickles, I think the mind of the market shifts and speculators start to liquidate. And I think we go back to pre-war levels, maybe even much, much lower, because in the meantime, we've brought on more supply.
Maybe even much lower. Interesting. Very quickly, before we let you go, Carly, you mentioned SPR, those strategic petroleum releases. How much have countries like the U.S. released? How much do we have left to release?
That's a good question. I should have been prepared for that answer, and I'm not. I don't know exactly what the numbers overseas are. I know the U.S. has been pretty aggressive in their SPR release, and I know they're starting to get to situations here probably in the next month or so where there's really not anything else to release. One thing about the SPR releases is in the big picture, when you're looking at barrels of oil, it's not a long-term solution, obviously, and it's not a game changer. But what it does is it changes the market's mindset. I think we saw it in 2022 when Biden released SPR barrels. It was a drop in the bucket, but guess what? It broke the bulls back, and we started seeing prices go lower. And I think we're getting the exact same thing here with this situation.
All right, Carly, thank you so much. Appreciate it. Carly Garner, Senior Commodity Strategist at DeCarly Trading, joining us via Zoom from Las Vegas. Again, looking at WTI crude oil, pretty much unchanged on the day, right around $92. We have Brent also unchanged on the day, right around $95. So a little stability there as the market waits the next piece of news. We'll have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney are live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. All right, when I saw the blowout Dell earnings last week, did I run out and buy HPE stock, Hewlett-Packard, like a direct competitor? No. And what did HPE do yesterday? Blowout numbers. Stocks up 25% today, 52-week high, all-time high. So there you go. The AI story is alive and well in that part of the tech stack. Woo Jin Ho joins us. He knows what's going on there. He's a senior technology analyst at Bloomberg Intelligence down there on our Princeton campus. Wooj, talk to us about HPE. What did you learn from their results last night?
Yeah, hey Paul. Blowout is an understatement. There's a couple of things going on. I think we're starting to shift from a cyclical upswing to maybe a secular multi-year adoption phase for traditional servers as corporate enterprises start to adopt AI into the workplace, which may be driving better margins as well as stronger growth for a longer period.
Let me ask a dumb question, Woo Jin. What is the difference between Hewlett-Packard Enterprise and Hewlett-Packard trading under the ticker HPQ? I mean, both are seeing benefits tied to AI, but I just want someone to kind of break it down.
Yeah. From a straightforward basis, Scarlett, if you think about Hewlett-Packard Inc., they only sell laptops and PCs as well as a sizable printer business. And that was a function of the split several years back. HPE, Hewlett-Packard Enterprise, they sell servers for corporates as well and data centers. They have AI data centers and a sizable networking business for corporate. So think about corporate IT versus personal IT.
Wooj, how does HPE and Dell stack up in this new world where, again, they're trying to take advantage of this AI spend?
Yeah, so there's a couple of things where they're similar and where they differentiate. Look, Dell is a market leader in AI servers. They're on pace for about $60 billion in AI servers, the stuff that they sell to the neoclouds, such as Nebius and CoreWeave and Vultr, for instance, right? Dell, HP's presence in that business isn't as sizable. They're probably on pace for about $6 billion, so 1/10 the size of Dell for this year. Where they're both seeing the momentum is enterprise IT. Look, I think where the street, including myself, have gotten it wrong was that this memory inflation was going to impact demand, right? There was a big pull forward of demand, so we thought for this quarter, which drove the upside in the quarter as well as the next quarter. But we thought that units were going to start dwindling. And what both Dell as well as HPE confirmed was that this is going to be durable and sustaining going over to the next several quarters, which is driving not only sales growth, but also earnings growth.
When it comes to HPE, they also announced that a partner at Elliott Investment Management, Chris Hsu, would join the board of directors. I know last July is like a million years ago, especially when you look at the stock price for HPE, but this was a company that was engaging with activist investors. Is it safe to say that Elliott's kind of happy with what we've seen here?
I don't know, Scarlett, 25% stock going up after joining the board. Elliott should be pretty happy. And look, to be fair, Elliott was highly involved with Juniper prior to the acquisition as well. I believe they were a board member, so I'm not surprised that Elliott was involved with HPE.
What's the visibility on forward bookings for these companies like the HP and Dell? How does that look right now?
Yeah, so from a Dell AI server standpoint, it's fairly strong, right? The backlog on the AI servers, I think it's closer to about $27 to $30 billion going forward. So they have a fair amount of visibility. They don't give order bookings for the traditional server business, but one thing that I can say about HPE is that these guys gave out fiscal 2027 guidance. We're still in the middle of their fiscal 2026. So 6 quarters of forward guidance, that takes a lot of, number one, guts, but also strong confidence in their bookings and their backlog to give that kind of guidance. And on top of that, with strong earnings growth, their guidance implies about $4 plus in earnings when consensus was at the high twos. So, you know, to give that the sales growth as well as the earnings guidance, I mean, that's a lot of visibility.
Yeah, that is, and it's pretty incredible. I wonder to what extent, Paul, we're going to see other companies start to do that, because so far it isn't necessarily rewarded companies, that is, for looking that far out.
Yep. What's the next thing we're looking for, Wooj, just in terms of your world, and to see kind of where the demand is coming from?
Yeah, from my world, look, earnings has died down. A couple of things that we're looking for. We have the Computex conference that's going on right now, so we've seen some of the chip maker names benefit as well, but there's going to be some AI server news as well as optics news. And then on top of that, we have some conferences, so we'll probably get a follow-up from HPE from their Discovery conference coming soon.
All right, Wooj, thanks so much. Appreciate it. Wooj Jin Ho, Senior Technology Analyst, Bloomberg Intelligence, down there on our Princeton campus, joining us via the Zoom thing. And boy, there's networking names, the server companies, the Dell, HPE is really seeing just huge
Hardware
gains.
is back in.
Yep.
In a big way.
And both of those companies setting, you know, all-time highs, not just 52-week highs. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence begins in just moments with a little bit of green on this screen. We'll take it. S&P's up 14 points. The Dow's up 68 points. And the NASDAQ's up about 60 points. All that around 0.2%. Oil steady today. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Tuesday morning. This is Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and John Tucker. We've got a lot to cover here in the second hour of Bloomberg Intelligence. The stock market has decided on a direction, and for now, it is higher. We're going to check in with Mary Ross Gilbert, our senior equity analyst covering retail, on earnings out of a retailer, Victoria's Secret, with a new ticker as well, VSXY. Coulter Jones, our reporter on data investigations, will talk to us about the Bloomberg Big Take story about a Trump watchdog cutting enforcement, which is helping the likes of Toyota, Walmart, and Apple. Shana Sissel, founder and CEO at Banrion Asset Management, will join us with her outlook on the market. And Sri Natarajan, our chief Wall Street correspondent, will talk to us about SpaceX wanting a fee cut due to its IPO. Certainly Morgan Stanley and Goldman Sachs high up on that list. Now, of course, we've got HPE shares. You said it, Paul, record high, right?
Record highs.
Okay, so CEO Antonio Neri will be taking a victory lap when he speaks with our Ed Ludlow and Caroline Hyde later on this hour. But first, let's head over to John Tucker for Bloomberg Business Flash.
All right, guys, we are right now hovering around records for the major averages. Any gain at the close, that is going to be a record, but still not a lot of movement either way. You mentioned HPE soaring by the most ever, and in fact, those shares, we'll dive into it a little deeper, as you mentioned, but they are the best performing stock right now in the S&P 500. 25% higher right now. That's actually paired some of the earlier gains. Thanks, Jensen. Marvell Technology shares surging after NVIDIA's CEO, Jensen Huang, predicting the semiconductor and networking company will be the next business to hit $1 trillion in valuation. Martin Horn at Barings, meantime, says the current market run is backed up by the earnings.
At the moment, it pays, I think, not to over-intellectualize what's happening in the market, because we've seen what momentum of money does. This is backed by earnings, so it feels a little different from the dot-com bubble vibes that we may have got just a few months ago.
Right now, the S&P 500, 14 points higher. The Dow up 70. The NASDAQ Composite Index, 63 points higher. Let me bring this breaking news to you that's crossing the Bloomberg. You know about what the critics have called the slush fund, but President Trump getting audit immunity for himself and his company from the Internal Revenue Service, even as this $1.8 billion fund is now in doubt because they're getting a lot of pushback from.
You mean the anti-weaponization fund?
That's
the
what
official name
he
for
has
it.
called it. But it looks like at least part of that is going to be successful for Donald Trump and the Trump family. Again, getting audit immunity from
So the government
IRS.
can no longer look into past tax filings from him or his businesses.
That's the headline. I'm looking for details because I really want to dive into this one. So anyway, when they come across, we'll hopefully talk about that. We check the markets and other stuff for you right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
Hey, John Tucker, thank you so much. We appreciate it. Scarlett Fu and Paul Sweeney, we're live here in the Bloomberg Interactive Broker Studio, streaming live on YouTube as well. We got some green on the screen. We'll take that. Let's take a look at some of the names on the move today. We can do that with Bloomberg's Natalia Kenedjevich. Natalia, what are you looking at today?
Hi, guys. Let's start with Hewlett-Packard. This is the best performing stock in the S&P 500 right now. Shares are up by 25%. This is the biggest jump on record. So the company posted better than expected results, also reported raised full-year forecast on key metrics. So for the quarter ended in April, HP's revenue rose 40%. Analysts on average expected $9.74 billion, but the result was $10.7 billion. It was really interesting to look at analysts' commentary. So Vital Knowledge said that the company, quote, was facing a nearly impossibly high bar after Lenovo and Dell, but still it managed to blow away expectations thanks to robust demand and really solid execution. And on I would say on a 12-month basis, results for the stock are really impressive, almost 140%. Nice. That's the gain.
More than a double. We'll take it. All right. How about Victoria's Secret?
Yeah. So retail was another big gainer. The stock is up by 44% today. The ticker for that one is VSXY. So we saw that earnings came better than expected. The company also boosted its outlook. So a retailer raised annual net sales guidance to $7.13 billion, up from previous guidance of $695. I should say that this is also one of the biggest gainers. On 12 months basis, the stock is up by almost 280%. Analysts were really, satisfied by the fact how the company and new management is executing strategy specifically related to younger audience.
Yeah, new CEO Hillary Super, certainly a boost for her. Last stock on your list, Natalia.
Yeah, so Shake Shack, the ticker is SHA. You love it?
Yeah.
Oh, did I tell you guys? I've never been to Shake Shack. It's so embarrassing.
Natalia, there's one down the street.
But they don't have vegetarian options.
Oh, I see.
No, we're not. Yeah. Just no. That's a non-starter.
Wait, so you're a vegetarian or you just don't want hamburgers?
Vegetarians means no fish, no seafood, no meat.
They have a mushroom burger.
It's no way to live your life. All right, what do you got there?
Yes, but this is a decliner, guys, minus almost 12% today. The company scaled back financial guidance, cited really tough environment. Same-store sales forecast is now sitting between 2.5 to 3%. Before it was 3 to 5%. Bloomberg Intelligence is saying that this is basically confirms that previous guidance was really aggressive, and some measures like new barbecue menu was really helped just for a while in early May. And the management also said, yes, macroeconomic environment remains really tough. Competitive landscape is not helping. And high beef prices is also a really big headwind for the company.
Yep, absolutely. I like my Shake Shack.
Love Shake Shack.
I think I go In-N-Out Burger probably a little bit before I go Shake Shack.
No, Shake Shack over In-N-Out Burger any day. Yes.
Oh,
yes.
That's a market. That's
yeah,
what makes
no,
a
the
market.
flavor of Shake Shack burgers are just unbeatable.
Very good. All right, good stuff there. I like the passion there behind that. Natalia Kenedjevich, thank you so much. We appreciate that. For more conversations like this, Subscribe to our Stock Movers reports. Listen for 5-minute auto reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Well, we've been talking about Victoria's Secret all morning. Some really, really strong numbers. Beat the street pretty handily. And we're seeing a stock up 45% here today. So that's a good news there. Mary Ross Gilbert, she covers the retailers for Bloomberg Intelligence. Mary, talk to us about Victoria's Secret. What seems like a huge turnaround there?
Paul, you're absolutely right. Hillary Super is really executing supremely. Her team, Hillary and her team. So when you look at the results today, their comparable sales were up 13%. Now remember, they are cycling declines of comp sales in the first quarter for like the past 3 to 4 years. So that is helping. Still, this is a big increase, seeing a double-digit increase in comp sales, but it's not just that. It's also they're selling more at full price. They're attracting a younger cohort. So they saw a lot of strength in 18 to 24-year-olds, but they also saw strength in households earning under $50,000 and households earning over $200,000. So that's really saying something about what's happening here with the brand. So they have great franchises that they've created. So they have like the Dream Angels, and a lot of these are the innovative lines that they've come out with in bras. Their lace collection is hugely popular. Within Pink, the turnaround at Pink has been phenomenal, and it's really resonating there. I mean, they have these totes that are selling out. So
Victoria's Secret has totes?
Well, we're talking about totes specifically within the Pink franchise, but yes, Victoria's Secret also has totes, but Pink does as well, and there were a number of pieces for spring and summer that sold out, including a really cool duffel bag. So they're really hitting the mark. They have this wonderful fragrance and beauty franchise that's like a $2 billion business, and they saw strength and double-digit gains across all categories. And the momentum should continue in the second half. So it appears that the guidance, which is really going to be sort of drawn back to more single-digit gains, really looks like they could be beatable. There's going to be some product launches in the second half. They're going to really heat up the campaigns.
Right.
And all of that is really, I mean, did you know that Victoria's Secret has 77 million Instagram followers?
Okay, that is news, but I'm looking at Paul Sweeney, and he's going to tell me that he's not surprised, given that Victoria's Secret used to be a big brand, with the fashion shows and everything. Sure. Is that something that the CEO Hillary Super is going to bring back? I mean, the company now has some momentum, or has the company effectively moved away from that former profile?
Well, let's make it clear, and the reason why their ticker symbol VSXY, very sexy, right? I mean, it's important. That's a big part of the Victoria's Secret brand franchise is sexiness. And so, Scarlett, speaking to the fashion show is already back. They had a great fashion show last year. That's okay. And this year, I'm sure it's going to be great. It's much more inclusive. It's from a woman's point of view on, what is sexy. And it's really a fantastic show. So, but they also have a number of other campaigns that they do. They do a lot in New York City, just on the street, and they post it on social media. All of those things are resonating, and you see a lot of strong sales within the stores. The culture there, I think, has always been very positive because employees who work there love their jobs, and you would experience it if you go in there. They're so engaging. They help you out. They know how to size you, and they show you so much of their product. And so I think they get a lot of conversion with that kind of engagement in the stores.
All right, Mary, thanks so much. Appreciate that. Mary Ross Gilbert, Senior Equity Analyst covering the retailers for Bloomberg Intelligence based out there in Los Angeles. We love the big take stories. What are the big take stories? They are our big stories on the Bloomberg terminal on Bloomberg.com as well. Deeply resourced, deeply sourced, great graphics, which helps me understand a lot of stuff. And today's is a really good one. Coulter Jones joins us here, Bloomberg reporter on data investigations. Here's what I know about the Consumer Financial Protection Bureau. Basically nothing, other than it's supposed to protect the consumer. But as I read this article on the Bloomberg, that doesn't seem to be the case anymore. And I'm looking at Acting Director of Consumer Financial Protection Bureau, Russell Vaught, has undone years of agency enforcement work here. So let's check in with Coulter Jones here. Tell us about this story, Coulter.
Yeah, thanks for having me. So we looked at the tenure of Russell Vaught that started back in February of 2025. So it's the past 15 months, and we're really digging into the enforcement actions, the sort of the enforcement angle of the agency. And we looked at what types of cases were being dropped and who were really who was benefiting from that. And in one third of those cases involved companies with more than $500 million in revenue, and 2/3 of them involved companies in the S&P 500. We're talking about like Apple, Walmart, et cetera. And Vaught's big sort of statement has been they're really going after the mom and pops. This is like overreach by the Bureau and prior administrations, and they're trying to sort of pull back from that. And our reporting kind of reveals the opposite.
It kind of reminds me of Trump assigning someone to lead the Department of Education who just kind of tears it apart. Is that kind of in the same vein?
Exactly. That's exactly what we're going on. And Vaught comes into as acting director, and everyone gets sent home. So when we're talking about the attorneys and enforcement attorneys who are doing it, they're really kind of just sitting on their hands at home. There's nothing going on. There's very, very little going on in terms of enforcement, and what they had done and the oversight they had done has been pulled back dramatically.
So is that still the case today, that they're really not engaging?
That is the case. They publicly state that some of those cases are allowed to go on, the ones that have not been dropped. But my colleagues Noah Buhire and Ted Mann and I talked to like dozens of current informers in the enforcement division and in the Bureau overall. And what we're told is even if a case is supposedly active, they're not allowed to engage with the parties in any formal way.
How does this compare with how the agency was managed during Trump 1.0?
Yeah, it is really sort of stark. I mean, it is not surprising to anyone who sort of follows DC politics or enforcement overall that you might have a more, that the priorities of a Democratic administration or Republican might be different. In Trump 1, it was very sort of typical, I guess, like Republican administration. They're going after cases. Maybe their priorities are different than what you might see under Biden or in Obama. But the active work was going forward. And I think what our reporting shows is that the director of CFPB, which was created under Dodd-Frank, really has broad ability to decide what is a priority. And Vaught has decided that very little is a priority for this
Is there any pushback here on this laissez-faire touch?
Yeah, I mean, obviously you're seeing sort of the typical players like Elizabeth Warren, who helped create the CFPB, has been very vocal in this. You've seen some other Democratic legislators. I think the question going forward would be, this was created to sort of bring in, a balkanized enforcement action, right? Pre-financial crisis 2008. So the thought was we bring everyone under one roof. We sort of have a centralized enforcement and oversight of these consumer issues. Without that doing its job, there's really no one at the federal level doing this, and it comes down to the states.
Okay, so as you mentioned, this agency was created from Dodd-Frank, so it's by law, it has to be there. Is this pretty much Trump shutting down the agency without shutting down the agency?
That is certainly what the union and the CFPB and other supporters of it are saying. And there are active litigation going forward. There have been multiple plans to sort of reduce force. The most current one would get enforcement down to about, as proposed by Vaught, I should clarify, and this is being litigated, would put it down to about 50 people in enforcement. And when we've talked to insiders on that, they said that's not an active enforcement agency. You're talking about, it's not just attorneys, we're talking about investigators or, support staff and administration. So the idea that size of enforcement could do the job that has been expected in prior administrations seems not plausible.
30 seconds. What's the case for, you don't need this regulation. It's just bureaucracy. Let's cut it.
I think what they would say is there is overreach. This is not something that, that it's mucking up the works. And that what they're really trying to do, their case is we're trying to pull back from what they saw as overreach from prior administrations.
Okay.
But not shutting it down all the same, keeping it there.
Exactly.
Right. So interesting. Okay. We'll stay on top of that. Great story. Great reporting to you and your colleagues. Thank you for the graphics. That helps me.
And it's notable, too, that John Boyd is running the thing, but he's running so many other parts of the government, too. You know, this is another hallmark of Trump 2.0.
Right.
You've got guys running 3 different agencies.
So, Secretary Rubio.
Correct.
A number of things. Coulter Jones, thanks so much for joining us. Reporter on data investigations for Bloomberg News, joining us here in the story. You can read this story and all the other big take stories on the terminal and at Bloomberg.com/big take.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash brought to you by Golden Crest Metals. The inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. So right now it's tech giants leading stocks toward the all-time highs. S&P 500, it's topped 7,600 and beyond. Marvell Technology surging after NVIDIA's Jensen Huang predicted that firm's going to hit $1 trillion in value. The shares right now up 27%. We have oil lower with some optimism. The U.S. and Iran may be on the brink of some sort of deal. Brent, the active contract, down 33 cents, 94.65 a barrel. Just want to follow up with that story we did earlier. U.S. officials, they're going to continue with this agreement that bars the IRS from probing past tax filings from President Trump and his business. As part of this agreement, it's moving forward, even though a plan to set up the anti-weaponization fund, as it's called by the president, remains on hold. Amazon in court accused of consent via its Ring security cameras familiar faces feature. This is a proposed class action suit, actually, filed by a Virginia resident who claims his facial data was collected as he visited friends and family. This is what my camera collects.
Mother deer?
A deer in her deer
fawn?
baby. The fawn, like Bambi. Can the deer sue me?
John, soft spot.
Anyway, we
He's
check
in the
the
middle of
markets for you all day long, right here on Bloomberg Radio.
I didn't know you were a nature guy.
It comes to my house. They're all. I can't get rid of them. They're in my front yard.
I see your deer.
And apparently, they really love hydrangea.
I just think ticks when I see deer.
Yes.
Yeah, no, that's true. That's a big problem.
And,
anyway,
and don't want to walk near them.
stay away. But they're still cute. We check the markets and deer news for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business.
Do you have an Instagram
Flash.
feed? I feel like it would be full of deer and, Dutch doors.
Do I do that? No.
Dutch doors.
All right, John Tucker with
That's
our
like Paul
Bloomberg
with
Business
Reddit.
Flash. Thank you so much. All right, yes, Paul and Reddit, we're going to get him going on that. All right, you look at what's happening in the markets right now. Oil prices have come down. They're little change at the moment. Stocks have found their way higher. And we had this jobs report that showed that job openings are alive and well. In fact, job openings jumped to an almost 2-year high. What does that mean for monetary policy? What does that mean when you balance it against the inflation picture? Let's bring in Shayna